excited. It's Tuesday. We had an interesting day yesterday. We got some CPI coming out, other stuff coming out. I'm excited. I'm back in the office. I was remote yesterday. I missed seeing you. I missed this. Look at this.
Yeah.
Is that a new denim ensemble? This jacket? I don't know who died somewhere, but the black is. Or are you just going Johnny Cash on me with a hint of country?
I've worn this jacket maybe once a week for the last 2 years. So not a new jacket.
I remember.
You never take note of anything that I say or do.
Okay, when I mentioned the Farmer Fleet jacket, you get upset with that. So what do you want? Again, I don't know how to judge the ensemble.
I did go black on black. It's dark. It's
but you weren't rocking the black string pants.
No, I'm wearing khaki colored pants. When you get up this early in the morning.
How can we run a survey about how many people wear string pants now? That's what I'd like to understand.
You want to know, you're obsessed with what men are wearing on the bottom half. Okay.
Really? That's the way you're going to take that?
Well, what you want to do a survey of how many men are wearing button pants or string pants?
You're you don't have any pants with zippers or buttons. You have string pants.
Okay. Is
that true?
Yes, it is true.
Okay, and I don't think I have any string pants.
So when you get up early in the morning, I get up now at like 4:45, 5 o'clock.
Yeah, you're a slacker.
Do you turn on the lights, or how do you get prepared for the day? Do you like turn on all the lights and it's like it's dark outside, but the house is all bright and you're getting ready?
No. You've got to be very careful about the cardinal rule. Don't wake Michelle. Mm-hmm. Don't wake the dogs.
Yeah. So you sneak around.
The dogs usually don't get woke up because I do. I'll get ice and make a couple of cups of coffee. I don't turn on. I've got two relatively larger screens in my office, so when I take the mouse and they come out of sleep mode, it lights up the room. Mm-hmm. So I don't think I turn on. I certainly don't turn on any lights in the rest of the house.
Yeah.
Because if the dog barks, I'm a dead man that day. Mm-hmm. So, and I'm kidding. My wife is incredibly sweet and kind. I just don't want to wake her up at 4 o'clock.
Yeah.
But I've got a space I go into, and I do think I turn on the light there. So,
gotcha. Because I don't turn on. It's almost like a game. I've started doing this.
It's funny you mention this, and I'm sorry to cut you off, but it's when we travel, and I'll still get up early. It's like I don't know where to go, and I'm thinking in an apartment where you don't have someplace away where you can go. It's harder to lead this semi-nocturnal lifestyle without disturbing your significant other.
The tough part is the bathroom and getting dressed stuff, because that is very, very close. But yeah, I've tricked myself into thinking it's a game, because then the kitchen and all the other rooms, I make coffee in the morning and I do that in complete pitch black in the kitchen, just because I'm like, this has got to be a skill that I'm developing where I can do these things in the dark like a ninja almost. And so I do. So this is all to say, I dress in the dark completely, and so when I put the things on and it's 5 in the morning and it's dark, and I'm like, that seems like it could go together. But yeah, now looking at myself, I'm wearing black jacket, black Neil Young shirt, and black hat.
So what you're saying is we need to get you some glow in the dark clothes.
I don't know
so you can better identify them.
But I also am getting, as I get older, I'm getting more into this hippie but I don't know what to call it, but I don't think artificial light is good for you, especially in the morning.
Wow.
And so I almost, especially in the summertime, I try to go no artificial light in the apartment at any point during the day. I try to go only the sun, that's what comes into the apartment, and when I'm outside, obviously. And then when the sun goes down at 8 p.m. in the summer, I'm I'm going to get into bed, and I'm not going to turn on any of the lights.
That's a good idea, but no lights. See,
being sprayed with artificial lights all day long, or lights from these screens, just can't be good. it
Out
has
of
to
all the
affect
things
your
that are
mood
bad for
and everything else.
Well, that I don't
But
disagree
the other
with you.
things that are bad, I also have rooted out the alcohol and I don't eat a lot of meat and all these different things.
No,
so yeah, my
you
body.
gotta truly. I watched a show around St. Francis of Assisi over the weekend.
My
Again,
namesake. That's my
chastity, poverty, and obedience are the three Franciscan things. I think you're kind of going down the St. Francis route of.
That is my patron saint.
Yeah.
Frank St. Francis of Assisi. That's
I like
the saint
that.
that I studied a bunch.
Well, see, because I find I turn on when we redid our house. I love a lot of light, so I've got like can lights in the house, and I'm forbidden from turning them on. My wife is a lamp person, so and I can't get enough light from a lamp.
I will say I have one lamp light that is like it's one of these BS things where you pay like $50 for it, and it says that it's like a specific bulb or something that is supposed to mimic like the light from the sun. It's like not the artificial light.
How do I get into your feed of sales stuff? Because I could be selling you stuff left and right. I mean, it's
better than buying 3 saws that you don't use.
I could buy. Hey, I bought conduit over the weekend, and that conduit saw would come in really handy right now. So I am considering it. The bulb thing, I think, is.
I don't know. A lot
I
of
think
this
there
stuff,
is a mood aspect to it, though. I don't disagree with it.
I have to say, I'm in a good mood a lot of the time. I feel generally pretty good.
Sure, let's go with that. Beth, can I get, for his commitment hearing, can I get a clip of that?
It's like kombucha. Like, I don't drink it every day. When I do drink it, I enjoy it. But, like, I don't think there's any science behind, like, this is good for, you know what I'm saying? But it's hard to know the science that is behind, like, hey, take this pill or do this thing is like...
Okay, let's back. So you're getting dressed in the dark. You're making coffee in the dark. You've got your goggles on, like that guy from Silence of the Lambs. All right. Where is your significant other? Because again, Michelle's usually up.
She's asleep.
Michelle makes me a full breakfast, and then
makes
packs my backpack and make sure that I've got everything set. So it's just not.
She makes you a full breakfast.
Yeah,
at 5 in the morning on Tuesday.
Eggs Benedict. What are you thinking? Is it a steak and eggs day? Pancakes, maybe. No, she's not. She would.
Yeah.
She's always so cute. I'll wake up and make you breakfast. It's like, no, I don't want breakfast. But
yeah, it's a weird thing. But yeah, these the darkness. It's not getting any lighter.
No, and we have a new member of our team, Kyle Meerwald, who I'm slowly pulling over to the. I'm not putting a lot of 5 a.m. meetings on his call log, but a few. And Kyle seems to be more of a night owl. So.
Yeah, it'll be interesting. I mean, he's definitely showing up early.
Yeah, I know.
But yeah, it's just I don't know. It's just a way of doing stuff. But yeah, I got dressed in the dark. I'm wearing all dark stuff.
You look fantastic.
Well, thank you.
You absolutely do. It's great for Tuesday.
Well, yeah, let's take a look at what is going on here Tuesday.
Euro
said to me,
Euro is up.
A weak rally that we're looking at here in the sterling market across the board. What happened yesterday afternoon and last night? They tried these markets
Our new
higher.
fearless leader came out and through a third party, I think it was Bloomberg, said that their team is now looking at putting incremental tariffs in place over a period of time. Again, a market that was thin. We're up near the high end of the daily range, and they rallied Euro 30 points. They rallied Aussie 40 points, Kiwi 50 points. But they're having a really hard time holding on to, they put it in, and then right at 8 o'clock last night when Japan came in, China came in, started selling treasuries again. Equities came off, and if this is the best they can do, is they rally it on very thin conditions in the afternoon. Sometimes these are great rallies because it catches everybody off guard, and then they put another leg up to it, and then that challenges everybody who's short. Right now, it's not getting challenged, and I'm a little disappointed. We've got CPI today, which we'll definitely get a reflex and move off of. But things like Aussie and Kiwi didn't hold on to the bulk of that rally. We've given back a little bit more than we're almost right back to those. And again, these are 40 pips off of new lows. So I don't know what to make of it. I would have thought if we actually had a chance to put a more sustained bottom in, we'd trade a little bit better than we are right now.
This is really looking like, and you can look really across the board, it's pretty similar. I'm flipping just between, this is euro dollar, and so a more major developed currency pair here versus commodity currency Aussie, and you can see pretty similar moves. And then you widen out that lens, and it's going to, like we talked about a little bit yesterday, the commodity currencies have not seen as much downside as these majors in the last couple of trading days. No one is performing well. But Pete, this is looking a lot like anyone who's traded equities on the equity indexes, when they get in this mode of higher, a 1% sell-off that's immediately bought, and then higher. And this is obviously a little bit of the opposite. I mean, I guess you could say the US dollar is looking like that equity index mode, where it's just like US dollar moves higher for 2 or 3 trading days in a row to new highs or new lows for an Australian dollar, or the euro dollar getting down below 102 yesterday and the end of last week. And you're like, oh, it's a new high. Surely they'll back this US dollar off, or it's a new low in euro dollar. Surely they'll bounce this market finally. You see the bounce, and then they sell into it again, and then have no problem trading down to 101.50, 101 even. Now, I mean, we're at 102.50 here in euro dollar, so we're not down below those levels. But I can't help but agree with you. All of these sell-offs from a dollar standpoint, or rallies from a name any currency standpoint, are super weak. And when you just zoom out and think about this whole move from the start of October until now, I mean, look at how many times these markets have bounced back against the dollar, and we've maybe thought, oh, okay, maybe right here it was 105, or they broke 104, and this was the bounce
this looks
back.
Exactly like what this is starting.
Yeah, we're right back there again. So I don't know how you could feel necessarily confident.
So what am I looking for? I'm not looking for that news story about some third party saying that the Trump tariffs may be less. We all know they're going to be less. It's irrelevant. What I'm looking for is something to kick tape action to show me that there's some two-way risk in play, and that's what you're going to build the legs of a turnaround on. I'm not seeing it here yet, so it's challenging.
But you are getting the back and forth for, like, I mean, if you bought anything, especially below 102.20 or 102.40, they at least let you out.
And I think you hit on a great point. If you're looking for the trade to 105, I think, sure, you can do that, but we're not seeing the tape action to say that we formed a bottom for that trade. But if you're willing to say that the market's cheap, and I'm going to take a day's worth of movement, which is, or a little bit day, I'd say 60 pips is probably a day plus. What I mean by that is the one standard deviation daily range is probably around 47 pips. So you got 60 pips in an afternoon and going into early evening. If you're willing to take that, you could have bought anywhere along that 102 during the day when we were back and forth on either side of 102, and you got that, and you were able to harvest it. If you're looking to, this is the turn, you're not getting that kind of tape action yet, I think. So if you're absolutely right, and if you are truly a dollar bull and you think they're going to chew through par and continue to go, and I'm not saying they're not. We don't know.
Yeah.
You got a 100 pip rally to sell.
Yeah.
And that's good. So,
and I wanted to,
and the guys who are riding the horse of, I'm going to ride this till it breaks. In other words, any of these rallies in currencies or sell-offs in dollars are opportunities to buy. Going back to our crypto example, how falls in currency. I mean, we saw crypto. You and I talked about it, and we saw the 91,000 print yesterday. And I was like, "What do you think?" He says, "I don't know.
Every time you feel like, oh, this is the, but
This
that's
is
why
the
I
one
bring
where
up
they're gonna rattle the
that's why I
cage.
bring up the
I
equity
think
index piece.
Bitcoin's
because
back to 97,000 this morning.
well, and the nice thing about forex is, and this doesn't have to be the way it is moving forward, but you tend to get more back and forth than you do in, say, an equity index. But I bring up the equity index piece because it is, yes, similar to the crypto move the last couple of trading days, where it's like they take the market down for maybe 2 days in a row, and you're like, wow, they're 3% off of the highs, 5% off the highs, whatever it is, and you're like, this feels like they might finally take this market down,
Right.
and then it could bounce back and keep chugging along. We've seen equity indexes. When I started at Tasty Trade back in 2016, 17 or whatever, the stock market chugged along for, it felt like 2 or 3 years,
Right.
just new high, sell off of 1%, new high. Now, I mean,
But there's an interesting market
Yeah.
that is, it's, again, using futures trade equity indexes is great. It's a neutral security. You can be long or short, same cost. But it's a market with a natural upward bias to it. It's got upward drift. What's great about currencies is there's no upward drift, because if you argue there's upward drift in the dollar, you're saying there's downward drift in the euro. That's not the case. So it is a true neutral security that doesn't have a bias one way or another. Yes, all these factors influence direction of movement, but it does give you more back and forth, which is great.
Because you have so many, obviously, in equities, and as far as the gold market, the art world, there's so many price insensitive buyers every single day that it's hard to really take that market down. Here you don't have so much of that. I do want to point this out because this was an interesting one to me yesterday. If you're not trading Swiss franc, take a look at least, because this is a hell of a range for the last. I mean, to start this week, to end last week, and to start this week. This market got all the way up to 92 yesterday morning. They took it all the way back down early this morning, right as the European session started, to 91.30. Not a high vol market in here, this Swiss franc, but really interesting to see this starting to pick up, because it is right there at those lows for Swiss franc, high for US dollar. And of course, you can say, okay, euro dollar's already through those lows for the last year or so of trading. The commodity currencies already through those lows. The Swiss franc, and this is one that you probably in your broad history of trading have traded a lot of. Tell us a little bit of how this is distinct from the euro dollars or the Aussie and these other pieces, because it is different and it's trading a little bit different the last couple of days. You can see they got up to this 92 cents mark, Pete, and really seeing some whippy movement around it.
Yeah, and it is an inflection point. Swiss was classically safe haven. So U.S. equities got hit, global equities got hit. Whatever euro did and Aussie did or yen did, I don't want to say yen and dollar Canada were usually sold. The thinking was you wanted to own yen because they were going to repatriate assets, and yen was a flight to quality play. Being short dollar yen or long yen, being short dollar Swiss or long Swiss was a play. We didn't see them necessarily. They haven't bitten on that because this currency is reacting to a different set of influences right now. That safe haven aspect of Swiss is not necessarily playing out right now, because, I mean, we're seeing stress in the UK, we're seeing stress in France, in Germany. You would think that those crosses would be interesting too, where Swiss would be outperforming, and we're not seeing that so much here.
Yeah, it was really interesting.
Let's take a look at Euro Swiss.
Yeah, that dollar Swiss market, really interesting. This Euro Swiss, of course, you could say, oh, it's near the lower end of its range. But if I read you all the news of the last couple of weeks here, and all of the fear that is in the euro area and now developing also in the UK, and then I asked you where this market would be, you would probably say through the lows.
Right. And absolutely. And And I think what this chart is telling us is that Euro has underperformed Swiss, and that's why we're seeing the Euro Swiss lower. So Swiss is actually, while they both, Euro and Swiss are lower against the dollar, the Euro has fallen more against the dollar than the Swiss has. So that's what this is telling us, a little bit of that play.
But not by a lot.
Not by a lot. You would think that this should be appreciably lower than it is.
Like let's do a little history here, because we're not through the lows that we saw back at the end of 2023, and I wonder if I widen out in time, we are actually near historic lows that it could whip through. If we do get escalating fear in here, but I wonder.
You're absolutely right. So as strong as dollar Swiss seems, or the dollar seems against the Swiss franc, relative to the other currency pairs, it's holding in pretty well.
Yeah.
And actually, when you look, you look back to 2012, and they would peg dollar Swiss at 120 against the euro, and when that peg broke down, we saw it trade all the way sub 80 cents. Now, a quick recap, we got back to the peg level, and we've been selling off ever since, but we're getting down to lows now that are going to create an interesting trade.
Just interesting to me because, as I looked through, obviously the daily chart here, it's not much to see. It's, dollar strength like you've seen. But as I looked through the just 15-minute chart of the last couple of days, you're seeing some really whippy moves in this Swiss franc.
And where now dollar yen has stopped rallying, it's not really coming off, and it's not giving you a ton to trade right now. It's
you had the non-farm move here, but since then, it's like trying to rally on the flight to quality thing, but it not really moving one way or the other.
But 20, 30 pips, that's tough to scalp around that range. Go back to the dollar Swiss. You're getting more. When I say tradable range, as traders, we want enough movement so we don't have to be perfect at picking a low or picking a high. Here, you're getting good movement back and forth.
Yeah.
So this is one that I've started to take a look at and be a little bit more involved in, because I think Swiss is getting a little bit more elastic. What's the reason? Frankly, I don't care.
Yeah.
And when I say that, sure, I want to understand what's driving it markets, but I want the elasticity because that gives me a more tradable range to either layer in trades or trade both sides of this. So honestly, when you look at where I'd rather be right now, yes, dollar yen has stopped rallying. Does that mean I want to be short? Not quite yet. But I do think that dollar Swiss, in terms of tape action, is giving you more back and forth.
And you've got, just in the last couple of days here, this is a 100 pip high to low range on a market that is 30%, 40% smaller than that dollar yen market that we were just looking at.
This has always been traditionally slipperier. What I mean by that, it tends to give you a lot of price points to trade, which is great as an active trader. Let's jump over the calendar really quick because we do have CPI. So we've got one economic event today at 7:30.
We've got the PPI today, and then I believe CPI tomorrow.
Am I wrong? Do they have that back?
That's it. I mean, that's what the
is that what it says?
Inflation.
I always thought CPI came first. Okay.
But yeah,
so we got PPI today.
PPI today.
Okay, so PPI a little less watch the CPI, but we'll definitely get some movement off of that with the idea we saw a strong non-farm number. Are we going to see an uptick in inflation? If we do, we're going to see bonds have a little bit of a hard time here, and that is going to probably spill over to a little bit of dollar strength. So we got a binary event. I don't care what the number is. Put your game plan together. If the number is soft, we'll see the dollar sell off a little bit. If you want to be a dollar bull, it's going to give you an opportunity to get in. If we get a strong print, we're going to see new lows in euro probably. It'll be interesting to see the tape action. If we do see those new euro lows and buyers come in again, that tells you something versus just them rolling over to new low lows.
Yeah. Well, it gets to the point of, and you and I talk about this a lot, is how many times or how far do you price in dollar strength or good U.S. data until you finally get that reflexive move. It might be this CPI, it might be the FOMC in a couple of weeks, it might be next month's non-farm, but
and
at
who
some
cares?
point,
And you make a great point. It's good U.S. data at 102 for the euro, not 108.
Exactly.
So just keep that context and then look for the opportunity.
We'll see.
So, yeah, well, check it out. So, by the way, you look great in the black. Coming up next, Tom, Tony, and Vanetta. We'll see you back here tomorrow. Have a great day.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Life goes by fast, really fast. One day we're 25 and living large, and the next day we're 65 and hopefully still living large. It's the 40 years in between that are mostly a blur. When asked what they would do differently, most people confidently say, nothing. I have no regrets. As much as I want to believe them, I know better. I believe there's one common regret virtually everyone chooses not to remember. It's the taboo topic of not taking as much risk as possible every chance you get. Remember, the genesis behind tastylive was to encourage risk-taking. What were we thinking? Imagine the risk of building a business designed to encourage people to take risks. One of the things I've learned about taking risk, it's not personal. You can't let your ego dictate your decision-making. Unless, of course, you're the richest person in the world, then it's a death trade. Another thing about taking risks is that it's never obvious. There are no easy decisions. Risk-taking should be fun, engaging, and challenging. But if it ever seems apparent, success will not be easy. The great thing about the world of finance is that success does not require genius. In my opinion, the model for success, without a lot of complex math, is relatively straightforward. It's risk times longevity. Between academia and financial media, we have overly complicated embracing the paradox of risk. It's finally time to simplify the model behind success to risk-taking times duration. This definition should give everyone hope and a reason to hang in there.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live.
You have one job.
With the opening bell? Where am I going?
Good morning, you knuckleheads.
Good morning, you knuckleheads. Thank you so much. Thank you. So I just want to get something out of my mouth before he kept saying what he was saying.
Just unmedicated boomers just out here with
No, I took my meds today.
You took your meds today?
I always say I never take any pills or anything like that. I am taking supplements.
Oh, no.
Supplements?
Yes.
What does that mean?
I don't know, like a multivitamin or something like that. My wife's got on some kick or
Like
something.
a hair, skin, and nails gummy? That's what I take. Hair, skin, and nails, girl.
No, I don't know. I don't know if she snuck that in there. She might have snuck in a little Spanish fly or something like that. I don't know what she
Some estrogen.
Son Love, how are you today? Amazing. That's good. That's good.
Yeah.
Be more likable. How are you today?
You having us out here risking life or limb? Yo, roads are hella dicey this morning.
Yeah.
We're a little...
Yeah, I can't believe it. My clean car.
We
You
have
made me
a
come
remote
down.
option for a reason. I didn't need to be out here flirting with semi-trucks, doing...
Yeah.
Yeah.
Yeah, as they go into lanes.
Flirting with truck drivers.
No, I mean, like, skidding into their lane.
Oh, that's not what you meant.
They were getting into
No,
my
that's
lane.
what I meant. It's like, yo, roads are hella dicey.
They weren't that bad.
It was like Tokyo Drift on the way. It was like
The
back end breaks loose. Yeah.
Highways were fine.
How do you get to the highway, though?
My nice clean car. I had just gotten it washed. Very disappointed in you.
You
Very
guys have
disappointed.
garages, yeah. No, but,
Yeah, my car is dirty, too.
but it was a little sketchy getting here. So
Yeah, I have to stop at the car wash.
thanks. Oh, did you watch football last night?
I did.
That was not football.
I feel bad for the Vikings. We're wearing purple today.
Really?
No,
You feel bad for the Vikings? I've never.
I do. Well, Sam Darnold got sacked like 9 times, which is like a record. So, yeah, I felt bad for the Vikings.
I've never felt bad for the Vikings once in my entire career.
Oh, I
ever.
feel bad.
I was wondering how LA was going to play, though, coming out from the fire and stuff like that. You know what I mean? Like, be a little preoccupied. They came out. They took care of business.
Yeah, they had a change of venue, and they didn't miss a step.
That's for sure.
I just find it funny that you feel bad for the Vikings.
Because I have
feel bad for
empathy. Because it's a great story, like the whole season.
Really?
Because
It always ends in the playoffs, those great stories. I mean, that's where they're supposed to go to die.
Why are you so mean?
1-16. Okay? It was a great story.
No,
That's
and
where great stories go to die, the
One
playoffs.
of their players died in a car accident before the season started.
We were
and then there was
5
like a
and 12.
video about like how they'd like honored his memory for the like.
I had a bunch of dreams
It was a
died
nice
We were
before
5
we
and
came
12.
in today.
We lost to them twice. I couldn't care less what happens to that team.
I'm with Tom on this one.
Wow.
Yeah.
Yeah.
I'm gonna get you some estrogen.
I wish they would have been shut
This is
out.
old Saz. I love old Saz.
I wish they would have been
miss
shut
it.
out by the Rams. I wish they would have lost every single game this season and then got shut out by the Rams if they could have.
Wow.
Yeah.
That's a little harsh.
Nobody,
I know, wow.
nobody in Chicago ever for 1 second said, "Oh, I feel bad for Green Bay. I feel bad for."
No, I didn't say I felt bad for Green Bay. I felt bad for the Vikings. I don't have hatred in my heart for the Vikings like I do for the Packers.
Get a grip, girl. Get a grip and keep going.
You got to hate Detroit, Green Bay, and
I don't hate Detroit. I think that's a wonderful story.
and the Vikings. All three of
I
those
hate the
teams.
Vikings.
No,
I'm
you
with
got to
Tom
hate
on
them
this
all.
one.
All right.
But yeah,
No gray area.
there's no gray area. There's no
Totally agree.
okay. They're okay.
All right. So what did you do after you watched the game and then kicked some kittens last night? What else did you get up to in your evil lair? Good Lord.
And there was nothing else. That was late. It was late. But that game was over at halftime.
Yeah, that first half
It was
it
horrible.
It was a very brutal first half.
It was a brutal first half if you're a Viking fan, but then again, I don't even know any. Are there any Viking fans?
So then, who do the Rams go on to play now? I don't have all the brackets in my.
The Rams will play.
Tom's gonna get it
I
wrong.
think they play. Let's see. The Rams will play Detroit. I think. Is that it? Well, there's only 2 games, so they either play Detroit or the Eagles, but I think they play Detroit.
Okay, I just didn't know. I didn't.
I don't know. I can't find it. Rams at Philly.
Oh, there you go.
Whoa, who do you like?
Who do you
Rams
get wrong?
Eagles then?
I like the Eagles in that game because it's a home game for Philly.
Sure.
And it's,
Ravens got it tough against Buffalo. They got the toughest road to the
NFC is pretty weak.
Super Bowl.
The NFC is weak.
I wouldn't say it's weak.
Texans, Kansas City, and Commanders, Lions.
Yeah.
Yeah, the NFC is weak.
Do you think like the Commanders are having the season that the Bears wish that they had? Because it's their first round pick
Yeah, they were
quarterback. It could have been
horrible, yeah.
between the two. It's between Caleb or Jaden, right? And like now the Commanders have had like this storybook season. They get the doink from their OCD kicker. What a story.
No kidding.
I had no idea, but I was like, yeah, this really should have been like the Bears. Like, I don't know.
What are you trying to say?
I don't know. It's
Trying to
just
rub
Pick the wrong quarterback again? Is that what you're
no.
trying to say?
It's just interesting to when you can literally watch like sliding doors. It's like you watch like a parallel life. It's like what had happened.
Could have gone through that door. We
Right,
would have been
yeah.
somebody
Like
better.
what happens
I'm
when you
with
take
I know where
home
you're
that
going.
cocktail waitress instead of the other cocktail waitress? Then your whole life's
I'd have 50% more today. Well, actually, 72% more, but whatever.
It's just interesting, and I still have faith in Caleb Williams, but it's a
Well,
better
it's not like
outcome.
Washington's a great sports town. Okay, they haven't won anything in
Just the Hogs. Offensive line of
I know,
called
was
the
that
Hogs.
the last time they won? I mean,
I don't know.
in Washington, I'm trying to think the last time
When's the last time the Bears won anything?
Yeah,
won the
you know,
World
right?
Series.
You
Like,
never-
I don't know. The Nationals won.
And the Capitals won. They got Ovechkin. What are you talking about?
Did the Capitals win?
Yeah, they got
Yeah.
Ogie. Yeah,
Okay.
too. Yeah.
All right, so they
yeah,
got-
he's
I
got-
mean, I don't want to
beat
fact
Gretzky's
check
record.
you with my vagina,
They
but I
got one-
will.
1 or 2 titles.
Should have that thing dry for you then.
I'm just
Not
saying.
exactly a great sports town.
Okay, well, I mean, I don't know. I don't know what to tell you, but I mean, I'm excited though for football. Can I tell you this? Something that is funny and is sort of tangential to sports is the Swifties are building a monument to Pat McAfee because Travis Kelce was on the Pat McAfee show, and it's so hilarious that Swifties are locked in just watching Pat McAfee now. Because but Pat
What he
McAfee
hinted when they might get engaged.
no, Pat McAfee is a rabid Swiftie. No, but he first of all, he called all of Taylor's exes F-boys. And then he asked Travis about the new album, and we got like some good like details. Pat was out here doing the Lord's work. Shout out to you, Mrs. McAfee, because Pat said his wife made him listen to her whole discography and was like, yeah, Travis, you're a real stand-up guy compared to everyone else that she's been with, and he's right. So it was just funny. That's all.
I don't know if that makes him better or she just had bad picks the first time.
Yeah, I don't know, but it's we're here for it. I just think it's a funny, I don't know, universe
I
that.
don't know if not finding the humor in this. I can see right now.
No, I'm happy for those two.
Yeah. Oh, see, that's good.
I like them both.
I could see. I could see the empathy in
good.
your heart
Yeah, I
shining
like them
through.
both.
Oh, see, that's nice. Well, since we're getting new snow, is Vinny calling out sick today? Is he gonna hit the slopes?
Vinny has finals. I'm really worried because
You got the tutor.
that was for math, which is tomorrow. But he had science yesterday, which is also another
He doesn't
subject.
need
He
science.
struggled. What's that?
He doesn't need any.
He doesn't need it, but he
It's
struggles
just
in it a little bit.
general science. It's not a specific science. It's just like a,
I'm not 100% sure the good father that I am.
just
But
science. Just
I was
all
worried.
of
I told my wife, if he comes out and says he aced it, we're screwed. Because, there's no way he aced it. And the first thing I go, how'd it go? He goes, Dad, it was so easy. I aced it.
Oh,
I looked at
no.
my wife. I go, we're screwed. We're screwed for sure. Yeah, if he would have said it was struggling, it was hard.
I like
Anyway.
the confidence, though.
Thank you.
Yeah,
I mean, he's passing everything. I mean, B's
Yeah.
and C's and math is the only problem, but he's done better in there now.
That's good. He's on the right path.
I've been down this road, as you can tell with Nick, who called on the show. I've been down this road before. We're gonna persevere.
It's fine. All your kids just end up here.
They all
So
graduated in 4 years. That's right. They all end up
They
here.
all end up here. This is all where its culmination is.
Yep.
All
Yep.
where
Yep.
it's going. So
Yep. Yep. Should be easy.
fun facts all around. Hey, do you want to hear something funny? My dad texted me yesterday, and he said there's an airport in South Bend Regional Airport,
sure.
and it's serviced by Delta because my aunt, my dad's sister, she comes up for the holidays and whatever. So she came up for Christmas, and it was like $300, right, for her ticket. So my dad says for the game next week, the flight from South Bend to Atlanta. Do you want to guess what those tickets cost?
Oh, because it used to be 300?
It used to be 300.
200.
No. 1,300.
$1,000.
Yeah.
A little over $1,000 from the South Bend Regional Airport.
Those regional airports are expensive.
Yeah, but I'm saying it's not. It was $300 3 weeks ago.
Yeah, but what do you expect them to do?
I know, but it's just price
gouging.
Right?
But
yeah.
But the game is.
It's like, so what do you do? Do you just drive to Chicago and then fly out of Chicago to Atlanta, or do you take the what do you like? What's the move?
I mean, if you're flying from here to go to the game.
Yeah, if you're yeah.
Well, you probably from there you go to Indianapolis.
Chicago's closer to South Bend than Indianapolis.
Yeah, for
Is
sure.
it?
Mm-hmm.
I would think so.
90 miles. It's like
I'm going to go
3
with the girl
hours
who
to Indianapolis.
lived and grew up in Indiana.
Okay.
Yeah.
I don't know. Then
Chicago's closer.
And you go to Chicago.
Like O'Hare, it's about like 2 hours maybe.
still gonna
to
be
like O'Hare or Midway. Like yeah.
$1,000 from O'Hare probably.
I don't know. To Atlanta?
Yeah, it depends.
Yeah. Anyway.
Yes, South Bend to Indianapolis is 2 hours and 33 minutes, 149 miles.
Yeah.
Yeah. All right.
All right.
Listen, if you're a Notre Dame fan,
Sure.
and
I mean, they travel. They have money. They can
and
do
they're
whatever
in the national
they want.
championship game,
Right.
You're going.
Right. Yeah.
I mean, if you can go,
But at this point, I mean, you have enough time. You could just drive down there.
who wants to drive down there? I mean,
Well, like if you charter like a bus, you get like a nice bus.
if you're a Notre Dame fan and they're in the national championship game, you're going.
Yeah.
That's it.
Yeah. All right.
There's no.
Darn, I wish I had my RV. I could have packed them all in there and taken them myself.
There
I
you
would have
go.
taken your aunt.
Yeah.
Boom.
No
I
problem.
mean, you got to go.
Yeah. Okay. All right. That's it. What else you got?
I'm just saying. I mean, I don't. I never gonna experience the national.
Are you going?
What?
Are you going? I mean, now that you go to playoff games, you're like a fair weather fan. And stuff like that. Are you going
Never
to
been
this?
to a national championship game.
I bet that
No,
would
are
be
you going?
exciting.
No, but
Okay, that's all I asked. I mean,
Yeah.
now you become like,
bet it'd be
Johnny
fun.
come lately.
Yeah.
Yeah. No, I would like to go, but I don't really have a. I don't have a.
I wonder what the get-in price is, like what the cheapest ticket is for the national game.
championship game? I don't
Yeah.
know.
Like, is it $500? Is it?
Well, let's put it this way: you got two fan bases that will travel.
Sure. Yeah.
I
that are
mean-
very obnoxious.
Yeah, Ohio State fans will travel for sure, and Notre Dame fans will travel for sure.
Yeah.
And those are two. That's a marquee matchup
Sure,
for the national
sure.
championship game. It's a Monday night.
Yes.
Yeah.
Yes.
That's gonna be a good one.
Yeah. We'll see. We'll see what happens. Not as.
And off from work, right? Yeah, right.
From work.
Yeah, easy breezy.
Oh yeah, because the market's closed on Monday.
Yeah.
Correct.
Yes.
That is correct.
And are you going?
Enjoy your day off, paid day off, I might add.
Enjoy your paid day off.
You know, you're supposed to do like acts of service to honor Dr. Martin Luther King. It's supposed to be a day of service and giving back.
I'm gonna service.
I have some
I'm gonna service
volunteer
my wife. Is what I'm
opportunity.
gonna service.
I have some volunteer opportunities.
Every day is.
If you're interested.
I'm interested. We'll talk later.
Have you ever volunteered in your life
Sure.
that wasn't court ordered?
Sold.
So wait, where did you? Okay, wait.
Yeah, where
now
did
I'm
you
curious,
volunteer?
where
Let me
did you
hear this made-up
volunteer?
story.
Like
Go
a
ahead.
soup kitchen.
Go ahead.
At a senior home.
Go ahead. I wanna hear
At
it.
a pet
Where did you
shelter.
volunteer?
Like a boys and girls club. Because I volunteered at all
Yeah.
of those places.
I mean, I probably volunteered at all those places
Probably.
over the years.
That's not.
And coaching your daughter soccer for 1 year is not volunteering.
7 years.
Okay.
And by the way, every day I do God's work here.
I'm gonna stand out of the way from the lightning that's about to strike you.
Every
about to
single
smote you.
day.
I'm gonna just back up here.
Every single day.
This is hilarious. But no, you can't think about if you ever like volunteered.
I've volunteered for.
Where though?
I mean, I'm very humble about that stuff. Okay?
You didn't want to toot his own horn like that. He likes to fly under the radar.
I'm not talking about like writing a check. I'm talking about like actually.
Yeah.
know,
Like, did you
rolling up your
slop any
sleeves,
watered down mashed potatoes on a plate for
Maybe.
Thanksgiving?
Yeah.
Don't have to look at you.
I dropped off a turkey once.
Yeah, sure. Dropped off a turkey once.
And Anyway, I'm going to keep it moving. We got a great show for you today. It's a terrific Tuesday here on Tasty Live, and there's a lot of content headed your way at the top of the 8 o'clock hour. We're going to do an options jive within the expected moves. Do you want to elaborate?
Yeah, it's just a really good piece. How many times do we stay, inside the expected move? Like we might close in there, but how often do we stay in there?
Okay. And then we got Chris Vecchio in the house. Let me explain. What are you going to talk about with Chris?
I'm not exactly sure, but my guess is he's going to be all over the place today.
Okay. Well, there's a lot. You got PPI, CPI, and start of
All those
earnings
things
this
Chris
week.
likes.
Yeah. A bunch of stuff that Tom's gonna hate. So let's pray for Chris. And then at 9 a.m. we got a market measures: strangles and iron condors, finding the right size balance.
I mean, it's a good piece.
Okay.
The team put it together, so it's a fairly straightforward, not too difficult today.
Can you get too big in an iron condor?
You can.
Oh, okay.
Actually, it's easier to get bigger in an iron condor with using less buying power to get too big proportion to your account than it is in a strangle, because by
That's
default,
interesting.
you're going to use more buying power. You're going to run out of buying power
Sure.
before you get too big, typically.
Interesting. Okay. And then we got live from the trade desk, big boy Scott Sheridan, counting down all the top trending tickers over at Tasty Trade. That's at around 9:30 tomorrow.
I like you assimilating with the London crowd with the Uber and stuff, or maybe that's Canadian or something. I like it. You've been doing it lately.
It's like just our general like Midwestern accent here.
I like
in
it.
the northern part of America. Just got an accent, eh? What are you talking about? Tomorrow is Wednesday, and we need your trade ideas for what's your assumption. So if you have an underlying and a directional bias, we would love to hear from you for tomorrow's show. Yes. Now, don't call us. Email us.
Figuratively speaking.
No one will pick up the phone. But you can talk to Todd. Todd loves to talk on the phone. But that's our run of show for today. You guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Breaking news.
Across the wire. Leading story. Top story. Just in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today's a terrific Tuesday. It's January the 14th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Earnings yet?
Yes, one of the first days. Citigroup, JP Morgan, the moment you waited for is now.
Yay! What are you gonna do?
I'm not sure yet.
Okay. All right.
Good planning. Good planning.
Well, we'll see how the day shakes out, but we're in it now.
You have a JP Morgan position. You do not have a Citigroup position.
I have a small JP Morgan position, no Citigroup. Small Goldman Sachs position, but no other financial stocks.
Well, bond market sell-off is fueling an options trading frenzy as bets on a rebound surge. Some brave traders see an opportunity to make a quick buck amid the carnage gripping the bond market. The iShares 20-year Treasury bond ETF, you know it better as TLT, has surged over the past few weeks as bullish out-of-the-money call options. The demand is growing for that. Don't make that face at me. Don't make that stink face at me. It's going to freeze like that. But let's talk about the bond market in general. Don't get too pedantic.
I haven't seen a lot of upside calls. I don't know what that
call joy going on.
I don't know what that person's watching, but I have not seen a lot of call joy in TLT. Considering it's close, it's basically on its low.
Well, you can take it up with Joseph from Market Watch.
Joseph, I'm not sure what movie you're watching, dude. And I wouldn't exactly say that it's created an options frenzy in there either.
It's a frenzy. It's a frenzy.
The stock hasn't had an uptick. I bought some on the close. Where is it this today?
Bonds are up 4 ticks to 110.31 though, so they're
But where's TLT this morning? Because I bought some on the close, but I don't think it's anywhere.
TLT is bid. It's down 20 cents, 85.43 at close. It looks like it's offered at 85.30.
Yeah. So I mean, it was trading higher than that on the close yesterday.
So. What do you think happens? Because we got PPI, CPI, start of earnings. What does that affect bonds this week?
Hope so, because I'm long them.
Okay, well.
Let's see. Yeah, I don't know why. I'm not sure why this stock is.
What are you looking at?
Why would it be lower this morning with bonds higher? I'm not exactly sure.
110.29 on the bonds up to you won them at 111 right on the close. I think they just sold off.
Did they didn't have a dividend, did they? TLT?
TLT does have a dividend. It had a dividend on the it may have today's the
today's the 14th.
Had on the 18th of December, so it's probably
okay.
Not
Because it's weird the stock's down this morning. Okay.
Mm-hmm.
Okay. So maybe there is a frenzy.
I don't think so.
All right, fine. Hey,
bonds traded up last night to 111.16. Yeah.
On the high.
Yeah.
Poor bonds. Small cap stocks face heightened risk with rate cuts in question, warns a Bank of America. Gauged by the Russell 2000, small caps have slumped into correction territory. We haven't talked about the Russell at all yet this year. Let's talk about the Russell.
Not doing well.
Is that opportunity, or you stay away from it? What's the implied volatility compared to other
and by
indices?
not doing well, it means not doing well compared to the S&Ps and the NASDAQ.
I mean, it's just, it's been, we're long the Russell. We've been hanging in there with it.
How's the IV in there?
All right.
34 IV rank
Okay,
expanding. I talked about maybe ETFs becoming a little bit more of a play.
It's not 15.
This is true.
Okay.
This is true. Yeah.
Are you doing any index like pair, so like NASDAQ, Russell, or S&P? What are they?
I'm long the Russell, short everything else.
And to your point, the Russell has the highest IV rank between the even the S&Ps and
Boom.
SPY.
That's what I thought. Thank you,
Good
Matt.
job out of you.
Yeah. Hey, this is interesting. Federal regulators are deciding whether to probe the legality of trading in crypto.com futures contracts that would let investors bet on who will win major football games, including the Super Bowl. The 5-member CFTC is in the process of voting on a measure that would subject the contracts to a 90-day review. But basically, Crypto.com wants to start offering futures-based sports.
They already did.
Contract. Okay, well, the CFTC is reviewing the legality of it.
That's right. So here's how exchanges work. They are self-regulated.
Mm-hmm.
So you can launch anything you want. But that doesn't mean that you're not going to be told by the regulators that you can't have this product out there.
Okay.
And then you're going to have to figure out a way to unwind that product.
Sure.
And that's what originally happened with event-based contracts. I am rooting for crypto.com to get the for this to be approved. I think at best they've got a 50-50 chance.
Okay.
Probably worse than that, but I'm rooting for it to be approved. I actually talked to these guys the other day about this because I was very interested in it took some big balls to do this. I'll give them credit for that. And I just, I'm friends with those guys, so I wanted to ask them like what they thought the chances were that they get it through. And they said, they think it's around 50-50.
Well, here's what's interesting about it. The CFTC lacks the power to halt trading immediately, and the review would extend past the Super Bowl, which is on February 9th.
Right. So this is the problem, is that, like I said, they're self-regulated. So this is actually the exchange that we sold them.
Yes.
And so this was Nadex, which we owned. And we sold them Nadex.
We used to own, right?
We used to own. And we sold them Nadex. And then this is the product that they launched on Nadex.
Okay.
Which is these Super Bowl bets.
Okay.
And because they're self-regulated, they can do whatever they want. It just doesn't, they have to go through the whole review process. Usually, in the review process, they shut it all down.
Right. The regulators do.
The regulators do. Right. But this time, they did it they pulled a pretty slick move, which is they know the review process the next time they meet.
Right, so they can back
after the Super Bowl.
Right, yeah.
So it'll be interesting to see how this plays out.
All right, we will see what happens. Speaking in the crypto space, MicroStrategy resumes Bitcoin buying, but prices keep falling. The software company has spent more than $18 billion with a B in the past couple of months to bulk up its Bitcoin holding at shareholders' expense. Shares of MicroStrategy slumped again yesterday after the software company and cryptocurrency, I don't know, synthetic
Crypto-
play. Yeah,
Bitcoin went down, Bitcoin went down.
Yeah,
They all
they
went down, yeah.
continue to lean on shareholders to fund their purchases, and they used $243 million raised through the sale of common stock.
Yeah.
What
I'm fascinated by this strategy. I know that there's books, there's podcasts, there's lectures, there's a million people telling you that people that are long MicroStrategy tell you that it's brilliant. People that are short
different this
MicroStrategy
time, yeah.
tell you that it's a Ponzi scheme. I am totally confused in general. I mean, first of all, I'm not long MicroStrategy. I'm just short premium in there. But it's amazing to me, and I've written a cherry bomb about this, that people, it's just on paper, it's amazing to me that people will loan. I'm going to loan you money at 75 bips, not like at market rates, 6 or 7%.
Right.
At 0.75%, I'm going to loan you money on a convertible bond so that you can buy Bitcoin at 225 to 300% of its current price.
Yeah, where do I sign?
That's the net asset value of this thing, and people are doing it. And they give you a million reasons why it's a great trade, and I don't understand one bit of it. I'm like, that's such bullcrap. You're just talking your book, like you're just making this stuff up.
Yeah, I don't understand it either, but
MicroStrategy.
you do you.
If MicroStrategy trades at a discount to net asset value, which is entirely possible, Bitcoin prices fall, I think it crashes the Bitcoin market.
Interesting.
Who else is buying billions of dollars of Bitcoin
Sure.
putting it away?
Sure.
Now,
I understand.
to combat that, Michael Saylor goes, well, his personal Bitcoin, he's going to take it out of the circulation. You saw that, right?
When he
I did
passes
not see
on.
that.
But he dies.
Yes.
He's not.
When he goes to the other side.
When he goes to the other side. When he goes to Bitcoin heaven, his personal fortune, whatever that is in Bitcoin, he's not going to give anybody.
So
his
that supply is gone forever.
Right.
So it's
Bull Daddy.
that's interesting. I
But
don't.
what's interesting about that is how do his
kids feel about that?
I don't understand it either, but a lot of things like you understand about MicroStrategy.
What are you guys doing in MSTR, or even better, what are you doing in Coinbase?
Well, MSTR, we have position on in there. We're short strangles, and Coinbase we're short strangles too.
MSTR up around $6.5. Coin trading up around $5.5. Bitcoin itself trading around 96,000 and change, off its highs of just under 98, well off its lows of just around 94.5. So mid-range for the day right now. Even the S&Ps and NASDAQ basically unchanged. They were just up around 20 a moment ago.
S&Ps when I woke up this morning were up 30, and the NASDAQ was up over 100.
Whoa.
NASDAQ's down now, or unchanged, and the S&Ps are unchanged.
That's correct.
MicroStrategies is going to be something that they talk about forever. It's going to be one of the most interesting case studies in academia for, I give him credit for coming up with an unbelievable game that he's playing with the street.
Sure.
He pulled it off. I wouldn't buy a share of that with your money.
All right. Well, you wouldn't get very far with my money. Hey, the SEC.
You wouldn't even probably get a share.
The SEC has fined Robinhood $45 million for securities violations. The Robinhood entities have been charged with related to failures to report suspicious trading in a timely manner and failing to implement adequate identity theft protections. So.
I couldn't care less what Robinhood does.
I know. Well, I just reporting it. Well, just start the year. I don't know if you have a position in Hood or anything. No? Okay.
Flirting with $40, about $3 off its highs. Unchanged, basically. Maybe up 50, 70 cents.
Yesterday, the Biden administration announced that the United States is tightening its grip on AI chip flows across the globe. There are now only 18 green-lit countries where we can export our super-duper high-powered AI chips, and everyone else is going to have to jump through some
Super-duper califragilistic.
Right, yeah. This sent shares of the chip stocks lower yesterday, but this law is not signed, sealed, and delivered. It is in a review period right now, and the end of the review period will actually be in the Trump administration, so it'll be interesting to see where this legislation goes, but I want to talk chip stocks.
Nvidia is up around $1.50 right now. That was the reason why yesterday we had that lower open.
Yeah.
This news, for sure.
Yeah, I don't have it.
Nvidia, AMD, Intel. SMCI.
Intel never goes up, so we don't have to look at that. But AMD's trading 117.80. It too never goes up. It is up 50 cents right now.
Good job, AMD.
Way to
Yeah,
go,
we're
girl.
long some Intel. We're kind of flat everything else.
Okay.
Intel's up a dime.
What's your NVIDIA position?
Short some premium. That's it.
Even the S&P's up 37. Sadnov CPI just came out. Obviously, they like it for the even the S&P's. Nasdaq up 176. They were all just unchanged a moment ago.
Oh my God, the Nasdaq just rallied almost 200 points.
Yes.
Oh my God. Oh my God,
God.
girl.
Bonds up what?
Bonds are up 16 ticks, 111.10.
Woohoo! There's a rally in the alley. Get your stocks.
Bam, bam. Oh, that's like a Liz's.
Yeah, it's a Liz and Jenny song. Hey, tech supplier ARM is planning to hike prices, and they're considering developing their own chips. ARM Holdings, the tech supplier to many chip firms, is developing a long-term strategy to hike prices by as much as 300%. What could go wrong there? They are also exploring the possibility
Who do they think they are, an airline?
manufacturing their own chips. We don't talk about ARM a whole lot, but you can trade it.
You can. The markets are decent in there. 139 and change right now, up around $2.50, maybe even $3. Earnings are February 5th. I look at February options. They're good. 10, 15 cents wide. Pretty good.
Okay. Well, because today's Tuesday.
Option trades today. That's right, where you get your winning trades.
Hey, we could
Whenever you
have
see your podcast.
the first AI chip startup to go public in 2025 is a company called Blaze. Blaze. It's supposed to go public on the NASDAQ today. Here's a blast from the past. It's a SPAC. What? What? Blaze, founded by former Intel engineers, is set to go public today. Launched in 2011, kind of in the dawn of the Tasty era. Blaze has raised $335 million, and they're going to go public today.
What do you think about that? They're spelling it funny, though. Blaize. Blaze.
Blaize.
Yeah, this is their logo, so you can see. I don't
It's
know.
a crappy logo and it's a horrible name.
Okay. All right. Duly noted. Good luck to you, entrepreneurs, today.
I do not like the logo or the name.
Okay. Duly noted.
You had a dog named Blaze, didn't you?
Not me, it's Scott.
Oh, Scott.
Scott
Never mind.
did. And
You're
it
saying
was-
you
it
hate
was-
Scott's dog's name.
I don't hate Scott.
Service dog.
I don't like the name Blaze for this spelled BLAIZE.
It is giving stripper name. I'm not gonna lie.
Not a bad one. Not a
right?
bad one.
Please,
not a bad
welcome
one.
to the stage, Blaze.
Yeah, Blaze.
Yeah. See, right?
Blaze with it.
You know, you have a future in like announcing.
Yeah, right. Yeah. Thank you very much.
See, the problem with Blaze 8 with a BLA.
You know, I've been watching Landman, and screw him. I've been watching Landman, and they go to strip clubs a lot. Been a long time since I've been to a strip club, like decades, Sosnoff.
It's for the
I miss
best.
it, I think.
You're
Trying to explain to you
65.
that Blaze, yeah, you're 65. Can I explain to you first, Blaze? The reason they do this is because they didn't want to pay any money.
Yeah. They didn't want the 5-letter Blaze would have been expensive.
Except
if they could even get it, right?
They couldn't get it, so they paid a 6-letter Blaze. It makes no sense.
Sure.
So they get it for $9.95.
It's not that bad. I mean, hey, the math is mathing, and I like it. And by the way, it was PPI that came out, not CPI. So it's wholesale. It's wholesale. So it's wholesale prices, not consumer prices.
Empire State Manufacturing Survey came out too.
Yes, yes.
That's my favorite.
Yes, but it was PPI, and wholesale prices rose 0.2% less than expected. So that's what that was.
That's my favorite.
But then we'll get CPI tomorrow. Woo. Microsoft CEO says is forming a new AI group to build and run apps for customers. Satya Nadella told employees that a new CEO will lead a new group called Core AI Platform and Tools, and the mission is to build end-to-end Copilot and AI stacks to help just build apps, build and run apps for customers. So say Tasty needed new apps, instead of stressing out our devs, AI could just build our apps for us.
Yeah, sure, they can just tell them, AI, here, build me this.
Yes, that's the point.
Sure, of course.
What are you doing in Microsoft? I'm going to keep it moving. What are you doing in Microsoft?
I have no position.
Okay. You don't have any position in Microsoft?
I don't.
Okay.
Ivy Ranker 49 is pretty good. Earnings January 29th, that's up around $2. And I had it right, CPI, because I was looking at Wednesday.
Oh, okay.
So I had it right. I was just looking at the wrong day.
Okay, if that helps you.
Thanks.
Tom, I don't know if you caught the scuttlebutt last night. And again, I can't verify the veracity of this, but I'm going to report it because Bloomberg reported it last night, and it's good enough for Bloomberg, it's good enough for me. But China is mulling the potential sale of TikTok to Elon Musk. What do you do? Because you love TikTok, but you hate Elon Musk. What does this mean for you personally?
I so want this to happen.
What? No, but I'm so curious.
We had this conversation before the market opened. I hope he gives the same answer that he gave before.
What are your thoughts on this? And again, I can't verify how
I
true
doubt
this
this,
is.
but I won't give up TikTok.
You won't give up TikTok then.
Is that the strangest thing?
I like TikTok.
So you get to pick and choose?
No, it's like an accommodation. I don't even think. First of all, I don't think this. I think it'll go if they.
Oh my God, you're worse than Zuckerberg right now. I am so disappointed
Why would
in you.
China be mulling the sale of TikTok? It's not like.
Well, because China has to
the 19th,
divest.
they gotta come up with
It's on China. China has to divest. Like
I understand, but
they didn't
China,
get an
when you say
extension.
China. What does that mean?
ByteDance. I mean ByteDance.
Well,
China.
ByteDance is a company.
In China.
Yeah, I understand.
There's no free will in China.
China doesn't own TikTok.
China owns everything. China owns you. Yes.
They don't know your data.
Yeah.
China doesn't own TikTok. Okay, TikTok is owned by somebody else.
Okay.
Mostly by American firms.
Okay. Well, that's.
So I'm just curious. What does Susquehanna do?
Okay.
I thought they're the largest shareholder of TikTok.
Anyway, it says Chinese officials are in preliminary talks about a potential option to sell TikTok's operations in the U.S. to billionaire Elon Musk should the short video app be unable to avoid an impending ban. Again, I can't.
I thought the largest shareholder was the CEO of Susquehanna in the U.S.
I don't. I thought it was
Pretty
Oracle. I thought it was Larry Ellison. I don't know. I don't
it
know.
was
It's
Jeff
all
Yazd.
so wrapped up in.
I thought it was Jeff Yazd. He's the largest shareholder, like 35% or something.
You could be right. Yeah. Again, everything's very opaque around TikTok and TikTok
I don't know.
US.
That's what I thought.
What this means.
I don't know.
General Atlantic, BlackRock, Susquehanna. To your point,
these are all
Thomas.
U.S. They're all U.S. private equity firms.
I'm going through this very quickly, but yeah, it does look like that.
Yeah. General
20%
Atlantic.
owned by the employees, 20% owned by the company's founders.
Yeah, General Atlantic is a New York City private equity fund. Who's another one? Susquehanna is obviously a high frequency.
BlackRock, General Atlantic.
And BlackRock is
Susquehanna Group.
Yeah, those three are all New York. Well, Susquehanna is Philly based.
Well, we will find out what happens. The
It's super weird. I don't think China owns
TikTok
any of
ban set to go into effect, I think, January 20th. So. No, by January 19th. Sorry, my bad. Hey, in other news, Kalshi, friend of the show, he had Kalshi. His name's Donald Trump Jr. as a strategic advisor to the prediction market firm. What are we doing?
I don't know what they're doing.
What are your thoughts on this?
My thoughts are that they're idiots.
We still use Kalshi.
Oh,
I don't use Kalshi.
We still look at it for markets.
I don't use Kalshi. Never have.
You've looked at it for markets.
I've
We've
looked
quoted
at their
them.
site. Yeah,
That's what I asked. Will you still look at it?
Yes.
I like their CEO.
Yeah, we had him on the show. It was great.
like him.
We had him on the election on special.
But
Are you just mad he chose the junior over you?
I'm mad he chose him. I just think it's kind of lame.
But it's sort of just in that vein of Bezos and Zuckerberg of trying to align companies trying to be more favorable with the incoming administration.
Yeah, I understand.
And
I'm not
so-
an idiot. I get it.
Let us vote on that.
I'm gonna keep it moving. My mama said if you don't have anything nice to say,
Let us vote on that,
don't say
Sosnoff.
anything
Still a
nice.
republic.
I will say this though, Bat, if you could check DJT, it is rising in the run up to the inauguration, and that is something that you can trade.
It is down around $3 after rallying around $6 yesterday. So giving back about half of its gain from just under $40, closed at $42.91 DJT. You think Elon buys that just to pay the Donald who owns a lot of it?
Sure.
Give him a payday?
Why not?
There you go.
If you're the richest person in the world, you can buy anything you want.
Exactly.
Whatever.
But I'd rather own buy like some football team or something. Have some fun with it.
Agreed with you. Buy one of those too.
Pinterest.
What the hell?
Here's a blast from the past. Pinterest pins. Pin stock dipped yesterday as analysts see the platform struggling to grow ad revenue. Pinterest stock fell after Jefferies downgraded the company and lowered its price target in these days where a big
unchanged at 30.41, just off of its lows in the 28.29 handle.
I haven't traded Pinterest in like.
Ivy rank of 70 is pretty good. You may have did something here February 13th, just the day before Valentine's Day, Sadno. Get you flowers in.
There you go. 3 days before my birthday.
Is that when your birthday is?
February 16th.
I'm just kidding. I knew
Worked
that.
here for 15 years.
I knew that. I was just kidding.
It's fine. You guys don't care. But do you have a Pinterest position, Tom?
I don't. I haven't
You have a
traded
Pinterest account?
I haven't traded Pinterest in I don't even know how long.
In a hot minute. Yeah. You know, I use Pinterest on the reg. I use it for recipes.
Yeah, I know.
I remember Pinspiration. That was beautiful on Friday.
I am.
Apple is fighting a $1.8 billion App Store lawsuit in the first of UK class actions against tech giants. Apple has abused its dominant position by charging app developers an unfair 30% commission through its App Store, costing British customers up to $1.8 billion. You think this fee is egregious, but you don't normally agree with regulations from the UK or the EU. But aren't they right here that Apple is abusing its power, taking 30% off the top from app developers? Because we're considered an app developer.
Yes.
Okay, so then you like this UK regulation then? Because they're going to fine Apple and hold them to account.
I like the lawsuit, yes.
Yeah, okay. All right.
Yeah, I think it's absolutely ridiculous.
Yeah, and Apple's paying a price right here, unchanged basically. Up
30% is ridiculous.
Sure. That's a lot.
It is a lot, as we have come across.
I think 10% is a lot. 30%.
They have to charge something. They can't. They're not running a charity.
Which is something Sadov is not familiar with.
Apologist?
No, I'm just saying they're running a business.
Okay.
It's not a charity.
Like
you don't expect it to be zero. Like
No, I don't expect it to be zero, but
Okay.
a couple of percent, fine. 30%, it's ridiculous.
Also, I'm getting chiming in here. I have a birthday twin, and my birthday twin is Frankie, who runs the YouTube chat. And Frankie says he will be 76 on the 16th. So, 70, not 76. He'll be 70.
Oh, a little typo there, huh?
Oh, 74. Wow. No, sorry. The numbers keep changing.
Oh, my God.
He can still chase down a javelina.
Yes.
Oh, yeah, he's still got it.
Yeah, so no,
Frankie
Frankie and I are birthday twins, so that's fine.
Separated at birth.
We could not be more similar. Like two peas in a pod. One of your biggest losers yesterday, unfortunately, Moderna. Stock plunged nearly 17% after the company lowered its 2025 sales forecast by $1 billion. The biotech company now expects 2025 revenue to come in between $1.5 billion and $2.5 billion. What'd you do in mRNA?
We didn't do anything. We had a position on it there. We were a little long coming in yesterday. We were short some puts. It did not work out very well.
Stock's up small, 20 cents, 30 cents, not going to help.
Yeah, it did not work out well.
Mm-hmm.
It did not go the way that you were thinking it was.
It did not go the way I wanted it to go.
Almost every aircraft being delivered by Boeing and Airbus is delayed. That's the head of the aircraft leasing giant SMBC Aviation Capital said on Monday. Yeah, the aviation story here. Later adding that engine makers like Whitney Pratt are struggling, Boeing struggling, but basically he's just like every single plane, regardless if it's Boeing or Airbus, is being delayed right now.
That's interesting.
Yes, but those are just facts. Airline CEOs are complaining about the lack of engine deliveries and repairs. Manufacturers are trying to placate antsy customers, but there's just a huge backlog, just a confluence of issues plaguing the aviation industry.
Confluence?
Yes. And also aviation stocks taking a hit yesterday because oil keeps going higher. Not good for airlines and cruise lines. What are you doing in Boeing or
Boeing happens to be up almost $1 right now this morning. Oil, you just mentioned, down about 60 cents at 76 and change, still at the high end of its range, numbers it hasn't seen since the summer, July, August.
And RTX owns the Pratt and Whitney engine that are just not working right now.
Yeah, we use landing gear.
Yeah. Mm-hmm. Hey, speaker manufacturer Sonos. It is actually a publicly traded company. We don't talk about it a ton. But their CEO, Patrick Spence, is leaving the company after 8 years on the job after a bungled app update frustrated customers and hindered growth. I have Sonos speakers in my house.
Bungled app update?
Yeah, it was the worst app rollout in like the history of mankind, and people were like, it bricked people's devices. People got like super upset. It was not communicated well. It was super clunky. Everything that you had seamlessly wired and connected in your house, all of a sudden you had to like redo it. It was a mess. It was a nightmare. The app was buggy and it sucked. And so now I mean, I don't know that I've ever seen a guy lose his job because of a bad app update.
I don't know either.
Well, Sonos, S-O-N-O is Sonos.
Yeah, it traded down around $13. It's $14 right now, maybe $14.50 or so. It looks unchanged.
I love the speakers, though. I mean, it's great.
I do, too.
You can connect them in all your rooms. Yeah.
I've used it in a while.
Their CTO rather than their CEO.
Yeah, right.
It's got to start at the top. So
I understand, but I don't think a CEO has much to do with
I haven't been able to use my Sonos speaker since my wife took my Igloo away for the wintertime. She said it was
your palapa?
Yeah, my palapa. She won't
You don't have an Igloo anymore?
No, she wouldn't let me put it up this year. She said it's an eyesore.
It is.
It is. It's like a hat, especially too with the wind. I like how windy it get. Like
I've got it in a nice little secure. It's on two sides. It's almost like a lean-to.
She made the right call.
Tucked into the corner.
She made the right call.
Went through an Igloo era.
Yeah. Yeah, 2 winters in a row. It was beautiful. I loved it. I would bring your cardboard cutout in there with me and spend time with you in there. It was.
I don't need to know.
What's that?
Was there a heater in there?
Yes, of course.
Yeah, of course.
I was in the Igloo.
Yeah, you had an Igloo too?
No, I was in yours.
Oh yeah, that's right.
With
that's
the
right.
kids.
Shh. What happens in the Igloo stays in the Igloo. It'd be like
with her children, you pervert.
Sorry. It'd be like 50, 55, 60 degrees in there. It would be beautiful. It would be great.
Hey, McDonald's is closing 3 of its new concept stores, Cosmix, a year after opening them, but they do promise more locations to come. In a press statement released last week, McDonald's said it will close 3 of its 7 total locations open since December of 2023. The first location is actually here in Bolingbrook, Illinois, Chicago's very own Bolingbrook, Illinois.
What is a Cosmic?
So they're more beverage focused. It was actually more of a bad coffee competitor, and they offered like They offered more just like snacks, so not like burgers, fries. So this is the menu. They had a more extensive drink menu with like more crafted drinks, and then they had like snacks or like a small bites menu.
So we put them out of business?
Yes, basically.
Sure,
That's. I mean, if you read between the lines.
I'm not sure what McDonald's is doing as a stock.
McDonald's closed 283 and change at 284 and change. I mean, even the S&Ps are up 30. McDonald's up small, about 20 cents.
The 76ers and the Flyers owners are announcing plans to build a new arena in Philadelphia in 2031. The ownership group between the two companies announced the new arena will be home to the NBA team and the NHL team that comes a day after the 76ers abandoned plans for a $1.3 billion arena in downtown Philadelphia. This would be a 50-50 joint venture.
They announced they're going to build it 6 years from now. I mean,
it takes time. It takes time.
I guess so.
Philadelphia freedom. Finally today for my viral video of the day. If you made a resolution and maybe things aren't going to plan, perseverance is the key.
Did you make a New Year's resolution?
No, but I've seen this video.
And you should never give up. This is from the Red Bull account. I love the Red Bull account, but look at the dedication, because sometimes you only see the finished product, but look at the dedication of this skier trying to do a loop-de-loop. Watch this.
Oh, that looks like my son. Gotta go skiing.
Ooh, got it!
Yeah.
But yeah, you're falling from the apex of it and like smacking onto the ice.
I
Like,
did that when I was younger.
okay, I gotta go, Forrest Gump. What's coming up next, Bat?
We're gonna take a quick 90-second break. I'm gonna get the little throw up out of my throat there for a little bit. Come back. We got more Tasty Live in about 90 seconds with Confirm and Send.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough with just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found Tasty Live from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on Tasty Live, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with Tasty Live, I was able to do that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's get to before we get to that, let's take a quick look at the market. Even the S&P's up 27, Nasdaq up 130, and the Russell up 17. Dow up 150, and volatility in by 19 cents, off of their lows of 17.95. Well off of their highs of 1870, but relatively high, only down 19 cents. Bonds up 2 ticks, under 111 again. They went over 111, 111 and a half, 111.16 to be exact. Notes also higher, but only by 4 ticks, 107.11, about 7 ticks off of their highs. Bitcoin almost flirted with 98,000. It's under 97,000 to 96.7 right now. Of course, it was under 95. 94.5 earlier. Oil down 37 cents, was down 60 cents a moment ago, and gold basically unchanged. Some of the bigger movers that I saw this morning, you got Tesla trading $4.14, up $11 after rallying $8 after being down $8 or $9 on the opening yesterday. So about $20, $25 off its lows from yesterday. Confirm and send.
Yeah, we'll see if we can hold this rally today. Bonds certainly can't. Let's see if stocks can.
Bonds certainly can't. Volatility couldn't hold its depression. So we'll see. We'll see. Yep.
Tuesday, January 14th. Let's do it. Is there a definitive point at which one should manage a strangle? I've noticed some of you manage when a strike is touched. Some of you don't wait that long. I'm one of those people. But is there an optimal point to manage?
I mean, for me, I try to do it when I get to around 15-ish deltas on either side, plus or minus 15 deltas. If I start out as delta neutral, then I'm looking to roll the untested side and reduce my delta by at least 50%. So that's what I found works for me. See if it works for you, or wait a little bit longer if you'd like to. That's what I do.
I manage as soon as I'm
uncomfortable. I just don't know what that means. I always say
I know,
that way.
because that's different for each person. So some people get uncomfortable if the strike is breached. Other people get uncomfortable if the deltas get out of line by a small amount. I don't like to say that there's a formula, which is, some people here say, well, when the deltas get double when the short delta is double the delta, when one side is double the delta of the other side, then it's time to adjust. I don't necessarily think that's the case. I think that you should adjust as soon as you're uncomfortable. And whether that's a couple deltas or a lot of deltas, each person's a little different. So I don't think there's any risk to over adjusting and to be over aggressive. So I think it's fine. Manage whatever you want to.
Mm-hmm.
I mean, I used to take a more mechanical approach to this, but I think the reality is I'm more aggressive than that. Let's go to the next slide. If I buy a put in a stock, then the company goes bankrupt and stops trading, can I still exercise my put?
If I buy a put in a stock and the company goes bankrupt and stops trading, it will be exercised. You could elect not to. It'll be in the money. So yeah, you'll get the worthless stock.
I mean, there'll be a time when they require that
you to make a decision.
Yeah,
you have the right, not the obligation. When you own something, you have the right. When you own an option, you have the right, but not the obligation.
If you buy a put and obviously the stock goes to zero, so your put is deep in the money, there'll be a time when they reach out to you. If the company goes bankrupt and stops trading, the brokerage firm and or whoever does it, OCC through the brokerage firm, reach out to you and they'll say, you need to get out of this position because this stock is no longer going to trade. And then you'll take your profits then. There's no reason why you wouldn't take your profits.
Yeah, why wouldn't you? I mean, it can't go less than zero,
There's
right?
no reason.
I mean, we're not talking about a short
option. When it stops
option.
trading, you have to get out. You'll take your profits. You'll take your money. You're done.
Yeah.
But you can't. There's never a time when you can't exercise.
Right.
Yeah. Let's go next slide. What's the difference between adjusting deltas and recentering deltas?
And I mean, since you threw in the word deltas in there, I would say nothing. I mean, we're not talking about option. I mean, I guess we're talking about an option position here, but we're not talking about the option itself. So adjusting deltas and recentering deltas. I don't think I've ever said recentering deltas. Usually when we're adjusting deltas, I'm rolling up the untested side to reduce my delta by 50%, as I said in the previous email. When I'm recentering, I'm not usually recentering deltas. I'm usually recentering the options, meaning I'm buying back the options that I'm short and then selling another strangle in the same month, or prefer to be in the next month. I'm selling another strangle with delta neutral strangle to it.
So adjusting deltas means that you are just moving the untested side closer to the tested side. That's what adjusting deltas means. Recentering deltas, which we don't actually say recentering deltas, we'll say recentering the strikes, but it's the same thing. And if you're recentering the strikes, what you're doing is you are basically buying back your existing strangle and putting a new one on. And the reason that you would do that is because you feel like you've got too close to at the money on both sides, when the reason you adjust the deltas is you still feel like you have lots of room to manipulate and operate and adjust and do all that kind of stuff. So the difference is, in the end, they both serve the same purpose.
You're reducing delta.
Which is neutralizing your risk. Okay, neutralizing your delta or neutralizing your risk. But they're just done two slightly different ways. Adjusting deltas, adjusting one of the strikes. Recentering is when you recenter deltas, you're entering a 4-legged spread. When you're adjusting deltas, it's only a 2-legged spread. Let's go to the next slide. So this person writes, I'm in a strangle that expires in 24 days, but it's being tested and I need to make an adjustment. Would it be better to move the untested side now and then roll it back out in time in 3 days? Or can I roll it out in time now?
This happens to me all the time. I typically roll out now. I know commissions are small these days, but again, I'm trying to reduce my delta. I'm going to do it in 3 days anyway. So I save myself a step and roll now to the back month and change the strikes typically.
Yeah, of course. Like if it's inside of like a week, we'll probably just roll it out to the next month. You can certainly adjust at 24 days, no problem. But you save yourself an extra step if you just roll it out in time.
Yep.
There's no set rule. It could be 25 days, it could be 22 days, it could be 17 days. 21 is optimal, but anything around that is acceptable. So whatever you want to do. You want to keep it in the same month, keep it in.
It's 6 of one, half dozen of another.
Yeah, and
right?
if you want to roll it out in time, you just save yourself a step. We usually roll it out in time. Just get wider. It saves a step. Simple. Let's go next slide. On Sunday night's first call, I believe you said something about January expiration being positive most of the time. If that's the case, why wouldn't I buy a bunch of 1 DTE calls on Thursday? Just take a shot.
If that's what you said, you certainly could do that. You could do that any day, not because Tom said it. You could put side 2. Hey, buy both. You can take a shot wherever you want.
Let me find the statistics. Let's see. January settlement over the last 27 years. This is from one of our viewers sends to me every month, Brad. He's great. Number of down expirations, 8. This last 27 years. Number of down expirations, 8. Number of up expirations, 19. I think that's a pretty
statistically significant.
That's pretty statistically significant. Okay, over 2/3 of the time, 70% of the time, January expiration is higher. The average down on those 8 times is 1268 in the SPX. The average up is 851. The average move is 981. And let's take a look. Going back and looking at since 2017. So just the last. Just looking back at the last 8 years, okay, up $9, up $9, up $21, up $9, down 13, down 10, up 14, up 18. So that's 2017 to 2024. What did I say? Yeah, that's 8 years. And 6 of the 8 were up in the last 8 years. So I would say that that's pretty. That's the
statistically significant.
Yeah, that's the numbers that I mean, that's the actual numbers. Last 8 years, the average move has been up 13.23 points. Now, remember, the index was lower, so that was a higher percentage.
Sure.
The reality is that, I mean, it's, 6 out of 8. It's 75%. So I think that was, that's all I meant by that. Was I suggesting that you should take a shot? Absolutely not on Thursday afternoon. But I'm just giving the information.
But they're taking the information that you gave them and they're working it out to their own liking. If that's what makes you happy, certainly go right ahead.
I mean, if it was a super bearish expiration cycle, I would tell you that too. Okay. Let's go next slide. I thought it was interesting. I don't think anybody was going to trade off it. I've been trading a smaller, this person writes, I've been trading a smaller account for the past few years and having a lot of success from what I've learned with you guys. Thank you for that. Now I want to move the bulk of our investments to Tasty, but I'll need to convince my wife, it's always the wife.
Don't never talk to mine.
Who really doesn't have much interest in trading. Any advice on how I might approach her?
I mean, flowers work to some degree. New car might be
flowers.
Flowers work to some degree, I said, but a new car or something like that probably work better. I would buy her something. That's how I win him over. Buy him something. Works for me.
The most power move you have, just lie. Okay, just don't say anything. I have learned throughout the years, and I am not the world's best husband, but I'm not even going to go there. I'm just going to get myself in trouble. So, I don't know, dude. You figure it out yourself. I can't help you here. This is outside of my.
Buy him gifts. That's usually the best way to do it.
Yeah, I don't have this conversation. It's not part of. It's not in my. I've been trading for so long that I think she gave up on the. On that part of our lives. I mean, we're still here. We've got lots of toys. We're good. So she doesn't care anymore.
Let's take a quick 90-second break and come back. We got more Tasty Live after this with an option jive. Even the S&P's of 24.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. If you didn't know that, I don't have any idea why you watched.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around
82, 83. I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because we were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him, he was a charity case.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
It's option. Jive. My friend, you know what that means? Time for a little bit more Tasty Live with this option jive. Even the S&P is up 20, holding steady. Volatility down 10 cents only.
Up steady, holding up 20, holding
Up
steady.
20, pretty much mid-range for the day.
Up 20, holding steady.
Mm-hmm.
Up 20, holding steady. It's almost poetic.
Yeah, I think I've
It's
done better.
8:13 and 33 seconds. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thanks for spending your morning with us. We got a bunch of stuff for you today. Actually, we got a packed house. Option jive.
Let's do it.
Within the expected move, ending or staying. You know what that means?
No idea.
Within the expected move, do we end up in there?
Right.
Or do we stay in there the whole time?
Right.
We're going to give you some pretty interesting statistics today that I don't think it's going to blow your mind in any stretch, but I think it's going to hopefully confirm some of the things that maybe you were thinking.
Mm-hmm.
We decided to take a look at expected move. And a research team came up with this. Implied volatility says what the standard deviation of annual log returns would fit with current option prices. Higher option prices mean more anticipated strike breaks, which means higher implied volatility. Expected move is calculated by scaling the implied volatility by the spot price and by the square root of the duration. We don't have to make it that complicated. This gives us a theoretical standard deviation for price changes and can be a useful guideline for picking strikes. So the question is, how reliably do underlyings stay within their expected moves? When an underlying leaves its expected range, how likely is it to return? So how reliably do underlyings stay within their expected move? Can I give you an example?
Sure.
If the expected move, let's just say, is exactly one standard deviation, so theoretically, all right, it's going to be about 68% of the time it's going to stay within there. What do you think
the actual is?
Actual is, if you're doing like that S&Ps. And then if it leaves the expected range, how likely is it to return?
Oh, it's going to, I say it ends up inside the expected move 73% of the time, ends there. And I say it goes outside the expected move and comes back 85% of the time.
Oh, you said the same thing.
No.
Oh, go ahead. Repeat.
I say that it stays inside the expected move 73% of the time.
Oh, okay, stays inside the whole time.
But it goes outside and comes back in 80 some odd percent. Another 10% more.
Okay, so 68 is the theoretical.
Right.
Stays in 75.
I say it's high. I just say it's higher by about 10 to 12.
Okay, let's take a look. Let's go to the first slide, Ben.
On each one.
Next slide. Oh, okay, so we did a study. We looked at SPY, Qs, IWM, Apple, Amazon, and Google. The big kids.
Yeah, Apple, Amazon, and Google are going to be higher than the ETFs for a kicker.
In each underlying used opening implied volatility levels to compute the expected moves for the remainder of the day, the week, blah, blah, blah. We contrasted how often the spot price remained within the expected range for the entire duration versus how frequently the price finished within the expected move. However it got there. Okay?
Let's do it.
Let's go. Next slide. Let's see what we got. All right. So in practice, closing prices fell within the 1 day expected move much more often than the 68% of the time. This is actually 1 day, but much more often than 68% of the time that theory would suggest. So SPY, so you actually
pretty close.
Let's do the bottom one. You said around 75, and it was actually 79. The Qs were 75, IWM was 71, Apple was 75, Amazon was 70, and Google was 68. All of these are greater than the 68.
Sure.
And then closed within, so it went outside and came back. You were also pretty close. You were a little higher than you thought, but 89, 87, 87, 87, 85, and 84%.
Set it and forget it, Sosnoff. 1 day you'll be beautiful. Don't worry about a thing.
Don't you worry about a thing. There's a song that says that.
80 some odd percent of the time is going to work 100% of the time.
Let's go next slide. So now, regardless of the time scale, about half the time that an underlying exited its expected range, it wound up returning. So now we're going out 1 week. And the time scale is a little different here. Wasn't quite as good. Stayed within the expected range, much less. But closed within the expected range, still greater than. Okay? So the closing within the expected range was pretty damn good. Stayed within, not so much.
Not so much. Not so good at all.
Yeah, let's go to longer than a week, Beth. 30 days. So you cannot expect a stock to stay within, the same range for 30 days. That's unfair. And you can see here that it's probably less than 50% of the time. But closed within, in most cases, except for Apple, every single one was essentially a winner. SPYs, Qs, IWM, Amazon, Google. The degree of overestimation was less when looking at less short-term moves, but only for Apple did we see the expected move broken more than 32% of the time in the end. So, you know what? The bottom line here is it worked according to plan. Like our numbers are pretty damn good. Like the expected move numbers closing within in the end. This is why some people will adjust aggressively, like me, and maybe we over adjust from times. Maybe we, who knows?
Of course, you over adjust sometimes.
And
Sometimes
then-
you don't adjust enough, and other times it's just right.
And some people who are much more passive about it, you might end up doing just as well or better.
It's the velocity of the swings in between that you mitigate when you roll up the untested side. For me, that's what typically happens.
Let's go to the next slide.
It allows you to stay in the trade longer.
I'm sorry, go back one, Beth, for 1 second. Go back one, just 1 second. Yeah, this was 30 days out. I'm sorry, I just to make it clear, all the numbers closed within in the 70s except for Apple. Let's go to the next slide. So the takeaways. Over short time periods, implied volatility expected moves regularly overestimated the realized moves. Using expected move-based strike selection can allow us to trade confidently in a variety of underlyings. Sometimes it may be necessary to exit a position that's looking bad, but giving losers a chance to turn around can drastically increase your proportion of winning trades.
Good job. Good job out of you. Good job out of the team.
By the way,
great job out of the back.
That's why we hang in there. That's why we don't. I was looking at this. I was looking at some platform in a different place, somewhere in the world. I'm not going to mention where. And they have a feature which stops you out on every move. And I'm like, I was trying to explain to the person that created it. I was like, the problem with this is that 90% of the people are going to get stopped out.
Right.
This makes no sense.
Right.
Because markets don't just stay in one spot.
Right. You put something inside of standard deviations, you're going to have to react.
Yeah.
Right. 90% of the time. Even the S&P's up 26, volatility in by 24 cents. Bonds 110.31. We're going to take a quick 90-second break and come back. We got more Tasty Live sound. We got the opening bell coming up next. We'll be back in 90 seconds with Tasty Live.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Oh, yeah. Tasty Nation, good morning.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than, boom, trade like a trader. Tasty Trade. Make your move.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. Well, you know what? The opening bell is imminent, sounding off in about 4 minutes. Even the S&Ps are up $27.75. NASDAQ up 131. Russell up 17, and the Dow up 156. I guess the Dow is the weakest of the group, followed by the E-mini S&Ps, and then the Russell is the strongest of the group on a percentage basis. Volatility in by 24 cents. 1% move lower, but you can tell here that volatility is still elevated across the board relative to where it was just a week or so ago. Bonds up 1 tick, Sadnoff, 110.28. Bitcoin, $97,000, up $3,000 off of its lows made last night at 94.5. Oil down 50 cents. Ivy rank of 39 has been expanding in oil. Gold down $5. Ivy rank of 60, holding steady and high here in gold. Silver down small, 6.5, almost 7 cents. Net gas down 11 cents. That's a 3% move. But you can see here on the chart, net gas has been in the stratosphere. Corn, wheat, and soybeans, kind of a mixed bag of tricks. Euro is higher by 0.5%. Sadnov. That means the dollar is crashing. I'm just kidding. It means the dollar is lower.
Yeah, for a change.
For a change,
we're making
first
money.
time in what seems like forever. Sure.
For a change, we're making money in the euro. Well, actually, the yen's and the British pound are both down tiny.
Yeah, the yen's not moving in tandem,
but the euro's up 500 pips.
Euro is, I believe, the British pound was when. Oh no, down again. Sorry, it was earlier.
Yeah, we're pretty quiet this morning. Mm-hmm. Free market, we're pretty quiet this morning. Mm-hmm. I did get some notes off at good prices.
You did get some notes off 107.18
last night.
They're about 8 ticks lower according to the last price here.
This is a big move in the notes. Mm-hmm. But I even sold a tiny amount of bonds last night at 111.12, but I had them at 18, missed them.
They only traded up to 16. That's why you missed it, but yes.
I know. I had an 18 offer in and a 20 offer in. Did not get filled. Anyway, looking for stuff to do today, that's for sure. Mm-hmm. I'm on a mission.
That was off of the bat low there on the bonds that Bet called yesterday. You obviously don't subscribe to my afternoon newsletter or nighttime newsletter that told you to sell them at 15 or 16. You didn't get
lower than your bat buy yesterday.
Yeah, so you didn't get that. I know my bet buy was around even. I got that.
Yeah. So I wouldn't wouldn't hurt yourself too much patting yourself.
Well, like most newsletters, I would have told you to get out at 15 or 16 last night and reload this morning.
Of course you would have. I thought they were going to be a lot higher this morning. No bueno.
Yep.
I got a couple of adjustments to make this morning, but it's just a question of how much do I want to chase Tesla, or do I?
Yeah, Tesla 414 now. Yeah, I agree.
Want to chase Tesla? Do I want to chase Coinbase?
And then volatility contracted yesterday in Tesla. It's probably going to expand a little bit on the way up here. We'll see the IV rank of 76 if that changes.
Yeah, so we got to deal with Tesla, Coinbase, MSTR. It's the same cast of characters. I don't think there's much else going on this morning. It seem like the big ones.
No, not so far that I could see. But there's always something that creeps up. But we'll see. Opening bell's imminent here in about 15 seconds. Imminent.
I don't see a lot of other stuff.
Apple can't get out of its own way. It's only up 30 cents with some of the rest of the market. Let's see what NVIDIA is doing pre-market or just before. Oh, there you go. NVIDIA's up $3. Your Chinese, you got a very low ding there, Sazno.
I will turn it up. I just sold some Baidu that I bought yesterday.
Yes, Baidu up about $1.80 or so. I'll put it back up there. Sorry, up around $1.80. Let's see what some of these movers are, Sadnov. To the downside, the Buckers, Costco down 4, Meta down just about 5, Lilly down 15, Costco down around 4, DJT, which we mentioned earlier this morning, down around 3. Some of those earning stocks for today, well, after the market closes, we got Citigroup up 73 cents and JP Morgan down $1.55. Let's see what some of the movers are to the upside. MSTR up 15, Coin up 11. So enough. That means I should be filled on my 1x2 put ratio spread. Closing that. I am, Sosnoff. I am. Take a little buck out of that. IV rank at 34. Still okay in Coin, Sosnoff. That's from my option trades today, every Tuesday and Thursday, Sosnoff. Got another one coming at you today. We'll see what the market brings us. Back to our regularly scheduled program. Let's see what else is moving to the upside. Goldman Sachs up 666. The Devil and Reddit up 5. PDD up around 3. You got some movers there.
Yeah, there's some.
Tesla up 11, 12.
Tesla, I haven't looked at that yet. We will take a little look.
Little look-see?
Little look-see. Yeah, they expanded a little bit of premium in there. Not a crazy.
Not a ton. IV rank is 78, but some, yes.
Yeah, it's got to move up some here. Putty. So we'll raise it. We'll rally up, roll up some puts in Tesla. Neutralize that.
I followed you into that. Hope it's the worst thing I did. I'd love to see Tesla go a little bit lower.
So would I. I think it's just up a little bit on the potential for getting TikTok, maybe. Who knows?
It's one of the fastest selling cars in China, I read.
What is?
The Y on Tesla. I think that's what popped the stock.
One of the fastest selling. Well, they better sell them somewhere because they ain't selling them anymore in California.
California? Why did it cause the fire?
That, and everybody hates them.
Even the S&P is up 21, volatility down 25 cents. Talk to me, Goose.
No, I'm just putting in some orders, and then I will talk to you.
All adjusting trades. We got Let Me Explain with Chris coming up next. So you're not looking at any new trades today. Where are you going to hang your hat today, Sosnoff? Is it going to be in Coin?
I don't know. Not loving this. I mean, if I was
you got a good P&L here.
This morning? Yeah, it's all right.
Better than usual.
No, you know what? It's just
stating the facts.
They're just making up for some of the.
Goldman Sachs up $6. Coin only up 7 now. Sadnoff. Coin only up 7.
Yeah, Tesla's only up 10. MSTR is still up about 14. I haven't done anything in MSTR, but I've been just adjusting. I don't know how aggressive I want to be. I thought yesterday it was one of those days where they opened higher and then. And
Tesla sold 657,000 cars in China, record high, and an almost 9% increase from the previous year. That was the article I read.
Oh, that's really interesting. None of us care. Let's see. Can't get filled though. And MSTR, I tried, but that's all. Just making some very minor adjustments, and then I will move on.
Beautiful.
What else do you see here? I'm just looking at my watch list to see if there's anything that's moving kind of like way outside ranges or anything like that.
No. Right now, Tesla's really the only one. Let's take a look some more at the upside here. What else we've got? MSTR up 15. I know you have a strangle in there. CRM up around $6. Let's see what NVIDIA's doing. Up around $2.50, $2.40. Netflix up 3. TSM up 4.
Yeah. Yeah, there's little reversals from.
So far, everything is status quo.
Few reversals from some of the stocks yesterday, things like that. Biggest loser for us on the opening is probably just Tesla, I think.
Pumping a little volatility in Tesla too. Tesla IV rank got up to 78. That's 80 now. So yes, definitely pumping some volatility in there.
Yeah, I agree. I agree. A little volatility in Tesla. We're fine. I'm flat at.
Earnings coming out this week. You got JP Morgan, Wells Fargo, Citigroup.
When's JP Morgan coming out?
JP Morgan comes out Wednesday before the market opens.
We got to do something today.
That is correct. Citigroup comes out Wednesday before the market opens. Wells Fargo, if you're interested in that, comes out before the market opens on Wednesday.
JP Morgan, we have the February 235-250 strangle.
JP Morgan up 25 cents.
I can't believe the stock is 240. I cannot believe the stock is 240. And the markets in there, they're
not great.
They're not that good.
Yeah, they're not that great. 10 cents wide, maybe even a little bit more. 20 cents wide. Yeah, not that great.
They are not that great.
Yeah. Goldman Sachs up $7 and change. It has earnings January 21st in about a week.
Okay. Well, we only have positions in JP Morgan, nothing in Citigroup, nothing in Wells Fargo, and in Goldman Sachs. We do have a position in Goldman Sachs. Small, but we have a position.
Okie-dokie.
I don't know if I want to do anything in there, but maybe we can just roll up.
Stay mechanical side. Enough trade was in front of you.
Yeah. Well, I'm going to neutralize my JP Morgan position, and that's it. What else you got for me?
That's it. I got even the S&P's up 29, about the highs for the session that we've been trading in the last 7 minutes or so.
Okay.
Let's take a quick 90-second break and come back. We got Let Me Explain with my man Chris next. We're back in 90 seconds. Volatility in by almost 40 cents now. Back in 90 seconds. Chris next. Let Me Explain.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Put on your yarmulke, here comes Hanukkah, so much Funukkah. Instead of one day of presents, we get 8 crazy nights.
I gotta tell you, that does look like a Tony Soprano tracksuit. Like you're getting a little.
He's all tracksuited up,
right?
I was waiting for somebody to say something, and if I had pants on, then I would have the Sopranos tracksuit on, right?
I made burnt ends chili yesterday. Scott's never really had it, so I brought it in.
Today, so he can try it?
Yes. It's not hot, so yeah.
We have a microwave. Is it okay if we microwave it, or will it ruin it?
Whatever you want with it, yes.
It's very rare when you get an outbreak that you get to film the origin of it.
I brought you in chili.
Did you?
Yes.
He did. He brought you in chili. Nobody was allowed to touch it. Now
It's in their
been sitting
refrigerator.
out for hours.
Now I gotta talk about the chili. Here's my comment about the chili. You were right, not enough spice. They needed to be like, I don't know.
He doesn't chop his up enough.
Is that what it is? Yeah, it's like something was off.
You can chop him up a little finer.
And then maybe pan saute him for a little bit.
Yeah.
Not enough beans. And the tomato, what do you use? Like Hunt's tomato sauce or paste or something? Just throw it in there?
Oh my God.
I love you, Tom. Scott. I really do. I really do. This is my favorite segment by far.
I made a little video. We have
Oh,
been
no.
blessed
Is this going to embarrass
by
me?
the holiday spirit here
Oh, no.
at Tasty Live. So you're welcome. Here's
Have
your
we
gift.
seen this?
Watch this. No, you've not.
I didn't proofread this? Oh, God. You want me to get in first? You want to get in first? Saz, get in here, you big stud.
It's my bad arm.
Bit over your head?
So you're naughty.
I'm nice.
You're naughty.
I gotta read. I'm
no,
nice.
it's naughty.
No, nice. Ho, ho, ho. Merry Christmas and happy holidays from Tasty Live.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was when I was very young. It's quite embarrassing.
Anson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God, that's amazing. That was cringe.
There it is, the song, yes.
Yes. All right, good luck, good trading. Let's go eat some roost.
Peace.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. But let me explain. Chris in the house. Chris, how are you, my friend?
I'm doing well. Tom, Zin, it's a little patch of nicotine that makes your day better. Maybe you should try it.
I didn't. I'm learning.
And they're sold out all the time too. I mean, my older kids were around for Christmas and they were all looking for these things. It's I can't just drink coffee like an old man.
We do that here. And I also do the Sosnoff special where I mix a little Diet Dr. Pepper in the morning. So I'm
very
ready.
nice. Very nice. Very nice.
Yeah.
It's the best diet soda there is.
Sosnoff, have you ever dipped before? I'll be the first to admit it. I've never dipped chewing tobacco.
No.
I just like my teeth too much. Look at my teeth. I got a great set of
I
sounds.
don't.
I ain't gonna ruin those.
Honestly, I don't really understand it.
I don't. I know. But my son has and does. I don't know. My son-in-laws. They've done it before. Yeah, like if he's playing softball or something like that, or he's out with his friends or something. Yeah, Nicky, he'll stick a patch in there or something like.
Nicky
playing softball?
Yeah, Nicky, not Vinny. Vinny, come on, please. I mean,
he's gonna be in trouble.
15 years old, son of January 27th. Gonna expect a present from you.
If his mom's letting him have chewing tobacco, I missed it. I must have missed the chapter.
No, not Vinny. Not Vinny.
Because I'm gonna say somebody's getting soft here.
No, not Vinny.
Okay.
Not Vinny. I would put my foot down there. I would go in my igloo in the park because I'm not allowed to have it at the house and put my foot down there for sure.
Good.
All right, what do you got for us today, my friend?
Well, we're going into earnings season, gentlemen, and according to Bank of America, the average stock in the S&P 500 is pricing in a plus or minus 4.7% move, around the earnings release this quarter.
Now, hold on. Now, time out. From my experience, if the people that don't know, that's relatively low. I mean, a 10% move would be relatively high. Call it average to low. 10% move would be high, in my opinion, the way we look at implied volatility.
Depends on the stocks.
Of course it depends on the stock. I mean, a lower, like a banking stock is going to have a lower expected move, but the percentage basis is basically the same. 5% is relatively low. Some of these stocks are baking in, a 3-4% move, which is even lower than that by the implied volatility, at least for earnings. I'm sorry to interrupt you, Chris.
Well, I think Tom's onto something there, because while we think of some of the big high-flying stocks of having bigger percentage moves, the average stock in the S&P actually has a quite tiny move around their earnings. This quarter is expected to be the biggest move on average at 4.7%, which surprised me. That seemed like a low number, as you got to, Tony, because the names we pay attention to are usually higher. But this is supposed to be the quarter that produces the biggest swings around earnings ever. Now, some are saying that this earnings season makes for a stock picker's market. What is a stock picker's market? It's a market where individual stock selection can significantly outperform broader market indices. What this means is that the performance gap between the best performing stocks and worst performing stocks can be wide, and those traders that identify and invest in stocks that are the winners are going to outperform the market by a wide margin. So this concept suggests that active traders who carefully select stocks can achieve better returns compared to those who simply invest passively and hold the index. So my question to you guys is, one, do you consider this a stock picker's market at the start of 2025? And two, with bank earnings season, or earnings season generally kicking off with the banks this week, what are some of your favorite plays on the board through the end of this week?
Well, with respect to your stock pickers comment, I'm going to say no. I haven't seen it yet.
I never understood what a stock picker's market is anyway. I've been hearing it my entire career.
So usually a stock picker's market, well,
it's an oldish saying.
Chris just explained it, but the other thing about a stock picker's market, you've got to be going up. So a stock picker's market is a bull market, and in a bear market, or when a market's selling off a little bit, which we have been doing, you can't have a stock picker's market in a bear market, because in a bear market, the correlations of everything go to 1. In a bull market, the correlations are all spread out. So the concept of a stock picker's market is like, okay, well, the market's going higher, but it's got like all these different weird directions, and some stocks are up, some stocks are going nowhere, some stocks are down. So I would say in a bull market, you could have a stock picker's market, but what we've seen so far this year hasn't been that bullish. So I'm going to say no, it's not a stock picker's market at all.
Tony,
that's all.
I mean, I get his analogy on a bull market. You know what? I really think it's more. I don't know. So here, like, I think of stock picker's market actually the opposite of the way Tom is saying it. When we're going lower, and they're saying, oh, you have to be selective with the stocks that you buy because the market is bearish right now. I mean, and that's a stock picker's market. It's always looking from a bullish standpoint. Today or last year, when you have markets up 20, 30%, I mean, it was throw a dart at anything, and you picked a good stock. So I don't know. Like I said, I never really understood it from the very beginning, so maybe I've got it all backwards.
And what was your second question, Chris? Again.
What are your favorite plays this week? Because in terms of the companies with the most traded, top 20 traded stocks with earnings this week. Dr. Data put this out earlier in one of our chats. JP Morgan, Wells Fargo, Citigroup, BlackRock, Charles Schwab, and then you go down the list. It's like Kinder Morgan, Bank of America, UNH, Bank of America again, Bank of New York, Mellon, and then Morgan Stanley. So
yeah, the only stock that's really tradable in there is of those stocks you just mentioned is really JP Morgan. When you think about the other stocks in there, they're all at best they're marginal plays. I don't really think Citigroup or Wells Fargo are that interesting.
They're tight markets in Citigroup, but
yeah,
you're going to have to be directional. Citigroup's on its highs, by the way.
Yeah. I mean, clearly, if you all right, so you can play Citigroup too. The other ones aren't that interesting to me. I mean, Schwab's almost untradeable. Bank of America. No, I just don't like the Morgan Stanley, Bank of America. Not great trading vehicles. I would stick with JP Morgan. If you want a cheaper version of it, go to Citigroup. Although I don't love trading Citigroup. So maybe JP Morgan. That's about it.
Would you trade XLF around any of these releases this week?
No, but we will trade some Goldman Sachs when that comes out. But JP Morgan, Goldman Sachs, that's kind of it for me. XLF, I don't even know where that is trading now. I haven't traded in a long time.
I haven't traded XLF in a long time either. XLF up 18 cents to 47.80. Let's just call it $48.
Yeah, I mean that ETF was trading,
over 50 not too long ago, but last year it languished in the 40 handle. So
yeah, I mean
mid-range for last year.
Probably traded that really actively when it was in the high 20s, and haven't traded it since. I don't know. I mean, you don't trade it, do you?
No.
Yeah, it's a tough one, Chris. It's a tough one.
It is. It's worth noting, though, banks have held up better than other sectors in this market, right? Yesterday was the day that we filled the gap from the election in the S&P 500. And you look at semiconductors down since the election, various tech stocks down since the election, not banks. Banks are the ones that are still up above water. So perhaps a sign that we should be looking for a little bit of outperformance in these earnings reports this week. I'm personally bullish on the outcome here for JP Morgan, for Bank of America. They should have favorable conditions for them over the last few months.
Well, there's no question that the interest rate environment is very favorable for them. Lower short-term rates don't hurt them that much, and the everything that they've spread out over time and the yield curve coming back into play for them. I mean, I think it's almost a perfect storm for a lot of these large banks and financial institutions as far as asset gatherers. So yeah, I'm going to think that they're probably not going to be bad. But the problem for stocks like JP Morgan is they're already trading at $250.
Yeah, right.
Like it's already built in, and JP
meaning it's just a scotch off of its highs of 250, right?
Yeah.
Trading 244.
Yeah. Yeah.
Earnings are after the close today, so if you do want to do something in JP Morgan, you're gonna have.
We have a wide strangle on in there. That's all we have on. No deltas at all. And I'm for sure not buying JP Morgan at these levels. Let's put it that way.
Yeah, you got an expected move of around $8. The stock is 250 or so. So
yeah, it's a 3% expected move.
It's very relatively low.
Yep,
that's my point. Even the S&P's up 19 now, coming off of their highs.
Yeah, they're not. I mean, they don't look bad, but the other side to it is after yesterday and stuff, they don't look unbelievable.
No.
Tesla's only up 11 now. It was up, I think, like 18 a minute ago.
Yep.
What else you got for us? Give me more.
Let's talk about what's going on in the data this week on the macro side. We had the PPI release this morning, Producer Price Index, and it came in a little bit softer than anticipated, 0.2% versus 0.3 month over month, and that helps spark a little rebound here in stocks. Perhaps this inflation fear's overdone. We have tomorrow's CPI report coming out, and that obviously carries a little bit more weight. So I was curious to see how heavy of a CPI report this is going to be. I went back and looked at the IVRs, or rather, the VIX 1D, the closing levels, the day before all the releases over the past year. When I checked in on this for today, we were at 17.06. That is above the average VIX 1-day close the prior to the CPI release date of 15.36. And there's only a handful of occasions in which we had higher VIX 1D going into the CPI report last year. But contextually, they kind of make sense, right? March 2024, ahead of a big Fed meeting in which we thought the Fed rate cut cycle may begin. April 24, which that was in the midst of a market downturn. We can think about June, again, right ahead of a big Fed meeting. We have August right after a big market downturn, September right before a big Fed meeting, and now here. So I guess the question is, are we looking for opportunities tomorrow around CPI? The market says that we could be trading back up close to 59.90 in the S&P 500. From a technician's perspective, that wouldn't mean anything as a bull because it would mean that we're still below our 1-month moving average, which has been resistance for the better part of the last 3 or 4 weeks. So are you thinking that CPI is going to be a bust tomorrow? By all accounts, the market seems to think this one is a little bit more important than the average CPI release of 2024.
I would be surprised if, only because it's the first time this year, kind of the first big number, that's the only thing I think that's interesting there. I think that I think this market's got bigger fish to fry, next week with the new administration coming in and waiting to see what everything else that's going on. I just don't see how CPI is anything more than a short-term, knee-jerk, something like this morning. I just don't think it makes, remember, as soon as the number came out this morning, we were immediately up 40. Now right. Everything's normalized. We're up 12, 14. It's
particularly
like
bonds.
What?
Those gave it all. Bonds gave it all up.
Yeah, the bonds are sick. Yeah, they're sick. They're literally sick.
Yeah, bonds, you look where they started the year, which is, only a couple of weeks old, wrapped around, 114, just under. They're under 111 now. You go back to even the S&Ps just a quick second ago, even the S&Ps are basically unchanged for the year. So really, it's been a debt equity market. Sorry, go ahead.
Yeah, SPY's down 0.5% this year. TLT's down by 2.53%. So bonds are they can't find a good reason to rally. Even if you're looking at a market that's probably at an extreme in terms of Fed pricing right now, we're at one rate cut priced in through the end of next year. Are we thinking the Fed's going to start hiking again? Because that's kind of where the bond market and the rates market's looking right now, that it's a distinct possibility. I think that's aggressive. I don't think we're going to go that far, but clearly people are screaming the hair's on fire right now. So if a PPI report like this is going to lead to a fade in the bonds, Tom, I think I'm with you. Maybe we get a good reaction tomorrow on a soft number, but do you trust it to stick around right now? The price action has been gross. I would say no.
I would agree with you.
Yeah, I'm not going to disagree. I'm not going to disagree. I'm not going to disagree.
Which he loves to do, so you got him here.
Yeah.
Trying to get something here. Maybe we could talk about Tom Thibodeau's
what
coaching
about you?
What
about you, Chris? You've been kind of leaning a little bit long in this market. You talked about 6,100 or something a week or two ago.
Yeah.
Are you still in that kind of thing? We have a nothing move. You're basically unchanged. So.
Yeah, back in December, I was bullish on stocks, and then I do like seasonality. I know you guys think it's voodoo, and that's fine. But the seasonality for this market for January, February, March is basically you grind around until March 15th. Volatility tends to jump up the start of the year, and we've seen a volatility expansion with the market coming in, so it's not all that shocking. I think the biggest deltas I have right now are in copper and in natural gas. Other than that, I have some old positions that that really aren't working in stocks. I think a big tell for me this week, or at least last week, was on Friday when we had a very good jobs report. And unlike what we saw throughout 2024, when stocks would wobble after a good number, then they'd rip higher the rest of the day, this time we fell and then kept falling. So maybe we've seen a regime change shift, how people are interpreting data. And that obviously means that you can't just be blindly bullish and buy the out-of-the-money calls and go fishing for a few weeks and wait to come back and see where you cash them in, right? And that really was the past 2 years. But you have to look for those signs in the road. And so I'm not deploying fresh capital into long equity positions, either through short puts or long calls at the money or out of the money right now. I prefer to wait until I get some clarity in the price action.
Makes sense.
Yeah, I don't think it's I don't think I've ever had clarity in my entire life.
Yeah, but the way he likes to trade, he likes breakouts, he likes breakdowns. I get it.
I think that the tape action today actually is. I was confused when the number came out because they jumped so much; it didn't make any sense to me. But
Now that they're basically back to doing nothing.
Even the S&Ps are up 8, but I'm confused by volatility. Volatility really didn't like contract that much where it is. It's relatively high right now, so I think volatility is going to stay kind of bid into all of these moves, maybe for the next week or so. Volatility is only down 20 cents right now. Even the S&Ps are only up 5.
Yeah, I didn't see them going down on the day this quickly. And
Tesla'd me. I rolled up my puts when the stock was about $10 higher, or anywhere between $6 and $10 higher. Unbelievable.
Tesla'd everybody today. They've already got everybody coming and going. Yeah.
Yeah. Ivy rank at 84, also expanding in there.
Yep. Yeah. I don't know. I think this market is going to be doing nothing in the middle of this week, rally at the end of this week, just because it's always strong, going into Jan expiration. And I think next week we have to face a little bit of reality of not just the uncertainty, but it's the first time that there's kind of been a situation where
come on, it's got to be a honeymoon session here. I think
so. I don't know.
I don't think any downside move goes anywhere. I don't think any upside move goes anywhere. I've said from the very beginning of the year, I think we're going to bounce around up and down. I'm kind of confused a little bit by volatility staying so big, but I'm okay with that.
I think given where bonds are, given what's happening next week, meaning a new administration and everything else, I think you're going to have, I think starting next week, the market does have risk. Much more so than this week. I don't see any risk this week. Next week, I see risk.
We got to see what the tariffs look like, right? We've seen how the markets reacted to some of these headlines. Even yesterday, Wall Street Journal reported that we have a step up of 3 to 5% in tariff rates per month as a potential plan to kind of squeeze the pressure into getting a better deal rather than just going 25% shot across the bow. And the markets responded positively when that headline came out right around 4:30. You saw equity market futures rebound, the dollar peel off. You could see 6E, 6B all rally later in the day as a result of that. So yeah, Tom, I mean, when the tariffs come in, we have to see what form and function they take. If we don't get them right away and they're trickling out, I think the market's going to go, okay, this was a lot of bark, no bite. But if the first executive order after Trump takes the oath of office is 25% tariff across the board, then we're waking up into a reality where a lot of the talk is not just for show. There is going to be a lot of action behind these words. And that means a lot of the extreme scenarios that we've heard floated, like putting troops on the ground in the Panama Canal, hey, we have to entertain that market reaction.
I think there is a risk that you're going to see heightened volatility for the rest of this year. A risk. I don't know. I mean, for us, it's good. I don't know.
Yeah, right.
For us, it's good.
For traders.
Yeah. For us, it's good. But I don't think you're going to see much. Going back to your numbers tomorrow and then the earnings plays, I just don't see them as being that relevant right now. I think what's relevant is what happens next week when a new administration comes in and they try to make a splash, and whether or not the market believes it or supports it, endorses it, whatever it is. I think that remains to be seen. It's very rare to have everybody on the same page. I don't know if the market's like that. We'll see.
Well, we will see.
Very good. You done?
I'm done.
Yeah, we're done.
Beautiful. We'll take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next? Market Measure. That's right. Sound off. We'll be back in 90 seconds. Let's Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
What happens when two titans of trading come together to harness the power of their prowess? Yes, let's watch these two dominate this popper shop. Wait a minute, I thought these guys were traders, not contractors. They're putting up a lot of bricks. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
This is English. You should watch him read.
From the smart mouths at Tasty Live.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Today's episode of Market Measures is brought to you by SIBO.
SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means? Time for a little bit more tasty live sound for the market measure. Even the S&P is hanging in there. They're up 25, all quiet on the Western Front. NASDAQ up 121. Russell's the leader of the group. I hate it when the Russell's leader of the group. I know you need it for your position.
I need the Russell to be the leader of the group.
I know, and I hate it just because I don't feel it's as strong when the Russell is as strong. I like it when the NASDAQ is the leader of the group, which I know you hate, because you have that pairs trade on, but I'm not talking about your pairs trade. Dow weakest of the group, or as weak as the E-mini S&Ps and the NASDAQ, which are both up on the day by just about half a percentage point.
Yeah,
to the end by 60 cents now.
I need the strength in...
You need it. Is this like when I would buy options at a price and you would say, I need some BAT? And then I would say, I need to sell them to you at a higher price? Do you need them like that? Or do you really need them?
That's what Kojak did to me once.
I know.
Yes.
And then scalped him. Kojak, man, he rest in peace, by the way. Don't talk ill about that.
I need 10.
Moved on.
I'll give you 10. He sells them at an eighth higher. I go, I thought you said you needed 10. Because, yeah, I needed to make an eighth.
$125. Make it holla.
$125. You know, life was better when I lived in eighths and sixteenths.
Of course.
Because nobody could really figure out what you did for a living.
That's right.
So, like, if, you know, when you decimalize everything.
It's too easy now. Yeah,
it's too easy.
And you get those carps that carp your markets.
I know.
They got penny-wide markets.
When life is just trades in eighths, I kind of like it.
I know.
When everything's been decimalized, it's just.
I know.
It levels the playing field.
Yeah, it made everything equal. Horrible.
I liked it when I was better at fractions than anybody else.
I know.
You still are.
When was that?
I don't know.
I'm just kidding.
Wasn't in high school. That's for sure.
You're still amazing.
You see, you were just better than the goons on the floor. You weren't better than anybody at options. It was just, now obviously not better than the boy leader of Ariston Archon, but that's the end of there. It was always the outlier.
We have a couple of events coming up in very short order. Actually, a week from this Saturday, Ryan Grace, our crypto monkey. Mm-hmm. Is he a crypto monkey? What do they call it? Crypto, not crypto bro. What is it like? Crypto what?
Ape?
Crypto ape? That's not bad.
No, crypto bro's still a thing.
Is crypto bro still a thing?
Oh, yeah.
Oh, I don't like it. Everything you want to know about crypto, but we're afraid to ask, with Ryan Grace, Saturday, January 25th. I saw the show. It's great. Strongly recommend you sign up for this. It's a digital collectible. You can stream it. You can own it. You can go to it anytime you want. Everything you ever wanted to know about. It's really focused on Bitcoin, but there's a lot of other things about other blockchains in there and other cryptocurrencies. So I would not duck out on this. And when you sign up for Ryan's, you can get Dr. Jim's and also Mike and his whiteboard. All three of these month over month. These are huge productions that we do locally in Chicago and push them out to everybody all over the world. There's tens of thousands of people that sign up for this. Mm-hmm. Strongly recommend doing it. It's worth every penny, which is zero to you guys.
Right, it's free for
crying
out loud.
Last thing anybody gives away anywhere in this freaking world. Mm-hmm. And if you are in Chicago, though, you missed Ryan's live performance, but Dr. Jim will be doing a live event on February 3rd. It's a Monday night. There's no more Monday Night Football. It's about a week. Is it a week before the Super Bowl? Yeah, it's the week.
So you got no excuse.
Yeah, it's about a week before Super Bowl. But if you want to sign up for it, Monday night, February 3rd, I do not know if it is full yet. But if it is full, there'll be a wait list, and you can sign up for the wait list. But if you want to see Dr. Jim live, it's only a small, intimate group of about 50 people. That's it, total. I buy the coffee. Oh, and the pizza bread.
No water? You're going to give him bread and water? You're not going to give him any water? You're going to make him choke down the bread without, oh, you put butter on it, so don't choke it down.
Coffee.
Coffee. Oh, beautiful. Beautiful.
I said I buy the coffee.
Oh, you don't buy the bread?
Whatever you want. I buy the bread.
Oh.
The pizza bread. It's actually, so it's
focaccia.
It's focaccia, but he makes it like 2 days earlier. He told me it's like a 3-day process.
I'm telling you, his problem is he's too much, because I'm supporting him.
It was one of the best pizza breads I've ever tasted.
It's the best. It's like this brokerage firm. It's like Tasty Trade. The best brokerage firm nobody knows about. He makes the best pizza bread that nobody knows about.
I know about it now. It's great. I'm buying more of it. They'll have more than you.
Jimmy Bread, Algonquin. Tell him the bat sent you. Get a free pastry.
Anyway, we'll have Jimmy Bread there, and coffee. But Dr. Jim will be there, and special guests. You going to be there?
Sure. What day is it? Yeah, I could be there.
Monday, February 3rd. You want to be the special guest?
Here
we go.
Let me check my.
It's a whole.
Let me check. On
Try to do
Mondays?
something on air. Be nice.
What an honor.
Monday. You must have asked 16 people before me. Monday, February 3rd. I'm checking my schedule. I am available.
You could be the special guest.
I am available. I'm available. Good thing it's not on the first. I am available.
I mean, Josh turned me down. Jamal turned me down. TP turned me down. Victor turned me down. Liz and Jenny turned me down.
Turned you down.
Scott, Lindsay, everybody turned me down. I got like Clink, everybody, Steve. Yeah. But don't worry, you're number 20. You're in. No. I'm
in.
You're the first.
Will you be there?
Of course I'll be there.
All right. Awesome. All right.
Going to MC it. I'm not going to talk, though. Just going to introduce Dr. Jim. And then introduce you.
I'd rather just be at the door collecting tickets. You got a ticket? Can't come in. 20.
All right, let's go, Beth. I can't take them anymore.
I'm ready.
Strangles and iron condors finding the right size balance. This is a market measure sponsored by SIBO, and we are super excited. Let's move forward. As market volatility and the possibility of market correction increase, traders seek to minimize their risk by improving their odds of success. One way to achieve this is by selling smaller deltas such as 10 or 15 deltas instead of 20 or 30 delta options. For example, 2 standard deviation strangles have a success rate of 95%, making them attractive to traders whose main focus is success rate. Kind of hard to read that bottom line, but let's go to the next slide. All they're saying is on the platform, there's a 1 standard deviation dotted line and then a 2 standard deviation line.
That is correct. That is correct. I talk about it all the time on my option trades today, my podcast.
Regarding success rate, both the 1SD and the 2SD strategies exceed expectations, but the success rate for the 2 standard deviation strangles is even better, closer to 100%. Well, on a percentage basis, I don't even actually know if that's that much better, but from a probability of profit standpoint, that's what they're referring to. So this is just straight stuff. We've done this 100 times. Theoretical versus real. Theoretical and then realized. Mm-hmm. Let's go next slide. So as expected, 2 standard deviation strangles have extremely high success rate. However, they generate a lower average P&L and a lower return on capital for each position. So just again, we're setting the stage. We're painting a little bit of a background here. You can see in SPY the 1-2 standard deviation strangles, the initial premium, the average P&L, the win rates, and the daily return on capital. And you can see, the return on capital is pretty low. Win rates are pretty high. The average P&L is decent, and the premium is pretty cheap. Let's go next slide.
Win rate's great.
So what would the long-term portfolio performance be for both strategies if we simulated an equally sized account with 25% asset value allocated to each and managed at 21 days? From a portfolio perspective, 2 standard deviation strangles underperform 1 SD strangles by 27%. However, the strategy excels at volatility control. So, okay, now this is interesting because this is the question that we get a lot about, what is an expectation? What's a reasonable expectation of a return? So the reason that we put this up here is because on SPY strangles, if you sell one standard deviation of SPY strangles with a very high probability of profit, in this case, I think it was 82%. Can you go back one slide for a second?
Got to 97, 82 and 97 on a two-stage.
82 and 97. Okay. So go back to the next slide, Beth. So with an 82% probability of profit, the one standard deviation SPY strangles annualizes with losses and everything else in there comes out to about 13% with a 17% in volatility. The two standard deviation strangle, the annualized return on capital is 9.5% with an 11.5 volatility, annualized volatility. Now, you know my rules. When we trade, we want to make some multiple of risk-free rates.
That's correct.
2 times risk-free rates, or 9.5%, is not good enough for me.
For the risk that you take, right?
For the risk that you're taking.
But what about if your risk that you were taking all the time was 80 to 97%?
Doesn't matter. It's all the same stuff. The numbers are the same. So one standard deviation strangle gives me a 13, because all the losses are built in here too. Gives me a 13% return, which is 2.5 times the risk-free rate. Neither of those two numbers are good enough. So what do you do? Now remember, we're only using 25% of the portfolio. So if we use 50% of the portfolio,
these numbers are going to be double or
26 and 19.
Right.
That works.
Sure.
So this is where the amount of money that you allocate matters, because that's what's built into these numbers. This is only 25% of your total portfolio. If you get to 50, those numbers are 5 times risk-free rates. Then all of a sudden you have something. So you have to figure out, like,
what's your risk tolerance? Yeah.
Well, sometimes we show you the most conservative case, and sometimes the most conservative case isn't the best case. The best case might be a more moderate or aggressive case based on where implied volatility is, especially like something like now. Let's go to the next slide. So what about an iron condor? Iron condors are highly popular, primarily for its ability to customize the amount of risk through adjusting the wingspans. And you can see here, we just kind of graphed it all out, and you can see from 20 deltas down to $1 wide. Let's go to the next slide, Beth. Theoretically, tight wings have some advantages. They're cheap to trade, they have a small max loss per unit, and they potentially can yield high return on investment. This is all true. But they have some problems. And let's go to the next slide. We might come back to this one. In reality, small iron condors have a lower probability of profit and narrower break-even, resulting in a lot more losses. Yes, you're going to lose a lot more times.
Yes.
Let's go to the next slide. So small iron condors have a much higher volatility in P&L, which amplifies the gap between the expected and the actual return. And so you can see here, when you look at the width of the wings, right? It's a tough way to eke out a living. Let's put it that way. It's a very tough way to eke out a living.
Now we're looking at 1 and 2 standard deviations here. You know, 2 standard deviations, you're going around the 5-ish delta option, right?
Yeah, but these are all iron condors.
I know these are iron condors. I was just going back because I'm getting emails from people like, we were really looking, we look at more the 30-ish delta option than the 1 and 2 standard deviations. We do go to around the 15-ish delta, which on one side might be standard, but not on both sides.
What's dangerous about this, what this slide shows that's kind of scary, is that the realized return on capital is extremely low on very small iron condors. And you're many times below risk-free rates.
But this is the quandary with smaller accounts too. You know what I mean?
I understand. We're trying to show what we're trying to show. There's a reason for doing small iron condors, very narrow ones, which is you learn from it. But it's tough to make a living. Let's go next slide. So it also takes much longer for these less risky positions to reach their profit target, like 50% in this case. And that is correct. So the number of days in the trade, I mean, if you want to get to your spot, you got to widen the strikes. That's all this shows. If you want to get to your spot, you got to widen the strikes. If not, on the really narrow ones, it's super hard, almost impossible to get there. Let's go next slide. Finally, when it comes to the percentage return, the wide iron condors give us more bang for the buck in the same amount of time. Yes, they're very close to the strangle returns. Not exactly, but much closer to the strangle returns. This is even $10 wide. Go $20 wide, you're close to the strangle returns. Again, what we're showing here is that there's two major takeaways from this. Takeaway number one is that sometimes you've got to go over that 25% number to like 50 or higher, especially in smaller accounts, to get a decent return. And the second thing is if you're going to do iron condors, you're not, other than for engagement purposes and teaching, you're not going to do much with narrow iron condors. You got to go wide.
Agreed. Let's see what the takeaways are.
Next slide, please. Smaller delta strangles offer a high success rate and volatility control, but underperform in P&L and return on capital. Narrowing iron condors are cost effective for beginners, but have a low success rate and a volatile P&L with limited profit potential. Iron condors are already capping your potential profits and defining your risk. So going too small with them is much worse in the long term compared to going too small with strangles. And while smaller strategies provide certain benefits, they may not always yield the best returns, highlighting the importance of balancing risk and reward and the amount of capital that you use. I cannot stress that enough.
Good job. Good job out of you. A lot in that little 11 slide takeaway there with strangles and iron condors, finding the right size balance. We'll take a quick 90-second break and come back. We got more Tasty Live for you with, oh joy, your friend and mine, Mr. Scott Sheridan next. Tasty Trade World Headquarters. We'll be back in 90 seconds.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top yearly recap.
Breaking news on Instagram. The first segment of your line dancing has been posted. Left together, switch, turn. Right together, twirl, turn. Hip, hip, hip.
Right together, spin, clap. Left together, spin, clap. Hitch, 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 turn, shuffle, rock, shuffle, rock, shimmies, shimmy.
I took 5 lessons for cases where all I knew what to do was
Right together, spin it around. Yup. And you want to clap. And then like strut down, strut down, strut down, strut down. Right together, spin. Left together, spin. Hitch, 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 cross, turn, shuffle, leave, shuffle, rock, shimmy, lasso.
This is not good.
Hey! Oh, he's got the walk down. He's got it down.
It's perfect, and you got the bag. You got everything.
That is not even close.
God, bitch stole my. Oh, it's flawless.
Look, it's beautiful.
Flawless.
No.
You're walking way too fast.
And go stick your finger in all of our lunches.
Now complain about something.
Oh, God.
You watched the debate, you knew who won, and you just didn't want to admit it.
I was in New York. I was flying home that night, and I'm so sorry that I didn't go back and tape the vice presidential debate.
First of all, I think it's hilarious that you run a technology company and you still think you had to tape it in order to watch it. You think you have to tape it?
He didn't have a blank
see it later?
VHS tape to spare for the debate. Stas, what comes up next? The opening bell. Don't look so surprised. Sadlov has been this way since 1980 when you first started trading. Wait a minute. Was it always 8:30? Yes. The opening always was the same. The closing has changed.
Like, what has
Wasn't
changed? I don't think so. Nothing's changed. The only thing they did, I think, was they had the 15 minutes.
Excuse me?
The only thing I ever think that changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15 minutes.
Well, listen. We're not being traders here.
Do not engage.
When I got,
wait a minute. So
when I got in this business,
we used to open it. We used to open at 9 o'clock. Since 1980 to now, we didn't always open at 8:30 in the morning.
Yes, we did. Is that a $20?
I am going to get this $20 off of you.
I don't think so.
No matter what. Chris, how are you, my friend? Chris, your job after you get off the show here is to find out when the New York Stock Exchange opened in the 1980s, what time they rang the bell. I have a $20 bet with Sosnoff. We're going to be eating good tonight. I already decided that Sosnoff will be having cereal for dinner tonight. I said the New York Stock Exchange did not open at 8:30 Central Standard Time. It opened at a different time. Saz said it always opened at 8:30.
I already have the answer. You guys need to choose a year, and that will determine which one of you is correct.
No. I've already won this. I said from 1980 to now, 2024, we didn't always open at 8:30.
I gave him 1980, but I technically didn't start probably till 81. But go ahead. What is it?
September 1985 is when it switched to 9:30 a.m. Eastern.
Thank you very much. Thank you very, very much.
Not 1980. Not 1980.
I remember. I was on the floor. I was working because I would have to get up earlier in the morning.
In 1980, the New York Stock Exchange opened up at 10 a.m. Eastern. It closed at 3:30 p.m. Eastern Time. The schedule was in place until September 1985, when the opening time was changed to 9:30 a.m. Eastern.
Pay me,
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, Sadnov. You know what comes up next? Tasty Trade World Headquarters, your friend of mine, the very popular, from the Scott Sheridan Studios, Mr. Scott Sheridan. How are you, kind sir?
I'm excellent. How are you doing?
You are excellent.
Thank you. I need some professional advice.
You've come to the right place.
I need a professional opinion more than advice.
No worries. I give both. They're free.
Now I got to go to him.
Oh, you're in trouble.
Yeah, because I am a professional. What would you like?
How did Minnesota win 14 games this year?
Horrible schedule. They had a horrible schedule.
They could be the
schedule
worst.
Was so easy.
How's Sam Darnold? How is that guy even in the?
Oh, don't give him.
Don't tell me you think he played a good game.
Yeah.
No, I don't think. I said he stunk a lot. I thought Minnesota was the biggest fraud team.
Fraud.
I thought they were a fraud all year. I think Detroit's a fraud.
So Chris Grace said, I don't know who it was, but some sports personality said that what are we in? The NFC, what are we in the North?
Yeah.
That the North will have less playoff wins than teams in the playoffs. So we had 3 teams in the playoffs. Right now we have no wins. He's correct. We might not win a game. The NFC North might. I'm not saying.
I think that
Detroit could get one.
Detroit's going to beat
the Commanders.
Easily going to beat the Commanders.
Easily? What's the line?
They got to be at least. I think they're going to be 8 or 9 point favorites.
Okay. I don't know. I could go to Jeff Kings, but Tony's got it. I don't know. I watched 3 quarters of that game. He made Caleb Williams look like he's got a quick release.
Caleb Williams is on the. Here's the real question: if Caleb Williams is on the Commanders and
Jaden Daniels was on the Bears.
Oh, come on. Daniels would have been running around getting killed.
I'm going to say the same thing.
He'd be injured.
Jaden Daniels was on the Bears.
He'd be out of the game, right?
He'd be out of the league right now.
Right, he'd be injured.
He'd be injured. They'd be saying he's the biggest bust ever.
Right.
Yeah.
If Caleb was on Washington, they'd say he's great.
Right.
But anyway, yeah.
The Lions are 7.5 dogs.
No,
not dogs.
Favorites. They have to be favorites.
The Lions versus the Commanders?
Yeah.
There's no way they're 7.5 point.
No, they're 7.5 point favorites.
7-point favorites. All right, let me go to DraftKings. Seriously.
I would think they're 7.5, 8-point favorites.
What's wrong with you?
Okay.
They're not dogs.
They're not dogs. Right now, if you want to bet.
I'm looking at NFL odds and betting lines right here.
They got it backwards.
118?
Detroit's minus 9.5.
That's what I thought originally.
I said the Lions minus 7.5.
You said.
Oh, did I say plus?
Yes.
Oh, I'm so sorry. It said minus 7.5 here. That's where it opened at 9.
Or minus 9.5
now. He's right.
That makes sense.
Yeah. Eagles are minus 6. Chiefs are minus 7.5. Bill. Oof. Sorry, Buffalo fans.
Are they
Chiefs
dogs?
are minus 8. Buffalo's
home dogs on a home dogs.
Plus 1. Plus 1.
Plus 1.5. Ouch.
That's going to be the best game.
Oof. When is that game? Sunday at 5:30.
1:19, 5:30 p.m.
5:30.
Ooh.
That's Central. Ooh.
Oh,
we watch it. Ooh, you can't. You're gonna miss part of that.
Why?
Because you're on air.
Yeah, you're on air.
We moved it to Monday night because it's a holiday.
Oh, good for you. Oh, you get to watch the game. Chili?
I don't know yet. Probably, but Monday night. Monday is Martin Luther King.
Can you chop the chili
Monday
a
night's
little bit
President's Day.
What?
Monday's President's Day.
No, it's Martin Luther King's birthday.
No.
And it's also the national championship game.
Yeah, Tom's right.
Is it Martin Luther King?
Yeah.
Sorry, shouts out to Martin Luther King.
Oh, so it's easy to make mistakes when you don't know the answer right away, huh?
When's President's Day?
It's in February. Like it's always
Monday's
been
the 20th. Yep. Right.
Okay, Martin
President's
Luther
Day
King.
in February, like it's been for the last.
Well, I'm going to Arizona. I don't think they
The
celebrate.
last 72 years you've been alive.
I think I got to work because I don't think Arizona celebrates Martin Luther King Day.
I don't think they do either.
I don't think they do. I think
Well, if they do, they're not now.
I think they begrudgingly said fine. Okay.
It's a national holiday now, so I think they do.
Yeah, but I think they were a holdout for a while.
You know, when I first got to Chicago and they had this Casimir Pulaski Day.
Oh yeah, Zeppy.
That threw me off.
That was Zeppy. That was Zeppy's day. Come on.
I just didn't know. I
shined on that day.
I never even heard of Casimir
Yeah,
Pulaski.
that was his moment to shine. And if you said something bad about it, oof.
I didn't say anything bad. A day off. Casimir Pulaski Day was great.
Do we still
I
have
don't
that?
think it was. Is it Casimir?
Casimir. I think it's Casimir Pulaski.
Yeah, you're right.
Yeah. Do we still have
He
that?
says like cashmere, like with an H in it.
Wait a minute. Well. Let's not have a linguistic
All I wanted was
discussion.
Let's not throw any shades on pronunciations.
All I wanted was
Is that what you're saying right now? You think it's not a shooting from?
Let's pump the brakes. Let's pump the brakes.
I agree with you there.
All I
we'll
wanted
pump
was the
the brakes.
pushkis or whatever they're called.
Right.
Pushkis.
Pushkis. Yeah.
Yeah.
I like the pushkis.
I mean, it's a donut with jelly in it. Let's not,
Good.
glorify. Should I not? Should I back off here too?
No,
a little
you're
bit?
good.
I'll back off here too.
Good.
All right, I'll back off here a little bit too.
Oof.
It's a pushki.
Oof. Did you watch?
I did watch the. So it was the last.
It's kind of
so
weird.
they're gonna have a season 2 because they didn't.
No, for sure they're gonna have a
Yeah,
season.
they didn't end it well. We're talking about Landman right now.
Sorry, we'll get back to you on this one.
With Ali Lauder.
She's right. She's hot. Daughter's hot. Yeah.
Daughter, I feel a little creepy looking.
She's 27. You're good.
I mean,
No.
I'm not an NFL
No.
coach. Right? I'm just an internet sensation. I mean, I'm not an NFL coach with winning Super Bowls and stuff like that. I mean, I feel a little creepy. When they're younger than my kids, I feel a little creepy.
That's your line?
That's what I tell my wife, but I still...
Okay. But Ali Lauder's okay?
Yeah.
Okay.
Yeah.
It's a good scene. Good scene.
40-something?
Ali Lauder's got to be in her 50s.
I would think so too.
If she's only in her 40s, not so good. I'm mid-50 bid.
48.
Oof.
Oh, shut the
you
front door
guys
right
are
now, will you
amazing.
please? Unbelievable.
Okay, she looks great. Anyway, good scene in the strip club. With the 20s?
I even see the reason why I said that to Tom earlier
Oh, did you
today
see
was-
the scene in the strip club?
No,
on
he
TikTok?
didn't see it. I said I've been watching a show that has a lot of strip club scenes, and I kind of missed the strip club. I haven't been in there in like decades.
It was a good scene. When she hands the stack of 20s and the guy just fires the whole thing.
Yeah.
She's like, no, this has to last you for the whole time.
Yeah.
Okay, more importantly, very serious question. Not sure how real this is, but Shark sent that message. Did you see?
Oh, it's on the internet. I don't know how real it is. But
Okay.
I see. Now, I have a prediction. You're going to be on the opposite side of Tom.
You're going to have a problem here.
I'm not going to have.
I said the same thing. He's not going to have a problem. Do you know why? Tell him why, Saad. No, if
Wait a minute. You're not saying
Zuckerberg this. Go ahead.
So you're crumbling under the pressure.
I'm not crumbling under the pressure because it's not going to happen.
But if
I'm
it
not
were
asking
to happen,
if Elon Musk buys TikTok.
That's like stupid. What if Scott Sheridan buys TikTok?
Okay, what if I buy it? Would you watch it? I hope so. We're friends. Thank you. I appreciate that. Now let's just continue the story.
I'm going to watch TikTok no matter what.
So you can set aside Tesla, SpaceX, everything else because you don't need those. But TikTok's TikTok. Don't mess with your TikTok.
what is Zuckerberg?
Right.
He's completely
not-
a Zuckerberg.
Not at all.
I hate him
Because
for this.
He didn't start. He didn't do anything. It's like if that was the case.
He didn't start Tesla either.
Yeah, correct. Thank you, Tony.
I'm going to tell you something about TikTok.
He didn't start Twitter.
No, it makes no sense.
Not asking you whether you think it's going to happen.
the question.
I'm asking you
Don't
if
change the
it
question.
does.
Just
Just
paint yourself
raising
into
a
a corner.
hypothetical doesn't make any sense.
Okay, well, it's on the internet, so it must be true.
On X.
Right? What does that trade for? I don't know. What are they worth?
TikTok, U.S. TikTok
is 100 billion. I don't know.
Well over 100 billion.
More over.
But well over. But here's the thing. I don't understand about TikTok. It's all owned by U.S. companies.
No, about 60 or 40% is owned by you.
Over 60%. It's all. We looked at it this morning. It's all
right.
GA, Susquehanna, and BlackRock. Like, I don't understand it. Like, that's who owns it.
Because I think what they're saying is all the information has to go. But China the CCP has access to everything. They get all the data if they want it. So that's the issue. It's not who owns it. It's what they have access to.
Okay, well, those are the.
So you would not even flinch. You wouldn't even boycott for like a half a day.
Well, I don't use TikTok every day.
Really? You're going to say that?
I don't.
How do you fall asleep at night? Nice glass of warm milk. Nice glass of warm milk, the chocolate chip cookie, and a half-hour TikTok.
Make a bump on you telling me how much TikTok you watch.
There's the fact that you're lying to yourself. That's sad.
It's sad.
It is sad. Just own up to it. Just say, listen, I love
stay
TikTok.
Strong.
Right.
Stay strong to
I'm not judging you.
I am not you.
I'm telling you right now.
If
I'm not
TikTok gets
judging.
sold to Elon Musk, I am not watching TikTok anymore. That's it.
So I'm gonna tell you this right now. If I looked on my phone and said how much TikTok do you watch, it'd probably be less than like 15 minutes a day.
I would like to take that.
Me too.
for 100.
I'll buy that. There's all three of us.
Give me your phone.
On average.
Give me your phone.
Does
I
it
do not
say on
trust you.
there?
Yeah. So you're saying an hour 45 minutes a week?
100.
Me too.
Bet you 100.
I'll
bet you.
Do we have a bet? Oh, now we don't bet. Now we don't bet. Now we don't bet.
How much TikTok?
You sissy, marry you. He doesn't have
I
to
would
do
say
it.
it's closer to 4 hours.
You're out of your mind.
I say it's triple what you said.
Right. He said an hour. He said an hour 45.
Yeah.
You're out of your freaking minds.
Oh my God.
Could you go to a poll, please, on Twitter? Could you put a poll out for viewers?
No, go look. What do you got?
Yeah,
I don't know how to find it.
See, I told you.
You go to screen time.
Yeah, screen time.
Uh-huh.
Yeah.
And then it'll show you your app usage.
Is that in your settings?
Just type in screen time. Swipe down. But how do you see what
He
particular?
doesn't know how to do that.
Can I help you? Just swipe down.
Where, Beth, under settings?
Type screen.
Yes.
Yeah, under
It's
settings.
in settings, yep.
Screen time. Huh?
Huh? Oh my God. This is going to be beautiful. For the man who doesn't waste any time, I hope he tells us the real number. Please. What is it?
And did you just look at your apps?
So it says see all app and website activity.
Oh, it's screen time.
Oh my God.
I got to search for it. Screen time.
My average daily screen time.
Can't you just come in here?
My average here. Mine is an hour 50.
Screen time. Then what do you do?
See all app and website activity.
See all app and website activity.
Right under the daily average. What's your daily average?
Oh my God.
Daily average. Screen time today?
Sure.
No, not today. You've been doing this show all day. Even today, it's probably going to be more than 15 minutes.
Here it comes.
I'll send Vanetta in.
Oh, no.
Please do. Please do.
It's not.
Hey, tell Vanetta. Let me see. I know I can get it for $10. I hope I have $10 on me. I have a feeling I only have 50s and 20s. Oh, I have a 5. Oh, I have a 10. Vanetta, I got $10 for you. If you can find this for me on Tom's phone in a short period of time.
I'll find it later and I'll tell you.
No.
You already know
We
what
want
it
it now.
is.
Bring Vanetta in here. Don't make me go to 50. Don't make me go to 50. I'll go to 50. Don't make me go to 50.
Parental controls?
No.
None of your parental controls, you.
Now you're pretending ignorance. I like it.
Vanetta! Bet somebody, please.
Yeah, we do need somebody to come in and do this.
Screen time today?
Yeah. How much?
He found it in 10 seconds. How
Hour and a half?
I don't have TikTok. I can't tell you.
I'm not on TikTok, but here we go. Thank you.
No.
Oh, yeah.
Oh, yes, Beth,
Mama
please.
Bear's
Okay,
here.
right here. Look. Oh,
Where?
can I disclose this?
Yeah.
4 hours and 5 minutes.
For what?
Average.
Oh, that's just on my
Screen
That's in
time.
general.
Yeah.
Just on my phone.
See all
4 hours and
apps.
5 minutes of TikTok?
See that? What does that say?
That number?
Yes, that number.
That's not right.
Okay.
What does it say?
1 hour and 59 minutes.
Today?
Most used.
This week?
I didn't even use it today.
That's why it's rotting your freaking brain, okay? That's why they want to get rid of it.
Daily average 39 minutes.
There you go. I said it was triple.
15.
Right there.
Thanks, Beth.
Thank you. You owe me 100.
39 minutes.
And the 20 you hadn't paid me from 2 days ago yet.
Remember, I don't watch TV.
So now you're defending it. So you were 15 minutes tops. You're 30
You don't watch TV. You watch football. Where do you watch your football?
Sometimes I watch football, but I don't watch TV like you guys. Like, I don't sit there and watch, like,
Oh, now see how he's turning on us?
35
he
hours
went
of
from
Landman.
He went from 15 minutes
This is a show every day, 4 hours a day.
to 30
4 hours
minutes.
a day. I paint him in a corner, and then he tells me how stupid I am.
Because he's good at that.
He's the best at it.
Best.
39 minutes with no TV, though.
You can flip.
I know we didn't bet, but can I get my 20 from the other day that you told me was imminent, it was coming?
Tony.
God.
What a Tony. It's
Oh my God, the alligator. he starts
Hold on.
turning into a Tyrannosaurus Rex.
You know, I left the cash at home today. Otherwise, I would.
Can you break 100?
He brings cash.
Yes, I can.
He brings cash.
I can, here.
Tony, he only
Break
brings.
100. I got plenty.
He brings cash Monday, Wednesday, and Friday.
That's right. We're not open on. What is
No,
it,
no cash on Tuesdays and
No.
Thursdays. It's a firm policy.
I don't get my allowance till tomorrow.
Yeah. 39
With this,
minutes.
you would think with Venmo,
39
you
minutes
get
is
paid
nothing. When we don't watch TV, when you watch a football
So
game.
39 minutes today, Beth? Was that just
No,
today?
I haven't watched anything.
That's the daily average.
It's your daily average.
Yeah.
I'll take
The
that.
last week.
Last
Yeah.
week.
And remember, I was on the airplane a lot.
Oh, yeah, you were
Without internet.
Tom, do
internet.
you want to share what your next highest app was?
You don't have internet.
My next highest app?
Yes. Do you
What
remember?
was it?
It was Instagram.
What was it?
Instagram.
Instagram. Oh, how many?
Nothing. I don't watch Instagram.
Beth, how much?
Just about the same.
No.
Oof.
How much?
Couldn't be because I don't even
100%.
use it, Bet. That's not right.
Ugh.
I don't even use Instagram.
You just posted a picture yesterday. It was the
on the
picture.
last
You look.
couple days-
It was like
These are just the last couple days. When I went to the football game, I posted a picture.
a close-up picture of you is not your best picture.
It's not what you think.
No, I know it isn't. I know.
All right.
Wow.
Should we get to some? What are Spoons doing?
They're up 14 right now. Tesla only up $5.50. Tesla was up around 17, 18 at one point.
Was that because they're buying TikTok?
Was that because of what?
They're buying TikTok.
Say it one more time.
Because they're buying TikTok.
Oh, no. I think it was car sales in China.
We're higher.
High, 600 and something thousand, 8% more than last year.
Strong to quite strong.
8 or 9%.
God, now that I know this feature's on here, I spend way too much time answering emails.
We created a monster.
Well, you have to answer it on your phone because you don't have a computer at home, allegedly.
You said that?
Outlook, TikTok, Safari.
Oh my God. Top 15. I can't listen to you. Top 15 symbols going through the system. First.
How much he works.
Yeah, and none of us do.
Yeah.
First 40 minutes today, no broad-based indices or futures. Tom, in case you are paying attention, number 15 is TikTok. Okay, never mind.
Well played.
TQQQ at a 44. For everybody else, Tesla at an 84, NVIDIA at a 17, PLTR at an 89, Meta at a 59, MSTR at a 39, AMD at a 62, Apple at a 46, Coin at a 31, Amazon at a 63, Lily at a 54, iBet at a 64, RGTI at a 44, AVGO at a 37, DJT at a 24, and number 15 for Tom, TQQQ or TikTok. Rounding out the next 10, TLT at a 57, SoFi at a 63, Microsoft at a 48, JP Morgan at a 51, Hood at a 72,
Hood.
TSLL at a 77, Netflix at a 77, VST at a 73, Riot at a 41, and Intel at a 79.
What do you say about that, Sosnoff?
Intel to 79?
What do you say about that?
I don't know, but I need Intel to be a lot higher. That's
Where's
what
Intel these days?
$19.
19. That's, I mean, what a sad
Intel
story.
down 10 cents.
What a sad story for that stock. Like, Intel was one of those you just had to have.
When? In 2001?
Yeah. Yeah, maybe 01, 02, something in there. Not anymore.
Not anymore is right.
Not anymore is absolutely right.
Dog with fleas. Right?
I guess, or a flea with dogs.
Can we get back to your TikTok
Not really.
discussion? So we're not going to get paid? Is that what you're saying?
I think that it's very misleading because
Here it comes. Yeah, the phone's wrong. Apple doesn't know what they're doing. There's clearly a mistake. There should be a feature for people like you who can turn off so it doesn't record and it just tells you what you want to hear.
No, it's just when I was.
Oh, here it comes.
Just the last couple of days because I was posting some stuff on Instagram because.
Okay, how about this?
I was told.
How about this? We'll just randomly pick a week that you won't know what it is. Okay. Sometime in the future.
Okay.
Okay. We're going to have Beth do this.
Okay.
She's going to pick.
And we still would like to bet 100, right?
Correct.
We're okay with that?
Correct.
Okay
So
with that
she's
number?
going to pick a week sometime in the future so you can't know what it is
Right.
because you're going to say, oh, well, this is the week. I'm not going to go on my
Right.
phone. You'll start jonesing after
Right.
about an hour going, fine, I'll just pay you. It'll be like Seinfeld when Kramer walks in.
Beth knows she gets a percentage of it.
Kramer puts 100 down. He says,
Right.
I'm out. It's
Right.
going to be,
Yeah,
Beth.
pay me.
Right? Okay, so you want to do it?
100%.
And
I'm
I'll
in.
say, and I'll buy you, what was it, 39 minutes? I'll buy 39 minutes for whatever that week it is on average.
I told you I don't watch TV.
We're not, no. You're saying that this number was inflated because of some cockamamie reason. What I'm saying is we could pick a week in the future, random, but Beth's going to put it in an envelope, seal it, okay? And then she's open.
Give it to Ernst & Young.
Give it to Ernst & Young, and then they'll open it, and then we'll look at whatever that week it is, and I guarantee you, I'll buy 39 minutes average for that week.
Well, that's even being generous. I will not do that because I want your money. I will just do the bet. It's over 15 minutes.
Okay.
I'll give you 20. I'm generous that way.
NASDAQ down on the day.
NASDAQ is down 7. Even the S&Ps are up 3 and change. Volatility only up by down by 36 cents.
Am I boring
What do you
you?
say about that?
I think I'm boring you.
He's been a little
what's going on?
preoccupied all day.
Talk
It's
to
not
us.
you.
I'm
not preoccupied.
Yeah, what's going on? Your mind's in multiple places. What's going on? Anything good?
And you don't have the mental capacity.
What's swirling around in there in the kepi? What do we got?
I know it's not paying us. That doesn't bother you because you have no conscience for that. So you're okay there.
Are you thinking about lunch? It's good lunch today. Greek Kitchen.
No, I wasn't really thinking about it. I like Greek Kitchen.
I like Greek Kitchen.
Yeah.
Problem is, I got meetings from now until 1:30, so I don't know.
If we come over for the games, will you chop up the brisket better for the chili?
Yeah, gotta agree.
Gotta
Chop it. You gotta put a little effort into it.
Yeah, it was too.
Yeah, it was a little gummy.
Yeah.
Like chewy.
Can you do that for me?
And could you get some real spice? I think you use ketchup as the base. Okay, it's entirely possible.
Just get the tomatoes. You squish them.
Yeah, squish
real.
No, you don't want him squishing. He doesn't wash his hands.
I know you don't want shit. You're right.
No, you don't want.
Hey, I'm gonna take a quick 90-second break. Gross myself. I'm gonna take a quick 90-second break. Come back. We got more Tasty Live after this with Liz and Jenny. Next. Peace.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. and up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
I appreciate you. You're
Yeah.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If we didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was
The
beautiful.
girl
It was
on
beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, closed everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. I said we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
Jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch.
He's hurt on this one.
Muskies. Some bass.
Very quiet.
I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. When we got there, it was...
Now the RV on rvtrader.com.
No.
Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could swivel his head. He has to see the screen. He has to go like this. To me. And then, you know what? Money goes to money. You did it. Good job out of you. Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay, I need help understanding. This is the largest monitor that I've ever seen. I have to move back in order to see everything. And somehow when you're on air, you're looking at this. You need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Look who's back testing. tastytrade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at tastytrade.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody, and welcome to the Liz and Jenny Show. I'm Jenny. The beautiful blonde over there is Liz. Looks like you've got a b-ball game tonight.
You got it. You know it. You love it. We are going to basketball tonight. I mean, we've got 3 this week, so there's some big ones. We're playing at Northwestern this weekend.
Oh, that's going to be nice.
Yeah, we're playing like a super good team in Northwestern this weekend. So yeah.
What day?
Saturday.
Ooh, because I'm going to be up there on Sunday. I was hoping it was the same day I could have gone over and to visit you.
You know what? It might be Sunday. Because Saturday, we have a game Saturday and Sunday this week. They don't have a game on Friday. So we have today, Saturday, and Sunday. You know what, Jenny, that's an excellent question. Let me look into that and get back to you.
Yeah, it's because we have dance conference up at Loyola Academy, which is right by Northwestern. So I think, so we can pop in. I can pop into the basketball game.
I will definitely get back to you.
Get back to me. If I'm walking, because I bid it twice today, shoveling my driveway.
You bid it?
Uh-huh. Fell twice.
I don't know why I laugh when you fall.
Well, so I had like 4 inches of snow this morning when I went out to shovel, 4 inches of snow. And when I shoveled the snow, there were some ice spots underneath the snow. So I'm just like quickly shoveling, and then you step on an ice patch and you just like, it was not a pretty sight.
The cartoon falls. I love it.
Do you remember the time I fell?
That is why we are not in the city today. That's why we're not in our downtown studios, because we got a lot of snow, and Jenny had a lot of stuff to take care of, right? So we did too. I mean, I did too. I'm not blaming on you, but yeah.
Hey, my husband's in Germany, my son's in Michigan, and I didn't want my daughter to drive herself to school. We had so much snow, the plows had not been out in our neighborhood. And I had to shovel and take her to school. But do you remember that time I fell at our old studio?
Oh, carrying your jazz oil painting? Yes. We at our old studio, and she brought an oil painting of her dog. And she fell in like a mud slick. And she held up Jazz like this just to save it. And I don't think I've ever laughed so hard in my life.
I'm pretty sure it was like... It started with Tim Knight having a picture of his dog in his background. And I said, if Tim Knight can have a picture of his dog in his background, I'm going to bring a picture of my dog. Brought the oil painting of my old dog, rest her soul, Jazz. And I didn't want the painting to get ruined. So I literally just Fell with my hands in the air. Painting never hit the ground.
And I have breaking news for you. Northwestern is on the lake, whereas Loyola Academy is on the Edens Expressway. They are nowhere near each other.
When I say near each other, number one, they're both about 2 hours away from my house, and at least an hour and a half away from my house. So if they're 20 minutes apart, that's close.
Okay, that's good.
Who did that come from?
Frank the Great.
Frank, he doesn't even live here.
Frank knows everything. He's like Oz. He knows all there is to know.
I'm going to guess that they are within 20 minutes of each other.
Well, maybe. I don't know.
I don't know. They're both north. All I know is they're both north of the city.
We will look that up later. Jenny, SPOOs have taken a turn for the worse. So, fun fact, volatility was kind of alluding to this morning. It was an elusive little animal this morning.
Let's go on the platform and take a look. So we've got SPOOs down 12, quite a turnaround. It was there was quite a rally when the number came out this morning. What was it? CPI, PPI?
No, PPI. You asked
PPI.
It's PPI, Producers Price Index. The CPI, the Consumers Price Index, is on Wednesday.
So VIX is down. What was happening this morning? Was it up?
No, it just wasn't moving. You know what I mean? Like, so you know how the VIX is the cursor? We were up 40. So the number came out, we went up 40 and VIX didn't. VIX wasn't showing that. How about that?
Okay, so we were up 40 and VIX wasn't really down. So it was kind of.
It was, but not it. You know what I'm saying? Like, you can usually see the tell. Like, VIX will turn first, one way or the other.
Right.
So it's been it's a 50-point drop.
So on a day like today, now I was not in, again, sorry, driving to school, shoveling snow, whatever. I was not in. I did not get to do my morning SPX trade. Did you do anything this morning? And what are your thoughts on Jajun today? I'm not sure.
Well, I love Jajun, so I think we placed the trade either way. What the rules are, there are no rules. We tweeted that,
okay.
But we will close it. The only rule we're going to do is close it. But you can even wait until 10:10 if you want to. I did do the SPX trade today, and it worked out beautifully. We were bouncing around, so we've been. So if you look, we were just to give you a little color on what happened this morning. CPI came up, our PPI came up, we were up 40, then we opened, we were up, we were up 30, then, we went almost down to unchanged and right back up. The SPX trade worked great this morning. My put spread, I should say.
Okay.
I was filled within 20 minutes.
It's 10:05. I put it in. Maybe it's 5 minutes early, but that'll give us an extra 5 minutes to get out. Yeah. I'm going to put in, so 255, put in a GTC to close it at, I'm just going to say $3. I'm not going to get greedy today. I'm just
there you go.
Even $3 on a day where I was unsure of putting it on.
Yeah, there you go. We also, Jenny, got filled on our XLI GTC. I'm going to push both these through while you're looking at that.
Oh, let's take a look. All symbols today, XLI. This was the iron condor we got into because of the crazy open interest. We wanted to join the club, and so we got out today. Not much of a win, I don't think. I think we were trying to almost scratch it because it was running out of time. Let me go to XLI.
We have 3 days left. Yeah, go to XLI.
I'll see. I think we were trying to just get a little bit of a green scratch because it was running out of time.
Yeah.
Whoa, and we were in it for a long time. Look, we put this. Oh yeah, when I say green scratch, it's not even. So we put this on December 13th, so a month ago, and it was never a winner. So we were just trying to scratch that trade.
Yeah, for sure. And we did that from the SIBO most option volume. Jenny, did you hear the news? This was okay. So the boys were pretty funny today. There's rumors that Elon Musk could be buying TikTok. Did you hear this?
Oh, I heard. I did hear on the news on like other news networks this morning, early, like 6 a.m. I was listening to some other networks and I heard them talking about it.
Yeah. So this is a real conundrum for one Tom Sosnoff, who does not like Elon Musk but loves TikTok.
And for so long, like, listen, I'm not going to say I don't care who owns the company. If I like the company, I'm going to use it. Like, we like Twitter, we like X, and we use it. No matter who owns it, we use it. We like X because it's a great platform for our viewers to post pictures and post earnings and post trades. Like, we use it no matter who owns it because we like the product. I don't. I'm not one of those people that's like, I don't like the owner. I'm never going to use that product.
Oh, yeah, no, I don't either.
But Tom, I think
I'm saying it's a conundrum for Tom because it does his love for TikTok outweigh his hatred for Elon. Only time will tell, Jenny Andrews. Only time will tell.
He said he'll still use TikTok.
I couldn't see him not using TikTok. What I got cut off from was Scott and Bat were trying to figure out how much time Tom spends on TikTok. And so, you can look at your screen usage, tell you per app. But so I got cut off. He couldn't figure it out. They were trying to pay Vanetta $10 to come in, and we never found out what his screen time was on TikTok for the last week.
Oh my gosh, so funny. So funny. So,
yeah.
Now, I think he'll continue to use TikTok, but I think, remember, they wanted us all quitting Twitter. But we fought for it. We fought for it. We said,
we're not gonna
take it.
No. No, it's
Speaking of, here we are. If you have anything, you can send a tweet and include hashtag LIZJNY. Oh gosh, I have something to tweet. I didn't tweet it yet. I've got to. I'm going to. Oh, look. Watch. This was me. Live footage. It was faster than that. It was a real quick out and down. It was much quicker than that guy.
Live footage of Jenny Andrews this morning shoveling her driveway.
But there were definitely ice patches underneath the snow.
Oh, that's funny. Yeah, no, there are. It's dangerous.
Okay, can hardly recognize you with all those layers, Jenny. Glad you are okay. I go by this credo when it comes to snow. God put it there, God will take it away. So I just hop in the Jeep and drive over it.
It's a good plan. It's a good plan. I mean, yeah, pretty sure I'm of that camp right now, but my brother does plow our driveway, so I'm very, very lucky.
So your brother plows your driveway. Okay, yeah. Monologue for 1 second, because I promised someone I would tweet this.
Sure. Yes, I am. That was one of my prerequisites for leaving the city. I know. I know you live pretty far south, and you've kind of always lived in the suburbs. My kids were raised in the city, and I don't like anything to do with home ownership. I love living in the city. I loved living in a condo. So my brother said if I did move out and move near him, he would promise to plow my driveway. So that worked.
Oh, that is really nice. That is really nice. Yeah. That.
So Jenny, I'm not gonna talk to you when you're doing that. Whatever.
No, I'm almost done.
Guys, trade. I'm glad you put a lower price point in. We were down 8 or 9 when you put it in. We're down 5. I would like to see where we are. If you want to go into the platform, I'm gonna take a look at Jajun. We're up $35 already in our Jajun because we were we put it on when we were down 8. We're only down 5. We're up now 20, but it's getting close.
20. But we talked about this the other day. It seems like we're needing more of a move to get that $50 that we used to look for.
Yeah. So also breaking news. I got to give a huge shout out to Tony's daughter Sasha. She's amazing. Number one, this poor girl. I call her for everything.
You do. I don't know exactly what her role is supposed to be, but I'm pretty sure it's whatever Liz wants, she's calling Sasha.
I do call Sasha. I love Sasha. She's amazing and she can solve all my problems. So yesterday I was so proud. JD's transferring 3, not 1, not 2, but 3 people to Tasty who are options trading. As they turn 18, they're all coming to JD as if he's the godfather. So he's going to get 3. So I was looking for his
nice.
Yes.
Nice.
Yes. So they're already trading and he doesn't know what platform they're on, but he's convinced 3 people to trade to Tasty. And I'm very proud of him.
That's a good way for him to rack up his account.
Yeah. And they're already funded in the other account, but I'm going to guess, I think it's a minimum you have to fund it with here for you to get all the stuff.
But he'll transfer it.
No, they will. But I mean, I know some other platforms you can have like a couple $100.
Oh, I see.
Yeah, I don't know. I think you need.
Well, I mean, you could open an account with any amount of money. You could open an account with any amount of money, but in order to get
the referral
fee, it's got to be X amount of dollars.
Yeah.
When Logan referred his friends, none of them had enough money for him to get the referral fee.
I know, so we shall see. But 3 kids coming to Tasty, and I don't know if I bit off more than I can chew because now they all want to come talk to me.
Okay, you're gonna totally turn into Tony from Mexico because do you remember Tony from Mexico would have lessons with his kid and their friends and teach those kids how to trade.
Yes.
So you're gonna be the new Tony from Mexico, teaching the high schoolers.
Can't wait. It's pretty fun. So yeah, we'll see. But yeah, Sasha, immediate response from Sasha, and I love her. So huge shout out to Tasty.
Well, and just like anyone who calls in who has a problem or issue or question, you always get an amazing person on the phone.
This isn't special treatment because I work there.
But it kind of is. But anyone who answers. Well, you can't. Someone just can't call direct Sasha, or maybe they can.
I'm not going to number. I'm going to save it for me.
But whoever answers will give anyone special treatment.
Yeah.
All right.
I had Emily last week and she was amazing when I got locked out of my account from spelling my name wrong 20 times. That was awesome.
All right, I had to post this. Let's see if it posted and if it worked. I don't know. We'll see. Oh, okay. Yes. So, my brother's company, and I sent this to you, Liz. So,
yes, you did.
Yeah. So my brother's company put together this little video about nuclear and the future of nuclear. And we talk about nuclear on the show. We talk about uranium on the show. We have positions in both of those in both uranium and nuclear. So I put this video out there for anyone who wants to watch it. It's really good. There's even, I think he even said like,
you should have tagged Victor because he was talking all about that yesterday when I was.
Oh, can I retweet and tag Victor? Retweet, repost, and how do I tag?
You have to put with quote, and then you can put Victor on it.
Okay.
There you go.
What's Victor's? Victor Jones?
No, I don't think he's a hashtag. We're the hashtag.
At Victor Jones.
Yeah, there you go.
There he is.
There you go.
Okay. So anyway, it's a nice little video about nuclear. And so it's his company that had written the article about OKLO, which brought it to our attention way back in March of 2024.
Yeah, I gotta tell you, here's the deal, Jenny, and I'm gonna say it on air so you can tell in my voice. You were the one who brought up OKLO. It was your brother's magazine that wrote about OKLO, and Jenny started trading it. Then the other tasty traders found it and claimed that they had found it on their own. And I
know, but you can take it to the tape. It came from my brother long ago, and he said, "Here, look at this OKLO. We just did a piece on them in their nuclear magazine." But let's
look at OKLO and CCJ and you.
You know, OKLO has taken a hit this week. It has. And it had a crazy run up in the end of 2024, all the way up to 32. But in the last week or two, it's dropped $10 from 32 to 22.
So is this a bargain price for it?
What do we have? I think we have just a put spread. We have the 24-20 put spread right in the middle and 24 days to go. I don't think we have to do anything with ours, but
we rolled that out in time to extend our duration.
Mm-hmm.
Yeah. I don't think we have to do anything with ours. What about
and then CCJ is our uranium. We're short the 55 put. So also, I mean, I think these are almost a little bit go hand in hand. That's had a rough week. Too. We have a put spread there, but it's pretty deep in the money, or just a naked put at the 55 level.
Yeah, and we looked at this the other day. There's still quite a bit. It's just a covered call, so it's a synthetic covered call now, and they're still pretty. Right. So we don't need to alter that yet.
No, we're not going to do anything with either of them, but I do like to have them both in, and we'll keep an eye out for other uranium or nuclear stocks to get into. I'll keep doing a little research. And if anyone out there has some ideas for uranium or nuclear stocks to get into, let us know.
Oh, please do. We love
if you watch this video. You watch this video and you're going to think it's the future of power.
You watched Victor and it's the future of power. I mean, I don't know. He's very bullish in it. And he was pretty good yesterday.
All I have to say is my brother has been working in the nuclear industry since 1996, 95. He started in the nuclear industry in 1995, and he's finally having his heyday. Finally.
He produces a magazine. He's not
the nuclear
industry.
Well, he goes to all the nuclear shows. He goes to all he produces a nuclear magazine, which he has all these members. They're all nuclear engineers. So like all the members of his magazine are nuclear engineers or nuclear. They're in the nuclear industry. So he goes to all the nuclear conventions, all the nuclear shows. He basically he produces the magazine. It's a non-profit company that it's made up of all these nuclear people, members. And so he's been in the nuclear industry since 1995. And again, finally having their heyday. Finally.
And this is the first time he produced a stock for us? Where the hell you been, Jeff?
Yeah. Yeah. So, anyway, another more exciting news, earnings season finally has arrived.
Slow clap. Okay, but we got some big banks today. JP Morgan, Citigroup, Wells Fargo, BlackRock, Goldman Sachs.
Yeah. Let's take a look. Let's take a look at all of them. Normally, in the past, we would be looking at earnings and everything would be at the tippy top of its range. Let's see how it is now. Well, yeah, same.
Tippy top of its range, Jenny.
Same.
So let's pick one. Let's pick one that is reasonably priced, and I accept this, with the highest implied volatility.
I usually like Citigroup. I usually lean towards Citigroup because it's cheaper. And
let's diagonal Citi. Let's price all these out. Okay, what we're gonna go with. Okay.
Right, and then JP Morgan at 444. Goldman Sachs 567 at 56 rank, and BlackRock that is 962. So we kind of went in order. Citigroup, JP Morgan. I know the ranks are higher for the higher priced ones, but the stock prices are also.
I say Citigroup for the win. Is this like a C or is this a backward C? If you look at me, is this a real C or a backward C?
Backwards.
Citigroup for the win.
Citigroup for the win. Oh my God. Okay. All right. Citigroup for the win. Let's see. 268. We'll compare it to JP Morgan because JP Morgan might not be bad either.
So you're going to
we go to the 10-day and buy the at the money.
Buy the 73.
Then we go to the 3-day and sell the 77. $4 wide for $1.78. Not bad.
Not bad. I like it.
And here, okay, and I was kind of confused yesterday when I was saying, like, we usually do these and they're usually positive theta trades. And we were looking at the just whatever, random, and they weren't positive theta trades. But on earnings, they typically are. So you see here, we do have a positive theta trade because the point of these, that why we like them on earnings, is selling that inflated weekly earnings vol and then buying the next week. So that.
And I also think it's the near term that makes it a positive theta trade, because theta's greatest when you get closer to, when you're getting near to the end. So
yeah, but
even if you do, like if you look at Tesla, the 3 days, 11-day, well, that won't, because there's earnings in the next cycle.
So we were looking at whatever we were looking at yesterday, none of them came up a big positive theta trade. They were all like negative or zero.
Yeah, and I was pulling them up, but I was going like 14-day, 28-day.
Okay.
So they weren't 3-day, 7-day or whatever.
And we could do 72, 76, 73, 76, $3 wide for $1.50. And that's kind of what we like, to pay half the width of the spread.
I like less than that for earnings. I don't like to pay 50%.
Oh, well, I mean, I love a third of the width. But on Citigroup, where it's so tight, where it's 76, 73, we're not going to get that. Well, let's look at JP Morgan. I mean, on those bigger products where we're paying more, we can tend to pay a third of the width. 244. So I'm going to go 245 because we're trading 244.88, 245, and sell the 252. So here, same thing, half the width. You've got 750 wide and you're paying 370.
Yeah. I mean, they're not bad. Let's go with the Citigroup.
Yeah, we'll go with the cheaper one. Now, there's nothing wrong with putting them on to the downside too. Like, they don't have to be to the upside.
No, but I think I want to stick to one side or the other and just do it, because I can't pick a direction to save my life, right?
I agree. I can't pick a direction to save my life either. So I agree. Let's pick one side and stick with it.
Yeah.
Zhajun!
How long was that? I'll look. It was on at 10:05, off at 10:22.
So it was on for a little bit.
Yeah, but not bad.
No, not bad, not bad. Okay, $1.55. I'm going to ship this diagonal. Basically, what we're doing is we're buying the at the money in the 10-day, selling the at the expected move in the 3-day.
Beautiful.
Citigroup, bullish trade in Citigroup. It's only $1.55. If the banks go down, we might not be out at $1.55 if it doesn't go too far, and then we still have a 10-day chance for that with 73 to make a roaring comeback. And did you hear them say most of the time this January expiration week is bullish?
Yes, yes.
January Friday, expiration Friday is bullish. Not necessarily the whole week, but expiration Friday of January is technically bullish. Typically.
Well, typically. I think there was 9 down, 17 up in the last 26 years. I believe I heard them say.
And I think out of the last 10 years, it was like 8 up, 2 down. It was crazy, like kind of crazy numbers, like mostly up.
Yeah.
Mostly up. The word is out. My phone is blowing up. I've had a million phone calls from people from school. The word is out. I'm the MC of the high school fashion show.
Turn to the left.
Here's Liz walking down with a beautiful sequin gown from That Girl Boutique.
Would you like me to load you with some jokes?
Yes, please.
I will.
Please.
Can I come up and tell the jokes? Because sometimes your delivery is a little flat.
Okay, listen, when they called me and said, can you be the MC of the fashion show? I was like, I got someone you can call.
I'm going to load you with some jokes.
You have to send me some jokes. Fine, I'll get on stage because we've been doing it for so long, but it's not my favorite thing to do.
Oh, can I come? Can I buy a ticket to this fashion show?
You just can you just do it instead?
Oh, I don't know anybody.
You don't have to know anybody.
I'm going to be making up names as they come down, and here is Sasha.
I'm gonna get a printout ahead of time of the name and the boutique, or the designer, the dress. It's all you have to have. Here comes
when is it?
Katie and her date Timmy. He's wearing a tuxedo from Norman's, and she's wearing a dress from Pink Slip. Like, what do you get?
Oh, we got this. We could totally be a sitcom act up there. When is it? Can we kick your other MC host out and I'll do it with you?
It's Sunday, February, the first Sunday in February.
I'll be there. Oh, no, actually, I won't be.
I know where you're going to be. No, you're not going to be at the Michigan house.
No. I failed to tell you that I will be out of town for 2 days in that week in February, and I'm leaving Sunday. That's the Super Bowl, Jenny.
So I have to MC a fashion show and then find a guest for our show? You're not going to be here?
Wait a minute. That's the Super Bowl.
No. When I say first Sunday in February, it literally is like the first. So it is February 2nd.
Oh.
The Super Bowl is the 9th, I would think.
Yeah, Super Bowl is the 9th. That's what I thought it was going to be. But sure, I can do it with you.
February 2nd. Would you like to join me and the mayor?
Yes, I would love to. I'm going to be like, move over, Mayor. It's the Liz and Jenny show. Okay. Well, Jajun, we are green on the day. Jajun saved the market. I'd like to state for the record, you heard it here first, ladies and gentlemen. The Jajun trade has saved us to a green day today.
Have you pushed anything out?
It's all been pushed out.
Oh, look at you. Look at you. You're always, you never slack on your job.
I'm hot on the trigger.
Okay, so did we get filled in Citigroup? Yes, we're in Citigroup.
And it's already out. Check my work.
Let's go to the follow page. I agree. And here Liz and Jenny, SPX, Citigroup. And what's Tony doing in Oracle today? Sold a Jade Lizard.
It's his podcast, so.
Okay. Sold a Jade Lizard in Oracle.
Yeah. Sneaking in between the Liz and Jenny stuff.
Look at that handsome guy. How old do you think these pictures are?
I don't know, but I need to change my one that's on the website. I've never seen anything like it in my entire life.
Let's take a look. Oracle Jade Lizard. Now, if we click on this, do we see his exact?
Click it. Yeah, there you go.
Oh yeah. The 50 put and the 55.60 call. Almost Big Lizard-esque, really.
Let's take a look at it.
Okay, hang on. I'm going. ORCL. Oracle, Tony Batista, and in Feb. So sticking to something that doesn't have earnings coming up. Earnings are after Feb. 60-65 call spread, 50 put, 670. Your break even's around, 149. And
Tony's got a bigger account than us because he's spending $3,000 on this Jade Lizard.
Hey, he's big by big.
I thought this was an IRA account.
Then it's going to use $14,800.
Yeah. Yeah.
But hey, you know what? Let's say you are in an IRA account. Then you buy this. You buy the 130.
Or you buy the 120. You can release all that capital. It's very easy to do once you understand what you're doing with options.
Or let's say you're Liz and Jenny and you want this trade on. You buy the 140. You're still getting over the width of the call spread. And now you're using $940.
Hey, I'm Liz. You're Jenny. Press that button.
Jade Lizard and Oracle. And then you got to push this out on the follow page.
I'm going to.
Tony Batista's trade adjusted first.
You didn't get filled. You didn't get filled yet. Oh, you did. Watch how fast you can put it out.
Push that out on the follow page.
And
take that, Tony.
Done.
No, honestly, I like Tony's better. I prefer the naked option, but we need to preserve capital. So
yeah, we do need to preserve capital in this account.
Liz. Well, I was going to say big winner on the board today is MBTX, the SIBO mini Bitcoin.
Oh, yes. We did we did this live on the SIBO. We toyed with closing it tomorrow. Oh, we're only up $65. We were up 100 total a couple minutes ago.
So
when I say a couple minutes, 30 minutes ago before the show.
Okay, do we want to
Jenny, it's a short-term trade. If we want to, we can look at another one tomorrow. And we could talk about it on the SIBO when we're there.
Okay, so should we close it or leave it?
Let's take our $60. Or put an order in to take 100 out because
I'll just put in the 50%. I'll just put in the 50%. Right?
Yeah, there you go. These markets are pretty wide, so we'll see what we can get filled with. Yeah, put an order in for 50%. Okay.
So if that's up that much, and the cryptos are up, I want to see what Coinbase is doing today.
Coinbase
only up 276, not up much. Okay, so yeah, I know Tom talking about trade coin instead of IBIT. IBIT is up 2.5% today, and Coinbase is up barely.
Yeah.
I guess 1%, 1.2%, but it doesn't seem like that much.
Yeah.
In my account, I have both. It doesn't feel my IBIT position is doing much better than my coin position.
Well, can you look at that MBTX? Because that was up a lot then.
I know.
What percentage was that up? Can you see it? Just hit it so we can hit that, so I don't have to do the math.
2.5%, same as IBIT. Okay. Same as IBIT, which follows Bitcoin, which makes sense. So they should both be up the same percent.
Yeah.
They are.
They are.
Yeah. That's how they should move the same. Okay.
So that's good.
So I put in the order to take 50% out of the MBTX, and we have this diagonal here, which is still, we put this on when IBIT was about 58, but it's making a comeback today. Roaring comeback for crypto today.
Yeah, it is a roaring.
I want to see, what is Ethereum doing today?
They were both up. They were both up this morning. I mean, I don't know if they still are.
3,200.
Yeah. I mean, it's up because yesterday Ethereum was, flirting with 3.
Yeah. And Bitcoin back to 96,000. Okay.
Yeah, I mean, it was up as high as Bitcoin was up as high as 90, almost 98 today. It flirted with 98.
Okay, that's good. I'd rather have it getting back close to 100 rather than down to 90, the 90 level.
Well, I think that's the two. Those are the two fighting. Well, this is from Tim Knight, but those are the two fighting levels: the 90 or the 100. Who's going to win? Because if it dips below 90, that's like a key number supposedly, and then above. I don't know. These are interesting to watch, and I mean, I think next week should be interesting too because we're off on Monday.
That's right. That's right.
And it's inauguration.
Monday,
the 20th.
Okay, so next week is a hectic week because we're off on Monday, it's the 20th. Tuesday is my son's 21st birthday, which is going to get crazy.
We're going to be so hungover at the SIBO on Wednesday.
On Wednesday, I don't even know how I'm going to make it there.
We should maybe take it off.
I don't know, but I've got big plans for Tuesday, the 21st birthday. Big plan.
Oh, yeah, and I'm coming with you. So
yeah. So I'm not sure. I'm not sure what to think about the SIBO on Wednesday. We might be doing the show in sunglasses and hats.
Yeah, in hats. I don't think they allow hats on the trading floor. I haven't seen them yet.
Oh, you're probably right.
Yeah, I don't think they allow hats on the SIBO floor. What would Tom do?
He couldn't wear the beret.
I don't know. Frank the Great, we need you. There's no hats on the SIBO, right? So Frank will hopefully get us this answer, but I'm going to guess no, because otherwise you'd see a lot of hats, a lot of baseball hats or something. Don't you think?
Right. Yeah, I think you're right. I think there are no hats on the trading floor.
Yeah.
So I don't know. Oh, anything else moving one way or another today?
Well, I want to look at our account to see if there's anything that needs to be managed. Yesterday we took a little bit of a hit. Today we're making it back mostly, but there's not a lot to manage.
No, there's really not a lot going on. We don't have anything to manage. As far as movers today, KBH.
Can you do me a favor? Oh, I'm sorry. Go ahead. Yeah, KBH is up.
They had earnings. It's up 3%.
And then can you take a look at DraftKings? We need to manage this position.
DraftKings, we're just short the 40 put. Oh.
It's got 3 days left. So we can move this out in time.
Okay. Now let's take a look at where we're going to move it to. I've been weekly with my DraftKings because I'm still getting decent premium in the weekly.
I'm fine with that. But maybe go 17-day just for this one.
Sure. So if you go, the 10-day is 97 cents or 76 cents or 59 cents. 17-day, 128. There's decent premium in these DraftKings puts.
Yeah, it's not bad. But I don't mind staying at the 40 level. We can manage it today. We might as well.
We could take it out even to but look, you go to the 31-day, you're getting 121 on that 40 put.
Yeah.
Well, these markets are so wide. Look at how wide the markets are.
Oh, yeah, you can't do that then.
No, so let me see if the other ones are wide. Now, the 1 week out are fine, and 2 weeks out are fine. 2 weeks out are fine, too. I guess it's just that this was just added. This was the latest week just added probably.
Yeah.
And there's not a lot of open interest and those markets are very wide.
That makes
All right,
sense.
2 weeks out, 40 put to the 40 put.
Do it.
Yeah. I'm staying aggressive with DraftKings through the Super Bowl.
Yeah.
I'm on it. I have to be with my husband in Germany for 3 weeks during football season. I'm in charge of his DraftKings accounts and all of his fantasy teams because it's not allowed in Germany.
That's awesome. You're going to do amazing.
Hey, we won this past weekend.
Good job.
Mm-hmm.
Oh, I got to check my square pools from our train guy.
Oh, yeah. You've got to get your numbers.
Yeah. Well, I had 0-0.
Was it for this? What game was it for?
It was for all the games, he said.
Was it for this weekend or was it for another weekend?
I think it's for all the playoff games. I don't know, though. We'll have to.
I don't know.
Can you do me a giant favor?
Sure.
The Polish Warrior is hysterical. Please go back to Twitter and reload from top down. And yes, we accept.
Oh, I love Zoolander. Need any extra models? Mikey, yeah, I would.
It's awesome.
Oh my gosh. This movie is so funny.
It is pretty funny. And Mikey, yes, I accept. If I come as a guest MC, I need you to be on this stage. But I need you to, whatever happens, whatever you wear, I need you crawling. You can wear whatever you want. You just have to crawl. Okay. Then
and Steve Jones. I've never spoken with Sasha, but all listeners can email her at accounts@tastytrade.com if you have questions about funding, account setup, or new accounts. Hey, Steve, thank you Steve Jones has been with Tasty for so long. He knows more than we do.
Yeah, he does. No, we do that. Accounts at tastytrade.com.
Right.
We didn't know that. I didn't know that. I just like to call the number. I like to call and be handheld through everything.
All right. What else do we have? We had earnings, and here's Frank. He posted everything going on. Frank the Great, he's amazing. The economic calendar. And he also talked about the SIBO Monday's option volume. And speaking of SIBO volume, we've got the SIBO most active. And something unusual on here that we saw was Riot.
Now, Riot is a Bitcoin proxy, right? So that's another interesting thing because it is a Bitcoin proxy. Let's take a look at it. February 21, 12 call in Riot, 22,000.
Whoops. Riot. Now we haven't traded Riot in a while.
Well, Riot, Mara, those used to be the only way to trade Bitcoin. So let's go to the options.
But I don't know, like it doesn't exactly, I'm not quite sure how this moves with Bitcoin.
No, it was just a proxy from before. That's the only thing I remember is, your Mara, your Riots used to be something that were Bitcoin-esque, for lack of a better term.
So these 12 calls, there is quite a bit of open interest in there already. So it could be a closing order.
Oh, it could be that could be a closing order for sure.
Mm-hmm. Sure. Could be a closing order.
We got out of our Jaji order. Take a look at the markets. We're down 11.
Well, and this is where old me, because now we're down 12. This is where old me would, and maybe current me would put the Jajun trade on again.
Current me or old you? Which is it?
It's both. It's both.
You would go bullish again right now?
Yeah, I would throw it. Was down 12. I'd throw it in again.
I kind of would too, and I know do as I say and not as I do, but not in this account, right?
Yeah, we're just putting on. Well, I don't know. I mean, can we get it two times in one day on Tuesday?
Well, you would only have it on. You'd only have it on for 20 minutes, so go for it.
I went Spoo's down 12 though.
You don't know.
All right. 9:55.
I love your picking a price level. Oh, we might be out sooner rather than later. Did you put an order in?
Here.
Okay.
Close. I'm gonna look for just like $30 out of this one since we're running.
$25. We already got 40. Get 25. Get 30. Who cares?
What did I pay for this?
$255.
So $285.
Oh yeah, $30. Love it.
Yeah, try for a quick $30. We'll see.
Come on, Jajun. If not, we're gonna close this thing.
Yeah, we'll leave it, and hopefully we don't lose the $50 we made earlier.
Yeah.
All right, I'm still working this roll in DraftKings. I'll adjust it, and again, I'll have to take it down 2 cents. We're moving to a there, filled. I gave up 2 pennies.
I was about to scream Jajun, but we're down 11.
No, that's all right. Okay, 6E is having a little bit of a pop today.
6E is. Oh, can we take a look at bonds too? Hold on, let me go.
Bonds are weird. We've got bond. Oh no, this is not good. Don't look.
What?
The Jajun trade.
Oh no, that doesn't matter. It's okay. We got 20 minutes.
Down 15. Okay, so bonds unchanged, but what's not good, like my account is taking a hit. TLT is down 32 cents.
It's not a big move in TLT. Look at the percentage, ZB versus TLT. I love having this percentage out there.
ZB is unchanged. It's unchanged.
But 0.37% is basically unchanged.
0.03.
Yeah, but you're still there. Like it's the same concept. 0.03, 0.37. It's not. And ZB is the 30-year and TLT is the 20-year, isn't it?
I know. I know. But even like Tom.
So go to ZN. Go to ZN.
Well, ZN is the 10-year.
Oh, so
and that's up a little bit.
So it's between the two, TLT.
Well, no, ZN's up a little bit. ZB is unchanged and TLT is down. And I know it's not down a lot, but down 33 cents is feels like a lot.
Your positions are too big if 33 cents.
Feels like 33 cents feels like a lot.
Your positions are too big if 32 cents feels like a lot.
32 cents feels like a lot. So Tom and Tony were talking about the TLT dividend because again, it does pay a monthly dividend, and then the day the dividend comes out, the stock's decremented by the price of the dividend. But I always thought So if the last one was December 18th,
I thought it was the first. I thought it was the first of the month.
I thought it was the first of the month too. I always thought TLT was like the last of the month or the first of the month, something like that. But if the last one was December 18th, that's Wednesday of expiration week. So did the dividend come out? I don't know.
Maybe. I have no idea. Jenny, this is the first I'm hearing that TLT. I thought it was each month, but Scramble Everything is saying TLT is a quarterly dividend now.
Oh, really? Okay, so then there is no dividend. It's just down 36 cents, which actually hurts a little bit for me. Hurts.
Yes. I'm sorry. We are such bad traders. I just laugh.
All right, I got my two biggest positions. My two biggest positions right now are Intel and TLT, and they're both down just like 29, 30 cents, but it hurts.
I mean, 30 cents in Intel is a big move. It's 1.5%, but in TLT, it's only down 0.3%.
Oh. All right.
June.
Oh, Jajun, why did you?
Hey, you know what? This was sent here to teach us a lesson, to stop trying to do it. We made money. We got out.
I tell you, this is what I do all day. Put it in, take it off, put it in, take it off. Until the last one, I never take off. So then I lose 250, which takes away all of the Jajun winnings from the earlier day. That's why I kind of said, new me is trying not to do multiples a day.
It's like you try not to, but you're addicted. You're like an addict. I'm trying not to, but I can't stop myself. That's what you did. I love it. I'm in too.
All right. So we didn't see this yesterday on Twitter. Mikey, Liz, we are not overtraders. We are trading enthusiasts.
Oh, you know what that's from? WandaVision.
Oh, I forgot about WandaVision.
That was a great show.
It was a good show. I did like WandaVision.
That was really good. I loved it.
That was good.
Okay, so I want to put
Mike in the fashion show.
This is amazing.
And
Mikey, even if we're not invited, let's just come in together. I'll grab the microphone and you walk the.
You know, it's just a few weeks ago that I saw Carlton. Up close and personal, behind the scenes. Yeah, I saw Carlton. Like I was 5 feet away from him. Behind the scenes, he was getting ready to go film something for a Christmas special.
Oh, in Disney, right?
Yeah.
Not to let the cat out of the bag, but you were in the jewelry store in Disney.
I was in the jewelry store in Disney, and they used that high-end jewelry store. I say high-end loosely. I mean, that's a high-end for the Main Street in Walt Disney World. They use that room to get the actors' hair and makeup spruced up before they go out onto Main Street to film.
Love it. And so Chad is going crazy. TLT is monthly, I guess. I don't know. Somebody said it was quarterly. Somebody said it was monthly. There was 2 in December, and that's why the trades are this theta trader. So 12/2 and 12/18 X dates. Next should be February 1st or so. So there was 2 in.
Yeah, I always thought it was the end of the month or the beginning of the month.
I always thought it was the first day of the month.
Well, all I know is today we don't even have TLT, but. And did you hear Vanetta talking about saying that these have been really active? The TLT calls have been really active. People buying TLT calls, looking for a bounce.
And it's Jenny.
All that volume, it's all me.
I mean,
but you know that you go short term. And well, because not right now. So right now you see this extrinsic value in these calls. I honestly think that's a lot to give up when you're doing such massive quantity. But so if you do the daily, you can get away with paying like no extrinsic value. So this is January 15th, which is tomorrow. Oh, but there is a lot because tomorrow we've got the CPI.
Correct.
So that's why there's a lot more extrinsic value in these. End of the day, you try to end of the day play for the next day, you can get them for almost parity, but this because of the CPI, there's some extrinsic value in there.
Yeah.
So it's like if you don't get a move, you won't lose anything if you're not paying any extrinsic value, and if you're looking for just a day bounce.
No, that makes sense. And that's why I do like options, and I do like the very near term options, those 0 DTEs and these 1 DTEs, because there's no 0 DTEs in TLT, right?
They are every like few days, Monday, Wednesday, Friday.
Okay, so Monday, Wednesday, Friday, then they'll become the 0 DTE, but so it's not every day. But these have really changed the game, I think. And that's why when I do meet JD's three options traders, he doesn't know what they're doing, and I was like, I'm gonna bet they're buying calls. I mean, if I'm a betting woman, and I would put money on it that these people are buying calls, because it seems to be what everybody thinks they can make a lot of money on.
Well, I guess it kind of depends on what you're doing. Like if I am going to use an option instead of a stock, I'll use with 0 DTE with no extrinsic value, where it's going to act just like stock and I'm not giving anything up. But when you're talking about other people buying options or buying calls, oftentimes they're going out of the money, cheap calls where you need quite a move to make money.
Yeah. And going pretty far out in time too.
Pretty far out in time. And if you go, let's say you go to March, you're still paying extrinsic value way up here at 91. TLT's trading 85.
Yeah, I mean, you are.
Yeah, they're too expensive.
Yeah, but so expensive is all relative. When somebody's new and looking at it, it's interesting because they would rather do that than do something else that we're doing. Do you know what I mean?
Well, and for smaller accounts too, for smaller accounts who couldn't manage 100 shares of stock, an option gives them a cheap way of managing 100 shares of stock.
Yeah. You know what's crazy? Okay, so I just glanced at this because I want to see what it was doing, because SPOOs are down 20 now, and the VIX is almost is just basically unchanged. Can you go to the VIX? No, I know some people. I know. Like Tom and Tony look at /VX, but this is up 6-7 cents.
Yeah.
We had at this point we're down. We were up. We had a 70-point move. We're down.
And this June trade is down. Where's it trading? Yeah, we paid $255 and it's trading $190.
Yeah, so I mean, it's not going to be that bad. These trades, if you close them at the end of the day, we only had one that was like a massive loss. But this is a big move, and VIX isn't moving.
No. Well, a big move, I guess, from being like up 40 to down 20, right? Because
it's a 60, 70-point move.
What was our high today? Let me see.
You looking at SPY or you mean S&Ps?
Yeah, I just went to SPY. So high 585.
Yeah.
5.5 points higher.
Yeah, that's a big move.
I don't know what that does. I thought when we were up this morning and we were up after the number that we would be up today. I didn't expect to turn red. That's not a good look for the market. Not a good look.
Oh, I agree. I'm surprised sellers are in total control right now.
Yeah. So we'll see what happens with earnings. Earnings will probably make or break the market this quarter.
Now, let me ask you this. Would it have been would you have had a different, because I do think so goes the market, so goes earnings, right? So would you have had a different opinion on Citigroup if we were here right now?
Well, we kind of talked about it yesterday. We've been through enough earnings cycles to know it depends on what the market's doing. Because good news, when everything's up, good news is good news, bad news is good news. It doesn't matter. And when everything's down, even good news can be bad news. It's not good enough. So yeah. We've been through earnings seasons on either side. I'll be curious to see if this one's going to be, no matter what they say, nothing's really going to hold its rally.
Yeah, we'll see. And what if we get the two-way action? You know what I mean? I'm not saying this is going to happen. I have no idea, but we could come back. Did you see this? I was totally TP. I was just sitting there like this. and I caught like a glimpse, and so I had to sit up.
But that was good. It's reminding me to call him. When days are you taking off?
Oh, yeah. It's going to be right after the Super Bowl, the Monday after the Super Bowl.
Oh, so that's not for, yeah.
I think it's February 9th.
Yes. Okay. Yeah. That's when I'm going to be in, I'll be coming in my hard hat and construction gear so my parents are going on a cruise, and for Christmas, I gave them like a bathroom remodel while they're on their cruise. So I am doing what I can myself and hiring people to do the rest, but I have got a lot of work myself to do, and those are the final days before they return that following Friday.
That's pretty cool. So then it's going to be like a reveal.
Yeah. And
That's
maybe
cool.
And with you gone, I think I'm going to just film from their house. That way because the cheapest way for me to get their whole remodel done is to order, new countertops, I did everything but the cabinets. The cabinets, I'm painting myself.
Oh, you did keep the cabinets.
Mm-hmm.
Good.
Because their cabinets were so good quality cabinets and expensive cabinets, it didn't make sense to replace them with like stock cabinets. And I couldn't get custom cabinets quick enough, nor did I want to spend the money on them. So I'm just going to paint their cabinets.
No, we looked at those. You sent me the pic. I've been to your parents' house. Those are solid. They don't make them like they used to.
I know. That's what my dad said. He's like, these are from the Amish. You know how we used to have the Amish door?
Yeah.
Yes. So I'm just going to paint the cabinet. So while you're in Florida and I'm filming with TP, I'll have my painter's gear on because I'll be painting cabinets.
That's awesome. Very cool.
Well, you're going to have a good time. I'm jealous you're getting out of this cold weather.
Yeah, I'm excited. We'll see. Okay, so what else do you want to do today? We've spoozed down 25. We seem to be.
All right. We have 6 minutes waiting for a comeback.
Just a little pop, Jajun. Just a little pop.
Yeah, just a little bit. Now, we talk about this. The numbers are moving the market, right? These numbers coming out, CPI, PPI, they are moving things, right? The market had quite a range today. So are you going to do anything today before tomorrow's number?
No, but I've been, we've had some violent moves to the downside in 2025. So I've been pretty good about kind of battening down the hatches, right? So I'm taking profits quickly. I'm adjusting everything. And this morning on the open, I adjusted quite a bit. Can you actually take a look at HUD? I don't believe we have a HUD position. I want to see.
That just moves along with crypto. So if crypto's up, HUD's up. Yes. Oh, and it's up.
Well, no, I just wanted to see because Vanetta had some story this morning that they had to pay and I'm going to make up the number, but so just bear with me, $50 million in fines or something to that effect for that's why I wanted to see what they were doing. Because I know they move with crypto, but they got hit with a huge fine. But I guess to them, that's a drop in the bucket.
Maybe they were happy. Maybe the fine wasn't as much as they thought it was going to be.
Maybe. Yeah. I just didn't know if that was keeping its wings up still.
Yeah. So HUD had a big bounce today. So that was good for HUD.
Yeah. Yeah.
Was it? I'm trying to think. I feel like we got into HUD at like $45 originally. Does that make sense?
You mean when it IPO'd?
Okay, so
yeah, I mean,
it IPO'd around 35, and I feel like then it came back down, and I think we were like, oh, this is a deal. This is a deal. We missed it here and we're going to get in now. And it just, gone downhill ever since it's finally back.
Yeah.
Oh, I wanted to look at the new IPO today, Blaze.
Oh yeah. With the weird.
Yes.
What is Blaze?
Here. Is it this BZ?
Yeah, that one. I believe it's that one. Yeah. Cause it was SPAC.
It was a SPAC, but I thought it was just today. So why would it have this history here?
I don't know. Check the other one.
BLAIZE. Blaze. No. It's got to be the other one. BZAI.
Okay, so it's 1250. That means it makes sense. 1250. Okay.
Maybe it's not this because can you even buy? Because look at 10 by 100.
Yeah.
I'll double check to make sure this is it, but I did want to look at this. I heard Vanetta talking about it this morning.
Yeah.
I wonder how long it'll take to get options.
I don't know. I don't know anything about this company or what they do.
So what did I taking my notes today? What does it say? The first AI chip startup.
Oh, you wrote it down. First AI chip startup.
Well, I don't know if this is it, but just to keep an eye on it so we don't forget it, let's just buy one share.
Okay.
Right? Then we won't forget. It's 12. I'm going to spend, Liz, can I spend $12.85 and buy one share?
I can't stop you. I'm not going to push that through, though. I'm just kidding.
I just don't want to forget about it. I want to buy one share, then we'll remember it and we'll say, and it might not even be the right symbol, but let's see. Last trade was 1310.
Yeah, we'll take a look at this.
I'll see if I can get my one share at 1310.
And I will look at I'll go back and take it to the tape and see what Vanetta was talking about yesterday.
All right, now I blew all of our SPX money on the Jajun trade, but I'm tempted. I'm tempted to leave it till the end.
I know you. You're in charge today. If you plan on
No. I don't know, but don't you think we'll be up green again at some point today?
I do.
I kind of do.
I mean, the one we closed for $100 loss would have been a win at some point.
Yes. I know. I kind of feel like the way this market's whipping around, this will make a comeback at some point.
It could. It very well could. Somebody wanted to come up. There's Will Ferrell.
Oh, Will Ferrell.
He doesn't show up in pictures. He does not show up in pictures.
No, but he shows up here.
Does he? You got to see his little white strip. Right, there you go. There you go. That's all he can show.
Oh, Will Ferrell.
He's scared of something right now. Okay, so we're closing it.
Oh, no, I was going to leave it.
Leave it.
I'm leaving it today. Today, I think I hit my head. I fell 2 times on my driveway. I think I hit my head. Oh, I just bought one share of Blaze.
Okay, perfect. I'm not putting that through. She bought one share of Blaze. She did the SPX Jajun trade twice, and she's leaving it. You broke all 3 rules today.
And if I never hit my head on the driveway, I never would have agreed to MC that fashion show.
I know. Mikey and I are going to meet you there. All right. Everybody, good luck with the earnings plays. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow live from the SIBO.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man, Mikey Butler, with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend with my buddy, Mikey Butler. How's it going, sir?
It's going great. We've got our millionth red day in a row, it appears, in the market. We're near the lows of what we've seen over the last couple of days. And that's not the same case as Bitcoin, though. Bitcoin's ripping higher. And I'm just waiting for some trade opportunities, really. A bunch of earnings around the corner.
It looked like it was going to be the bottom.
This morning, yeah.
This morning, it looked like it was all good, really ready to go for the move higher.
The classic,
the buy the dip.
Classic intraday fake out.
Yeah, not so much today. I will mention we do have. So I know people have asked before on using mobile. So I've loaded up the mobile platform in conjunction with our desktop platform. They're right next to each other. It's the same account, so we can do the same things in both, which is fun. It'll be a little goofy for me until we get everything totally set up. But if you got questions on the mobile, we can do those. We could do some trades there as well. But just so everybody knows, if you're watching this and you're like, whoa, this platform looks a little bit different, it's because we are porting the iPhone on here right next to the desktop. So we have a lot going on here, as you can see. From our stream. Yeah. The boys are doing an amazing job with everything.
It looks great.
It does.
I love it. But yeah, nice way to integrate different platforms. I know a lot of people are using mobile these days, as we are as well. So
yes,
we can do it all.
Yes.
We can do it all. Beautiful. We've got, it's Cherry Picks Tuesday. So I've got the newsletter pinned to the top of the YouTube chat. Go sign up for that for free, tastylive.com/newsletters. If you want to join us on YouTube, we're streaming live. Just pop over to Tasty Live and give us some trade ideas and things to look at because we've got a lot of stocks well off the highs that they realized a couple months ago.
Some dippies to buy.
Some dippy doos.
A quick little preview of what's coming in the cherry picks. We've got a S&P 500 spreadsheet downloadable that'll be really cool. Give you like the moves over the last month, 3 months, a year, volatility of all those underlines. Also got a little preview of earnings coming up, which most of the banks are reporting earnings at some point this week. JP Morgan tomorrow morning. It's the one of the first of the bunch. Also did a trade idea in there and in Tesla. We also did, I got a bunch of emails about the distribution that I put out for the SPX guesses last week in the cherry picks. So I put together all 4 quarters. So you can see like kind of the distribution for each quarter and see where, people are leaning towards in terms of directional assumption and how much. It's a pretty interesting takeaway when you see the end of the year guesses. But I then put the analyst median estimates on there as well. So all the big, amazing financial analysts that we have out there that are constantly wrong, I put theirs as well. So it's an interesting look. You'll see they last year certainly influences their expectations, and I think our customers are a little bit more realistic, which is kind of fun and cool to see.
Yeah,
which is fun.
I like it.
Quick little market update. We got E-mini S&P 500 futures are down 21. We're near the lower end of the trading session. We've had about a 75-point intraday range today. We were up 40 after PPI this morning. That was kind of the high print, 20-ish in the overnight session. It looked like we were going to have a nice little rally. We've stair-stepped lower over the last 2 hours or so. NASDAQ down 100. You got the Dow down 100 and the Russell up $1, basically unchanged here. So the NASDAQ really the weakest of the group today. Oil selling off a bit. It had a big move higher yesterday. We got into, I think 78 was around the high. We're sitting at 76.61 right now, down 70 cents. Volatility futures have had a full 1.25-ish, 1.2 range here today. we're at the highs of the day, or about 10 ticks off the highs. At 1885 was the high of the session. 1765 was the low. We had a big pop in volatility yesterday. It seemed like that was the capitulation bottom. You have vol not explode, but went above 20. You had the sell-off, and then you had the stair-step back into the end of the day. It felt like a big old trap. We'll see if that plays out through the end of today's session. But I think a lot of it has to do with the bond market, which is just dead in the water. Rates continue higher. Just insane to see this move in the bonds. Gold up $4, silver up 9 cents. And then, as Mike was saying, Bitcoin has had a nice little risk-on move here, up 2,200 right now, but we got as high as 97.8 on the futures. Spot was at 97.2. So we're about $2,000 off the high of the session. I would say it's been strong off of the 90K bounce that we got yesterday, but certainly not a face ripper.
Yeah. It's kind of a weird market. We actually had an initial pop, pretty significant pop in the morning, almost 50 points at 7:30 a.m. when the PPI came out. It was 0.1 actual versus a 0.3 forecast, so it came in a little softer. But since then, the market is now net down. So we were as high as 59.20-ish, and now we're sitting at 58.50. So a 70-point sell-off, and it's been a pretty systematic sell-off here, nothing too violent. But Bitcoin kind of ignoring that move. Maybe people are done with the equity markets, and they're just trying to pump the coins back up. But CPI tomorrow morning at 7:30 Central. So I think we probably will see a boost in implied volatility for tomorrow's expiration, which you are. SPX now has a 67-point expected move for just tomorrow and almost a 100-point move for the rest of the week. So nothing to scoff at, considering sometimes we look at this and it's like 40, 50 points for the entire week. So plenty of perceived and implied movement in SPX. If you're one of those 1 day or 0 day people, you're getting a pretty wide range for tomorrow ahead of the CPI report.
Yeah, definitely been getting some realized volatility in SPX, no doubt. I wanted to go through just a couple things I did this morning. I bought to close an out-of-the-money put spread as part of my Iron Condor here. I had the 68, 66.5 short put spread. I bought that back at 11 cents in the oil futures, just leaning a little bit short now with an at-the-money call spread. I got long a little JP Morgan into the earnings today. Sold an Iron Condor in Tesla to take advantage of what is a very high implied volatility, 84 IV rank. Volatility seems to get bid into these rippers above 400. It seems like we dip for a couple hours below 400 and it just face rips back up above 400. So volatility certainly increasing there. I scalped out of M6E. I did 2 of them today. We've had a nice little rally in the euro. If you've been buying it over the last 2 sessions or so, had a nice little rally there. So I took some of that exposure off. I still have 1 contract, so I'm still in there. And then I took my IBIT position, if you remember, I don't know if we mentioned it yesterday, but I bought in the risk on the call ratio on my IBIT position. So on the call ratio, I had the 60, 65, 70. I bought the 70 at like 40 cents maybe. I bought the 70, yes, at 40 cents. So it's hedged me about 30 cents into this rally, which has been nice. Today, I went and bought I bought the 70 strike call at 40 cents. Today, I went and bought the 40 strike put at 35 cents. I turned this into a put spread. It basically was just an adjustment into a rally to reduce the buying power from 1,800 down to like 900 on this position. I'm still leaning long. I have this whole position on, so it's kind of like a double upside play. I'm short this put spread, which has risk to the downside, and then I'm long this butterfly. I legged into a long butterfly here, 5x5, equal with risk-free butterfly. And I have the whole position on for like $2.30 some odd cents, $2.37 credit. So really, from a risk perspective, I'm short this put spread at $2.37, and I got a free shot at up to $5 on the upside. little bit long upside vol in IBIT. Fun
Love
little
it.
position to have.
Yeah. Love IBIT.
Yes.
Significantly better than Coinbase. Just kidding. Little jab it from the chat yesterday.
Yes.
But yeah, IBIT, I still have the 5065 February strangle on, and I'm just looking at just rolling it out in time to March. And you're looking at like a $2 credit. I'd rather roll into a bigger move. If we see a bigger move to the upside in IBIT, we should assume that implied volatility would increase as well, which will give me a higher credit. And maybe I can move this up a little bit to like a 55.70. But either way, we've gotten a lot of premium out of this so far. Sold it for $565. It's trading for $322, but there's still $300 of premium over the next 38 days. So I'm in no rush to roll this yet.
Mm-hmm.
But around that 21-day mark, if we get there and we're still chopping in this range, then I'll roll it out for sure.
I like it.
Yep. But yeah, haven't really done anything in this account. Everything's kind of chopping around. My biggest loser in the day is Costco, down $100.
Ooh, Costco. What happened?
I don't know. I mean, I've been going there every week, and it's just the most amazing experience every time. I don't get it. But yeah, everything else kind of just chopping within expected P&L day changes. So, but there's nothing to do with Costco. I have a 1,000 strike calendar. Short February 1,000 strike. It's still trading for $250. So nothing to do there.
Okay. I like it.
But yeah, we have. I did a TSM earnings preview yesterday.
What are you thinking? Long, short, neutral?
I would like to get long.
Okay. Having a nice move lower today.
Yeah, it's got earnings at like 1 a.m. on the 16th.
Yes. Taiwan.
Yeah.
Hence the name.
Naturally. But yeah, quick little factoids. They have.
They make it all.
They make it all.
Yeah.
And they have a big, bold prediction for their U.S. integration, for lack of better words. They have a Phoenix, Arizona plant, and they want to invest. I think it was like $60 billion by 2030. TSM and NVIDIA kind of took a hit after the AI diffusion rule, which is basically a regulation on exports.
Okay.
So that's where that big red bar in NVIDIA came from, and TSM as well. But TSM actually pre-reported their revenue numbers, and they were through the roof for AI stuff. So I think if I were to pick a direction, I would lean more bullish than bearish for sure, especially into this sell-off from the highs due to this AI
Got some nice
situation.
vol there.
Yeah. So tomorrow I will place a trade. It's Thursday at 1 a.m.
Oh, I thought it was it was 1 a.m.
Oh yeah,
tomorrow.
Yeah.
It's
Tomorrow's the last day to trade it.
Tomorrow is the last day to trade it pre-earnings.
Pre-earnings.
Got it.
So I'll probably throw on a diagonal spread to the upside. Maybe long March, short the weekly. We'll have to see, but it's looking like $1,000 trade if you do something like that. If you go to February for the long option, you could certainly do that. It's just a little bit cheaper, but I would much rather have the 66-day versus 38-day for a long option and just pay up another $200.
Okay.
Yeah, that's the idea.
I like it.
But yeah, we're streaming live on YouTube. If you got trade ideas, questions, toss them in the chat. And again, I've got the Cherry Picks newsletter link pinned to the top of the chat. You can get that for free coming out later today. Let's see. Who are we going to start with here?
You tell me. You're in control.
How about an IBIT Iron Condor for an IRA account?
Sure. So typically somewhere around a 20 or 30 delta for the short option, depending on how what your risk tolerance is and the width. I usually would go either 5 or 10 points wide. Like I think this put spread that I have on is right in the wheelhouse of what I would choose here. Around a 30 delta for the short option, around a $10 wide in a $50 stock is going to put you at a, 4, 5, 6 delta option, and do the same thing on the upside. So then maybe you'd go to like the, 62, 72, and it'll trade for right around 1/3 the width of strikes. So you can see it's trading at $2.86. It'll give you that 60-40-ish pop. You have a little bit of extra, you have some upside skew here, so that's kind of skews your pop numbers here. But that's typically what we look for. 1/3 the width of the strikes, somewhere around a 20 or 30 delta for the short options. You want to be a little bit more risk averse. You could go to like, let's say the 25 delta, moving these out of strike, do it for a little bit less premium, get a higher pop. That's the sort of thing we would do. And I'm going to route this just for a higher than fillable credit here, but I want to show that when you route these orders, they'll show up on your mobile as well, all these orders, so you can do everything. So now if I go to my orders, my recent orders here on the iPhone, I can actually go and cancel it here, and you'll see it cancel on the desktop instantaneously. So it's cool that you can do this all together, back and forth.
Yeah.
And if we could fit the web on here too, really want to confuse everybody, we'll try that at one point and have them all going at one time.
Oh, we can.
But that's the sort of iron condor that I would do, and I would stick to February now. March is a little bit just a little bit too far out in time for me, to really do anything.
Roger uses a strategy to sell an out-of-the-money put and use the premium received to purchase stock. This allows me to accumulate a position cheaply. Any other strategies I could use? Short put is certainly the most basic in terms of acquiring shares of stock at a reduced cost basis. If you want a lower cost basis in a higher IV stock, you could do a put ratio spread or consider a put ratio spread. It doesn't really work as well in low IV stocks because you can't make it as wide. But if you have a higher IV product like IBIT, for example, you could do, instead of selling a put like at the 50 strike for $2, you could do, you could buy the 54 and sell the 49 twice, something like that, or the 50 twice for a small credit, and your break even is improved by another 2 or 3 points to the downside. You still pick up a little credit, but you're ultimately giving up your upside profit potential for more downside protection, and your max profit is actually to the downside in that sort of setup as well. But yeah, that's another alternative.
If you're selling puts, though, to then use that capital to buy shares, I don't know if I'm so down.
It's doubling down.
Yeah, you're done. Yeah, you're getting extra long delta. It's small relative. Like if you're selling the 50 strike put in IBIT and then you're using this $2 to buy 4 shares of IBIT here, it's not like a huge amount, but you have to understand that now you're long 104 shares at 50.
Yeah. A more efficient way to do that is just to do a reverse naked collar type position where you're selling a put to finance a call. So like in IBIT, you could sell the 55 strike put right at the money, and then you could buy the 60 strike call for $2 credit. Now you still have a high probability trade or higher than 50% because your break even is lower than the current stock price. But this trade, you're going to make way more on an upside move because you have 100 long shares of potential deltas in your long call versus your 4 shares of stock.
Yeah.
So I like this better. If you're actually selling a put and then using whatever put premium you have to buy shares, this is a much more efficient, much more aggressive upside bullish play.
Yeah,
You're going to make significantly more if you actually get a rally in any product that you're doing this in.
Yeah.
So selling a put to finance a call, as long as you route it for a credit, it's definitely an interesting strategy that you can use for a lot of different situations.
Yeah.
And the further out in time you go, the more you can create kind of a neutral range in the middle where you don't lose anything if the market just chops around, assuming you're routing it for a credit. So definitely like that better for much more bang for your buck if you get the rally. Banks, XLF, KRE, thoughts?
I did a call diagonal spread in JP Morgan. So I went into February, I bought the 250 call. I then sold the January 255 against it. I did the whole package, and I can pull this up on the mobile, just so we can have it here. Show my order chains. So I did this at a $4.80 debit. It's down about 10 or 12 cents here. So it hasn't moved all that much, but we have sold off. I did it when it was more towards like 244-ish. So I'm playing a little bit long, but you're selling at the time, it was about $1.15-ish. Oops, sorry. I can't actually click on that. It was about $1.15-ish credit on the 255. It's come in a little bit here with a little bit of a sell-off.
Like it.
Yes.
But yeah, banks are coming out tomorrow morning. Some of them. JP Morgan for sure. There's a couple of others. Citibank. Yeah, Citibank's tomorrow morning too.
Mm-hmm.
And then Wells Fargo tomorrow morning too. Bank of America is the 16th before the open. So all the banks this week, which will bring us into the tech stocks next week and the following week. Sean, what's an acceptable total volume minimum for options? For example, DJT is 140K total, but Jamal said yesterday it wasn't liquid enough for his liking. Yeah, I mean, DJT is kind of memey.
Yeah.
It's tradable, but it does have 20-cent wide bid-ask spreads.
Yeah.
30-cent wide bid-ask spreads.
I think anybody trading it knows that it's, or if you're looking to trade it, you should know that it's in the meme sphere.
Yeah.
When you're looking at like normal and quote unquote normal stocks, we're just talking about, Coca-Cola, Nvidia, an S&P 500 stock.
Yeah.
Okay. Not to put whatever opinion on this stock is. You look at those normal stocks, like something that is very liquid. When you look at Nvidia, every strike has thousands and thousands of open interest, super liquid. You can do whatever you want there. When you think of I don't know, let's look at Coke, because I don't even know if this is going to be a good example or a bad example. Like these are liquid too. I mean, you could see on the tail options, they're not liquid. Here, let's use the watch list to find one that, how do I have stars on here? Yeah. So, okay, let's look at FICO. I've never even looked at this stock. So this is not liquid. You look at these February options in FICO, stock is a $1,900 stock, so maybe that's why. But you could see there's just no option volume or open interest. Like you want to see 1,000 contracts of open interest pretty much across the board. Even in something like Coca-Cola, which has low implied volatility, it doesn't trade all that much. I mean, you're still seeing a couple thousand here in the February expiration, and the open interest volume, all that stuff is there. When you look at, I don't know, let's find something that's more of like a normal price, DFS, Discover, Financial. And I think this has earnings coming up. Nobody's trading this stock. Like it's just not a trade. You could see the bid-ask spreads are super wide. You got a couple strikes here that have, 1,000 contracts. Everything else, nobody's touching this thing. Even in the weeklies with the earnings coming up here on the 22nd, nobody's trading this. You got some, tail protection. I don't really read into that, but everything else not very liquid.
Yeah. And another thing, going back to DJT, if you want to trade this by selling a put or buying a call, I think it's fine because you're just doing one contract. But if you're trying to do like an iron condor in here, a 4-legged trade with 30-cent wide markets, that's when you really run into problems with liquidity and getting in and out. That's why the more legs you have on a strategy, the more liquid your product needs to be for you to be able to get in and out of that strategy. If you're just doing single options, you can trade a more illiquid product because it's just one bid-ask spread you're dealing with instead of 4 different bid-ask spreads that are going to accumulate to a big, wide bid-ask spread for the strategy. So DJT, we've traded it before. We'll trade it again, but we're doing like simple strategies with 1 or 2 legs versus 4-legged strategies where you're really feeling the pain of that wide bid-ask spread.
Yeah. I just pulled up you can add open interest and volume, of course, on the mobile app as well. You click the gear from the table view, and you go to edit columns. There's all the things that we have on the desktop platform are all available there. Then you can change them around. Like if you want to have your, which items are shown in which order, you can change them around there just by like dragging them and moving them like this. Very easy. So you can have it on there. You can see I've got my open interest volume here, bid-ask spreads here, and I can add more on there as well if I wanted to.
When is the best time to buy a long option for a butterfly, depending on days to expiration, or when the options are cheap with an already earned time to the ratio? So with butterflies, we're buying it as a package. So really, I mean, the more time you have on a butterfly, the less it's going to move, regardless of what happens with the stock. You really need to hold these to like closer to expiration. So I would say it comes down to like being contrarian for me. Like if I'm trying to buy a call butterfly to the upside, I would rather do it on a down day than on an up day because I want to be able to kind of buy the dip in that sense. Same with the opposite. If I'm trying to buy a put butterfly to hedge something, I want to do that on an up day rather than a down day.
Yeah. I would say butterflies, depending on the width, is the biggest issue. Like if you're doing SPX and you're looking at, even a butterfly that's like if you had this butterfly on for, weeks or whatever, a 5-point wide butterfly is not going to move, even if it's right at the money. If you bought this, this probably traded for right around this price when we were back at 6,000. Like this butterfly is always going to trade at 30 cents because the probability of it expiring within that 5 or 10 point range is so small, even with just a matter of hours left until expiration. When you get to a 10-point wide on the day of expiration, now it's getting a little bit more value, but you can see even with covering the whole expected move to the downside through the end of today, it's still only trading for 1/10 of the spread. And that's just because of the width of the butterfly. So when we're trading butterflies, equal width butterflies, we try to do them as wide as we possibly can.
Yep. What is your bearish indicator to stop buying dips? Good question.
Size, just keep your size in check. You don't have to have any sort of indicator.
Are you saying that you're just always going to buy dips?
I mean, in some way, like, I don't know. Here's your indicator. You want an indicator? Here's a chart of the last 10 years.
Yeah.
I mean, like, sure, we get down moves, but things generally go up over time. Am I like every time the market goes down 1%, am I like full bore, straight up, long, cash secured everything with leverage? No. No.
I'm kidding.
It all comes down to sizing and like, like I bought some dips 2 days ago and they stink right now, but you size them appropriately. You give yourself time. You have things that work in your favor, time decay, volatility, you have bullish and bearish positions. Like I want the market to go up and down. I don't want it to moon and or crash. Though nobody wants that. You want it to go both directions. That's how you trade.
Yeah. But for me, I think if I'm gonna take a step back and be like, whoa, something's changing here, this is real, we should expect to see 100-point moves in either direction going forward. It's simply backwardation.
Yeah.
So like right now, if you really need a volatility watch list, first of all.
Yes.
You can easily do it. You just make your own custom watch list and you put in all the codes for volatility. I tweeted out all the codes. If you go to my Twitter, trader Mikey B, I tweeted out a picture of all the codes, but it's basically alphabetical. VXF 25, VXG 25, VXH 25, VXJ 25, blah, 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 blah. So backwardation is where the near-term volatility futures contracts are a higher print than the next month and the next month. When we had COVID, we had a 15-point backwardation where VXF was 30 points or 40 points. The next one was 25. That tells you that there is so much fear in the near-term cycle that the markets are going to chop around. We had multiple limit down days. We had multiple limit up. Like, we had everything. Until that happens again, I'm going to be more inclined to buy the dips. Because even in like the recent sell-off we've seen, volatility has increased, but it hasn't gone crazy. Like, we're still at an 18 VIX or VIX futures. So because the VIX is still low, yes, we are still selling off to Nick's point. Like, if you're buying dips, you're not really getting paid at this point in time, but we keep our size small. We add a lot of time to our trades. Like the Costco dip I bought, my long options in March, 66 days out. So I can absorb a ton of volatility against me and still have plenty of time for it to work out in the long run. But to answer the question, my bearish indicator to stop buying dips and maybe take a step back would be a big backwardation.
Yeah. And that typically comes like
with big moves.
With a big move.
Yeah.
You can't, it's not like you can watch volatility get into a backwardation state where we're at highs.
Mm-hmm.
It usually happens on either the start or the end, depending on where we are, of a down move. So, it's still not like a given that just because vol's in backwardation that we're going to go lower. I mean, that it can be at bottoms too, but that's a situation where it tells you that the market's worried. Because typically, if you just say in a vacuum, what are you more worried about? Things happening now or into the future. You'd say into the future because there's so much more time and there's things, there's a lot more that can happen a year from now. When you tell me you're more fearful of tomorrow than a year from now, that tells you that the market's a little spooked.
Yeah. And that's the definition of backwardation.
Yes.
So, yeah, backwardation is absolutely something we look at. That's why we make the volatility watch lists. And, that's really the gauge of like, is something changing here or is this just a systematic sell-off for a couple days?
Yeah. And I also, because I got an email about like just calendarized positions and whatnot that we like to do, diagonal spreads, crab trades, stuff like that. And they're asking, is there a way to identify short-term volatility that's higher than back? And in single named equities, not when you're looking at 30-day option prices in the market as a whole, you're always going to see volatility highest in the front because if you think of it as like a coin flip type thing of, will the market be up or down tomorrow? It's way more uncertain on a 1-day time frame than on a 100-day time frame. Just like when I pulled up the long-term chart of SPY or SPX, whatever I was looking at that time. It's up and to the right. Like it's been up. That's positive drift. In single name equities, it's a lot, more uncertain on a shorter time frame.
Yeah. But yeah, make a volatility watch list. You can see backwardation very quickly.
Yes.
Rome. If you're selling an option with the intent of taking assignment, like a short put to get a covered call, how many days to expiration are you looking at when selling the option? Still standard, 45, 60 days, 30 to 60 days, I like to say. Yeah. We're using the monthly cycle, especially because if you're a long-term, that's a long-term idea, right? Selling a put to acquire shares, turning into a covered call. We still want to be in the higher IV exposure days to expiration, right? Mm-hmm. If you're selling a put that's a year out, that isn't really a stock acquisition strategy. That's more of I want to collect a lot of premium and see the stock go up now and watch that put lose value. If you're selling near-term premium, you're getting paid in a high implied volatility way relative to time value. And now you have a much higher probability of getting the shares, first of all. Yeah. And then you can turn into a covered call and do the same thing. But my strategy for something like that would be sell the 30 to 60 day premium, just let it go. If you get the shares, great. You can turn into a covered call. And then on the covered call side, we're still in that 30 to 60 day range. But the nice thing about the covered call side is that if you take the shares and then all of a sudden the market goes up and you're getting tested on the call, if you're in a near-term cycle like February, you can buy back February when it gets at the money, roll it out to March and move the call up and give yourself an offensive roll. That's what we call like rolling up and out, or offensively rolling covered calls if you search for that on Tasty Live. But yeah, still in the 30 to 60 day window.
Yeah. And if you, as a simple exercise, if you wanted to buy 100 shares today, or at the end of this week, you wanted to be long JP Morgan, it doesn't matter, you're not worried about earnings, you don't care. You can go and sell, right at the money put.
Yeah.
In the weekly. Like you sell the 245 put, I pulled up on the phone. You trades at 475. Your basis is 340. Whether the stock stays right here, goes a little bit lower, and is 240. 240 would be your basis.
Yeah.
Brain.
Your brain is braining.
If the stock goes up, you keep the value, and that you could totally do that. It's not we don't really play that game. But if you were to tell me, should I buy 100 shares today or sell the naked put for the 3-day, I would say just sell the naked put because you have a higher probability. You can hit both, right? If the stock goes up $1, you're going to make more on the short put than you would the stock. If the stock goes down $1, you're going to be better off with the short put than you would have been buying the stock. So this is the easy answer if you're trying to get shares now.
Yep. Dominic, in my opinion, SPX drops 200 points on January 21st due to incoming administrative changes.
Wow.
Ooh. I have a call calendar for Apple. Bought the 250 in Feb, sold the 250 in Jan 31.
So why are you bullish Apple?
Yeah, true.
You're playing for a 5% down move or 3% down move, and now we're going to talk about an Apple calendar that you're long.
Yeah. However, the Apple calendar, there's nothing really to do here. I mean, your short option is in Jan 31, and that's in the earnings cycle.
250?
250. So it's trading for $1, but there's not going to be anything to do with this strategy unless you get a pre-earnings pump to 250. Then you could close it if you want for a profit. But until this 17-day premium comes out, and even when that happens, like this is a pretty binary strategy where you either get a rally after earnings or you don't. If you don't, this strategy goes to zero pretty much. If you do, you can make a couple $100. But there's not much management with this strategy because you're in the earnings cycle.
Yeah.
If you were in the 10-day at the 250, I would say you could roll from the 10-day into the earnings cycle, pick up 80 cents, and that would be your management. Or make it a diagonal spread, but you're already in the earnings cycle.
If you thought there was a 200-point down move, let's say 5,600.
You're going to do a little butterfly?
Yeah, you could do, I would show you how I would play it.
Yeah.
I would do something like this. The 50, 57, 56, 5,500 for $8. I mean, it's a 10-to-1 payout on that move. That sort of thing. You want to do a little bit, more risk on it. I would probably move this. So you'd have to play it to wherever you want to be. But that would be a cheap way to play for that assumption. And by cheap, I mean, $800 and you get, 100 deltas.
Yeah.
SPY deltas.
Does EFA trade or any other international ETF with good liquidity? We usually go just like directly to the markets. So like EWZ, we've got a position
EFA
in.
is one of them.
Yeah, EFA it still trades, but you might be looking at a weekly Feb. If you look at the Feb monthly, they're still 20 cents, 30 cents wide. They're not great. The Feb weekly, like the Feb 14 or the Feb 28, those are not even trading. Like no one's trading these. So if you're trading this, you got to stick to the monthlies, but I don't like the fact that the weeklies are so illiquid.
Yeah. A lot of these are just not, they don't have high implied volatility, which is one thing. You got 14% implied volatility, even in something like EEM, which is probably the most liquid of the bunch. You have 18% implied volatility. It's just not, there's not a whole lot to do. Like if you wanted to be long or short it, I would just trade the long options, buying in the money call as a leveraged long position, buying in the money put as a leveraged short position. That's how I would play it here. Not selling anything there.
We got a triple header here.
Okay.
From Jake. Can you do an example? This might be too small. Let's pop that up. Can you do an example of buying the guts and selling the wings? In Tom's building portfolio vid, he makes it seem like you can widen the wings in the same expiration or roll forward in time and do it. Correct. In my experience, I can't get too wide in the same expiration without having to pay a debit. That is also correct. A credit won't let me get very wide. Am I missing something? Can this be applied to iron condors too? So to quickly answer, yeah, if you're in the same expiration, you're going to pay a debit. Like
have to.
If you have to,
No.
because you're buying expensive premium and you're selling cheaper premium to offset some of your intrinsic value risk. What we do is we do that same exercise, but we pair it with rolling out to the next month. Because now, instead of buying your higher premium that's getting tested in the near-term cycle and rolling the same in the same expiration, you're paying a debit almost always there.
Yeah.
Instead, if you roll from like Feb to March, you can use that credit that you would have gotten by using the same strikes and give that up a little bit to widen your strikes. That allows you over time to compile credits instead of paying debits in the same vertical expiration or the same expiration.
And it'll move your risk, like where your risk is. You're not getting paid for, like you have two options. If you're rolling an at the money straddle, you can either get paid to roll that risk, or you can move your risk out of the money and not get paid for that roll, right? So like you do this roll for 40 cents or whatever, it doesn't matter. It's a negligible amount of debit or credit. You're basically moving where your risk is. If I go to the 40 strike straddle, I'm going to get paid some value for continuing with that risk profile.
Yeah.
So you're just moving where your risk is. Tom does it in the same expiration sometimes in terms of the debit. Yes, it's a debit, but he's moving where his risk is. Like if he starts with a strangle, stock goes down, he's rolling down calls, rolling down calls, rolling down calls. Maybe the stock stays range bound for a week or something. He's captured the value of those roll downs. So now at a certain point, and he's not looking at the exact credit because it's once you get multiple positions, multiple contracts, you're not looking at the granular, oh, I made 10 cents on this, oh, I made $1 on this. You're looking to take that position that you've managed and rolled down and captured and then roll to a new out of the money position to move your risk. So you've managed on the way down, you've captured value, take that position, roll it out of the money.
Yeah. But yeah.
We do it with a rollout in time to keep the position going.
Yes. We do it with a rollout in time, keep the position going, and keep piling up those credits where if you're staying in the same expiration and you're paying a debit, you just really need to make sure that your debit that you pay is less than your total credit you've received from the other rolls you made. So like if you collect $2 for the strangle, you make an adjustment for $1, you make an adjustment for $1, you're at $4 total. If you buy the guts and sell the wings for $2, you still have a net credit of $2 because you would have a credit of $4, you pay a debit of $2, you have new strikes that are out of the money with a new credit of $2. What we like to do is we start with a strangle of $2, we make an adjustment, we've got a total credit of $4, we roll from Feb to March, we make the same adjustment and we do it for a 25-cent credit. Mm-hmm. So now we have $4.25 in credit with the new strikes and better break evens. So we like to do that. If your intention is to keep the trade on and roll perpetually, I would much rather do that than pay debits in the same cycle.
Mm-hmm.
But yeah, when you look at the anatomy of a trade segments we've done, we're always rolling out in time, buying the guts, selling the wings, plus rolling out in time to make sure we're collecting a credit instead of paying a debit because we want to compile those credits over time. In DraftKings last year, I started with a $4 straddle, ended up with almost $2,000 in premium. You started with a $2 strangle, ended up with like $1,100 in premium or something like that. So that's the goal. And IBIT will be the same thing this year. IBIT, like I said earlier, I started the year with a 50-65 strangle in Feb, collected 565. If I were to roll this right now on the same strikes from Feb to March, I would pick up $2. I could give up those $2 and go from a 50-65 strangle to a 46-70 strangle for a scratch. So like if I wanted to just move my risk further out of the money, I could do that. Or let's say I want to be more bullish because we haven't seen much bullish movement. I could roll from a 50-65 Feb strangle to a 55-80 strangle in March and pick up $3. Like the beauty of this is you can just manipulate and manipulate and manipulate. And really it all just comes down to making sure your debit you're paying is less than the new credit you're receiving, and you can manipulate however you want to do that. That's really going to be the topic of the March event we're doing in Tom's coffee shop.
Everything for Tom.
Yes.
Must promote him constantly.
Yes. Let's see. And yeah, for iron condors, it's harder because for iron condors, you're repaying for your risk that you're defining. So it's much harder to do with an iron condor unless that iron condor is like 20 points wide or 30 points wide, in which case it's basically a strangle anyways. Is Tony's podcast show on Tasty? Yes.
Yeah, they post the video. Well, it's a podcast, so we don't. The video we actually put on YouTube, but the podcast is on all your Spotify, Apple, any podcast app you use.
Yeah. So if you're on tastylive.com, if you hover over on demand, it's on the right side under podcasts. You'll see options trades today and truth or skepticism, and it'll bring you to the podcast segment. Let's see. Dominic, thanks for the thoughts. My SPX theory just coming together based on gut feelings. Add to my calendar on Apple Trade. Yeah.
I love it.
You could do both. You could throw on a cheap butterfly to the downside in SPX or SPY, and then you could keep the Apple Trade for earnings.
Yeah.
Do whatever you want. JPM diagonal spread. The debit is nearly equal to the spread width. Why not find a lower debit or to width ratio?
Yeah, so I did this at $4, and what was mine? $4.80. So with 3 days to go till expiration, this will have no extrinsic value at the end of the week. If JP Morgan were to go up, let's call it $20, which is 3 times the expected move to the upside, this long option would still have $2.50. So net this position, if the stock was $20 higher, it would be the $2.35 like this, would trade at $7 and change. So it'd be a $200 winner on the upside. Again, it all comes down to extrinsic value. So the width of the spread, you want to pay less than the width of the spread because it means that the intrinsic value, the bare minimum that the spread can trade for, is going to be equal to that intrinsic value. It's always going to have some sort of extrinsic value, and that's going to depend on the difference in the expirations. This expiration expires at the end of this week, so this extrinsic value is 0 at the end of the week. This extrinsic value in February is going to hold some sort of value. So my only risk to the upside, I have no risk to the upside. But even on a tail event, a 3 times expected move to the upside, it's still going to be a $300 winner. That's why these set up so nicely. Obviously, if you get a 3 times expected move to the downside, you're up a creek, which happens.
Yeah.
you know?
Quite literally.
Yes.
But yeah, if you're doing an earnings diagonal, we're totally fine going up to the width in terms of debit because you're getting all that short premium in a couple days.
Yes.
If it's a long February, short March, we're going to have a lot more space because you're not getting that premium.
The extrinsic value is going to stay bid. It's going to stay there.
So, and it's much easier to set up a longer term diagonal for much less than the width versus a earnings diagonal where you're going to almost always be pretty close to the width in terms of the debit, but you're getting that short premium immediately. How would you build a box spread, and when is the best time to use it? So really,
Never.
Never. Okay. Yes. But yeah, some people use box spreads and like SPX to capture the interest rate.
Yes.
And that's pretty much it. So like setting up a box spread, long-term box spread, you can get interest on your risk, but you can also just buy an interest rate product and do the same thing. It's really,
it's just a
like
waste of time.
Whatever you want to do, like that's really the only time anyone actually uses box spreads is to just do the interest rate trade in something like SPX.
If you wanted to trade this and if you thought rates were going to go down and you wanted to capture rates right now in some small fashion, you could trade this, like this box spread is 100 points wide. It trades at 95 and change. You're probably getting filled somewhere closer to, whatever the 1 year rates are at. Let's call it 5%. So you're probably getting paid. You're probably paying, $95 to be long this spread. If rates were to go down, let's say they go to 4%, this spread would theoretically trade at 96 cent credit to sell it. You would sell out of this at 96 cents. So you'd make $1. If you're looking for interest rate stuff, like just buy, you'll have better value by buying BIL or SGov. These products track short term, like 1 to 3 month rates, which are typically the highest of the bunch because they're short term rates. And so I would rather just do these. Getting all funky with box spreads, it's going to just melt your brain.
And the problem with SPX long-term box spreads is the markets are wide.
Yeah.
Like you can give up a good chunk of your perceived profit from your interest rate just by getting filled.
Yes.
So,
and these are penny wide. BIL is penny wide.
Yeah.
So, they will move. You can get in and out of them real easy.
Are you releasing the March event digitally as well? Yes, we are. tastylive.com/events. You can sign up. What is your opinion on an NVDL 5977 strangle? Fab?
NVDL. That's one of the 2x long NVIDIA. Okay, so you want to do which what do you want to do? February?
5977.
You got a lot of leverage here. I try not to be naked this sort of stuff.
Yeah.
But
if you're comfortable with the risk, fine. But yeah, if you get a huge move in NVIDIA, like it's tough.
Yeah.
You're getting a lot of premium though. Like your break even's up at 85.
Yeah.
Where it just was.
But if NVIDIA goes up 10% back to where it was right before the event, this thing moves $12. So and then the next 10% move is a $14 move. The exponential moves are upside moves.
Yeah. Michael has a JP Morgan Iron Condor in Feb. 215, 225, 260, 270. 10 points wide, making 30 cents. Is it worth holding through earnings? It's just a matter of risk, really.
Yeah. I mean, it's a pretty if you didn't tell me you had this on, I would say this is, pretty standard setup for Iron Condor. Yes, you have earnings coming up, but you're around a 1 standard deviation on either side. I mean, this is at $2.40, just about 1/3 the width of strikes. I have no problem.
Yep. Free butterfly. You start with a credit. Wing width 2 times the debit wing width. So yeah, standard broke wing butterfly. We buy a $5 wide debit spread. We sell a 10-point wide credit spread. That's how you get to a credit overall. what IV, days to expiration, and underlying price conditions help enter this broken wing butterfly for credit. So the higher the IV, the easier it is to route for credit.
For a broken wing butterfly?
For broken wing butterfly.
Yep.
That's pretty much it. I mean, days to expiration, the longer term you are, the wider you can make it for credit. The shorter term you are, the more narrow you have to make it for credit. Price of the stock doesn't really matter. I mean, it's if you're looking at like a $20 stock, you're gonna have a really hard time doing a broken wing butterfly because you have to go like 1 point wide. But anything that's like mid-priced, it'll be fine as long as it has decent IV. And entry conditions, it just depends on like what you're trying to do. If you have like a put broken wing butterfly for credit, maybe you do it on a down day. And same with call. Like it's really the same idea as, setting up a strategy where you're playing for an opposite move. Couple of rapid fires here. What trading positions would you do on VIX since it's quite low if you're looking for a pop?
Buy calls.
Yeah. The VIX is one of those exception products where there's really nothing to do but buy calls or one call because we know that if volatility pops, the volatility of volatility is also popping. So having a spread on doesn't really help you in terms of profitability. And you're really looking for a short-term one-day move, and then you're closing it. Yeah. So having that short premium component doesn't help you there either. So if you time it well, you can make some money, but it's still a shot trade.
All or nothing.
All or nothing.
YOLO.
I think we're it. I think we're out of time here.
Cool.
Yeah.
Beautiful.
Glorious. That was a good one. We covered a lot of ground. Bank earnings tomorrow before the open, most of them. I think Bank of America is the only one that's the 16th, I believe. But we'll see what happens. Kind of crazy. We have bank earnings and the CPI tomorrow. Maybe we'll see some fireworks, either to the upside or downside. I can tell you one thing, though. The market's going to go up or down.
Don't jinx it. If it's punched tomorrow, then I'll be like, oh, yeah.
Yeah. I would never do that to the people.
Yeah.
But yeah, thanks for tuning in. If you have any questions, you can reach us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nikki Bat. Stay tuned, though. We got plenty of content coming your way on the YouTube channel as well as tastylive.com. Get your cherry picks today, tastylive.com/newsletters. There's a link pinned to the top of the YouTube chat. Totally free newsletter. Comes out every Tuesday. But yeah, we'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move. You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Welcome back. It's still Tuesday, January 14th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. How are you, buddy?
I'm doing well, my friend. How you doing?
You and I are in the same spot now. Neither of our teams are in the NFL playoffs.
Yeah, no, thanks for that reminder. Yeah, it's a tough time, but we just have to sit on the sidelines and watch these other teams.
Do you think that if the Bears drafted a different quarterback, they'd be in the spot that the Commanders are in right now? Or are the Bears so fundamentally broken like the Jets, it doesn't matter who plays for them, they're still going to lose?
You know, it's an interesting question you ask. I really do think it's a and again, I don't have the money. I don't own a team, but I know things start at the top, and I think it's a question of leadership at the top, honestly, for both franchises.
Well, speaking of leadership, there is none in this market today. C- transition. Yields topping 5% at the long end of the curve, which stocks do not like. We've seen this movie before. Saw it a bunch of times in 2022 and the start of 2023. Will we see it play out again here in 2025? For whom the yield tolls, Jamal, it seems to be stocks. They're not enjoying what we are seeing ultimately after PPI. And it was a soft PPI report. There was a little bit of a bounce there that started in bonds and stocks immediately after 8:30 a.m. Eastern, 7:30 Central Time, and it did not stick around. Last I checked, both stocks and bonds near their lows of the day. Jamal, as we look to our CME Fed Watch tool here, we see that there's one rate cut priced in for next year, set to arrive next year for this year. It is 2025 after all. Set to arrive this year in June. Okay. Where else would they be coming? Quite frankly, I don't think there are any more. I want to flip over to the charts real quick and just look at the difference between the SR3 Z5 and the SR3 Z6 contracts. It's about 25 basis points. There's not significant, like a 40% chance difference in whether or not we'd see an additional rate cut in all of 2026. So let's just step back here. We're talking about one rate cut right now priced in basically over the next 24 months. This seems like an extreme environment here right now, Jamal. Do you think that the fact that we're effectively getting to a world where we may have to start thinking about hikes could mean we're at a turning point in the bond market?
I think we are. I think the word you use is accurate. Extreme. I think we're at an extreme environment, not in the same way, but not too different than where we were a year ago, right? I mean, there was a lot of discussion about how many rate cuts were expected and the way the market was reacting with respect to that expectation. There's a lot of expect in what I just said, but nevertheless, there was a lot of expectations of a large amount of rate cuts. Now we're at a point where the bond market is undecisive, or depending on how you look at it, maybe the bond market is decisive, but you could say that stocks are not necessarily sure with where these bonds are going to go, and so a lot of it depends on the incoming administration, right? We all know where that goes as far as all the talk of what's going to come, et cetera. So that's exactly it. I think there's a lot of confusion right now overall. Stocks don't like bond yields at these levels, which is not a surprise. We saw this in 2022 and the beginning of 2023. And so it freaks stocks out. We see a little bit of buildup here and vol on top of all of that. And when you couple the fact that coming into today, right, we were looking at PPI, it came in a little bit softer. Markets reacted to some degree, but truth be told, markets were never going to move that much, I would say, on PPI. It's really more about CPI coming tomorrow. So, and even then, I don't know how much clarity we're going to get, Chris, honestly, throughout the end of the week. I guess we'll see. But that's the big thing right now. How many, rate cuts can we even be allowed to do in this great market when you look at what's going on with the jobs report and everything else, big data-wise?
I wonder how much of this has to do with oil. Yields really have ticked up here at the start of the year, and I couldn't help but notice the rolling 1-month correlation between the 30-year yield and crude futures right now has moved up to plus 0.79. At the start of the year, we entered at plus 0.64. So the correlation has been tightening here in 2025. And so the question is, can yields continue to tick up? The oil continue to tick up? Are we going to break through $80 a barrel? Maybe that's
Possibly
what gets us through 5%. And if we don't, right, if oil is pulling back today, if this means that yields are reaching an apex of sorts before we see what tariffs come down the pipeline, maybe we have something to work with on the stock side. Today may not be the day for it, though, Jamal, because we can't hold on to these gains again. I've been looking at this market the past few weeks and not really finding anything too appealing to lay into right now. It's a lot of chop, a lot of sideways grind. The start of the year, seasonally speaking, January, February into the middle of March, basically gives you a 0% return in the S&P 500 over the past 10 and 20 years. So getting really bowled up directionally right now as a momentum guy doesn't really fit. The glove doesn't fit right now for me. But I'm watching this break down here, and it's looking kind of toppy and kind of ugly. That may yield a more directional opportunity to the downside. We see here a potential resistance in the market back in September, which I've marked up as a neckline and a head and shoulders pattern here. We really couldn't close through it yesterday, and today we're falling after running into the 1-week moving average back below it. So it's a 28.6 IVR, Jamal. What do you do here in the S&P if you feel a little bit more compelled than I do to put some chips on the table?
It's tough, Chris, because at the end of the day, like I said, the market really right now is revolved around what's going on with rates. So if we get another reason to pump rates to 4.9%, market's going to break down. And it's just as simple as that. And so while the technicals matter to a degree, because it's good to know where clearly support is and strength is, given, that's when we'll see people either completely sell out of stocks because they just don't feel like we're going to get any type of rate cuts, and something in our environment. There's still this sort of uncertainty in our environment. Stocks never like uncertainty, and that's really where we are right now. Ton of uncertainty, and that's why we're seeing this creep up in vol here. So, what do you do here? I have a position on in a lot of the underlying major ETFs like SPYs and Qs, et cetera, because I chose to express the opinion there. I did, calendar call spreads, what has been obviously a theme for me over the last couple of years. But I actually put the bulk of the positions on in December and maybe and last week. I really haven't done much here this week. I've argued, these are areas obviously to take a stab at being long delta. It doesn't have to be the way that I'm doing it. It could be, short put spreads. You have that opportunity right now, out of the money short put spreads. I wouldn't blame you for layering in too much. You don't want to. I think because, again, there's a lot of uncertainty here. I mean, we just don't know what this is going to look like over, I don't know, man. We're either going to get a little bit of resolution tomorrow with CPI, and when you couple in the bank earnings as well, we'll get some resolution to it. Obviously, you got Friday as on top of that, where you're talking about a huge options expiration because it's January, right? And January is the month that's around the longest. So potentially on the other side of that, maybe once a lot of deltas sort of get sorted out, maybe we'll see where things lie. But if not for those two, maybe the week of earnings after that, which starts to get heavy. And then not long after that, you're at the Fed meeting, which obviously will really get at least some resolution, maybe in the discussion that they have after. So I think we got the next 2 weeks really lined up for us. And I just feel like as much as I can talk my position and think like markets have a chance to bounce back because they've been coiling like a spring, we could chop for another 2 weeks, possibly.
Yeah, we have our next Fed meeting on January 29th. I suppose earnings season doesn't wrap up in earnest until we get NVIDIA's earnings report, which is, I think, 44 days away. But the next 2 weeks are jam-packed. We have all those bank earnings this week. They'll go into next week. We start to get tech, which the market obviously carries its weight upon. Chop feels like the right way to describe it. Now, I wish there was a little bit more volatility pumped in here, because this could make for a compelling case for an iron condor. But looking for a bullish opportunity, I suppose yesterday you got that nice hammer candle at support of a neckline. Today, that bounce not really materializing. North of that 1 week moving average, 5,900, you get a little bit more confident for a bounce into the 1 month. But even so, this is a market that's showing telltale signs of a momentum move starting to coil directionally lower. Insofar as you and I watched this all of last year, in the upswings, the market gets a little bit extended, more than 3% above its 1 month moving average. It usually meant a setback for a few days. But then the bulls would pick up the ball and then start running with it again. Here on the downside, we get 3% away underneath, and then we rally back to it. And we get 3% away underneath, and we rally back to it. And yesterday morning at a point, 3% underneath. And we start to rally back a little bit. So the market's clearly showing this desire to push itself lower right now, if only in a measured fashion. So Russell's 10% off the highs or so. The NASDAQ, I think, is 6%. The S&P about 4% here. Dr. Data was sharing some interesting figures earlier. Jamal, I look at the Russell here. This looks like telltale, hey, this was the chance to actually sell after a bear flag breakout to the downside. This is just revisiting former support turn resistance, not encouraging that if you want to get bulled up just yet.
I know. This is our first real big test, and it's really early in the year, right? Because like you said, a lot of last year we did see, whether it was April, whether it was August, a little bit of September, a little bit before the election, probably those 4 major times, we did see a few tests in the market, and we saw some pullbacks of like similar magnitude. And they almost always found their way back to the levels prior to the fall off within, a week or two, and then even ultimately the highs. This is our first real test here. And, again, because of that, right? Like if you're, and we always say, market may not necessarily, it might rhyme, right? It might not necessarily repeat. It makes you wonder. I'd be nervous in doing iron condors in just about any of these major indices just because I don't know how strong the bounce back is going to be. And so that's why I'd almost be inclined to try, put spreads, getting a little bit of delta because I don't know, man. Like I feel like as soon as some sentiment comes out, and maybe that starts in the coming days as a couple of Fed speakers come out, soon as some sentiment comes out about bonds and that causes them to pull back some and maybe potentially the dollar, who knows? It's hard to even mention the dollar's name without it getting excited these days. But if those two things pull back, we see a big move in the markets. I mean, we saw it to start the year, right? Big 75-point handle move the day we came in on the 6th, but yet it did pull back throughout that day. So we got a lot to figure out here. I mean, I still have faith that markets eventually are going to bounce within the next week or two, but it's in the meantime we're having a big test right now.
The Russell has an opportunity to put in a low here. I'd like to see a little bit more progress. The downtrend that's defined this year from the highs on the 6th, intraday on the 7th, and then quite frankly today. So 3 points of touch on this 4-hour time frame. If we can find ourselves in that 2240 area tomorrow and we're holding up here, you could make the case that this is a bear flag breakout that's failed. And then consistent with that attitude, you move to the other side of the consolidation. That has always been my heuristic, right? Breakout fails, go back into the consolidation, test the other side. So potentially a move up towards 2300, 2315 gets into the cards. And that probably means yields are then coming off of it because we know the Russell's been struggling under the weight of those higher yields. Oil probably is an important part of that conversation likewise. Jamal, the NASDAQ, of course, is bouncing back a little bit more over the course of today, which is a good thing. We saw that reversal underside of the support from the November 4th, the January 2nd lows. It looks ugly here on the 4-hour time frame, so let's just zoom out a little bit. We're clearly treating former support as resistance right now in this market. We struggled against the 1-week moving average today. You know, bulls really need to put in some, they have some wood to chop right now before I jump in that side of the pool.
Yeah. I mean, again, I've got longs. I'm not really adding right here because there is an air of nervousness in the market. And, you know, yesterday seemed like we were going to have that flush, right? We've seen this a couple of times where you have a Thursday and a Friday that are kind of weak, especially the Friday, and the Monday is the flush. I thought for sure that was going to be it yesterday. And this was going to start the feedback loop for markets to begin to power higher on the back of what if that had happened yesterday, I think today you would have seen the markets hold on more to their gains. And then potentially tomorrow, if CPI came in even flat, just a little bit lighter, you could see more of a takeoff along with bank stocks. That was a great scenario that I concocted in my head. Didn't quite play out that way. So I don't know. Now it's, you know, again, I think we could see a similar action to what we saw today. Maybe CPI comes in a little bit lighter. Maybe we see markets move higher. It just depends on how bank earnings end up, how positive bank earnings are, if they are or not. That causes markets to bounce off of this lull. But we're in a big lull, make no mistake.
The one thing that concerns me here, just looking at some of the indicators, we're looking at the NASDAQ continuous contract. Like in July, when you start to break down, you see MACD go into bearish territory below its signal line for the first time in a few weeks, right? That's after the April lows. And once you see 3-4 consecutive days of us spending our time below there, that's when the market really begins to crack lower. We're entering that territory now where momentum's been broken and increasingly negative for enough time, where you think about short-term traders and positioning, they say, you know what, the momentum's not there for me. I'm going to jump ship and flip sides, go to the other direction. We need something to work with. A hot CPI report tomorrow would be problematic, I think. It could cause us to spill over and really detach ourselves from any semblance of a meaningful bounce in the short term. And perhaps that is the flush. Because as we saw with the PPI data today, the prices, the pressures coming down the pipeline on a month-over-month basis aren't necessarily alarming that would make you think we're due for another spike in inflation over the next few weeks and months. Some of this seems to be base effect pressures, right? We come in line in the month over month, but the year over year still increases faster than last month. That's because of the base effect. And we're seeing that in CPI right now. So if we can just survive the next month or two, if oil comes off the board, we should get a resuscitation of those Fed cut odds. And these concerns about higher rates, they can disappear. But CPI tomorrow becomes a bridge we need to cross. Jamal, I was looking at the VIX 1D earlier because in recent months, we've seen about a 15.36 average as the closing level on the VIX 1D for the day prior to the release of CPI. Mm-hmm. This is for every month, January 11th, 2024, February 13th, 2024, yada, yada, yada. Right now we're at 18.01. At 18.01 relative to where we've been over the past year, this would mean that this would clock in as the 6th highest volatility reading going into the CPI report. So it's not exactly a nothing report like we saw back in December. VIX 1D, the day prior to the last CPI release, was 8.71. Market wasn't expecting anything. The market gave us nothing. CPI kind of rolled past us. We ignored it. We moved on with our lives. Do you think that maybe the market is correctly pricing that this is going to be a report that is more important than the average release in 2024?
Yeah, I think I have to admit that it is. I saw somebody who wrote today, this is arguably one of the more important CPI reports in recent memory. I kind of balked at that idea, but I mean, I think based on what you just said, sixth highest rate reading in VIX 1D ahead of a CPI report, on top of the fact that we're expecting about at least the options in SPX are pricing about a 1%, little over 1% move. You would have to say this is one of the more important CPIs of recent memory, and it's only because of the timing. Like you said, I mean, right now there's a lot of worry right now over what's going to happen with the Fed and what's going to happen with tariffs, and it's just all about the timing right now. So we need CPI. I mean, for markets to move higher, we definitely need a CPI report that is showing some lower inflation. We do.
Yeah, and so VIX 1D at 18.07 right now, Jamal, just to provide some context here. If we think about all of 2024, there are only 4 other occasions now where the market has priced in a higher one-day volatility going into the CPI report. March 12th, 2024, which, again, right around the Fed meeting, a Fed meeting in which there was basically a 50-50 shot at the time that the Fed would begin their cut cycle, right? We were all really bared up. 5 more cuts are coming this year. 6 cuts are coming this year. When will the Fed begin? So the CPI report took on a lot of importance because it could help define whether or not we would see the cuts begin. We also have that in June, right? The VIX 1D was 18.1 on the close on June 12th ahead of that CPI release, which again, contextualized by the upcoming Fed meeting where they were debating whether or not to start their cut cycle. Sure enough, August, which is on the heels of the big market meltdown. So I don't think that's a shocker. And then September 11th, which again, right before a Fed meeting in which we're expecting the Fed cut cycle to begin. So we're not in the same league there yet, but we're getting into the stratosphere where the market is effectively signaling this is on par with being the type of data that helps define whether or not we are on the correct course for Fed pricing moving forward. And so if this comes in soft tomorrow, given the extreme odds we're looking at in the SR3 contracts right now, you could probably have a big snapback in some of these yields and some of these rates in stocks where they feel relieved that the hikes aren't coming. And that was what happened in May last year. May 1st, the Fed comes out and says, we're not hiking anytime soon, don't worry. And stocks were able to keep climbing for the next 2 months. So I don't know. I've been talking a long time here, Jamal. Am I making sense when thinking about the structure of volatility, the weight of importance of CPI tomorrow, and perhaps looking for an opportunity
100%.
for a turnaround?
I mean, all you got to do is look at the chart, like you said, and you can see those days that you laid out. I mean, those are the times where the VIX 1D sort of gets a little angst ahead of a big event, and it's no different than we're seeing here today. So it's definitely of importance. I mean, this CPI report is definitely something that we need to be coming lighter, because otherwise stocks are going to, if again, like you said, if it's hot, I mean, stocks are not going to like it. So if we can get a situation where CPI is lighter, I think you'll see yields kind of come off. I mean, imagine yields dropping 30 basis points. That would be a big rally in markets. I can tell you right now. I assume maybe the dollar pulls back along with that if that happens, but hard to say. If you can just get one of those to sort of relax, I think you could see a rally in markets.
In terms of importance to the markets, square this for me. We think about where volatility was last week, right? There's no Thursday trading session, so the Wednesday close on VIX 1D effectively is what goes on the books to think about non-farm payrolls. That closed at 18.67. You think that we pass that going into today or into tomorrow? You think that we're going to see higher volatility for tomorrow's print than we would for non-farm payrolls?
I think it's possible. I mean, again, the way that this thing works is it's using a little bit of the 0 day along with the 1 day, right? And so as we get closer and closer to the end of the day here, that 1 day is going to mean a lot more. And all you have to do is just take a look at the difference. If you look at SPX, I mean, you can see right now on the 0 day is the 25 IVX versus the 25.7 IVX for the 15th. And I think as the day goes on, that near term might start to calm down some, and the next day might get bid a little bit more. So I could see this getting a little bit bid all the way to the end of to the close today. I could.
Yeah.
If it goes
so
over 19,
I think that we're looking
really
at
interesting, because then that means that this report is a little more valued than what we were seeing for jobs number last week.
Right, and I think that's really important to contextualize because we saw it happen Friday. It was a good report, just like we had good ISM data earlier in the week, but the market's no longer treating good news as good news. It's saying, oh, the economy's running strong. We're not going to get the rate cuts that we need.
Yep.
Which is paradoxical, but the market's kind of throwing a tantrum in that regard. Like, oh, we've been too good, so we're not going to get more sugar. So we're going to get upset.
It's so crazy, isn't it?
It's nonsense. But if we hit a 19 on the VIX 1D, though, this would put us in the top. This would make us the 4th highest reading that we have going into a CPI report over the past rolling 52 weeks. Something to consider.
Yeah, I mean, something to consider and something to just, at least it makes sense, right? At least we know exactly what's weighing the market down right now. That's the only real comfort you have if you're trying to get long. So you know exactly what you need for your positions to work.
It seems to me that it's a bet on inflation and it's a bet of whether or not oil keeps climbing.
I mean, don't you think oil is essentially climbing because of what's going on with yields? I mean, that's what I've kind of noticed.
Maybe.
I mean, they were kind of quiet, right? Like oil was kind of quiet. We both were off around the same time. Oil was kind of quiet when we left. All of a sudden, you start seeing it week after, the 2 weeks we were out, basically week after week. All of a sudden, it was a little bit higher, and then of course the big explosion the other day with oil. So yeah, I feel like it's kind of been moving along with these yields, of course.
Jamal, we look at bonds and their lack of enthusiasm over this morning's PPI data. We had the producer price index come out this morning. Prices at the factory gate. If we would like to load here on the screen, let's go over to ZB. As that comes through, Jamal, the PPI comes in a touch weaker than expectations, 0.2% versus 0.3% on the month over month. And that produces an initial rally here in the bond market. It doesn't really give us much more than that. You could see the 8 a.m. candle here Eastern time. We rallied all the way up from an open of 110 and 29 ticks to a high of 111 and 13. Not bad, half a point. We're now back down to 110 and 25 ticks. A little bit off the lows here, but the market's getting the data that it wants. Good news is supposed to be good news, and yet there it is. It's really not good news. Jamal, how do you operate in an environment where this is the predominant trend? I know the volatility is on the board right now, 53 IVR. It screams sell some puts, but how do you catch a falling knife when nothing is helping at all?
I know. I mean, I got rid of my position last week. I was along call spread once again, when vols a little bit lower. I got out just because, again, like you said, it is a falling knife. There's a lot of sentiment that I just can't fully reconcile right now. I mean, again, we've just talked about it ad nauseum, but it's hard. It's hard to make the play when the asset is not cooperating, if you will. So in the meantime, there is some opportunities. I'm sure you could probably sell a little bit of downside out of the money. But I don't know if you're really getting that compensated for doing it. It's been a tough trade trying to get long bonds, and as long as everything that we've just talked about with regard to CPI and the jobs report is going, as long as everything has remained the same with a hot jobs report, and if we get a hot CPI, this is definitely going to fall more. So we need CPI to cooperate once again. We need it. It's one of the more important ones in recent memory. It's true. I can't lie.
It's looking like that. And just because of how the VIX 1D functions, it's probably going to climb over the course of the session. So chances are that we actually put this into the top 3, maybe even higher than that in terms of expectations, certainly exceeding the NFP report on Friday. But to that point, Jamal, we can slice this open a number of ways. I don't think technical analysis is, a hard and fast rule. It's more of an art than a science. So you have to find what indicators and what moving averages, what have you, whatever you lay on the screen, it kind of matches the market. The market's going to follow various cadence and rhythms at times. So I like to backfit. In this particular downswing since the middle of December, we have been watching the 8 EMA, which is no specific period of time except for the fact that you're going up the Fibonacci scale, 5, 8, 13, 21, 34. The 8 EMA, we have not seen a close back above it going since December 6th. And every time we've run into it, it's been resistance. So before I even think about trying to call a lowdown here, I want to see the characteristic that's defined the downtrend on the momentum basis. I want to see that condition dissolve. And it hasn't dissolved today, right? It's still very much in play. And we see even the shorter term moving average, the 1 week, the 5 EMA, that basically top ticks the day. So it's a 53 IVR in ZB. When we go over to ZN, it's 36. It's not quite as strong. but these are markets that are not really able to recover in any meaningful fashion right now. You're just calling a low without any technical evidence yet. So I'd like to do it myself. I'm not going to do it today. The timing's just not right.
Yeah, I don't think it's worth it. I mean, you could argue like, yeah, this is near the lows that we saw of last year, and so maybe there's a bounce in order. But honestly, the bounce happened in April last year because it was a change in sentiment, and so you really need the change in sentiment to go along with it. So at this point, you might as well just try to buy on strength, which for me, strength means like this is trading 109, 110 on its way to 111, 112, and I just need to see the bounce. I need to see, honestly. I need to see a ZN that looks more like this. That's the kind of chart I need to see before I'm interested now.
Oh, and this goes to the whole perspective, right? If yields are the inverse of price and people are thinking about selling a put here in ZN, just flip the chart over. Does this look like something that you would want to sell a call in here today? We just broke through swing highs that we had last April. If I was a stock buyer, I would say, Jamal, this chart's going back to the all-time highs we set in October 23. Let's buy those out-of-the-money calls. Why wait, right? Let's get all bulled up. So if we just flip the chart over and we're looking at ZN, why would our attitude be that way in reverse? We would say, let's look at the puts in that area towards the 5% handle.
I mean, and it's the same trade if you're long equities. This is the same trade. If you're trying to get long ZN, it's for sure the same trade right about now. They're basically moving. The correlation is very similar right now between the bonds themselves, actually treasuries, ZN and ZB, and equities. So if you're long equities, you got to find another way to do it, a bond trade, and that's not long delta probably right now.
You talk about the correlation tightening up coming into this year. The correlation between ES and ZB was plus 0.57 on a rolling 1 month basis. It's since tightened up to plus 0.71. The markets have been moving in lockstep. So if you want to get some short puts in ZN, ZB, you are effectively shorting puts in ES right now.
Yep.
Or getting long calls there. And if you already have eggs in that basket, do you really want to be doing that to yourself at a time when it looks like yields may be showing that they're the boss?
Yeah,
not me.
That's the thing. I mean, you don't want to do that. So, personally, I'm trying to be patient. Like I said, I got my long exposure on in equities, and for the time being, that means I'm not. It's hard for me to. I don't feel hard pressed to sell upside in bonds. So I just have no trade on.
No trade on those legacy ZN calls that were purchased back in December. Whew, let me tell you. Penniless, worthless, in for a penny, out for a pound, Jamal. But that's why when I'm feeling that, I structure the trades in the way that I do, when I'm feeling like I want to get some long exposure, but I'm not confident in it, why would I sell puts, right? That gives me the convexity in the wrong direction. I like to buy the out-of-the-money calls. They may expire worthless, but risk to reward, I was risking 1 to make 4. The same thing with ES. This most recent ES trade from December didn't work out, but as I structure those trades, we've gone over this in gold too recently, you're basically risking 1 to make 3 or 4 if you're lucky. And if you hit it, the way that the next trade is structured, you're at max, you're not going to give up more than 50% of your previous winner. So the chain of trades breaks, we revisit the drawing board, and we'll try to get the next one right. But this right now is not one that's looking like it's going to turn right for me anytime soon. So I think I'm riding that ZN call into the ground.
I mean, I don't think you really have a choice at this point. You know what I mean? Like, there's not really much you can do.
Well, I've tried to get it off the books. For now, this second consecutive day, it's just a working order. So I don't think anyone's interested. Listen, if anyone out there wants my 115 calls, come find me. I'm happy to give them to you.
I'm just happened to glance at the chat. Lone Sophos feels that ZB is at a major inflection point right now. Do you think it's a major inflection point? You just think it's another blip on the map as far as lows goes?
First off, the inmates are allowed to run the asylum. I don't know if we're allowed to have chat on for this. That's great.
Well, you know what's funny? Maybe we do, maybe we don't. But sometimes I actually just I don't refresh it as the show starts, and it's still there. So I sort of have a little cheat code.
I'm all for it. You know what? One of the exhaustion points that I'm looking for in bonds is back-to-back weeks of high volume. And it's rare that it occurs, but it occurred in February, March 2020 at the highs in ZB, and it occurred in October 23 at the lows in ZB when you saw 2 weeks in a row of 3 million contracts traded in the futures market. And while we've seen 3 million contracts traded in December for one of those weeks, we haven't seen it back to back. So I'm not ready to think that the weight of evidence is there yet to think that we've reached exhaustive type conditions. And I'm glad that I haven't, because here we are today setting fresh yearly lows, right, in the past day or so. I really want to get long bonds. I feel like if you're a longer term investor, locking in TLT at, a 4.85% yield when the earnings yield on the S&P is what it is, and it's easy to make that type of longer term investing decision. But right out as a trader, you're catching a falling knife.
I think I started something. They now that they know that they're seeing, they said it's the, I got to tell them, guys, I'm sorry. They said it's the Vecchio chat blackout. Please respect the silence. You didn't hear me say that out loud, though. It's almost like I talked about Fight Club without Fight Club being known.
Little do they know that you and I are actually the same person. We're just alter egos apart.
They had no idea. Just the contrast has changed, guys. That's all. That's it.
Gold here. Let's talk about metals. They are surviving the tumble today. They have been disconnected from the dollar and from yields, where they've been a little bit more resilient, and then something happens where the bell gets rung and they get a big setback. We saw this throughout October, and then all of a sudden Trump wins, dollar surges, gold says enough is enough. We saw this here yesterday, at least. The surge continues, but we're not quite out of the woods. It's still a consolidation. And if you look at today's price action, we're pulling up to the moving average envelope. We're not giving up the gains significantly. It still feels bullish longer term. Do you have any exposure here right now? Because I don't, but I'm hopeful to lay on some long soon. And I think 28.50 calls should be nice.
You thinking about it again, huh? You thinking about it again? I want to see, if I'm going to do it, I want to see more of what we saw last year. And it's been obviously a whole different trade since the election. And
but what was that of last year that you want to see more of? Just because, for the sake of the chat that we now know is open.
I want to see, sort of the momentum, right? Like that we saw last year. I mean, it was really big, honestly, and we'd see pullbacks to certain key levels, which, it's not necessarily that much different than what we're starting to see here, I would say. I mean, we saw a little bit of a breakout, then we saw a pullback to 2,700. It's a little bit below right now. But last year, I feel like we were seeing breakouts. Then we see, a breakout above 2,100. It'd get to 2,200. Then we see a little bit of pullback to 2,200, 2,150. And then, motor higher. I want to see more of that. I mean, what we've seen, honestly, since the election has been more of a chop. It's more of a consolidation / chop, I would say, which is not bad. But if I'm going to park some money in gold, I really would rather do it on the momentum side as opposed to any vol play. I would just rather, directional.
Yeah, I'm with you. I think stepping in front of gold, trying to sell calls in something that has that relationship with its volatility is very difficult, particularly when it has this potential upside still, right? A symmetrical triangle after an uptrend, bottom left to top right, typically calls for continuation higher. Not every time, but typically. And so this seems to me like we're doing what we did last year for large extents of time, which was we established a floor under gold prices. Now, depending upon what contract you're looking at throughout 2024, it was probably around 2,300. And as we're moving forward in time, it's getting bumped up a little bit. Now it's right around 2,375 or so. But that seems to be the case here, right around 2,600 again. A $2,600 floor, if that's broken, we have some real topping machinations to talk through. And that would be a significant top, 200 points. We're looking for a return effectively then back down to the lows that we saw in June prior to the breakout gathering pace. But until then, you can't make the kind of bet. I don't think an iron condor is great here. It's only a 57.2 IVR, which we saw gold IVR so much higher for significant stretches last year. I'd prefer to wait to see if we can get another pullback towards 2,600 to get some really cheap out of the money calls, or quite frankly, just wait for a little bit more technical evidence to latch onto a breakout.
Yeah. And again, I'm not trying to poo-poo the trade. Honestly, I think it's possibly there. I mean, again, theoretically, this should be one of the things that moves and potentially moves big tomorrow. Just depends on how everything goes. But you could have a scenario where gold is up, $30, $40 tomorrow, right? In the beginning of, because again, let's not forget, this relies on interest rates and where they are. So this is definitely one of those trades. If you're looking for something to do and you're looking for some cash to outlay, I mean, I would say the idea of an upside call spread in here on the potential change and gold going higher Either way, it's a move. I don't know. I'm not going to lead you guys in any one trade that you don't necessarily want to do. It could be upside, it could be downside, but I think this thing should potentially move tomorrow, given the rate discussion where things are.
You know, something funny happened on the way to the rate decision in January. No, that's not what I wanted to say. Something funny happened on the way to the CPI report this week. We saw silver prices trying to put in a double bottom, right? We have this candlestick here on the December 19th, December 31st. We set a low in, and when we do break out, hey, we actually achieved the double bottom target on Friday. Well, today's price action now sees us back below the uptrend from those August and November swing lows, Jamal. This looks like this is a failed attempt to return back into the consolidation. So gold, while retaining those bullish pretenses, silver not so much. I see a 24.5 IVR here, though. That's real light. We usually want to see silver volatility trending higher if the market's getting bulled up, and that's not happening. So I guess if I want to be, one of the reasons why I'm not ready to deploy capital in a long gold trade yet is that the other stars in that constellation aren't necessarily shining bright in the sky right now. Silver should be performing better if gold was going to break out, is my point. And it's just not there.
Agree. I mean, I feel like when we really got bulled up last year, I think the first time we really did that trade was August. And at the time, you know, gold was, again, a lot more of a momentum trade. And there was a bid to the upside, which was leading to a little bit higher IVR. And believe it or not, I know it's counterintuitive to everything we talk about at Tasty, but again, we talked about it. Gold and silver are different, and there are a lot of times they move off of momentum, and that's why we decided to get long. I don't necessarily see that right now, so I think I'm just kind of waiting in the wings.
The only metals trade I have on right now, which is still working, is copper. Copper continues to bump up, $4.3425. It's short the 4.405 put spread right now. There's still 42 days to expiration to go here, so I'm quite content with how this has worked out. It was a trade I put on at the start of last week, so I've been lucky to catch basically the entirety of the move so far. But we're starting to churn up in a manner, right, that makes me think I should be altering how I have this trade structured. I don't know if being short puts is the best way to do it anymore because volatility is basically falling off a cliff. It's no longer a 50 or 60 IVR. If I want to retain exposure, I might flip it into like an at-the-money call spread, but that's tomorrow's problem. Right now, copper is working, and it's surviving the shift in yields and the dollar. At least it's working.
I mean, that's saying a lot in this environment. Like we just mentioned, a lot of the other metals are still kind of lying in the weeds. This does have a bid to it. I really haven't paid much attention to China recently, but I'm guessing it's more of that, right? I mean, that's really been the thing about this copper trade. Sometimes it's China, sometimes it's along with the rest of the metals. But, I mean, these last several sessions here are pretty interesting, it would seem to me. And in my simple chart that I use with simple moving averages, looks like it's closing in on the 200-day moving average and could be liftoff time.
Well, that's what happened with the Russell yesterday. Russell kissed its 200-day and then popped. And it's been bouncing ever since then. I think we're now 2% higher off of that 200-day moving average from yesterday's touch. This is a point where if the market's going to fail, this would be the point of failure, Jamal. So that's kind of why I'm, in this what do I do here territory. We've seen in recent months support in June flips over, becomes resistance throughout August into September, and then chop, chop, chop in October. Can't quite get above there in December. It's right around 435 or so. Not the cleanest levels. There's been some give or take on either end, but it's a place where if the market is going to turn, this would be the turning point. So I think we're either going up to 4.5 or coming back down to about 420. And if I see short-term momentum break, if we lose that 1 week moving average, currently $4.2830 a pound, that would be a place to say, let me get out of the put spread. Let me wait for a little bit of a pullback and figure out a way to recalibrate so I don't lose all these hard-earned profits over the past 6 days of trading.
No, you don't want to do that at all. Yeah, I mean, it's always good to have a plan, right? And right now, I think, when this is doing what you kind of want it to do, it's easier to execute the plan.
Jamal, the big question, if yields are ringing equity markets bells right now, then it would seem that oil could have something to do with that, given the tightening correlations that we've seen between oil markets and bonds in recent sessions. We talked about it earlier, but right now the rolling 1 month correlation between oil and bonds is negative 0.79. If we were to talk about the rolling 1 week correlation, it's nearly perfect, negative 0.96. So tick for tick, as oil has been moving up, we've seen bonds go down. Today is a little bit of reprieve here. 77.60 is a 33.5 IVR, and we're pretty darn close to areas where the market peaked out, at least in the CLG5 contract, at various points last year. We can go over to now what's the current defaults in the platform. If you CLH5, if you click on over to oil here, Jamal, it's still very similar setup, up near that $77 to $79 a barrel area where the market's peaked out. So I guess the question is, do you call a top here considering this year-long resistance in this price range?
I don't know if I can call a top yet because, again, the correlation has been there, like you said, with going on with bonds. So let's just couple it to yields. I mean, obviously, you see yields have sort of pulled back on the day, and we dropped below 4.8% on the 10-year. And you can see oil has followed suit here. It's off the highs and pulling back to the tune of 1%. So, with CPI coming up here around the corner, I almost feel like we're going to get a similar type of number as we did today. And if that's the case, I think it makes sense to call a top in oil. And so it really depends on what you believe. Are we going to get a weaker CPI, which causes yields to pull back and oil to pull back, or are we going to get a strong one? That's really where it boils down to. I'm of the mind that CPI is going to pull back, but that's why I'm long deltas as far as equity markets go. So that's my trade there. But I think you do see this pullback if we get the pullback in yields and CPI tomorrow.
I can't help but think the move in oil is related to the speculation that there will be a ceasefire in the Russia-Ukraine war. And I mention that because one of the intermediaries for Russian oil has been India. And India has been getting smoked in recent weeks, particularly since the presidential election results. India has been getting hit fairly hard. Their stocks are down meaningfully, 10% since the election. I also think about the fact that there have been renewed reports out this week that China and India have been facing a little bit more difficulty circumventing U.S. sanctions and been forced to buy more oil out in the open market, which means instead of buying Russian oil on the cheap, they're buying Brent and crude just like the rest of us again. So there's more demand for some of these headline figures. Jamal, if oil keeps moving up and we see an end to the Russia sanctions, that poses a new catalyst, if you will, for energy markets in 2025 that I don't think many are pricing fully in. But if we don't see an immediate end to the war when Trump takes office next week, I wonder if oil reverses paradoxically, right? Because then the sanctions aren't going to be lifted. And therefore, India and China, maybe they're loosened. So China and India can go back to buying all this oil behind America's back. I think oil is in a really tough spot right now, narrative-wise. This is not a rally built on the typical geopolitics, and it certainly hasn't been associated in a contemporaneous manner with a rise in volatility. Like almost every other oil rally we've seen over the past 18 months, when the price is up, it's because geopolitics are flaring, volatility is up. This time around, we've seen a 10% trek, and vol has barely come out of bed. It's Jamal, 33.2 IVR in oil is not worth trading from my point of view. So I'm personally going to wait, but I think the next week or two is going to be very, very unique for oil in a way that maybe helps contextualize what have been the past 2 weeks of gains.
It's a good point. It's actually in a precarious spot because, like you said, there is the idea of eventually geopolitics taking place. Right now, it is, seems to be responding to what's going on with yields, but all it takes is something to flare up, and then you could get those prices lifted above 80 and higher if geopolitically something happens.
Natural gas is on the up now, which is a nice development because it was down 2% or so earlier today. Jamal, I have that continued exposure thanks to my quant, Mr. Westwater, in the NGH5 contract.
You do?
Last Wednesday on Futures Power. Last Wednesday.
Oh, really?
I said we didn't have a chance to speak last Thursday on Futures Power Hour because the markets were closed for the holiday. But Westwater showed me this great chart. And it's the inventories of natural gas in salt caverns in the United States. which is like, okay, that's where we keep our most readily accessible natural gas inventories when we want to tap them during cold spells. Sure. What do these data points show? We're drawing down our salt cavern natural gas inventories faster than we have at any point over the past decade because it's so cold right now in the US. And that streak of cold weather is expected to continue. Polar vortex 8 to 14 days out. In fact, better to show than tell. Why not? Let's just look at the chart. Updated January 13th, so yesterday. Looks like most of the country, except for the very warm, windy area of Southern California, is facing below average temperatures for the period ending January 27th. So natural gas continues to expand. This looks like a major bottom that's been coming together here. I still have the short put spread on. We're 42 days to expiry right now. The IVR is only 40, so maybe if you're bullish, the calls are not too expensive, as it were. But I think there's enough to go here in the short term. Demand is up, supplies haven't really moved, and the supply data that we have shows inventories are being drawn down very, very quickly.
Yeah, I mean, there's a serious cold snap going on. It's freezing here right now, that's for sure, and it's going to get even colder next week. So I think that's what you're seeing, obviously, in natural gas right now. And it has that look once again, right? It really does. And it's interesting because when one of the things I kept talking about at the end of the year was I just couldn't believe there really wasn't that much difference in the Widowmaker spread. And there's still, there isn't at this point. There usually isn't going to be, but it was just kind of strange. I was expecting a little bit more of that difference between, the end of winter and the beginning of spring. And it looks like we're having a little bit of a cold snap now anyway. So yeah, natural gas looks a little bit bid. IV rank you would assume would start to break a little bit higher if we get to revisit those prices that we saw the other day.
Jamal, we should note that equities are climbing back here. S&P now 58.93, up 0.32%. The Russell, your leader, up 1.25%. We can't ignore those as the session goes on. We're not quite back into that territory we want to be in, but I'll tell you, that's starting to look like a Morningstar candlestick cluster here on RTY H5. Nice hold of the neckline in both of these. Are we out of the woods? No, but hey, a lot better than when we started the hour. Compelling enough to get long just yet?
Coinciding with the 10-year dropping below 4.8% too.
Yeah, and see, that's the yield story right now, where as we're looking at the long end of the curve and those yields come back and stocks are getting some breathing room. Jamal, what was your Q1 entry for S&P 500 for the gas?
I don't remember, honestly. I might have said lower. I might have said like 5,700 or something like that, just to be different.
I think I said 5,800. So we got pretty close there yesterday at 5,809.
Got it. So we both said like lower. We're both long.
Yeah, again, first quarter's like chop.
I know. That's kind of what I was thinking too. That's kind of where I'm thinking.
No, like if I saw 5,700 in ES at any point over the next 2 weeks, I would go out to April and buy April expiries back at 6,000 blindly.
Mm-hmm.
Wouldn't even think about it. Maybe put in my time off for the next 3 months and then say like, I'll see you guys in April. We'll be fine. Just buy the 6,000 calls. We'll be fine. So just another day like yesterday, though. That was kind of fascinating where over the hour, futures power hour, stock markets rebound as soon as we get off the air. They're back in the tank. Dollar not liking yields today, Jamal. They haven't been helpful. They were ticking up earlier, right? And now they're ticking a little bit down. ZB's only down by 0.06%. So keeping that in mind as we inch off these lows, we're seeing some relief for these very beleaguered currencies. If it's the pound, if it's the euro, if it's the Canadian dollar, volatility is very, very high still here. Now, the Canadian dollar perhaps is the most interesting because at its high today, the IVR was 125. It's now 60. This could be a sign that we're carving out a significant low here, right? Volatility tends to peak as you go into a top, expands into the top or bottom, and then declines as you come out of it. So maybe this collapse in volatility over the course of the session substantiates that we're nearing a turning point. The Canadian dollar is often seen as a bellwether for the broader U.S. dollar because of those cross-border flows. So if the dollar is weakening versus the loonie, it's probably due for a setback everywhere else. The euro is up by nearly 1% today. Lots and lots of exhaustion. I would remind everyone, too, that President-elect Trump did not speak favorably about the U.S. dollar when he came into office the first time. And he kind of wants to have his cake and eat it too, where he likes tariffs but wants a weaker currency for our exporters. And he has yet to really opine on the strength of the dollar, even as DXY crosses 110. So I would think we have some intervention, so at least some soft verbal intervention risk, if the rhyme and rhythm of the currency market is following that 2016, 2017 analogy, which for the post-election period, it's been doing so basically to the T.
Yeah, this could be, I might as well say another, because I feel like last year was definitely a fascinating year for currencies as things were changing, obviously, with potential cuts and what's going on, with a lot of different central banks. And I feel like you could have another year like that, if not more, especially given what the dollar is doing. So like you said, a lot of exhaustion right now across the currency land because obviously the dollar has been so strong. But you would imagine it's not going to stay that way. There's going to be some ebbs and flows, and it's going to make for a good trading environment for these.
DSI and the dollar index last I checked was at 96. Again, this goes from 0 to 100. Sentiment is very, very stretched right now in the dollar. Until something happens to catalyze a turnaround, though, I'd much prefer to treat any rebound as an opportunity to fade that rally than look to call the bottom. Of note, we haven't crossed above the 1 month moving average in a significant way, effectively since the end of September in the euro, when we were trading closer to 112. Recent attempts to cross it have produced the relative highs in the ebb and flow of the market moving lower. So if we can see a move back into 104, I will happily take it and look to get some more long dollar exposure. Except against the yen, because the yen, those 007 calls are looking really, really, really nice. We'll talk about that another time, Jamal. What's next on the calendar? Tomorrow is a busy day. Inflation out of the UK, which I know it doesn't seem important, but UK yields have moved up to their highest levels in 27 years. And that doesn't necessarily stay in isolation. Everyone remembers the Liz Truss lettuce moments when the pound fell from 120 down to basically parity versus the dollar in the span of a week. If you see UK inflation continuing to push up and the situation we have in the UK continue, we're going to get more currency hijinks moving forward. So that's not to necessarily trade off of if you're an equity futures trader, but something to keep in the back of your mind. Tomorrow is inflation day here in the U.S. Again, VIX 1D is ticking up. It looks like it's going to be one of the more important inflation releases from the market's perspective, the options market perspective. In recent memory, could be top 3 or 4 over the past year. So don't go into tomorrow underestimating it. We're going to have several Fed speeches over the course of the day as well, which will tell us what to think and feel about the inflation data, Jamal. As we wind down every one of these shows, we typically do a brief bit of education. Today, we're talking symbols and products on Futures Power Hour. So head over to tastylive.com, top banner, Learn Beginner Futures, where you can find this coursework put together by the fine folks on the Tasty Live research team. You're going to get by him, Dr. Jim. He's up next. Learn Beginner Futures here at the top. Jamal, symbology is so important when talking about futures because, quite frankly, it's unlike any other asset class. You have to know not just the ticker, but the expiration month, which is represented by a letter, and the last digit, which is the expiration year. So when you and I talk about things like ESH5, we're talking about the S&P 500 that's expiring in March 2025. And when we talk about futures for the Fed funds or SOFR rates, SR3Z5, Z being December, 5 being 2025 as well. So you have to learn these symbols. You have to learn when your expiries are because futures do expire and you don't want to get caught holding a bag. So head over to tastylive.com, top banner, Learn Beginner Futures to learn more, or click the link here on the bottom of the slide. It takes you there directly. Jamal, I know you're up later today with Engineering the Trade after Dr. Jim, so we'll see you in about 45 minutes. Until then, good luck trading to everyone. So for Jamal Chandler, I've been Chris Vecchio, and Dr. Jim Schultz with From Theory to Practice is coming up next.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Tuesday edition of what it is that we are trying to do. Guys, welcome to a post-PPI, post-apocalyptic world. I still cannot believe that we made it through to the other side, but this is only half the battle because you guys know tomorrow morning at 8:30 Eastern Time, we have the most important CPI print of our lifetimes coming on down the chute. So you have less than 24 hours to get all of your affairs in order. So I would do that forthwith. Welcome to the show. I am glad that you are here. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube. And if it is real time, if it is right around 2 o'clock Eastern on January 14th, 2025, then you can communicate with your brethren that are also watching the show. You can celebrate if you're a bull. Maybe commiserate if you're a bear. Maybe I really don't know what's going on because the market's been all over the place here today. But it's a good time had by most anyway. And of course, you can ask me whatever questions that you might have. The earlier that you get them in, the greater the likelihood that I will get to the question because the expected move on the number of questions I get to per show is somewhere between 0.4 and 0.45. So I will get them in as early as you possibly can because that will increase the delta on my getting to your question. But all right, John, we got a lot to do today, man. John, get me into the market. Ooh, man, we still have a market? Man, I don't know, guys. EMI S&P is up 17 now. Got the risk-free instrument. Also noticing NASDAQ futures extremely high-risk product up 42. Got the boomers up 200. Just doing what boomers do. Got the Russell 2000 futures index up 24. Man, got a good amount of green on the screen now. And they really scared the children, man. Like, they really frightened the little ones here this morning. And so if you guys were watching the PPI when it dropped at 8:30, right, the imaginary made up fictitious PPI number that came out at 8:30 Eastern time, you saw, I mean, the market ripped. I was like, this is it, man. This is it. This is going to be the rip and stay. But it ended up being the rip and slip. I was like, oh, man, this is not good. Like, the market ripped. I'm like, here we go. We're getting 300, 400, 500, 600 in the NASDAQ. And it just couldn't hold it. It just couldn't hold it at all. And we actually had, the NASDAQ, if you look at, let's bring up like some, I don't know if I need Errol Coleman settings, like 1 minute or 30-second bars. I think we could do let's just do like some 15-minute bars. Let's look at like a 1 day little 15-minute deal. I mean, here you go, right? So you've got 8:30, right? Just looking at the NASDAQ. We look at the NASDAQ, of course, because it's the most fun, and it is the risk-free instrument in a very much not really kind of way. But if you look at 8:30, you can see that the market was kind of strong overnight. Like you had a little bit of, upward movement going into the number. And then the number drops and you had them all the way up to 21,129. I mean, look at that. They hit a high of 21,129 right after the 8:30 number dropped. I think this happened like only a couple of minutes, or maybe on the 8:30 minute. Actually, it was very, very quick. It was an explosive move to the upside. But then all of a sudden, man, I mean, good news is bad news now. I mean, because the inflation number was pretty cold. The inflation number was pretty soft. And so maybe now all the powers that be, like your Sosnovs and your Batistas, right, the people that really run the world that we live in, maybe they're afraid of deflation now. Maybe they're afraid that, we're going to take some money from all the elitists, right? The Sosnovs, the Batistas, the Malmets, et cetera. And so the market went down, kind of afraid of whatever it was afraid of. And then we caught a little bit of a something to do right down here, where you've got a nice little rally going into the close. So now where are we going from here? I don't know. And if I did know, I wouldn't tell y'all. I would just be in Fiji trading that information, wearing my Mike Evans jersey, of course. But right now, it's pretty interesting. It's pretty interesting indeed. We got 21,000. So for all my technical bros out there, that's a nice big round number. I don't know what that means. I don't know what wave that puts us in the Elliott wave analysis. I'm not exactly sure how that lines up with the fib retracements and the fib extensions, but I'm sure y'all know. And so that's the most important thing. So NASDAQ catching a little bit of a bid. And then, of course, even the S&Ps did essentially the same thing, since they're going to follow. I mean, look, the exact same line and the exact same circle. Right, I just overlaid a new index, the E-mini S&Ps, instead of the Nasdaq. You have basically the exact same pattern, the exact same kind of sequence of events. So you had essentially the high. I guess the E-mini S&Ps hit the high, right around 8:30. So the same time stamp on the high of the morning for E-mini S&Ps. So I mean, where are we going now? I don't know, man. But I'll tell you what, it's not good, guys. This is not good. I don't know what's going to happen right now. I don't know what's going to happen going into the close, and I don't know what's going to happen, going into the morning. But I just know that tomorrow morning's number, I've been trading a long time, guys, a really, really long time. I've never seen a weightier economic metric that we are in the face of, that we are standing on the precipice of, than tomorrow morning's CPI print. Tomorrow morning's imaginary, made-up, fictitious CPI print, the weight of the global financial marketplace is resting on this number. 10 bips this way, 10 bips that way, like everything that you and your family have been working for, it's on the line. So you've got about 18 hours left to, do what you need to do, to call who you need to call, and I would make sure the bunker is ready to go. And so that's going to happen in the morning. And that's E-mini S&Ps, NASDAQ. And then you've got volatility. Volatility's been interesting this morning because you've got, the VIX is down 67 cents. So the VIX is, obviously selling off a little bit. But the volatility is really, when the market was rallying this morning, like on the rip in the beginning, volatility did not seem to be super weak. And then when the market kind of started to fall, it also didn't kind of pick up a lot of steam in terms of, the VIX rising, volatility futures increasing, all those things. It's just kind of been hanging around that 18.5 to 19.5 range for what appears to be most of the day. And so, volatility 18, 19, 20. Again, we talked about this yesterday. You're going to need pretty exacerbated moves in either direction, primarily lower, but in either direction to maintain a volatility, a VIX index of 18, 19, 20, 21. Like you've got to keep feeding the beast. And it's a hungry beast. I mean, it's eating every 3 hours, right? It's stoking the metabolism, it's shrinking the stomach, it's doing all the things that the 1995 bros thought were the ways to be healthy and get shredded and lose a whole bunch of body fat, which we all know now that none of that actually matters in the end. But still, the 1995 bros, I mean, they gave us Flex magazine. Like, what more could you ask from them? Like, what more could you want from them? They gave us Flex. They gave us all the muscle mags. And so we gotta give them their due. But you got the VIX at 18.5, 19.5. I don't know, man. I do not know. So, all right, what I want to do, though, so let's get into, before we get off on too many tangents, Flex Magazine, y'all bring me back, man. Get me back to, like, the Animal Stack days. You get me back to, like, the Rip Force days. I mean, man, that's where it was at. Rip Force, pre-workout drink, it's the GOAT. It is the Tom Brady of pre-workout drinks. Y'all correct me if you guys are 40 or older, maybe even 35 or older. I'm not sure. For you young cats out there, you guys don't even know anything about this. But for you guys that might be around my age or even older than me, did any of you guys ever have the original Rip Force? Not the trash that they put out after they took ephedrine off the market. I'm talking about the good stuff, man. Did you guys ever have a chance to taste the nectar of the gods that was the original Ripped Force. Man, let me know in the chat. I'm very curious to know if anybody's out there with me. But man, I see you guys in the chat. Look at Sam L, Sergio. I see YouTube Jim. Wow, you guys are really blowing me up. Weiss in the house. I see Night Moves in the house. Man, look at you guys. Argent Purr's in the house. RC's in the house. Man, there's too many of you guys. I'm going to have to do this real quick because you guys are really, man, I got some overachievers on a Tuesday. Wow, man, on a back day? Like, that's weird. But I love it. Like, man, it's just because of you guys that we can do what we do. So thank you guys so much. I'm so humbled that so many of you guys check out the show. What I want to do, though, really quick. So a couple of quick comments about things going on. There's really not much going on that we need to tend to or we need to actually do in the portfolio. This is very much a do-nothing type of day. But I do want to play. I want to position ourselves. So today, today was an interesting day because, again, they ripped them and then they slipped them, and now they're back to a second rip, I guess, where they're kind of, pushing them higher into the market close. That's what I was going for there. I'm very curious to see what's going to happen tomorrow. I think we could have a rip and stay. I think it's not going to be a rip and slip, a rip and crumble. I think it's going to be a rip and stay. I think it might be a rip and then bigger rip. And so I think we want to play that thing to the upside in the old SPX with a little expect to move butterfly. But before we do that, let's talk about, I want to talk about Bank of America and I want to talk about Starbucks, simply because in both of these positions, now it's not very much, it's a little bit more in Starbucks in terms of, we're starting to show a little bit of profit. Like, these positions are finally beginning to show signs of life. And so when you are a stock investor, now remember, we have our stock discussions every Friday. I'm not sure how long we can keep that up, but we've done it for 4 or 5 Fridays now. I'm going to do it again this Friday when we talk about non-dividend paying stocks, just a fireside chat, very unofficial, just kind of having a friendly conversation about, how do you deal with non-dividend paying stocks? Like, what is the benefit of investing in a non-dividend paying stock? Because we know that dividend-paying stocks have a lot of benefits. I mean, dividend-paying stocks mean you're getting a payment just for being part of the team. Like, you're getting a nice 2025 participation trophy, which apparently is what we're handing out for the NFL Hall of Fame now, giving it to Mike Evans, giving it to Frank Gore. Just whoever wants it, like, you can have one. It's the same thing as, being a dividend investor. It's like, man, if you're just there, you get dividends. And so that's a really positive thing, of course. Well, what about the companies that don't pay dividends? So this would be like your Snowflakes and like your Snapchats and like whoever else. Are there any redemptive qualities for investing in those companies? We're going to talk about that on Friday. So don't miss the show on Friday because we are going to do that. But I want to talk just briefly about the two positions that we do have on. These are our long stock positions. And these will probably be the only two long stock positions for at least a little while because I don't want to eat up too much capital on these long stock positions, because still at the end of the day, it's derivatives, it's selling premium, it's options, it's futures, it's options on futures. I mean, that's the primary focus, but still just to kind of, toss out a little bit of an olive branch just to say, I don't know, Mike Evans might be like a 5th ballot Hall of Famer, maybe, I don't know, 7th ballot, whatever the last ballot is when everybody's tired, they just want to go home. They're like, sure, let him in, who cares? That might work. For Bank of America and SBUX here, you can see that Bank of America, we bought it at $45.60. It's currently selling at $45.84. So we're up 24 cents on the trade, $24, right? It's nothing, but it's a little something. Starbucks, we paid $92.18 for it. It's selling for $93.36, right? So we're up a little over $100. Okay. Here is what I'm hoping happens. I'm hoping that both of these stocks get a little bit more traction. Not only because we're making money, I mean, obviously that's what we're trying to do, but I think it's going to be a great opportunity for us to talk through what are the things that you can do as a stock investor when you start bringing in a derivatives focus into your portfolio. When you start including, other tools into the toolbox, selling premium, covered calls, getting new avenues of profitability, like all these things are available to you with something like options, selling premium, the short side of the contract, etc. And so I'm not going to do it yet, but when you have a stock position that's had a nice little run, and you can decide what quote unquote nice little run means. I mean, it could be 5%, it could be 10%, it could be 6%, it could be 30%. It's totally up to you. But once the stock has a nice little run, the beautiful thing about stepping in at that time to start selling calls against those shares is you're kind of locking in. I don't want to say locking in, but we already put it out there. You're kind of adding a little bit of a hedged component to the shares, while also, you got premium in the mix. You have another way to make money. You are capping your upside, of course, but it does give you just more ways to make money, which ultimately that is what we are trying to do. That is what we are trying to accomplish. And so I'm not going to do anything right now. Like Bank of America and Starbucks, we're going to sit tight. But I just kind of wanted to put that on everybody's radar. So BAC and SBUX, those guys, we're going to wait and see. Let's see what happens in the next couple of minutes. Next couple of couple of days, couple of weeks. All right, let's go to SBUX. So I'm sorry, SBX. All right. So listen, guys. Again, this is plain as day. This couldn't be more obvious. I'm like 46% sure that this is what's going to go down tomorrow morning. I think we get a rip, and then I think we get a stay. I think we get the rip and stay. We're not going to get the rip and slip, which is what we got today, right? But again, I mean, there might be a little market. There's a little market DOMS, little market delayed onset muscle soreness. It's like finally, that ache is starting to kick in. It's like you get in there. You hit 3 or 4 nasty sets of leg extensions. Like you feel fine after the fact, but we all know what's coming later that night. We all know what's coming the next morning. It ain't going to be pretty. It ain't going to be pretty at all. So I think that's kind of what's happening here this morning for the Bears, at least, with, the market starting to get a little bit of footing. And now you've got S&P's up 20, NASDAQ up 50, Boomers up 230, right? Just putting a little something together. And so I think tomorrow we're going to have continued action to the upside. Again, I'm 44 to 46% sure of this. I think we just go with the tried and true. I think we just go with, the plain vanilla, the cookie cutter, the Betty Crocker strategy, the expected move butterfly. This is going to allow us to potentially put a nice wide net above the market where we could have a good little payday for a very modest amount of risk. And so that's the basic idea behind an expected move butterfly. So we're going to do that. Now, keep in mind, tomorrow is a Wednesday, and I'm with Errol on Wednesdays for today's assignment. And when I'm with Errol, we don't trade them from theory to practice portfolio because it's not from theory to practice. And so just be aware that if the market does rip and stay, then I'm going to probably be managing that portfolio off air, which I really try to not do. But whatever we do that happens behind the scenes and doesn't happen live on the show, which I try to do with 99% of my trades, and I think we've been able to do that for a number of years now. If something does happen on the show, we will talk about it for no less than 13 minutes. So if you watch the show on a regular basis, if you pick it back up on Thursday, you will not miss anything. I can promise you of that. So let's go ahead and what are we doing here? What's Amelia got for us? She got something good? She's been losing a lot of money lately, so I don't know. Okay, she's got a 58. Wait a second. SPX. That can't be right. Really? Oh, yeah. No, that is right. So she wants to play the expected move to the upside. Obviously, because we've been talking about, bullishness. She wants to kind of overshoot it a little bit, kind of playing for the extra rip and stay. So a 59.30 is what she wants to peg. Amelia, by the way, if you're brand new to the show, is my trading assistant. She is my intern for the show. She does all of my trade analysis. She is also my almost 5-year-old daughter now. She'll be 5 in March, which is pretty, that's some pretty crazy stuff. And I'll tell you what, so this is like one of the cutest things that I've ever heard any child say. Now, it's my child, so I'm a little bit biased. But we were out to lunch the other day, and the whole family was out. But I was sitting next to Amelia. I was sitting across from Amelia, and I was trying to help her pick out her lunch. And so, they got the kids menu. They got chicken fingers. They got mac and cheese. They got just all the kids, junk that, all kids eat, right? Well, she's looking at the menu, and she sees the pizza. And she says, and I'm reading off the things to her. And I say, hey, Amelia, what do you want? Do you want this? She says, no. I'm like, do you want this? She says, no. I'm like, do you want some pizza? She says, yeah, Daddy, I'll take some pizza. But then she leaned in and she whispered, she's like, but can I have the pizza without all the details on it? And I just started dying laughing because obviously she meant like all the toppings and stuff, right? But she called it the details. And so I don't know. I think that's super cute and funny, but it is my kid, so I'm biased. But let's go in here. Let's get on this expected move butterfly without any of the details. Let's just go with, the straight tried and true. Let's do a 58.95, 59.30, 59.65. This is it, guys. Look at that. $5. Can you smell the smoke? Because I certainly can. That stack of cash. Oh, yeah. She's already starting to feel a little bit of heat. $5. We will be lighter by approximately $5 tomorrow when the market does indeed rip and slip and crumbles under the weight of the fake, made-up, fictitious CPI number that's coming out at 8:30 Eastern time. But I still like the fact that this gives us a little upside exposure. This gives us a way to, play the market to the upside, and I like it. Let's go ahead and let's do this trade. This is an Amelia May special, and let's do it. So let's try to get filled for Let's just try 505. And then this will be our big CPI play. And, you guys can fade it. You have plenty of time to fade it. You have the rest of the day today to fade this trade, which, again, going back to, my prior year's records, if you did the opposite of everything that I did, you'd make a ton of money. You would take at least 18 to 24 months off of when you think you're going to be financially independent. Like, you'll get there a whole lot quicker. And so I would find a way to continue to do that. But let's see. Let's try 510. I really just want to kind of get this guy filled so we can move forward with the show, because you guys are blowing me up in the comments. I don't know if there's some inside stuff going on that I'm not a part of, but I'm going to find out here in a second. Maybe we got some crypto spammers in the house again. And so, all right, so 520. So we got filled at SPX. There you go. Beautiful. And, man, it's good stuff. All right, so there is our CPI play. And, wow, I got to scroll way up, way up, way up. Wow, this is, man, you guys are amazing. So let me just say really quick. I'm just going to scan really quick because you guys are unbelievable. Shout out to you guys, man. You guys are amazing. Like, I'm really speaking specifically to the From Theory to Practice fam right now. So the people that are watching the show right now, the guys and the gals, like, you guys are incredible. Like, you guys participate. You guys are part of the deal. You guys are what makes this show really special. Right? You guys, maybe I'm handing you the flashlight to lead us through the forest, but man, we are absolutely a team when it comes to this. Because without you guys, like, there would be no show. Without you guys, we couldn't do what we do. So, man, thank you guys so much. I just see you guys. I see Harold's in the house. Noah's in the house. Man, look at you guys. Man, I see KT's in the house. I'm just grabbing random names because I know I'm not going to get to nearly as many of you as I would like to. Craig Mick's in the house. Max Virtual's in the house. Peter's in the house. Night Move's in the house. Gapper X in the house. Man, you guys are just, man, look at you guys. Blue Collar Options is in the house. Blue Collar Options? Talking about C4? Are you really going to put C4 in the same category as Ripforce? That tells me right there, Blue Collar Options, that you must be 30 or 35 or younger. There's no way that you're my age or older. Because if you were my age or older, you would not be bringing in this watered-down trash that is C4, talking about pre-workouts that actually work. That is some straight garbage. That is some absolute garbage. The next thing you're going to tell me is Celsius is on the same level as original Ripforce. Man, Blue Collar Options, you're trading on thin ice because the block button, it's within reach. And so let's see here. Where are we at? Wow, I can't even. This is crazy. You guys are crazy. I appreciate you guys because this is going to push the stream out to more people. So that's some good stuff. But Theta Trader's in the house. Says, is the genius who loves company Dr. Jim? I bet it's Dr. Jim. I don't know what you're talking about. Maybe that was a tasty promo or something. But no, that is not me. That is not me at all. I can assure you of that. But I thank you, Theta Trader. I appreciate you. And then Theta Trader says, everybody go visit his Florida shed. It's a studio. It is not a shed. And so please label things correctly. And you are not welcome here. And so Paul says, good afternoon to all. Unless you want to give me some discounted Black Alley, dental care, then we can talk. Like, now we can start talking. Like, if I can start getting some crowns from your crown supplier, which was CCL, which you tried to tell me was a dividend paying stock, but come on, man, we both know that that's how you're getting your discounted crowns for all your, your back alley customers. And so we can talk. We can keep the conversation open. So Paul's in the house. Says, good afternoon to all. What's going on there, Paul? I appreciate you, my friend. You know that I do. Thank you for being a part of what it is that we do. I'm just really, you're here like every single day, man. So I appreciate you so much. Sunflower says, there's no air conditioning in any of the college dorms my kids go to. Oh, that's brutal. I didn't have air conditioning going to Central Michigan for the whole 4 years of undergrad. I remember me and my roommate Anthony, we lived in Western, we were in the dorms the first year, obviously. But then the next 3 years we were in these apartments at Western Islands, I remember. And it was just a trash heap, man. But it was so dirt cheap. It was amazing. It was an absolute just junk pile of a place to live. Maybe they've updated it. I don't know. But if you're in the Mount Pleasant, Michigan area, or if you're a student considering Central Michigan University, I would not stay at Western Islands on Mission Street. I wouldn't do it, man. It's not amazing. Now, it's got to be dirt cheap unless they're raising prices like everybody else is. I don't know. But no AC, I can tell you that. So it appears that Sunflower's kids are in a similar spot. But Weiss in the house says, hey, Dr. Jim, I'm looking forward to the show. What's going on there, Weiss? I appreciate you. Thank you. Excuse me. Thank you so much for being here, my friend. I appreciate you. I'm still working through this cough. It's going to be, I don't know, maybe another couple weeks. It's already been like a week and a half, so it's just become part of us now. And so Scramble Everything says, hey, Dr. J, it looks like Sam Darnold is on the market. Yeah, Sam Darnold. As your Dolphins backup QB. No, man, he's going to be QB1. No, he's going to be QB1, dude, too. They can't do it. Tua can't do it. I mean, Tua. I don't know how I feel about Tua, but yeah, Darnold, man, talk about Darnold looking like the market. Darnold looking like a V-shaped recovery or a V-shaped crash. Like, man, Darnold really, he just threw in the towel last night. And so I think the Rams, the Rams are scary. Like, my Rams, they look good. We look good, right? You've got Stafford and the other guys, whoever they are. Like, we look good, man. Look real, real good. And I think that, they might go in there and do a little bit more damage in Philadelphia than people are expecting. I think they might surprise some people. And so I could see the Rams, going in and beating the Eagles. I could see my Rams victorious, come time the NFC Championship. And so, but they look good last night. So Orgdenu's in the house. What's going on there, Orgdenu? Greetings from Italy, Dr. Jim. I saw your intervention on Monday. Yes, that's the best way to describe it, with Mr. Salsnoff and Mr. Batista. So Orgdenu is referring to the Monday morning segment that I do if you're brand new and you don't know what kind of the inside stuff that's going on. Welcome to the show. If you stick around, I promise you'll learn most of the inside stuff. And so Monday mornings, I do a show with Tom and Tony called The Skinny on Options, Abstract Applications, where I try to bring some more advanced topics. Sometimes they're mathematically based, sometimes they're other something based, but they're kind of out there, let's say. Sometimes it's a reach, sometimes it's a stretch, and sometimes it's right there in the pocket. And so it kind of just meanders around all those different categories. But that's what Orgdenu is referring to. But then Orgdenu goes on to ask, could you elaborate a little more on how do traders make money on the long term? Thank you. Yes. So, and since I have the platform up, I can actually kind of use some of the metrics that we have in here. So let me bring up, I'll just use SPX because I already have it open. Well, actually, wait, let me go to SPY just because I'm a bit more familiar with the SPY. If I go into, it's the same product, but I do use SPY a lot more than SPX. So if you go to like February, for example, and you look at this 38 days to go cycle, and you see that the implied volatility for February, 38 days away, is 17.9. Okay, here is the most important point that I was trying to make on Monday morning. And this is essentially what we're going to pin our future to as premium sellers in the market, as people that are selling options. We're taking the short side of the contract. Like, that's the game that we want to play. Okay. Implied volatilities, so like this number right here, this 17.9, that is the variable that goes into the option pricing model, such as a Black-Scholes option pricing model, that is going to determine what the option prices should be for that stock in that cycle at whatever strike you might be looking at. So whether it's a call or a put, all the different strikes are going to be priced accordingly. Now, each strike has its own implied volatility, so it gets a bit more granular than what I'm doing here. But I just kind of want to capture the spirit of your question and give you an answer that's going to be relevant and sensible. And so the implied volatility here is 17.9. The options are priced based on that implied volatility. Okay, so when we sell a put or a call or a strangle or whatever strategy we choose, we're selling options that are priced according to that implied volatility. Okay, what usually happens, I shouldn't say usually, what happens on average, because usually makes it sound like most of the time. I don't know that it's going to happen most of the time, but on average, what we've seen over time is this implied volatility. So you have IV, right, which is going to be this number right here. But then you also have another metric called RV. The RV is going to be what was the actual realized volatility for that cycle. Now, of course, this is something that we have to wait to figure out what it is. We don't know what it, we can't possibly know what it is because it hasn't happened yet. So we have to wait for these 38 days to expire going into February expiration, and then we'll know what the realized volatility was for those 38 days. Okay, well, here is what the empirical findings have shown through the Tasty research over and over and over again. The implied volatility that options are priced on is systematically greater than the realized volatility that actually materializes in the market. So in other words, this 17.9% that the options are priced on in this cycle or any other cycle that you might be looking at, the realized volatility for this cycle, it may only be 16%, let's say, and I'm just picking a number. We can calculate it after the fact, and this is what the research team does over and over and over again, amongst many other things that the research team is doing. But this is, the differential the edge, if you will, that we are trying to exploit, that we are trying to capture. Because if options are routinely priced based on an implied volatility that is systematically kind of overstated, then if we're selling that over and over and over again, we are going to come out in the green in the end. That is what we are banking on. That is what we are kind of putting all of our chips in the middle on. This idea between implied volatility and realized volatility, and on average, implied volatility being greater than realized volatility. So hopefully that makes sense there, Orgenu. That is the basic essence of what we're trying to do, and that is a bit more detail around what I was talking about on Monday. And it might be helpful to actually see it here, looking at like an implied volatility for SPY, February, realized volatility, those kinds of things. So that's what I was talking about, Orgenu. Hopefully that helps a little bit. So Chris Lest in the house says, what are we thinking about playing long SVXY shares, Jim? Man, I don't know. That's another volatility product, I think, right? I'm pretty sure it is. Yeah, this is a short-term VIX future. Yeah, I'm not a volatility guy. I don't trade the volatility products directly. I trade market volatility indirectly through, options and through equity options and options on futures and things like that. And so I'm not going to be doing anything in here there, Chris, only because I don't have the understanding. I don't have nearly the mastery that I would like to have before I start kind of mixing it up with these products. Now, you don't need mastery to start mixing it up with products. I mean, we could get in and start splashing around with some spreads and things like that. But I haven't looked at the volatility products in a while. They haven't really interested me in quite some time because I feel like I'm certainly getting plenty enough fill just going through volatility indirectly through the equity options, through the futures options, and things like that. So no SPXY shares for me there, Chris Lest, but I appreciate you. So Scramble Everything says, how are you preparing for the most important CPI print in your lifetime? Well, I'm making sure that my will is up to date tonight. There's no time to waste. And then secondly, we're doing an SPX butterfly to the upside. Because, maybe we actually make it through the apocalypse. Like maybe we actually make it through this, this Armageddon-like event that is coming tomorrow morning with, this January 2025 CPI print that is completely made up and imaginary. But a lot of people are concerned about it, myself included. So that's what we're doing there, Scramble Everything. And so Junior Max says, good morning from Australia. When are we getting Charm on the platform? Yeah, I wouldn't hold my breath. I've been trying to push, the Sosnoffs, the Batistas, but the elites don't like to be pushed by the peasants and the plebes. Like, they don't like that at all, actually. And so I don't think that that's going to be something that they're going to acquiesce to anytime soon. But, man, it would be nice. Man, it would be like the first day of spring. Just a breath of fresh air, man. You open up your Tasty Trade platform, you pull up an SVXY, you pull up an SPY, you pull up a Bank of America, you're looking at an option, 30 delta put, blah, 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 boom, boom, boom. Hey, there's your charm. Hey, look at that charm. It's a beautiful thing. It's an amazing thing, but I wouldn't hold my breath. I do think it would be amazing, though, if it ever did happen. And Scramble Everything says, yeah, right after they get Vama on the platform. Yes, I would imagine. So I know you said that jokingly, and I agree with you 100%. I think if they're going to do it, though, I'd be surprised if, they just put Charm on the platform. I would imagine it's going to be like a package deal. Like we're going to get all of a sudden you're going to get, Charm show up. You're going to get Vama show up. You're going to get Vanna show up. You're going to get Veda show up. You're going to get a whole bunch of stuff show up. A little Ultima might show up. That'd be some good stuff, man. That'd be some real good stuff. And so I would imagine that they'll kind of come together. But we'll see. I could be wrong about that. Emmett's in the house. What's going on there, Emmett? Hey there, Dr. Jim. What do you think of 68, 70, 77, 79 Iron Condor? Jan 17 expiration to play earnings tomorrow. Earnings for who? You didn't say. Let me know, Emmett, if you can drop it. If you're still watching, I'll check the comments on the bottom here in just a minute. Drop it in there, and I'll let you know here in a second. But YouTube Jim's in the house. What's going on there, YouTube Jim? Greetings to all. Happy I could be here today, man. We're happy that you're here, and thank you very much for being here. I'm just so appreciative that you're here. And thank you for your work there, Dr. J. Man, Jim, thank you. YouTube Jim, I appreciate you. I appreciate you very much. And again, I've said this many times on the show before, but for those of you out there that might be, for you expectant mothers that might be watching this show, that's a demographic that we really try to excel in. And so if you happen to be, a mother who is, expecting their first child, second child, fifth child, whatever, if you want a unique name for your child and it's going to be a boy, You name that kid Jim, ain't nobody in his class can be named Jim. I can assure you of that. He will stand alone. He will be completely unique. And so that's what I would push for. And I know that YouTube Jim would agree with me. And so Robert says, waited too long. He will never get to this. But I did. Yes, nice and efficient today on this little Tuesday. We got things buttoned up. Even wore my, obviously going with the public shirt because we got a shift later tonight. I was expecting the rip and stay. We got the rip and slip. So I'm going to have to do a little work in the cheese department later today to make up for my inability to predict the market today. But it'll be all right. It goes by quick if you just, talk to the customers. Sergio says, what kind of student was Dr. Jim at school? You know what's funny? This is funny. So when I was in high school, I was not a great student. I just relied on whatever natural ability the Lord blessed me with, and he blessed me with a tiny bit, not very much, but it got us through high school. It wasn't great, but we got through, right? And I remember my senior year physics class. It was the first class in the morning. It was AP Physics. I don't know how I got in AP Physics, but I'm in AP Physics, and there was only 6 of us in the class. And man, so I couldn't hide behind anybody. I had to have my work. And I used to copy answers off of Dan Krusna every single morning. So Dan Krusna, if you're watching this morning, or watching this afternoon, I appreciate all of your, you were so patient with me. You helped me out. You were like, yeah, it's this, it's that, blah, blah, blah. And we had Mr. Welliver was our teacher. And he drove a pretty tight ship, man. He really tried to keep us in line. But I think I got a D or a D minus in AP Physics senior year of high school. But then in college, I turned it around. In college, I was like, all right, this is serious. We're in the big leagues now, at least in my mind. Central Michigan University, right? The big leagues. And so I really tried hard, and I really sacrificed a lot to try to do the best I could. I think I did okay. And the rest is history. And so that, it was an interesting journey for me, though, as kind of a young adult and into, adulthood in terms of how important I took my studies. And so I was kind of a bear and then a bull. And so let's see. Theta Trader says, and what would you do with it? Oh, the charm. Charm of 0.78. Guess I'll sell a put. That's actually a great point. I can feel the internet sarcasm, Theta Trader, because we have this bit of a rapport that, maybe not everyone has over the internet. But, actually it's not something that would necessarily cause you to maybe pull the trigger on that specific trade. But for background context, for background information, it could allow you to kind of finely tune the strikes that you do want to sell. You want to do a put, you want to do a ratio, you want to do a strangle, whatever, but how far out of the money do you want to go, right? Knowing where the charm is and how it does increase as you move farther out of the money, or further out of the money, I should say, can be useful information. Again, I don't really personally think that any one metric is going to be the deciding factor for any given trade. Right, for any given trade on any given Sunday, for my Willie Beeman fans that might be watching the show today, I don't really think that any one thing is going to move you in one direction or the other. I think it's going to be a package deal. I think it's going to be more holistic in nature. And so, charm would just be another thing, that we could monitor. And for me personally, just think of all the content that I could create. The content's not going to create itself, right? So, man, you get charm on the platform, that gives me 8 to 11 minutes almost every single day. And so, man, that would be some good stuff. And so let's see. Drone is in the house. The market will adapt to a 5.5% 10-year note. Is it at 5% yet? I don't think it's at 5 yet. I know bonds are just, man. So now they're up a couple ticks today. Man, bonds have just they've looked like some dog poo, man. Look at bonds. So let's look at, let's see here. Whoa, that's pretty aggressive. Let's zoom out just a titch. Let's do, 1 day. We'll do a year to date's fine. Oh, hold on. That's weird. Yeah, I gotta zoom out. Ooh, what's going on? This is weird. Something finicky's going on. Oh, there we go. Okay. It may have been my mouse wheel. But man, look at that. That does not look good. Man, that does not, it's obviously bullish. But man, look at that. That is really, wow, look at that. Now we're down to 110. It's going to be 109 pretty soon. That's not going to be good. The bond market's where all the smart money trades. That's where your Chris Vecchio's trade. That's where your Ilya Spivak's trade. I don't know, man. It's not good. Robert says CPI most important ever, and nothing has been more important than the imaginary number that they're going to drop on us at 8:30 tomorrow morning. I 100% agree. So Sam L says, Dr. Jim's in the house. The market is holding. How many reps in reserve are there before reaching failure in the market? Yes. I'll tell you what. Oh, this is such a great illustration, such a great connection between fitness and finance. So my two loves in this world as a professional and as a person. I would say this little burst, right? It's kind of like when you get in there, you get into a session, you get into the groove, and nothing's really clicking, right? Just like in the market, nothing was really clicking this morning. Everything kind of feels kind of rickety, and your body feels like porcelain, and you're like, what am I doing? Blah, 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 blah. But then you step into one of your favorite exercises. So whatever that might be. So like for me personally, that would be like the one-arm dumbbell row. The one-arm dumbbell row always feels amazing. Always feels amazing. That's how the market's feeling right now. So, in a rickety sense and in the rickety spot that we were in, I don't think there was too many reps left in reserve at all. But now all of a sudden, now we're just doing one-arm dumbbell rows, and we can just do them all day. And I think that's kind of how the market feels. And so RC says, Dr. Jim, what's up? What's going on there, RC? I appreciate you, my friend, so much. Night moves in the house. Says Bueller, yeah, we're here. We are 100% here. Arjun Purr's in the house. Anything bought on debt is not adjusting to 5.5%. 10-year rates. Cars are starting to with very poor sales. Yes, I mean mortgage rates are going up. Car rates are going up. It's pretty crazy. I mean, it would have been difficult to predict. I'm sure there are some people out there that were able to do it correctly and accurately, but man, I didn't see it coming at all. I didn't see, the bazooka rate cut at the beginning, the 50 bips, and then all of a sudden rates just skyrocket across the board. That was pretty surprising. And so let's see. Sunflower says, Dr. Jim, why are tasty traders so against trading MES futures versus SPX and ES? They say there's a lot more cost than ES and SPX. For me, it's much better because the size is more appropriate. Yeah, I didn't really know that a lot of tasty traders are against MES. I mean, the thing you need to be aware of is with the micro futures, so MES and MNQ would be the two primary ones from a financial future standpoint. The sizing is amazing, just as you alluded to. The sizing is incredible. With MES and MNQ, like you're going to be able to fit them into some pretty modestly sized portfolios, which is terrific. The thing you have to be aware of, though, is the transaction costs can really begin to add up because you're going to very quickly be able to graduate from, one MES or one MNQ to 3 or 5 or 7. Right now, the commission structure at Tasty Trade is pretty good. It's pretty favorable. But still, like you just have to be mindful of those transaction costs. And so that's why whenever you're able to step into an ES or an NQ or even SPX, like it's just going to be a much bigger product, and you're going to be able to spread the transaction costs more evenly, across all the trades that you're doing. Now, of course, you need to have the capital to be able to do that. I mean, I would say to trade an ES contract, it's hard to give you guys an exact number, but I mean, 100,000, you could probably do it. I'd have to think it's 500 delta. Yeah, 100,000. Actually, 100,000 would be fine. You could maybe even do it with less if you have more experience, but I'd say 6 figures is probably a good cutoff point, for that. So Sunflower, but thank you so much for the comment. But guys, this is it, man. I can't believe I'm done. Oh, Jason Tatum, really quick, says, Doc, what's the trade? Bearish or bullish? We're bullish, man. What's the opinion? It's going to be bullish tomorrow. But I do have to run. If I miss you guys, man, come back on Thursday. I mean, this is assuming we have a market on Thursday. This is assuming that the apocalypse doesn't take every single one of us down by Thursday, which I would say is 50-50 at this point. But I appreciate you guys. So much. If I can ever help you, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
What's going on, everybody? Tomorrow is a big day. That's right. CPI is coming out. We'll talk about what to expect there. Lilly, weight loss drugs is leading to loss for them. We'll talk about their issues and why the stock was down so big today. And then finally, of course, we have big banks coming out with earnings tomorrow. We really need them to save a weak market more recently. So we'll talk about those three things and more. And really take a look at those bank earnings and a couple of other things that are moving in markets today. But first, welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade. I am your host, Jamal Chandler. Yeah, I was really inspired yesterday by my youngest kid. So I took him to his boxing workout. It's kind of a thing we've been incorporating recently. He did football in the fall, and like when your kid stops doing something like that, they start bouncing off the walls, especially in the winter. So I figured, why not sign them up for another activity that wasn't necessarily a sport. You don't necessarily feel like obligated to do, sort of like drop in and out workouts, boxing workouts. Yeah. Not necessarily, it's not to spar. It's not sparring or anything. It's just more like sort of hand works and just doing punches and jabs and hitting the bag every now and again. And they incorporate some other stuff. But the reason why I was impressed with him, he's been doing this for a month now. But yesterday, he worked out with the high school group. Now, he's a little bigger for his age. I mean, he's 12. He's like 5'7", like 145 pounds. It's pretty fit, athletic kid, especially since football. And yesterday, they made them at the end of the whole thing. So they do all these different jabs. They do, they hit the bag for multiple minutes at a time. They have breaks incorporated in between there. But it's a pretty good workout for an hour. And then at the end, like the last few minutes, they had them do 4 sets of 25 push-ups. That's right, 100. Now, it wasn't all like regular push-ups. They were on their knees for a lot of them, but still. His arms and chest were burning. But you know what? The kid didn't complain once, man. And inspired me to go to my workout that I hadn't been to in about a week and change. Yesterday, I'm feeling good today. It's nothing like watching the kid hype you up, man. So I got to give him credit. And although most of those kids, there were a couple of kids cheating on the push-ups, even though they're on the knees. You know how that goes. But I was inspired because he told me, he was like, we got to 80 and I thought about quitting, but I was like, nah, I'm going to push myself. I was like, that's my kid right there. I love it. Let's go to the slides. Let's pull up what the most interesting things that we're seeing here today. Of course, we had the PPI report coming in a little weaker than expected today. Of course, that's what led to a little bit of bounce in stocks early on in the session. Faded fairly quickly within an hour of the open, hour and a half of the open. Stocks were already pulling back. And we've seen kind of an ebb and flow throughout the day. As a matter of fact, when we started the show, we were a little bit stronger here. We're pulling back as of right now. I also see the VIX 1D is now above 19. And this is, if you follow the shows here on the Tasty Live Network, you'll know that we were talking about this on Futures Power Hour, Chris Vecchio and I. It's currently above 20. That shows you there's a little bit of angst coming into tomorrow as we go into the CPI. We basically need the CPI to come in light. We do. There's no ifs, ands, or buts about it. I think if we don't, I think the markets are going to crater, and we possibly see below at 5,800. That's just what it is, because this is real. This narrative right now, what's going on with yields? They continue to reach new levels at times, 4.8%. At one point here today, next thing you know, it's 4.9, and then of course 5%, which is already on the 30-year yield. So things are really, it's a precarious time right now because markets are really worried about the fact that maybe the fight with inflation isn't fully done, and what's going to be more inflationary coming up in the next few months here. So that's really what we've been grappling with. That's why markets have been weak. You see the Dow and the Russell still positive. Those are the ones that are most tied to interest rates more recently, and so you're seeing a little bit of strength in them more than the S&P and NASDAQ, but it's been a fairly weak market. A lot of volume, that's for sure. A lot of things trading, but it's weak, and these inflation reports are really key right now. So we gotta get a good print here from CPI, otherwise we're toast. Darren Jones says, "Get my son into wrestling." You know what? He's a little tall for it. And that's not to say tall people can't do wrestling, but he's a little tall for it. That was going to be one of the other things, Darren, that we were looking at, but we decided to do the boxing workouts. Again, it's not even for him to do the sport. It's just the workouts. Wrestling is not one I think you can do just for the workouts. Once you wrestle, then you're in, and you are basically going to be wrestling. I think you can just do boxing and just do the workouts. You know what I mean? So, of course, today you come in and you see Lilly down pretty darn big. Of course, there's a JP Morgan Health Conference going on. They were at this conference at which they talked about lagging sales they're seeing for Zepbound and Mounjaro. That's right. Despite what the big boost was, I feel like a year ago coming into this time last year, that was all the rage. Even though they've been around for like 20 years, obviously these weight loss stocks really became real popular over a short time period in 2023 and continued in 2024. But now Lilly's reporting smaller sales, and you can see the stock has been struggling more recently. And today's news was definitely not good, as you would imagine. You could say that the stock is fairly bid. This is one of those where it's probably a little bit more bid over the earnings vol. So you could probably sell some vol in here right now, I would imagine. It seems to be a little bit trading a little bit independent of like the rest of the world. I mean, again, these drug sales have really been a big, either boom or bust recently on the stock. For a while, it didn't seem like that, right? Because Lilly has other drugs, but now its fortunes are starting to seem more and more tied to what's going on with these big drugs these days. So stocks down big, you would imagine it's if they're seeing it, then, you're going to like Novo Nordisk stock is also down. Then they're seeing the same thing. So these stocks, while they started off 2024 fairly hot, they've kind of come back to earth in a meaningful way more recently, and you can expect a little pickup in volatility in stocks that incorporate GLP-1 drugs. Finally, tomorrow, essentially the start of the earnings season, right? You got earnings from, I think it's Citi, from Goldman Sachs, from JP Morgan, and Wells Fargo, along with BK. So basically the bank earnings kick off. You're going to hear net interest income up the wazoo, of course. Always remember, JP Morgan and Goldman, they have a lot of other portions of their business, not only just lending, consumer lending, but they also have, desks where they actually trade, whether it's bonds, et cetera. So they always got multiple sides of their business. I find it fascinating. Forget all the digging into the weeds of what's going on with their financials, et cetera. I find it fascinating that more recently, if you look closely at the market, you've noticed banks, along with healthcare, actually have been bid, despite what I just said about Lilly. But banks and healthcare have been positive in recent sessions, despite what's going on in the market. So while banks have been positive, I wonder if that's been in advance of these earnings and things are going to be good, or if they're going to be bad. So we really, if you're looking for markets to really bounce tomorrow, you need a weaker CPI, right? Weaker than consensus anyway. And you need the banks to come through and really deliver tomorrow. And I feel like we haven't seen Goldman and JP Morgan deliver earnings on the same day in a while. Typically it'll be like JP and Citi and maybe Bank of America, but Goldman and JP Morgan, the two biggest ones, are tomorrow, along with Citi and Wells Fargo. So it's going to be a bang-up day for bank earnings tomorrow, along with CPI, inflation, and all the talk. Get ready for it. It's going to be a big day. As a matter of fact, that's why we're seeing a little bit of bid in SPX options. And, of course, like I said, the VIX 1D is already anticipating some serious movement. Leftovers. In what industries do they work from home the most? Let's move to the next slide. Speaking of that, I know I shouldn't say it, but I'm going to say it anyway because it's news. It's already out there. I mean, JP Morgan mentioned the other day that they're going to make a push for more than 3 days a week at some point going forward. Not surprising. They were the main ones who JP Morgan, Jamie Dimon was the main one talking about this ahead of time. As a matter of fact, you can see at the top of the list, industries with the highest share of new job postings allowing remote and hybrid work in the U.S., finance and insurance, 25.1%. Yeah, I don't know. What do you say to that? You know what? I don't know what my second thing is here, second data point. I got to double check. But finance and insurance is number one with regard to working from home. Next, I guess it's just professional and scientific jobs. When I was in science, I don't really know if this would have been a possible thing. I mean, again, I worked in a lab day in and day out for several years. I don't see how you work from home on that. I'm not conducting experiments at home, but nevertheless. Utilities. I remember one day, me and a buddy were, this was in October of this year, early October, maybe late September. We went golfing. And these two guys, they were reluctant to say, but eventually they said they worked for ComEd. And they were on the golf course. And it was like around 3 p.m., 3:30, 3 to 4 p.m., I remember. It was after the market closed. And I was like, you guys are on the golf course, kind of interesting. So utilities apparently does have a fair amount of people that work from home. Info and IT, of course, you're surprised that this is not higher. And I think at one point in time it was higher, but now it's a little lower on the list. Info and IT, 19.6% of people. Public administration, 18.2% of people on that list are, 18.2% of those people in that industry are working from home, or these jobs are from there. Management, whatever that, management in general. If you're a manager, 14% of them. Higher jobs share postings are for home. Manufacturing, really one of the lower on the list. As a matter of fact, I'm sure this is not the lowest, but most manufacturing jobs, you have to be there, obviously, in a warehouse. And wholesale, similar deal. Warehouse, 12.8%. Those are some of the lowest on the list here. I just find it fascinating. You wonder how much these numbers are going to change over the next couple of years. Let's move to the next slide. So, quick look at the last month of VIX curves. Now, while this, the blue curve is essentially from yesterday. This thing is 1 day backward looking, so we can't get actually today, but you can see today. I mean, right now, January VIX is 1830 bid. February VIX is 1870 bid, and March VIX is 19 bid. So fairly close, not too different than what you see here. It meets the technical definition of contango, but really that curve is pretty flat, that light blue curve that we see at the top there. And you can see this whole vol complex is elevated compared to the last 3 weeks of volatility. So obviously there's been a lot going on this week. Obviously in the past week or so, we have the jobs report. We got these inflation reports that's causing markets to waver around a little bit. And you're seeing a higher vol complex overall compared to 3 weeks ago, 2 weeks ago, a week ago. Let's move to the next slide. I find this chart pretty interesting. Shout out to Charlie Bailello. I actually don't know him. I feel like I should, but he good Twitter follow if you're a Twitter person. Yeah, I said Twitter. I don't care. This is an interesting chart, and it kind of gives you a little bit of backstory here on what's going on with rates, right? So let's just take right now. First Fed rate cut was in September of this year, right? After almost 2 years, over 2 years of almost 2 years of raising rates. We stopped short of that, I think. But we did a 50 basis point cut right away. I thought that was a little drastic, but hey, I'm not working for the Fed. What do I know? So Fed funds rate after that cut was 4.75 to 5, right? Because remember, we were at 5.25 to 5.5. And the 10-year Treasury yield the day before the cut was 3.66%. It was pricing in even more cuts, right? But then 1 month after that, just 1 month after, so October, right before the election and all this other stuff, we saw the 10-year Treasury yield actually trading at 4.08%. So already moved back up over 40 basis points, right? So we're moving many of those cuts. And as you've seen it over the months after, it's gone up each time. And that's kind of what we've been dealing with here, meaning that the bond market doesn't believe that there's going to be more cuts. Obviously, it didn't believe it in October, it didn't believe it in November, and it didn't believe it in December is essentially what you saw there. We typically don't see that, typically not at all. Like when you look back at 2019, we had a cut of 25 basis points. You can see where the Fed funds rate was before that. You can see that it was lower, and you can see it went lower after that, expecting more cuts. 2007, similar deal, even though we had no idea what was coming. Similar deal. Big cut in September. As a matter of fact, I remember that because when the Fed used to come and used to cut rates, markets used to go absolutely flying in 2007 and early 2008. I remember that. We could not miss Fed days, and you still can't now. Fed days are really just that much more meaningful. But you can see in 2007, the 10-year Treasury yield was lower than the Fed funds rate cut before it was cut, and it continued lower for the months after that. 2001 was similar to 2024, as you can see, right? Like Fed funds rate was low, but then it went back up. Policy mistake was kind of thought to be the deal there. And you can see a similar phenomenon in 1995. So did they make a mistake by cutting 50 basis points so fast? Maybe. And does that mean we're going to get any more rate cuts this year? Hard to say. The market doesn't seem to think so, right? And so that's kind of what we're running into here. It's a really big precarious situation. I think it's not do or die, but we really got to be careful, I think, going forward, what markets are going to do and what the Fed is going to do with regard to cutting any rates. Let's move to the next slide. So as a result, you can see skew is a little bit higher, right? You can look at, this is the black line is 3-month 25 delta put skew. And then of course, the red line is 1 month 25 delta put skew. At least 1 month is an equivalent to 3 month. If we get that, that's really nerve-wracking areas. You can see that's what we dealt with in August. Of course, that's what we see in big sell-offs. If those two are equivalent, skew to the downside or 3 months out and 1 month out, that means 1 month is really, really high. So theoretically, 3 months should always be trading over 1 month, obviously. But if 1 month is super high, that's very nerve-wracking areas. I wouldn't be surprised if we get to that if we have a big sell-off from here. And I'm not rooting for that. I'm long Delta, but big sell-offs from here means things are really scary, means markets are really worried. Also could mean, it could mean a big bounce back if we do get the big sell-off. But of course, the big sell-off is not what you want if you're already long Delta. Let's move to the next slide. I mean, unless it happens, fairly quickly and your longs are further out, then you're good to go. Let's move to the next slide. I can't help but notice how much retail is changing before our eyes. This is a chart of the percentage of sales for percentage of total retail sales in the U.S. and the percentage that's made up by Walmart, Amazon, and Costco. And currently they make up 17%. That's up 6% from 10 years ago. And you just look at what's going on across the landscape. Places like Macy's are closing bunches of stores. The small guys are starting to struggle. It's almost like these guys are sort of like the Mag 7. I mean, they're only 3, but as much as people talk about the Mag 7 and how much they incorporate the S&P 500 and Nvidia and Google and Meta and Apple, like all of those guys, and then how much it's taken away from it. There's so much concentration at the top. This could end up heading that way. Walmart, Amazon, and Costco could end up, and of course, if Target gets up in there, I mean, this could end up encompassing a lot. If they get like 25% of total retail sales, that would be kind of crazy in the U.S., wouldn't it? That would be something else. And that's going to cause a lot of other stores to struggle. Maybe it's just a theory. Let's move to the next slide. So, earnings tomorrow, like we said, JP Morgan, Citi, BlackRock, Wells Fargo, Goldman Sachs. As a matter of fact, quick note so you guys know, Goldman Sachs, on our platform, it says January 21st, but looking at a couple of different places, earnings are tomorrow morning as far as I've seen. It says so on Earnings Whisper and a couple of other places as well. So make sure you know that. If you have a position in Goldman, it does have earnings tomorrow. And as a matter of fact, you can see it in the vol. If you're not sure about it, just look at the vol. Vol is 56.3% for the next 3 days. IVX, we'll get to the platform and I'll talk about it in a second. CPI report, of course, is tomorrow. We'll look at the vol surrounding that as well. ECB meeting minutes are on Thursday. They don't call them meeting minutes. They call it something else. I don't know. But, there's always a different name for everything in Europe. And then retail sales are also on Thursday. What I don't also have on here is Friday is the January OPEX, big options expiration because it's January. Again, January is a month that's around a very long time. Even right now, as you can see, we have January 2026 options that are going to have open interest that are going to be around for, the next year. It's going to be a while. So big options expiration coming up on Friday. And the number of S&P 500 stocks above the 50-day moving average, this is very low, 109, 22%. Typically around these levels, you do see a bounce in markets. But again, we're not going to see a bounce in markets until we see a pullback in yields and a pullback in the dollar. Let's move to the platform. All right. Like I said, with Goldman we have Gen 21 in our system. Again, this is something that's from an external feed where we get these earnings dates. I'm not sure why they have this in here, but earnings are tomorrow. And again, if you were unsure, if it was the 21st, you would see a lower IVX for this Jan 17 expiration and a little bit higher one for this Jan 24 expiration. But in this case, you see the 56.3. That lets you know there's earnings tomorrow. Volume doesn't exactly give it away. I won't say that, but earnings, I'm seeing in a couple of different places earnings tomorrow. I have fairly good reason to believe earnings are tomorrow. As a matter of fact, I believe the Taiwanese sources that often speak to Tony Batista have alerted us that earnings are tomorrow in Goldman Sachs. I forgot. I have a little poll here on the YouTube chat. How much buying power are you using right now? God, this is crazy because the question, the answers are greater than 50%, less than 50%, and it is literally 50-50 on the poll. After 115 votes, I've never seen this before. It's literally 50-50. 50% of the people are using greater than 50%, less than 50% of the people are using less than 50%. There's a strong 50% situation going on here. Let's see. So yeah, Goldman's earnings are tomorrow. 565. Let's go with the 570. Let's check out the expected move here. $22. That's probably like 3% and change, right? If my quick math serves me correctly. 22.82 divided by 570. Yeah, 4%. About 4%. And I'm not doing anything in earnings this time around. I got enough exposure and many of the things that I'm interested in. And you know what? A lot of times I do calendar call spreads. I'm kind of biased at the call side. And right now we're just not in a very strong positive market. So it leads me to believe I don't really want to play calendar call spreads right now. You could argue calendar put spread. The reason why I do a lot of calendar call spreads is because on earnings, if we're in a positive, in a bull market essentially, and earnings come out positive, there's usually end up being a possible strong upside reaction to the earnings. And that's why I often do the calendar call spreads. So normally in something like this, I probably would have done, the 595 and 600 maybe. But I just don't feel, it right now. TT research says use more buying power when IV is elevated, right? Correct. Yeah. By the way, I like your name, JC. I'm a JC as well. You definitely use more buying power when the IV is elevated. I wouldn't necessarily call IV that elevated right now. We often have this chart where you sort of can evaluate how much buying power you should be using depending on where VIX is. So VIX currently is 19. You know, I mean, you probably don't want to be more than 20% buying power. Now, again, I'm not saying myself, I'm using greater than 50% buying power right now. I'm not saying the people who are using more than 50% buying power are wrong in no way, shape, or form. I just thought it was interesting to ask the question. I was curious. You know, there's guidelines, there's mechanics, and there's what you choose to do. You know, it just depends. And so it matters. As long as 50% of your capital isn't in 0-day options, I think that's, you know, very risky, right? Because there's a lot going on and it's near term. And I know it gets exciting to trade 0-day stuff and 1-day stuff, but that's too much exposure to have in too close of a near-term time frame. So just be aware of that. JP Morgan having earnings. Let's see what their expected move is. $8.67. Is that also close to 3%? 8.67 divided by 3.5%. They're expected to move. Again, you know, JP Morgan, like I said, JP Morgan and Citi, it really all depends on how their other businesses are going, and they kind of give you an idea of what other banks are dealing with. Consumer lending, how is that going? How's their bond desk doing? I feel like I wonder how their bond desk is doing. I'm curious. I feel like a lot of times their bond desks determine sort of how bond trading is going overall. If bond trading is kind of weak, it just means there's not as much interest. So I'm really curious to hear about how their bond desk is going right now as far as trading, et cetera. Who else? Citi has earnings. $73, 73.5. Let's go 74, whatever. $3.05. Also about 3%. I mean, I feel like the average move expected for banks on earnings is 3 to 4%, essentially. And that seems about right. I mean, banks don't really get crazy. Sometimes they do, but expected moves are usually not that high. They're usually a little. I feel like most things are overpriced. Vol is overpriced majority of the time on S&P 500, maybe 75 to 80% of the time. I think Dr. Data just did a study on this. A lot of times for banks, it seems like it could be underpriced. I don't know. And then SPX, of course, when you're looking at expected moves, first of all, you guys, many of you on the chat have noted a little bit of reversal here on the day, and it's almost par for the course. That's kind of the day that we've had. It's been moving around quite a bit. We started the day up, for those who missed earlier in the session, and then we faded to about where we are right now, and then we went back up, and then we faded to, you know, once again, back to this 58.50 level. So we seem to be dancing in this area in general. This is how you know something big is on the horizon. This VIX 1D has been steadily rising throughout the day. This is one of the higher levels that we've seen in a while. And of course, this thing is always sort of bid ahead of a big moment. Last Thursday, I should say, we didn't really get, there wasn't a Thursday for this to really amp up, you know, because really it incorporates it wasn't really a Thursday to amp up, I would say, just based on the way that the methodology of this thing. But it closed at 1867. Today, right now, it's around 21 and change. And you can see, you know, here in December before the Fed meeting, it was 26 and change, because again, that Fed meeting, it was allowed to sort of get readings throughout the day. This is the last reading before the CPI number, before bank earnings. So things are a little bit bid right now. And SPX itself, when you look at the IVX, 25.6, a 67-point move, so about 1%, probably 1.1% headed into tomorrow. Should be a fascinating day. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. See you.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Forbes called us best online for options trading. With stockbrokers.com, we're number 1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Hey, everybody. Well, another day of the week, and we have got past the PPI now. So let's recap what's happened in the past, 6 hours or so. The market, the equity futures sort of drifted lower little by little all night long. In the moment the PPI came out, everything shot higher because it came in really cold. They were expecting like 0.2, came in at 0.0. And that, I suppose, for a few moments got people excited about more rate cuts and cooler inflation. Of course, they're dismissing the idea of deflation ever taking place, which would be much worse. But the market rallied for like 12 seconds or so. It just blew higher by like 50 points instantly. And that was it for the day. And it spent hours after that just grinding lower. And so all the PPI excitement was laid waste, and we lost and lost and lost. And then just out of the blue, like yesterday, about 3 hours into the regular trading day, the market shot higher for no particular reason. Then it lost it all again. So we're red at the moment a little bit, nothing big. ES is down, not even 1/3%. The NQ's down about 2/3%. The small caps are actually up over 2/3%. So it's a really mixed bag. For me, very pleased to see crude oil finally stopping its rally. It's down about 1 2/3%, and that's giving my energy shorts some breathing room. I've got my charts preloaded and ready to go. Let's catch up, see what's cooking out there. We begin with a spider, and it is real pretty. We've got a nice topping pattern still intact here. We opened quite strong today. It's been selling off. So yeah, it just looks terrific. We probably will close below the midline of this very long channel. But all in all, it's got a really good pattern. And I would not be shocked, even with the ice cold PPI today, to see a sell off tomorrow after the CPI comes out. Whoops, hello. Wrong direction. You'd think I'd know how to do this by now. Let's go back. XLI. This is kind of like the diamonds, a bit of a different flavor there. But we are rallying on this. I noticed that, I don't think these are components, but like American Airlines, Delta Airlines, United Airlines, a lot of strength in airlines lately. So kind of the old school stock showing some strength. XLI showing some strength here. But as I said yesterday, this is not what a bull base really looks like. And in particular, tech stocks continue to be weak. Here's the cubes. And recently, that's to say, ever since August 5th's bottom, we cracked below it, tagged it perfectly here, and have been sloppily slipping away since then. And the election day gap is still beckoning down like so. So that's to me the first kind of level of support that we could anticipate. Semiconductors are also red, although percentage-wise not quite as much. Here's SMH down about 0.4%, roughly within where we were yesterday. We opened strong, but we're kind of back to where we were grinding around yesterday. Now, on the heels of the very chilly PPI, bonds rallied even shorter than ES did. It was just rallied for a few moments. And even with that chilly data, TLT is still managing to be down. And keep in mind, we're in the year 2025 now. This peaked in 2020. So almost a full 5 years ago. That's amazing. We're about to enter our 6th year of this bear market. How many markets can you point to except for emerging markets or China? Can you speak to such a long bear market? But yeah, TLT 158.65, and this includes dividends, all the dividends paid in those many years. So half a decade of dividends. We've still gone from almost 50% drop here. So back on March 9, 2020, when the COVID insanity was nobody really knew what was going to happen next, and bonds, everybody wanted them. And that was the bottom in interest rates, and we've been slipping ever since. You can see this in even more dramatic fashion, of course, with TBT. This is the leveraged inverse of bonds, which has been having a not at all bad time, even over years. Leverage funds usually will gobble you to pieces. This may be the only leverage fund out there at all that even over 5 years not only has made a positive return, but a great positive return, about 200%. And it's been sloppy, but it's still really impressive. And even more dramatic, just the other direction, the ultra bullish version, TMF, lifetime lows today. So this is bonds, quite the sight. And of course, home builders are quite cognizant of what's going on with the interest rates. And although we've rallied strongly today, I would suggest that this might be a level of resistance. So if we blow past it, I would say a much stronger level of resistance for the likes of XHB would be at the bottom of that semicircle I've drawn. Now, of course, I live in California, and in Southern California, which is many hundreds of miles from where I'm standing, the fires have been horrific and incredibly destructive. In the stock world, what's feeling the heat there is Edison International, which I suppose, I just don't know what utility serves that area, but I've got to assume Edison must be it because they're just getting zapped. They've fallen extremely hard the past few days. EIX itself peaked at around 88 about 6 weeks ago, and we're down in the 50s now. So big plunge on that. And this really brings to mind what Hawaii had experienced during its own, what would you call it? Conflagration, I guess. Hope I haven't mangled that too badly. But back in August of 2023, I suppose, that's when in Maui, they had those terrible fires. And you can see that not only did it get really beaten down hard, it hasn't done anything like a recovery since then. So I wouldn't necessarily look at EIX and say, wow, a buying opportunity, because, it's been like 18 months and HE is still really down in the doldrums. For myself, the only thing that's even a little bit like a utility position is Next Era. And I've taken profits on about half of this. It could still rally from here to some degree, but longer term, I definitely going to stick with the half that I still have, because we've got some pretty important zones of resistance. So counter trend rally notwithstanding, I'm just going to stick with it. Some bullish items here and there, just kind of mix things up. This is one I'd never heard of before, kind of stumbled upon today. I would not buy it, but I just wanted to take note of it because it's been a very powerful stock on very big volume increase lately. OPFI, it had a really good looking base here. This is a bit of a trickster because after this base, big rally, a retrace, and it went back into the pattern. It fell really hard. And so that's a bit messy. But since then, it's been making a series of higher highs and higher lows. And over the past couple of years, this is multiple triple % gain on this. I was curious what they did. It's basically small consumer loans at 160% interest rate. So we did a little digging on their site. It's pretty eye-popping stuff. But yeah, like $500 to $4,000 loans at incredibly high interest rate. So for whatever reason, the stock market just thinks that's terrific. So that's been bid up. Some more normal bullish stocks, which actually do look appealing even at these levels. Excelsius, probably mangling that name too. EXEL is the ticker on that, coming out of that nice base. Gilead Sciences, GILD, very big base here, going back for a decade and inching its way out of there. JBL, lifetime high, which for something related to semiconductors to be a lifetime high is pretty impressive. JCI, Johnson Controls, this is also near lifetime high territory, good long-term pattern there. And Skechers, a little bit younger here, SKX, itself up about 0.4%, but emerging out of a nice range-bound zone there. Haven't talked about Tesla in a little bit, but this is still range-bound itself. It had its lifetime high back on the 18th, and we're trapped in these Fibonacci zones right now. And, a lot of this is infused with the president and Elon and the relationship there and the MAGA infighting and all that stuff because, having nothing to do with units sold or new Tesla products or the robotaxi, the fact is that if there was some big falling out and Elon was sort of like shunted aside, you can imagine that would have a deleterious effect on all his businesses, just as in recent months it's had a very positive impact on SpaceX, on Tesla, and so forth. As it is now, we were stronger earlier today, and that's gone. And we're actually down more than 1% now, grinding around in this 400-ish range. I'm still hanging on those AMD June puts, looking good. Those have fallen another 2% or so. And as I've mentioned, my target is something like the low 90s, roundabout there. I don't mess around with Intel, but it's incredible to me that even with all of the massive federal support, it is still grinding around in the teens. This has been just a really dreadful security, and it's literally trading where it was in early 1999. So not a lot of high-tech stocks you can point to the last millennium and say 0% price gains, but Intel's one of them. USO, finally showing some red. We are in the vicinity of what has been, for the past couple of years, just about as high as it gets. And I backed off some energy shorts yesterday, but still into, what have I got? BP and SLB and some other odds and ends. So those are doing pretty good. As we look at XOP, this is still a little bit on the green side. I do not have a position in this. But as I said, what I think is sort of an exemplar of a good-looking energy pattern is BP, which I re-entered early yesterday. And this is down a touch, but it's this big old pattern in pink that I think is kind of the reason that I think it's a very appealing idea. And one last ratio chart to leave with you, just kind of a very long-term theme to keep in mind, is this all-world index divided by gold, kind of hammering home the idea that not only do I think what the future holds is bearish equities, bullish precious metals, but it's going to take time. And if we sort of grind it out at the rate this has been going, this really doesn't break down in a for sure way, like below the pattern until something like September of this year. So I think by autumn, we'll get some real clarity on that. And like I said, this is a slow mover, but well worth watching long term. All right, good. Big CPI numbers tomorrow, which I guess will have even more impact. So I will see you post that. So see you later. Bye-bye.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live right now with the closing bell. Even the S&Ps, well, they were trying to make a little run for the roses earlier today, Sadnov, but they've kind of sold off a little bit here. They're down 14 handles. They're about $15 off their lows. NASDAQ also down by 128. On the other side, you got the Russell up 21 strong all day long, and the Dow up 90. Volatility completely unchanged in this mixed bag. You gotta say it's a mixed bag, Sadnov. If you got two indices, even the S&Ps and NASDAQ lower and Russell and Dow higher. Bonds, Sadnov, they've gotten out of their own way. They're up 2 ticks. 110.29.
It's an explosion.
It's an explosion. It definitely looks like an explosion for sure. Bitcoin just under 97,000. That's near its highs of the day, 97.8 on the Bitcoin futures. Oil down 80 cents. Gold up $9. A little two-sided action there in gold near the higher end of its range. Silver near the higher end of its range, also up 17.5 cents. Sadnov, well, my culprit today, or my bad guy, was Tesla. Tesla with down $6 and change now, with just about, I think I had about a $25, just about a $25 range today. Down $6 is the bad one for me, but there are other.
Yeah, it was up 18 this morning. It squeezed me, the little bastard, and then it came back down at the end of the day. So
selling off into this close so far today, yeah, about as low as it's been, $6.50 for the session this afternoon. Lilly's the big mover to the downside, Sadnov, down $56.
What happened to Lilly today?
I think it's going the way of Moderna. They just don't like their drugs anymore. Meta down 17. Yeah, take that, Zuckerberg. Netflix down 14. Costco down 11. Tesla, which I just mentioned, down 6 and change. And Microsoft down 5 and change. DJT, since everybody keeps to talk about it, down $3.75. On the other side, MSTR with Bitcoin higher, Bitcoin futures higher. MSTR higher at $12. Goldman Sachs, which has earnings today, not on the 21st, but earnings today after the market closes. Crowd up 5, Goldman Sachs up 7. We got a couple of others for earnings. JP Morgan, Citigroup, Wells Fargo.
I have a very small position in Goldman Sachs. It's a wide strangle, and I didn't put it on today. I've had it on. I think I might have adjusted it today a little bit. I have the 510 625.
You got the 510 625.
510 625.
Oh, I have the 530 620. I rolled into that after being short the 570 straddle. Needed a little bit of a rally today. Helped me out by about $7 or so. And now,
what do you have on?
I got the 530 620. I came in with the 570 straddle. Rolled down calls yesterday on the way down. Now I got lucky. The stock came up to my short strike, 570. Made a couple of bucks back. Goldman Sachs was my worst performer of the year up until today. Got a lot of it back today. Now it's just inconsequential for the year.
Yeah, I think my Goldman Sachs position is absolutely nothing. I'm going to probably...
Wish I never saw it, to be honest with you. Last year was a tough one.
I think I'm just going to widen out my strikes and...
Even more than that?
Yeah, whatever. It's nothing. I don't even care. Like, it's like, you know what, Goldman's not one of those stocks that I'm like, wow, I
Sure,
can't.
sure, I get it.
Just a strike or two, just get a little wider. So I'm going home tonight with
I moved it $10 wider.
500 635. That's it. $10 wider.
God.
All right, that's
the old size. I can't stand. I mean, the new size. I can't stand it. Bring back the old size.
All right, what's the other one we have? Oh, JP Morgan. That I have a bigger position on.
Okie dokie. JP Morgan.
220 265. What do you want to do?
You're in the 220?
220 265.
265?
220 265.
I mean, that's a little bit of short delta, but I mean, as you $1.20 option, a $1.70 option. I mean, I think you sit. Expected move for the month is $13, but the expected move today is closer to about 5.5 or 6.
Do you roll your puts up there? Make it delta neutral?
I mean, that's completely up to you. I mean, stock's not too far off of its highs. I mean, it is up $1.50 today. Well, volatility is unchanged. I don't know, Sadaf. I have no feel. Obviously, cold as ice. I thought the bonds were going to rally.
I split the baby.
What's that?
I split the baby. So.
Nah, you rolled it down $5. I mean,
yeah, nothing. It's nothing. I agree. It's nothing. It's a Johnny move.
I mean, that's like, I mean, why bother? I mean,
yeah, I know.
Johnny trade.
Yeah, I know. Like kissing your sister. I got it. All right, what else do we got?
Reports of an Israeli drone strike in Jerusalem. That's what they say are bringing the market down a little bit today.
Bringing the market down an Israeli drone strike?
Yeah,
that's a lame reason for bringing the market down. How about, I mean, the market's down 15 handles because it was up 30. Did the Israeli drone strike make it go up 30 this morning? And then to drop 30 after that, and then back up 25 after that, and then back down? Was that all the Israeli drone strike?
Maybe.
I doubt it.
You got to be, I mean, listen, volatility up 6 cents today, basically unchanged. I think you got to be a little bit leery here.
No, we're going into Jan expiration this week. We're
typically higher.
What?
Typically higher.
Typically higher in the market. We're going into a long 3-day weekend.
Right, off on Monday.
Off of Monday. We've got...
That is off on Friday.
Yeah, I can't believe you're taking expiration Friday off. Like, I mean, I'm just...
If you have one position on for expiration Friday, I will stay here.
Oh, I'll put it on. Right now. I'll put an expiring position on. What should we do here on the close today?
What do I think here? Oh, you got to do your SPX trade. It's been working well for you.
By the way, we do have one good trade on today. I should mention this. We're long Russell up 19.
Yes.
Short S&P is down 17.
Yes.
Finally.
Can't get any better than that.
Every pig has its day. The blind squirrel found a nut.
Do you take it off?
Take it off. I've taken it off all year. Just thinking, it could go.
That's my man. That's what I want to see. That's what I keep going.
This trade could go $100 my way. This week. I wouldn't take it off. $100.
You got Russell ES, right?
I have Russell ES.
Got it.
It didn't matter what you have. Russell
Of course,
NASDAQ
they're
or
both
Russell
the
ES.
same,
Both
yes.
the same. But Russell and NASDAQ would even be better. But no, I have Russell ES. And it's up. It's our way here. It's up, whatever, $36 today, $35.
Yep.
Which
Put
is
up on a screen there for you, Sadnov. Look at that. Look at how beautiful that is for you. That's the way you like to see it.
That's better than it's looked recently. Coming back a little bit.
Yes, we are. Yes, we are.
Yeah, I'm not touching that trade. I'm not. I'm not doing anything with it. I just mentioned it because I don't have very many winners ever. So
Chinese stocks a little bit higher today.
Yeah, we sold a little Baidu, and we took out small profits in Baidu. We adjusted some Baidu and Baba as well. FXI we never traded yesterday, but we did. We did take some small profits, and we had bought some stock in Baidu yesterday morning or something like that, and we sold it today. So China was good to us today. The pairs trade was good to us today, and we did not get killed in bonds, and the euro came back a little bit.
Didn't make anything in bonds. Boy, man, bonds are just stuck.
I know they suck. They're going to be up. They're going to be up a point tomorrow.
Ugh.
Biggest winners today were the SPY. For me, were the SPY and the notes and the bonds and the pairs trades and gold. They crushed premium. Finally, they took it out of gold today. They destroyed premium in GC. Now, here's the crazy thing. So I'm short a strangle in GC, and I'm short a strangle in GLD. Now, they both work today. But GC, I feel like they took more out of than GLD.
It's possible.
But they killed premium and gold in both places. Biggest losers today were not as bad. This morning was ugly in Tesla, but the afternoon we made it all back. So Tesla was not the biggest loser. Biggest loser today. Biggest loser.
Present company excluded.
Present company excluded. You know what? We did not have a biggest loser today.
I didn't think you did. I mean, I trusted myself in the win in Tesla. Otherwise, it would have been my best trade of the day.
Yeah. One of those rare days where you have a couple big winners and no losers. No, I mean, I have losers, but they're all small. They're all small. We're going home. Our deltas are relatively flat. If the S&P's rally 10 handles here, we're going to be totally flat. We're a tiny bit long right here.
Subject to change.
Subject to change.
Saj, you talk about the VIX one day up $5.50, 32% move, percentage change, 22.30. It's a number we haven't seen in a long time. That's what I've been talking about, volatility staying bid.
Yeah. What do you think here for the close if we do a little SPX? We've been kind of hot.
Yeah, I shouldn't
say hot. We've been kind of good with the SPX.
We've been right.
We've been right.
We've been right. And we've guessed right. Right?
Every day, when you say you guessed right, this is like how I play Baccarat. Every single time I bet bank, so every single time I've sold puts. Going into a number tomorrow, do you sell puts or calls here?
I think you got to stick with your putties again, Sosnoff. But I'm a little bit scared. I'd probably do the 5805s, 65.70 cents.
5805s. Oh, what happened to you?
I'm a little bit scared today. I'm allowed to be scared.
Yeah.
Too late now. Now they're 50-55. You lost it.
Yeah. I was about. I was trying to sell the 10 puts at 125.
Why didn't you see you were trying to sell the 20 puts at $4? I mean, they're
completely missed it.
I mean, unbelievable.
Well, they were just there when I logged on. Now they're
logged on. You mean when you looked?
When I looked, they're 85.90 right now. 80.85, 75.80.
Yeah, you're gonna sell these in the hole. Then we're gonna go the other direction. You're gonna have to sell calls. Then you're gonna bop, bada beep, bada boop. You're gonna make 8 cents.
I wanted to sell the 58.35 calls at 75 cents and the puts at 125. So it's not that far off. I wanted to get $2 for the whole thing. It's trading for $1.80 right now. So, but no, I'm going to wait.
My Taiwanese sources want to remind you, Wells Fargo has earnings if you want to sell any of those 5 Delta puts.
Your Taiwanese sources can trade as much Wells Fargo as they want. I am going to. Do you know every time I drive by a Wells Fargo bank, I get shivers?
Why?
I don't know. I just don't. I really, there's something, there's something about Wells Fargo that just makes my body shiver.
Yeah.
I am not going to trade.
I don't think I ever saw a Wells Fargo bank until I went out to California one time.
They have them around. I don't know if they have them in Chicago, but
we used to.
Yeah, I don't remember. But yeah, nah, I don't. I have no relationship at Wells Fargo, and I don't think I'm ever going to. In fact, I probably have a picture on my walls on the wall saying, "No, thank you.
No, thank you.
Do not fly." I'm on the Wells Fargo do not fly list. Yeah, I missed it.
Yeah, the putties were the play. Even the S&Ps rallied about 5
Putties were the play. They went from 125 to 40 cents.
Yep.
I completely missed them. But the calls that I want to sell, wow. The calls I wanted to sell at, now I forgot which call it was.
Yeah, they've had to go up. So.
Yeah, no, they went up a lot. I just can't remember.
What happens when you're directionally wrong?
I can't remember which one it was because I don't know. Now I kind of want to sell the 48.50 call, 48.35 calls, $10 higher than where they're currently trading. With
$10 higher than the present price of SPX.
Yeah. Strike price. But you know what? This is just a game. Don't pay attention. Pay me no never mind, because this is just a stupid game that we play at the end of the day with absolutely no rhyme or reason or anything else to it. Yes, and you should not play this game because it's not for normal people.
No.
Yep. Anyway, any other things that strike?
No, that's it. Citigroup, JP Morgan, Wells Fargo, Goldman Sachs. You did them all.
Yeah. So we have a small Goldman Sachs position on, a small JP Morgan position on. Looking at different stocks that kind of jumped off the screen. If there was a stock that jumped off the screen that we have positions in.
Coin only up $2 and change now. That kind of sold off too, even though Bitcoin hung in there.
Yeah, IBIT is up actually $1.60. UAL up again. That stock's unbelievable. No, I don't really think there's much. Looking at my watch list, no.
UAL has earnings coming in a week or so.
Yeah, look at these S&Ps. They just rallied
5 handles or so. It doesn't.
No, they were down 17 when you and I started talking.
Okay.
And
8 or 9 handles. I apologize. Low.
Yeah, I'm kind of getting the itch here, Pat, to sell the 5840s. I was going to sell
the technology.
I was going to sell the. You're
going to sell the 35s around 120. They're 185 right now.
I was going to sell the puts, and now we rallied so much that I have to sell the calls.
You sold the 5840 calls, correct? 90
for 80 cents. It's a stupid trade.
Mm-hmm.
I should lose money on this just because it'll teach me a lesson. Yeah.
You can make 15 cents real quick if you want to.
What?
Or you can make 15 cents real quick because you want to.
Oh, no. I want to be taught a lesson. Every once in a while I need to get slapped to get taught a lesson. I know that's a stupid trader mentality, but every once in a while. Now my deltas are a little bit short going into tomorrow. So
you're going to pick up a little bit from those calls you just sold too, Tom, which are going to go away.
That's true. That's true. Just let you know. Anyway, we have a crazy rest of the week. Remember, like I said, Friday the bat's out. That's okay because we're gonna have the best show ever. I've got Julia coming in. She's going to be doing.
Julia's doing the day with you?
No.
Oh, good, because nobody.
She's doing a piece.
You couldn't do the whole day with her because you couldn't you wouldn't be able to insult anybody for the whole day until Scott came in at 9:30, and you wouldn't be able to wait that long.
Exactly. And I like Julia. I don't want to insult her.
I know you don't. I wouldn't if I was you.
But we're going to be doing our second piece on quantum computing, which is
part 2.
Part 2. Then we're going to be doing truth or skepticism tomorrow. We're debating on a million different troubling topics that are out there. So if you want to get pissed off or be happy, you can listen to truth or skepticism depending on which direction we go. And look at this little rally here.
How about you talk trading with Dylan again? Let's get back to that.
I hate talking trading with Dylan. He doesn't know anything about trading. He's painful.
You lost. It's over with. What's to talk about?
What's to talk about is that
sit back for the next 4 years and watch the party.
What's to talk about is I got to sell these. I got to sell something against these calls now because
I know because they're $1.60 now. You had a chance to buy them back at like 60 cents, 55 cents.
I know. I messed this up.
You messed it up good. Even the S&P's up $1 now.
I know, you little bastards.
I told you lay in the puts. You don't want to listen.
I know. Now I got to sell calls against my.
No, now you got to sell puts.
I got to sell puts against.
Oh, now you sell puts in a hole. You're out a dime on the puts already.
I got to sell puts against the calls. I got to sell more puts.
Just the good thing is they both are going to have to expire worthless at some point.
What?
I said they both will expire worthless at some point.
Let's hope not.
Yeah, you want them both to expire worthless.
I'm kidding. I'm gonna actually.
Cash settled. You're gonna be good.
Don't worry. I've been playing this game longer than you. Okay. I was playing this game.
I
was playing this game.
In all honesty, no, you have not.
I was playing this game before.
Maybe you want to say you've been doing it better than me, which would be very hard to prove since I had a better day than you on that day when the proof.
No, I've been playing this end of the.
Oh, now you're selling more putties in the hole.
Yeah, that's how you do it. Okay. You sell the puts, and then I didn't like selling the calls at all.
You did. That was all on your own. Nobody over on this side of the aisle said anything about selling calls.
I know. Anyway, what time is it? Can you speed the clock?
You got plenty of time.
This is like when you have 3 timeouts left
minutes.
and a 2-minute warning.
Oh.
You know, they never did a 2-minute warning on the trading floor. They should have.
No, we should do a 2-minute warning. Nobody else has that.
A 2-minute warning?
Yeah.
Yeah, on the software.
Yeah, on the software.
2-minute warning.
Yeah. Why not?
Yeah, I like it.
I know.
2 minutes to Wabner.
Yeah. Hey, just about scratch your trade here. I mean, you're only out about 30 cents now.
Oh, I'm going down with the ship. I'm going down with the ship.
So good.
Batista.
Oh, look at you. You're golden now. You mean the S&P is just down. This is like doing the end of the quarter.
The game. Yeah,
this is the end of the quarter for us.
Yeah.
You got 7 minutes, though. You're going to have a lot.
I know. You got a lot of time. A lot of bad things can happen. A lot of bad things can happen.
Oh, I should have bought those calls back.
Should have.
Oh,
should have, could have, would have.
Butchered. You had plenty of time, too.
All right, what else do we got going on here?
That's it. Watching you now.
No, come on. Earnings season begins tomorrow. So can you scroll down a little bit? So we talked about some of the big banks coming out to kick off this earnings season, but there is much more behind that. And I think that earnings season is just going to be so strange with PPI coming out tomorrow, with the inauguration on Monday and all the new policies and everything else, that I just don't see how earnings comes into play in the next couple of days.
Yeah, I think it takes a backseat, but it's obviously going to affect the stocks. You know that. Each individual stock.
Yeah, sure.
Banks will be interesting with interest rates going a little bit lower and banks on their highs, stocks on their highs.
Yeah. I mean, this is so funny. The way these things move around.
Yeah, those calls are now cheaper than where you.
I know the way this stuff
you sold them.
The way this stuff moves around just cracks me up. It moves all over the place.
Sit now, just sit, boo boo. Don't ruin it. Just sit.
Oh, don't tell me how to trade.
I think I have to. Oh, wrong move sitting. Bad idea. Bad idea.
I had to listen to you. No, I wasn't listening.
Bad idea.
Trust me.
Bad idea.
Trust me. I don't listen to you.
Then just sit. You're
sit,
fine.
boo-boo.
You're fine. Just sit.
I know. Done. In the clearing firm. Took my profits.
Oh, you scratched the whole thing.
No, I didn't scratch the whole thing.
90?
We made some money. I mean, it's like 50
20
cents.
20 cents.
No, 50 cents on the whole thing. I got it right here. Oh, 20 cents. That's it. Sorry about that.
Thank you. Thank you I do math for a living, or did math for a living until, the computers do basically all.
I forgot I had other positions on in here.
Oh, did you? Okay.
Yeah, but they're up 350.
Whatever
now.
you want to say.
It's a good cover.
It was a good cover. It was a crappy sale, but
crappy trade, good cover.
Yes.
Yeah. Because now they're up 350. Now it's kind of like it could be a loser.
Now you feel bad.
No, now I feel good.
Mm-hmm.
Covered, small winner, had some fun, entertained you. That's about it.
I don't know. Did I amuse you?
Yeah.
I mean, you could have sat like I told you. It would have been just fine, but whatever.
Yeah. So we're
personal fortitude for it.
Now we're pretty flat going into the close. I think Tesla was my biggest surprise today, down $6 after being up 18 earlier, and it kind of caught us off guard because
all the Tesla Johnnies were telling me how it was, going to be up 20 on the day,
going up to 800, 900, 10,000.
Yeah.
Again for the 39th time.
Mm-hmm.
And let's see, what else do we got? I don't think there's much else here. I mean, we got a very little bit Johnny-like right here going home today.
Well, who cares what you think? Let's find out these gentlemen. That's right. I've got my overtime boys. Let's bring them in if we can, please. There you are. What's up, Ilya? What's up, Chris? How's it going? All together now. Hey, Chris, let's hear from you. How are you, my friend?
Good. Really odd day today in these markets. We, basically unchanged now. But the bank's still holding up. We briefly touched on this morning on Let Me Explain. The banks have been the most resilient sector thus far during the downturn, and JP Morgan's closing out the day on the highs ahead of earnings. So maybe it's not too expensive to buy JPM at 240, Tom.
Ruh-roh.
I mean, we'll see. I'm basically flat at going home for earnings tonight. We have a wide strangle outside the expected move, like over 2 times the expected move. So I think we're taking a very conservative approach, and it's not. It's kind of a Johnny trade, to be honest with you. So, and a very, very small position in Goldman Sachs. Today was one of those. I mean, it's just a whippy day. I don't know how else to say it. Just a pure whippy day.
Yeah, plenty of volume too on the E-mini S&Ps for sure.
Yeah, I mean, they looked really good a couple times, and they looked really bad a couple times.
Yeah.
I don't think there's much to gain out of this at all today, except the huge move in the bonds. They exploded up 4 or 5 ticks.
Euro's looking pretty good too.
Yeah, the euro had a monster day for a change, but it just made back what it lost like 2 days ago.
Yeah.
I mean, bonds are trading where they were before PPI. I think that's really like the disappointment here for bonds. You're getting the data that you'd want to see, and the market's not holding up. So still feels like there might be more downside.
It's like a coiled rubber band. You'll be
like a coiled rubber band.
What are they?
Now, a coiled rubber band won't do anything. When you let go of the coiled rubber band, it'll be much like you on Saturday. It's just going to fall over. There's nothing going to happen to it. It's not going to spring up like I used it in the sentence, spring. A coiled spring will spring up.
Do you have somebody that's in your ear telling you what to say?
No, but that's the only way I can hear them.
Because it sounds like lip syncing or something.
No, it's the only way I can hear them.
I like when Sosnoff's calling everybody a Johnny.
Yeah, me too.
I like when Sosnoff gets real tough because he's been at it for so long. He lives in a bubble. He's got his own building.
And he's 2,000 miles away from whoever he's talking to.
Whatever it is, and then he just sits there in his cave with his buddies, and he's like,
"Hey, you weren't supposed to tell anybody that I live in a bubble. Okay, that was between you and me."
What a bunch of Johnnies! What a bunch of Johnnies.
Yeah, you were not supposed to tell anybody, Dylan.
But you did.
Hey, look at this. Look at this. I just want to mention, look at this SPX close here. We're lucky.
The S&Ps just rallied to 5 or 6 handles real quick, and we were just under 58.40 a minute ago, down at 38. Now we're 42.
I know. That would have been a very bad trade.
Bad trade.
Bad trade here. Yeah, it looks like we're going to close even higher than that. So we've been messing around, guys, trading the last couple of minutes in the SPX every day, just having some fun with the zeros.
We're undefeated so far. That's something we can't say about a lot of things we do.
They closed 43. Really? It would have been a loser if I didn't cover. So I would consider this a very nothing mixed day, but fun for trading.
Fun for trading if you were on. I was not on today. I was more on.
Dylan, we've got a lot of topics tomorrow. I'm really looking forward to it. That's all I can say.
I think that tomorrow's Truth or Skepticism needs to be titled, "Who's a Johnny?"
That's a good one. That's where I would go. Well, I'm going to let you. I'm going to wait for the cameras.
I was thinking the top speed. Who do you hate the most? Because there's so many different things to talk about. Like, just who do we hate the most going into the next week? But anyway,
you guys should have a podium.
All right, boys.
Give out medals.
Have a great show.
All right, enjoy yourself.
Good luck.
We'll be back in 90 seconds. Overtime next. Peace.
the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade. Make your move.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
If you missed the live show, here's our cherry on top weekly recap.
Put on your yarmulke, here comes Hanukkah, so much Funica. Instead of one day of presents, we get 8 crazy nights.
I gotta tell you, that does look like a Tony Soprano tracksuit. Like you're getting a little.
He's all tracksuited up.
Right?
I was waiting for somebody to say something. And if I had pants on, then I would have the Sopranos tracksuit on, right?
I made burnt ends chili yesterday. Scott's never really had it, so I brought it in.
Today, so he can try it?
Yes, it's not hot, so yeah.
We have a microwave. Is it okay if we microwave it, or will it ruin it?
Whatever you want with it, yes.
It's very rare when you get an outbreak that you get to film the origin of it.
I brought you in chili.
Did you?
Yes.
He did. He brought you in chili. Nobody was allowed to touch it. Now
It's in the
been sitting
refrigerator.
out for hours.
Now, I gotta talk about the chili. Here's my comment about the chili. You were right, not enough spice. They needed to be like, I don't know.
He doesn't chop his up enough.
Saz, get in here, you big stud. It's my bad arm.
Been over your head?
So you're naughty.
I'm nice.
You're naughty.
I gotta read. I'm nice.
It's naughty.
No, nice. Ho, ho, ho. Merry Christmas and happy holidays from Tasty Live.
Get the full scoop by checking out the archives at tastylive.com.
Stocks staged a comeback of sorts. It's Tuesday, January 14th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in an asylum. We'll be here for the next hour as we take you through the futures close. If you're joining us on the platform on tastylive.com, come over to YouTube. Tell us what you're trading today. If you're already in the chat, come over to tastylive.com, see what we're all about. A day that started with a bit of a bang. The PPI report came in softer than anticipated. Stocks, bonds exploded, relatively speaking, after that 8:30 a.m. Eastern print, and then gave up the gains the rest of the day. It was a slow grind to the downside up until about 3:30 p.m. Eastern, and then we decided to turn things around. So as we turn to the charts, we have an S&P 500 that's actually up by 0.3% today, 58.82 and a quarter. The NASDAQ up by 0.15%. It's the Russell 2000 that emerges as the top dog, 1.35% higher here. Perhaps surprisingly, Ilya, because bonds did not respond positively to PPI well at all. Why isn't the market responding in a way that it should when it gets the information it would want to see to move higher?
It sort of did if you look at for about 15 minutes of S&P 500 price action. So the numbers came out, the S&P 500 popped ever so briefly, and that was that. So you can see that big green candle right there. That's the PPI data set, and it ultimately didn't do anything. You have a similar thing in ZB at exactly the same time. You have a similar thing in the dollar, whether you want to look at DXY or the euro. There's that long wick right there. So you see them respond. They just don't ultimately do anything with the information. And I would argue it's because there is a much bigger event risk directly in front. The Fed does not target PPI. And there's not a direct read-through from PPI to CPI necessarily. People are usually tempted to say, oh, well, this is, if you get a rise in PPI, surely that there's pass-through from wholesalers to consumers, but it's not always on the same cadence, and it's not always in full, and sometimes wholesalers opt to eat the price difference. So it's not always a straightforward thing. And, of course, over the next 24 hours, we're going to get CPI, which is a much more Fed-relevant number. And that's really where I think the market looked at and said, yeah, before we do anything, before we show any kind of directional conviction, we want this other number. And your audio is gone.
Sorry, we're waiting to pull up the charts here. Dylan, tomorrow's inflation report, is that really what matters? I couldn't help but notice earlier today. As I set the stage for this, VIX one-day is now closing in at 22.78. I want to provide some context here for this. This is the highest VIX one-day that you've had on a closing basis heading into a CPI report going back to 2023 earlier in the year. It's higher than any one VIX one-day reading that we've seen at any point in 2024. By all accounts, the market's telling us tomorrow's CPI report matters more than any CPI report last year.
Yeah, no. Trump is going to be the thing from here on out. I mean, certainly from now. I mean, relative, unless it's a really wild set of numbers, obviously, the CPI probably matters more than anything else that could matter other than a jobs number, for the reasons that we've talked about ad nauseum about Trump's inflationary nature by virtue of his existence and the sort of preconditioning of the markets in general. But I still think, and I think you kind of hit it on the head when you said, even when there's data that should be as good as we can be in terms of good data, the market still is like, I just don't think that the market is being driven by macroeconomic traditionalism at the moment, insofar as it's way outside of expectation. So unless the CPI is meaningfully way off one way or the other from expectations, I would think that it's actually going to be relatively modest in its relevance. even though it probably should be more relevant considering the more relatively inflationary nature of the world in the first quarter than some people might have anticipated. But the Trump tariffs are coming next week, at least rhetorically. And there's just going to be a whole nother, I think there's a lot of, you're going to get about to have a president. You're about to go from a president who never appears in public and it barely ever speaks in any way, shape, or form to a president who's going to be talking all day, every day for 4 years. And it's certainly that's going to take a moment to get used to. And next week will be the part of a big week for the getting used to it, which I just think is why the market's relatively neutral. I'm encouraged by the strong bond, which I know you got that up here. I think that's the most interesting thing that happened today.
There is a late-day rebound.
Yeah. No, I actually nibbled a little. I bought a little TLT call vertical here. It's very risk defined. It has, frankly, excellent risk reward based on the way this volatility is priced. At this point, it's something on the order of like 3.6 to 1. So very good opportunity. If you're wrong by not that much, hopefully. And if you're right, you can get asymmetric opportunity. So I picked up a little bit today, essentially thinking that CPI is not going to tell us anything that's going to get the Fed pulled into an even more hawkish direction, considering how much we've already been pulled. Markets might have a harder time at this point, concluding that there's going to be no cuts at all. I can see them sort of coming around to the idea that there's one, but none is probably tough sledding without much more evidence from the Fed itself. And so I think at this stage, maybe there's opportunity there. I've obviously been long the euro as well, much too early, but I'm sniffing around adding into that position because that actually gives me a little bit more confidence today on the bonds side as well. It looks like the whole kind of long dollar, long yields thing may be running out of juice.
Ilya, I couldn't help but notice this market has really flattened out those Fed cut odds. The SR3 Z5 contract is currently trading in at 95.915. The SR3 Z6 contract is trading at 95.80. Right? You're talking about potential for what? One cut now effectively priced in through the end of not just this year, next year. That's saying that we're going to get, a perfect world where we've now seen the neutral rate move up, that the Fed is hamstrung perhaps by fiscal policy. I mean, what is the market telling us here that the rest of us are missing? One cut through the next 24 months is a light load that screams inflation is back.
I mean, Fed funds futures are a little bit heavier, and that might be the difference between 1 month Fed funds versus 3 month SOFR. There might be just a little bit of a underlying difference there. But if you look at 1 month Fed funds, you're looking at it looks like 29 basis points for this year, 19 basis points for next year. So you got to cut a piece if you look at those readings. But in any sort of way you slice it, any which instrument you want to use, you're looking at a situation where there's clearly a massive readjustment from what not only the Fed told us in September, obviously they've backed off that themselves, but even what the Fed told us in December. I mean, we can see from this SR3Z6 that you have on the screen here, it was moving meaningfully into a more hawkish direction going into the Fed announcement. But of course, there's the start of 2025 there. It's moved more even since, with that sharp move, of course, on Friday, marked by NFP. So I think as we look at what's going on there, I mean, clearly the market is of a mind that hot ISM, hot NFP, hot consumer confidence numbers, all of that means the Fed's hands are tied.
Fed's hands are tied. Dylan, I think you're right about this market being
Come on.
Fixated on Trump right now.
Right. You got a president madman come crazy pants. President Crazy Pants is about to take the microphone. Like, you got to calm down and wait to see what happens. I mean, unless there's some real outliers. I guess the interesting thing, just from a trading perspective, is the degree to which the bond is finally put in a bottom, and, as to Ilya's point, signaling that. That's a real thing. And the degree to which the tariffs are a real thing.
Whether or not they're going to materialize right away, my own headcanon is that we're probably going to see tariffs within the first week. I was looking to see if there was betting markets on this, and of course there are. Will Trump oppose tariffs in the first 48 hours? Basically a 1 in 3 shot, a little bit better than that for Mexico and China, just under that for Canada right now. I think that's what we're all waiting on, right? Like, let's see, is this all just for negotiating ploy, or is he really, a president from the late 19th century? And the bond market seems fixated on that. So I'm having trouble crossing this bridge, right? We have a VIX 1 day that's telling us this is one of the more important CPI reports that we've seen in recent years. But of course, we have a market today that gets a PPI release that you would think it would respond a little bit more positively to. And it does absolutely nothing with it and gives up the goose. Maybe it's because it's coming before CPI that it doesn't have much staying power, and I certainly understand that. But we've also seen PPI reports push the market around much more ahead of CPI over the past 12 months. So certainly a fascinating day from the price action standpoint. Ilya, has anything changed here technically for those traders who are looking for any sort of clarity on whether or not this is a top or a continuation pattern?
I think if you're bearish, you liked what you saw today because there was an attempt to retest the underside of the range that we broke on Friday, and there was a very clear-cut rejection there. But I don't think you can really make hay of it because you still have the event risk. So the structure here, at the very least, told you the market is not prepared to make a run higher on the basis of nothing other than it's had a pullback. So if you were of the mindset that the Fed doesn't matter and rates don't matter and the market does what it does and people are foolish to even pay attention to these things and everything is already pre-decided, the market dictates to the Fed what to do, blah, blah, blah. If you thought that, well, then today's price action told you that you're wrong. Because if that was true, and if you should buy the dip every time, well, nothing upset the markets in a pointed fashion today. Nothing was different, and could they manage? No.
Yeah, we're not. It doesn't feel like we're quite out of the woods just yet. The Russell's late day turnaround should be watched. I'm trying to figure out if this is a false breakdown now out of a potential bear flag. I know that you recently squared out your position, Ilya. You were short up until about yesterday, and in hindsight, obviously, a good decision. That sharp bounce off that 200-day moving average, we're now about 2.5% above it. So it has been a fairly sharp turn here. I'm looking to see if we can break the relative downtrend that has guided price action for 2025 right now, because if we continue to push higher through here, quite frankly, if tomorrow we find ourselves trading through the highs of today after CPI, you start to see this bear flag as having been broken. And
it's going to start to look very different.
Yeah, right. All of a sudden, this bearish engulfing bar that you had around the non-farm payrolls report last week on that 4-hour time frame, that high is 2252.80. You're on the other side of now. It looks like
that's what you got to clear for me.
Yeah, you got to
get back through those former lows. You got to essentially get back into what would have been the middle of the flag, give or take, and then you've basically undone it, and then it's a whole other thing.
It's a whole other thing, though, but it doesn't necessarily mean that this is the bottom for the near-term congestion. It probably just means that we're due for the typical type of price action that defines Q1s in recent years, which is just for a lot of chop up until the middle of March. And if you were to get a market that breaks through 2250 here, Dylan, you open up the door towards 2300, 2320, and it still doesn't mean that you feel confident for anything much more than that in the short term. Same thing for the S&P. I mean, it would be a bounce back perhaps into the 6,000 neighborhood, but does that mean that we're outside of the downtrend? Does that mean we're outside of this potential head and shoulders pattern? The answer is no. So this week feels like a really frustrating week for a lot. I have not placed a single trade in any equities thus far this year.
Why not buy the bond? I guess my only question, I understand on the equity side, but Becky, why not buy a bond for a friend?
Am I buying it as a trade or an investment?
A trade.
No, I couldn't, I couldn't do that right now.
Couldn't do it.
I wish I could help you, sir, but alas, my hands are tied.
Yeah. No, look, someone pointed this out in the chat a while back. Like, they were quipping about that I had a pretty good year, and someone said back to them, like, well, he's a momentum trader. It's a momentum market, right? Like, I buy when things are going up and I try to sell when things are going down. So from that perspective, is this a chart that I would want to buy on a momentum basis? That being like the glove that fits me. And the answer is no. Like the defining characteristic of this market over the past few weeks, if I like to overlay this EMA envelope for people at home, we haven't seen a close on the other side of the 8 EMA. What amount of time is that? Doesn't really matter. It just goes up the Fibonacci scale. But we haven't seen a close on the other side of that 8 EMA since December 9th. And every time we've run up into it on an intraday basis, we've sold off. So the momentum is clearly very negative right now. I get the volatility being high, 50 IVR is very alluring, but this is the proverbial catch the falling knife. I suppose if you wanted to look at the continuous contract and go to the weekly chart and look at those swing lows from last April, we have plunged through them. So this is kind of a no man's land for me. We could easily wash out back down to 108 as we are to recover back to 113. So probabilistically, I see no reason to get long here right now. But if it was an investment, if you said, hey, Chris, are you willing to hold this, TLT for an extended period of time, the next 6 months or a year, how could you not look at 5% yields on the 30 and find that to be something interesting to lock in? So time horizon really matters.
Go to a 4-hour chart here, because I think what you start to see when you get into the immediate structure of the past, let's call it couple of days, what you're starting to see is today you get a long wick on the second to last candle before the close. It fails to make a new low. You see positive divergence on the oscillators, and then the last 4-hour candle of the day ends up erasing the last red one. And so you get a narrowly higher high. So, and a closing high. So when you look at that, it's not a lot to go on. It's a pure momentum kind of a thing. You tried to break the bottom of the range and then failed, and then reversed back into the range with momentum fading. So that's the kind of thing that I look at and go, it might be wrong, but it's the kind of thing that gets you risk reward that's attractive if you can structure the pricing. And that's why, rather than, let's say, buying a call, I went the vertical route. I wanted to make sure I keep my risk very contained so that this thing does not run away on me, because it's a flimsy signal, but it's the kind of thing you'd look for in the very, very early innings of a turn.
I would rather wait for 112 in ZB than buy down here at 111, just for the sake of seeing some downtrend break. But, it feels like so much of the conversation around bonds is really just a conversation about oil. And I know we fixated on it and whether or not it's topping up near 78 or 80, depending upon what time frame or rather what expiry you're looking at. The H5 has highs closer to 79. If you go back to G5, it's going to be closer to 80. I was looking at the correlations today between bonds and oil prices in recent weeks, I couldn't help but notice something here. If we look at the correlation between crude and bonds right now, the rolling 1 week correlation for coming into today is negative 0.98. At the start of the year, it was plus zero. Excuse me, we closed last year at negative 0.01. If we were to look at this on a 1 month basis right now, and I need to just change my input here just a second. If we were looking at this on a 1 month basis, the correlation between CL and ZB is now negative 0.79. At the start of the year, we entered 2025 at negative 0.66. So bonds and oil have really, really tightened up right now. And as you can imagine, the correlations between oil and stocks and then bonds and stocks are in the same neighborhood. The market seems to be responding to higher oil prices. So it feels like if I want to bet on bonds going up, I'm basically betting on oil cooling off here. So are we going to take that stab, Dylan, fabled oil trader, Tasty Live?
Come on. First of all, the nice thing about the bond is that the bond is a very clean, very liquid price on inflation and growth expectations, both of which are very dynamic right now, and both of which have a lot of new information that will affect those expectations over the next few weeks, which is nice. Oil, similar in its liquidity and accessibility to this new information, but is compounded by its commodity currency inflation offset and geopolitical, canary in the coal mine that makes the oil price an act of madness. I mean, if anything, the oil price is either predicting a much stronger 25 than anything else. I suppose the bond. So the bond and oil basically saying inflation and growth are hot. Inflation's too hot and growth is stronger than you think. I mean, because the other thing to do, instead of trying to trade against oil or with the bond, is to accept that the bond and oil are correctly telling you that inflation risk and growth probabilities are both higher than you might think.
Ilya, assuming we want to get long, you say that you're structuring it through long call spreads. Are they in the money, out of the money? They're at the money. Like what are you doing here? Are you
at the money? A little bit better. I think so. I'm doing this through TLT first of all, just to keep size contained and make sure that my risk management is sensible. Certainly not doing full ZB contracts. And looking at the way I've structured it in TLT, I have a call vertical from 85. So in the money, the market was at 85, I think 11 when I put this in. So I paid a little bit to start in the money, but only a bit. And the risk reward on this ends up being something like 3.6, 3.7 to 1 with an outward target at 94. That's the top of the spread. So we'll see. 94 on TLT, if we want to talk about this in ZB terms, would amount to basically getting back to the early December high. So the swing top of the last kind of leg lower back to like December 6th on TLT, that would be just around the 120 figure. So that's a pretty sizable move. If you want it to be modest and instead of aiming for something like 94, aim for 90. So the underside. So not assume that you're going to take out former support, now resistance around there. The trade can be cheaper still. Now, of course, that's sort of theoretical at this point because you're going to get CPI out before you can do anything in TLT now because, of course, U.S. equities are closed. So if you're going to do anything with this now, you have to go to the futures market. You have to look at ostensibly, if you want it to be small, you'd have to look at the 10-year rate future. That would be the sort of the micro exposure there. You'd have to look at that. and basically short that with a put vertical. The liquidity there is going to be a bit
teeny tiny.
A bit challenging, yeah. So if you want to lay this on overnight, you might have to stay up into the London Open when some more liquidity comes in and hope for the best. The other way that you could express this same idea, if you didn't want to do that and do it through the bonds, would be just to buy some euros.
Ew.
Usually have sales specials where they're about 6.
Why would we ever want to do something like that?
Well, take a look at what 6E did today. And I think what you find there is basically the other side of this story. So here, much like what
I was 1% move the other way.
Basically.
Yeah, so
which is not nothing for currency.
No, in fact, quite a lot for the most liquid of the currency pairs. Euro USD exchange rate is the most liquid financial instrument in the known universe, as far as I can make out.
Can I share something here? FX exploded last year. I was looking through this report. CLARusFT.com. They do he runs a pretty good blog on various machinations in the currency market. I might as well just pull this up here. This particular blog by Chris Barnes was about the growth of cross-currency swaps in the market. But in terms of 2024 for FX, generally speaking, first quarter, second quarter, third quarter, each quarter saw over $1.6 trillion in trading volume. The fourth quarter nearly saw $2 trillion in trading volume. We peaked more than $7 trillion in FX volume last year. Eurodollar saw an 18% increase in growth overall, a 23% rise in trade counts year on year. Yen dollar saw a 43% increase in volume, which I don't think surprises anyone given what happened mid-year. Aussie dollar, 17% increase in volume. The only thing that did not see an increase in volume was the British pound, which is becoming a backwater currency. But FX markets right now, these are super deep and super liquid. So the fact that you're getting a 1% move, that's not a small amount of money that's making its way through the system, is my point.
Yeah. I mean, and by the way, when we're talking about the volumes coming through FX markets, I mean, we're talking about what, 5 trillion plus daily turnover kind of market. I don't remember the last time I looked at the aggregate numbers in the BIS report. I usually just look at the share of transactions bit, where I look at how much each currency comprises of overall turnover. But I think we're looking at north of 5 trillion in turnover, and that's the 2022 survey from BIS. They're going to update it this year. They do it every 3 years. So
yeah, their triennial survey.
Yeah, so 2025 is an update year. We'll see how the totals stack up. But the kind of volume transacted in these markets makes all of the world's equities put together look like a drop in the ocean. So there's tremendous volume here. Liquidity on liquidity on liquidity. And of course there is. We're talking about cash.
Yeah, as of 2022, in terms of global turnover, obviously the U.S. dollar is in most transactions, but then the euro is up there as well.
De-dollarization, folks. 88.5% of global monetary transactions are settled in dollars. We're de-dollarizing. What a bunch of nonsense.
We're really de-euroizing. The share of euro transactions has gone down and probably getting worse post-Russia sanctions. But Dylan, what's the view from Europe right now as our resident Italian here?
I think it's sort of optimistic for growth, which they will not find, meaning that there's sort of a hope that the nadir is in France and Germany, and that there'll be growth coming there after years of misery, which is unlikely. And then the bizarreness of having Italy be the strongest and most organized economy in Europe is alarming. And so I think that the basic hope here is that there'll be actual growth in the United States. I think that there's a greater sense of vulnerability to the United States than there has ever been because of the absence of domestic growth in Europe, the broken relationships east with Russia, regardless of what deal gets made, Brexit, all these things make them more U.S. dependent at a time when U.S. rhetoric is not necessarily Euro allied.
It hasn't been friendly. European equities actually have a pretty good day today, up by 0.97%. Ilya, we have UK inflation coming out tomorrow morning as well. It feels like the pound is on an island here. Their stock indexes were down last year. The FTSE had a pretty crummy year. The pound does recover today, but I suppose not nearly as much as some of the other currencies. The euro's up by 0.97%. The Aussie's up by 0.6%. This kind of feels like the sick man of Europe right now.
Yeah.
Do we fade any rallies?
You've hit the nail on the head. The problem in the UK is the economy is slowing, which should, one would think, unravel the parts of inflation that are still sticky, because mainly the things holding up prices at this point are discretionary, hospitality mainly, and recreation. And when you look at those things, you'd think, oh, well, the economy is slowing and has been slowing for several months straight. If you look at the PMI numbers, surely this needs to be a positive thing, because it will unravel some of this discretionary spending dependent inflation, and the Bank of England can more readily cut rates to boost the economy. Well, no such luck. The inflation isn't unraveling, even as the economy is slowing, arguably for the same reasons that service sector inflation is not unraveling in the US, because it is baked into labor markets. And that is not an easy adjustment to force through. So when you have a situation here now where this might sort of speak to more structural issues downwind for a lot of economies. You've hired a bunch of people during the COVID years. You paid them the please, please, please come back to work, though it's early in the reopening sort of wage premium. But now there's shortages of labor because of demographics, and you can only afford to adjust that so much. You can't exactly go on a giant economy-wide layoff and rehire spree in every industry. Well, obviously, we've seen some of that in finance. We've seen some of that in tech, in fact, in tech with gusto. But it looks like some of these more human-facing industries just cannot afford to do those things. And so we've seen inflation stuck there, not just in the UK, but elsewhere. And so the UK has had this weird issue. At least in the US, we have strong growth to counter. And so it makes sense that the central bank is kind of backing off a little bit its more dovish tendencies. In the UK, you need rate cuts, but you don't have the inflation dynamics to get them. And so you have this ugly situation where the economy needs help and the central bank can't give it. Really, what we're looking for is for these inflation numbers to finally roll over. Otherwise, why would capital, and this goes to what you said about UK stocks last year, why would capital be in pound-denominated assets when demand is flagging in that space and the central bank has its hands tied to try to improve that situation in earnest?
Yeah, I mean, it feels like we really need to see something change, break, right? I mean, Dylan, I feel like you talk about, the Mad King, but it was Trump in January 17 who stopped the dollar's rally when the Trump trade was reinflating everything. But for his comments back then, the dollar probably keeps going. He wants to have his cake and eat it too. He wants to have a world where tariffs are high, but the dollar's weaker. So I think for me, and I look at the broader dollar index and I look at what's happening with the currencies right now, I'm kind of waiting for that shoe to drop. Is that just the risk for next week?
Which shoe? The shoe where Trump talks the dollar down?
Absolutely. I feel like we need that as a catalyst in the short term before we can finally get on board with the dollar really rolling over Because tariffs themselves are dollar positive, are they not, Ilya?
Yeah, I mean, when you look at what's happening right here, the Fed is expected to what, maybe cut once this year? Well, let's leave next year out of it. Who knows what they're going to do next year? They're still trying to figure out what they're going to do in the next quarter. So let's say this year they cut once. Bank of England is expected to cut at least twice, looking at their benchmark interest rate futures, 1 month SONIA contracts. So there should be a dollar yield advantage here. But what we've seen is that UK yields have actually surged because, of course, when US yields surge, yields everywhere surge. We just saw how ubiquitous the dollar is. So when you increase the cost of borrowing dollars, you increase the cost of borrowing, full stop, in any currency, everywhere. And so when you look at what's been going on, it's sort of the worst of all possible worlds. The pound has been falling as local yields have been rallying because they've been rallying for reasons that have nothing to do with the UK. So what you really need, ostensibly, is for the dollar to give if the pound is going to do anything. And I'm thinking about being long the pound. I'm not there yet. But if the dollar is topping, that will be a move onto itself. It will also, in a kind of strange way, bail the Bank of England out.
Why do you say that?
If U.S. yields start to come off, then the Bank of England can cut without fighting the Fed. And that could be helpful as a view onto not the pound, but UK stocks.
I mean, what if I
will give a bit of relief there?
Is there basically a trade just to be short the UK in 2025
for the rest of time?
Yeah, like just like it's like they've like the cake is baked, they stick the fork in it. Like now, it's just it's gonna fade away.
You can buy an EWU put with a super long expiry.
And is that better than short pound, or are you better off short the pound?
I don't think you're better off short the pound at all, because I think you're in a situation here where the pound is more reflective of what the dollar is doing in relative terms than it is of the pound. I don't think the pound is falling because of UK situations. I think everything against the dollar has been falling since mid-September.
How are UK gilt yields at their highest level since 1998, unless it's a UK situation as well?
But that's the whole thing, is you're looking at those yields everywhere. Everywhere has seen a rise in yields except for China, which doesn't have a free market for these things.
Okay, so what if the drop in Chinese yields and the rise in Western yields is the same story?
I doubt it. But okay.
What if China, instead of recirculating our trade deficits back into U.S. government bonds, is taking the money and circulating it domestically because of the deflation that they're facing?
They can't. The whole process of the recycling of dollars is they get paid dollars, then they, without converting them back into local currency, recycle them into holdings of government bonds. It's a dollar recycling scheme. If you're going to repatriate the dollars back to China, then you're going to have to sell dollars. And that's not what's going on. The dollar has been rallying.
Yes, but if they've previously announced that they're no longer net buyers of U.S. Treasuries. They did that like a decade ago. So if they're no longer net buyers of U.S. Treasuries and all they're doing is basically recycling money back into Treasuries, and our trade with them is dropping, don't they have less of a reason to buy Treasuries?
I mean, one would think there's less volume there necessarily if the trade with them is falling. And to your point, they're no longer the largest trading partner for the U.S. Mexico is. And that's as of 2022. So sure, there is that, but how much of a driver is that? I mean, this is a decades-old story, but it's a multi-year shift in dynamics. I mean, really, they've lost a ton of market share since COVID. So for a few years now, that has been that. But we clearly see that the bonds are responding to the Fed. I mean, look at what happened in 2022. So it's not exactly lining up here. Now, maybe you could make the argument that it's reaching critical mass, but foreign ownership of U.S. treasuries is relatively small compared to domestic ownership. So to say that China is the biggest holder, the biggest external holder of U.S. debt, that's one thing. But compare external holdings to domestic holdings, and domestic holdings are much, 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 much larger. So can the external space really impact what treasuries do unless, let's say, China decides they're going to sell their entire book at the same time, which they're not going to do because that would be suicide for them? No, not really. Not in sort of big long-term ways, anyway.
Mm-hmm. China's debt to GDP ratio is about 90% right now. By 2027, it's forecast to exceed 100%. You know, the economy is slowing, it's maturing, the demographics are terrible. I'm trying to figure out why treasuries aren't behaving the way that a lot of historical models would suggest they would. Right. And there's clearly a gap here. I don't know the answer. I'm trying to figure it out. I just don't believe
that their bond market can be relied on to have the kind of liquid and two-way dynamics that our bond market would be expected to have. I think Chinese stock markets are thin, and the participation in them is, let us say, prone to hurting. And when you look at their bond market, it's not much better. So I just don't look at Chinese bonds as something that I would expect to have normal dynamics. Mm-hmm. I would compare them, but normal, quote unquote normal, right? Because U.S. bond dynamics are not normal. They're reflective of a country with the global reserve currency, with the global, more importantly, transactional currency. Forget reserves. The most important thing for the dollar isn't that central banks hold it in reserve. It's that it is the vehicle for the lion's share of transactional commerce.
Well, you have 4 out of 5 transactions for any good or service on Earth.
Right. And it's gotten to a point where if I am non-U.S. country A transacting with non-U.S. country B, it is cheaper for me to trade my currency for dollars and dollars for the currency of country B than just to go from A to B.
Well, then why not just stay short the euro? Why not give it up and let the euro go break parity? Euro's going to 90 cents.
Because I don't think the timing is right. I think the upswell in the dollar has been about the Fed looking like they would be more reluctant to cut than they themselves said in September. And that was the move in yields. That was the move in bonds. That was the move in the dollar. And I think that story is out of juice. Because if the Fed is telling you we're going to cut 50 basis points this year and next, and the market is sitting at half that, I think just from a tactical perspective, the only way to get more hawkish is to say no cuts. And everything we've heard from the Fed suggests that is not what they want to do.
You know what's interesting? When we look at the 10-year yield, the day that it breaks out of the downtrend that it's in, going back to the October 23 highs or the lows in ZNZB, is the day of the December Fed meeting. What day do stocks break down and they haven't been able to climb back to those levels? The FOMC meeting in December, right? Sure. I mean, this is the story right now. The equity market is buckling under the weight of higher yields. I don't know if it's higher for longer to the degree that the market's. First off, I fundamentally and philosophically disagree with Tom's premise that there's like an efficient market hypothesis that's valid. Markets are priced efficiently insofar as you're going to get tight bid-ask spreads. But we look at history and we see that the market's projection for where the Fed funds rate will be 12 months in the future at any given point in time is almost uniformly always wrong.
Well, and they strive toward efficiency, much like the world strives toward freer trade sometimes and global peace sometimes. They just never get there.
But isn't efficiency ultimately about the value of the value and understanding of present information? I mean, of course, future pricing is going to become impossible.
Yeah. So I think to Chris's point, right? People say, well, to what extent do markets discount everything? And then they talk themselves into a thing where if the market is at level X, then obviously everything is discounted. You no longer have to think about anything at all. And obviously that to me is
not
completely wrong.
Not true.
Yeah, but like as someone who uses technical analysis, I literally can't believe in the efficient market hypothesis.
In its absolute form. I mean, you would agree that markets discount things.
No, but not even weak form. Weak form efficient market hypothesis says that public information is useful, private information is useful, fundamental analysis is useful, but technical analysis is useless. So like Chris, right off the bat, as someone who looks to charts, I just don't believe in it. But the point is that you see like the breakout begin back in December, and ever since then, stocks have been struggling. I don't know if it's that we need lower rates, but the idea that we now have to entertain a possible world where interest rates could go back up means that there's a lot of uncertainty moving forward. So Dylan, it's Tuesday. It's not quite Wednesday. It's not time for truth or skepticism. We only have a few minutes left. But what grinds your gears right now as you think about this market as we wind into the next few weeks? We're making our way through the middle half of January here, so the first half of the first month of the year is almost over. Mm-hmm. What's really grinding your gears right now?
So it's interesting you asked me that question.
Please don't say me.
Can I text you a picture?
Yes.
There you go. All right, so I just texted this thing to you. Do you get that?
Yes.
Can you publish that for the people to see?
I can if you give me a minute, if you start talking.
Okay. So the thing that really grinds my gears, as they say, Chris, is that there's a portrayal, a self-interested portrayal, but the motivations are less relevant. There's a portrayal of the incoming president of having achieved that position by virtue of a mandate of sorts, a resounding victory, a glorious validation of all that the new president represents. And I believe that I know for a fact that that's a massive misrepresentation of reality that's being used to manipulate a set of policies that have no place pretending to have a mandate. And the reason I bring it up is this chart here, which breaks this is a chart of all the eligible voters. Those who vote Democrat, those who vote Independent, those who vote Republican, and those who refuse to vote. And the refuse to vote people typically are marginalized or written off as, oh, well, if you don't participate, you can't comment, or, you don't really care because it doesn't affect you. You're insulated from everything. But actually, the no voters will be the equivalent in a parliamentary system, to go back to England for a moment, of a no confidence vote, which is to say there is nothing that you are presenting here that I can possibly support. And since there is not a no confidence line in the American political system, the only no confidence vote I can express is to not vote. And so this chart becomes interesting because it shows all of the eligible voters in three buckets. And if the no confidence voters had their votes counted, they would have won the majority, would have won all the electoral votes in all the yellow states in this chart.
Which is, by the way, been mostly the norm. Joe Biden in 2020 was the first president to have more votes than didn't vote since, I believe, Clinton in 1992, if I recall correctly. So this goes back to
1896 and the alienation of William Jennings Bryan, but that's for another day. At this point, we're dealing with a no confidence vote and an incoming president, and this would have been true either way, by the way, where more or less 2 out of 3 and maybe 3 out of 4, but I'll be conservative and say 2 out of 3 eligible voters do not want and do not support the incoming president. And so when people say America chose this person, or can you believe the majority of Americans chose this person, that's a false statement. And it's much better to ask yourself, what has happened to the American political system that the two choices that are offered for the most powerful position in the land are these choices? Why are we not getting better choices, and why do we not have a system that has better leadership emerging from it? I know, believe me, I've written books criticizing it, but the question is, what can we do to improve the offering of talent to lead this country? And this is Exhibit A. So the thing that grinds my gears is people saying that everybody wanted either one of these politicians, well, let alone even including the winner, because I believe it creates a deliberately false momentum intended to steamroll policies that are popular with a minority, not the majority of the country.
I tend to think that this is where I go deep into my non-markets, pure philosophical sort of bag. I tend to think what this represents, because this is the kind of thing that happens currently everywhere around the major economies, save for maybe Italy.
And Australia, where it's against the law not to vote.
Sure, but I'm saying the level of dissatisfaction with the current political establishment of both left and right is widespread.
Is bigger than the United States. The no confidence vote is is
everywhere a thing.
Well, look at Keir Starmer in the UK.
For me, this is a demographic thing.
Yeah.
We are watching baby boomers finally relinquish power, and the generation behind them, the Gen X generation, is very small.
And it's getting skipped over to millennials.
We're finally starting to see that sort of elder millennials, my age and around, are starting to get into positions. And when you start to think about people like, if you want to look on the
J.D. Vance,
Adam Kinzinger,
never had a Gen X
Pete
president
Buttigieg,
or vice president,
these
but we'll
kinds
have a
of
millennial
people.
vice president.
So
you don't be so happy about that, Vecchio. There's no reason. That's nothing smiley there.
It's as someone who is deep in the meme trench warfare against the other generations, against the Skibbity Sigma folks below me and the malfeasant Gen Xers above me.
You know who we get along with? The Gen Xers is
the silent generation.
We get along with Gen Z.
That's not good.
That's a dire prediction.
X and Z's, they get to hang out. Nobody knows it. That's a secret hookup right there.
Yeah, well, that's part of the problem in America right now. People aren't doing that, Dylan. Right? Like, go outside and touch. People need to go outside and touch grass and talk to members of the opposite sex in the bar.
Listen, I'm saying the primary vote is no confidence.
Well, we're gonna have to talk about that another time, because time's out of time.
That's what grinds my gears.
We'll be back tomorrow, same time, same place, here on Tasty Live, always after last call, 4 p.m. Eastern, 3 Central. So for Dylan Radigan and Ilya Spivak, I've been Chris Vecchio. Stick around, though. After a brief break, Tasty Live at Night continues. Ilya's back with Macro Money, and it's Tuesday now, which means he's also on with Victor Jones for The Price of Truth. So Indeed. Ilya at Night coming up here on Tasty Live.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
Oh, and then I vociferously stood up for you.
Of course you did. You stood up because that was the smart move.
I appreciate you. You're
yeah.
Saturday morning, I look at my phone and it says Venmo $20.
I almost had to pay him $40 because there was a little stipulation. If I didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was
Like a
beautiful.
girl
It was
on
beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, closed everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. Let's say we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
jumped in my pool, looked back at my house, and I said, "Why would I ever leave? Why?
He was going to go fishing, catch
He's hurt on this one.
Muskies. Some bass.
Very quiet. I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. You know, when we got there, it was...
Now the RV on rvtrader.com.
No.
Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial.
973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then, you know what? Money goes to money. You did it. Good job out of you. Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay, I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it. Bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
It's that time again. Major U.S. economic data hangs in front of markets, and they are reluctant to move until it is out of their way. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live, and we are going to break down what will be probably the biggest piece of fundamental or economic event risk for financial markets this week, the incoming U.S. CPI inflation report. We got a little bit of a preview today with the wholesale inflation number, and that had an interesting response that we'll take a look at here. And then, of course, break down what's on the menu for CPI and what it might do to influence these markets as we try to trace next steps. So first, just take a look at this intraday chart of the S&P 500. This is benchmark ES futures, the active contract. And really all we're looking at here is just how responsive markets were to the wholesale inflation data that we saw today, or alternatively, not very responsive. So this is it right here. Now you can very clearly tell that markets were quiet, they were quiet, they were quiet, and then they weren't. So you can clearly see here that the markets did, in fact, notice the number, respond to the number, and trade on the number. then had a volatile session back and forth and ultimately landed where the number left them. So very clearly there was a level of response. There was a reaction function. It just didn't last. So why did stocks pop on this data? Well, of course, this is a great illustration of what the markets care about at this juncture. Of course, we saw that last week the markets took quite the beating, over 2% of a drawdown in both the S&P and the Nasdaq last week, and a surge in yields, a steepening of the yield curve. All of that thanks to economic data that made the Fed appear like it would be even less dovish than even the Fed itself signaled when it backpedaled on September's rate cut outlook with its December update. So what happened with this PPI data was very interesting, and of course comes in the context of what happened last week with very strong ISM service sector numbers, as well as a much stronger than expected U.S. jobs report, which is how we got those losses in the S&P and the Nasdaq last week, how we got the shift in Fed policy expectations last week, and of course how we ended up with this sense that this is what the markets now care about. Now, for the PPI report, the numbers were a touch lighter than expected. They were seen coming in to 3.4% on the headline from 3% in November. They came in a bit lighter at 3.3. The core PPI number that was expected was 3.8%. That's the reading excluding volatile food and energy. And it came in actually at 3.5, which is meaningfully lower. The prior number was revised from 3.4 to 3.5. So this ended up being a hold of November's reading rather than a meaningful advance on it, which is what was there in the forecasts. But nevertheless, these are strong numbers. 3.5% for the core is the highest in 22 months. The headline at 3.3% isn't as hot as expected, but again, the hottest in 22 months since February 2023. So these are certainly hot numbers. And so that it was a little bit lighter was registered here, but ultimately the markets didn't really take a big sort of view on this, didn't really show a lot of conviction, because of course a larger, more directly relevant piece of information is now in view. And although clearly this demonstrates the dynamics still work, which is to say those things that make the Fed appear like they'll need to be less hawkish is good for stocks, good for bonds, negative for yields, negative for the dollar, and whatever makes the Fed appear like more hawkish policies in order, that's aiming in the other direction, and those things still work. They've carried over from last week. The question now is, are you going to get a real catalyst to really make a move on something? And of course, that's exactly what we have by way of the consumer price index measure here, due in less than 24 hours. Expectations for a fourth consecutive month at 3.3% for the core. The headline seen rising to 2.9%. That would be the highest since July of last year. Now, this, of course, speaks to exactly the kind of thing that stock markets should dislike. And indeed, leading figures seem to reinforce that there is likely to be something of an upside bias. So we saw, of course, with the release of the ISM numbers last week, the really jarring part of that report wasn't even the headline surprise, but the price growth component, which you can see here marked a sharp move higher and gave us the steepest pace of price growth in the service sector, the place where it matters most, as we can clearly see here. Inflation in goods, negative. Inflation in energy, negative. Inflation in food, a pittance, just a little bit of a sliver. And almost everything that's left of inflation is sitting in core services. So that we see this kind of a surge in service sector price growth is, of course, understandably a big deal, especially when we consider that lagging CPI and, in fact, the PCE price index, the one that the Fed looks at even more closely, lagging them 2 months to this ISM reading lines up pretty clean and suggests that, indeed, if this is what ISM is showing, then perhaps a similar something is where CPI is heading. Moreover, if we take a look at how the realized results for CPI, especially at the headline, have performed relative to the Cleveland Fed's very closely watched forecasting, and it's a little bit choppy at the core. That makes some sense. It's, of course, excluding parts of the story, and so things are perhaps not quite as clean cut relative to this particular model. But when we look at the headline here in the yellow is the forecast, and we can see that the expectation for where we're currently going, if we sort of weigh up what this model is suggesting, the number that we're expecting to see for December at the headline is in fact 2.86. And the forecast, as we just saw, is 2.9. So the model is calling for an outcome about in line with expectations. Here's that 2.9 right here. But if the tendency, as we can see here, is for the yellow line to run a little bit under what realized results have been over the past several months, we can see the blue line exceeding the yellow for the past 3 months, then there's scope for an upside surprise here, perhaps, and though it might be a narrow one, that could be enough to inspire markets. Moreover, we can see that generally speaking, besides just inflation data, U.S. economic outcomes on data releases have once again started to improve relative to forecasts. There was a kind of cool down period here where there was very strong outperformance from late August through mid-November, and it seems like since then models have been readjusted and retuned such that forecasts started to more closely align with realized results, but the U.S. economy has now outperformed even relative to that. So once again, we're starting to see data tend toward increasingly stronger readings versus the consensus, all of which seems to line up to the risk that CPI is hotter than markets have penciled in. Now, for the Fed, this is, of course, not the thing you want to see. Because if we look here at what policy officials often weigh up as they make their decisions, the sort of run rate on inflation, you can see that basically since the middle of the year, 3-month annualized inflation has accelerated. That's the blue bars right here. 6-month annualized inflation took a bit longer. It was still cooling here into September and even a little bit into October, but come November, it started to reaccelerate again for an even more significant sort of a pressure upward. Looking at the core, again, this is where the Fed is most interested. because, of course, everything now lives in the service sector as far as inflation is concerned, and because, of course, the Fed has very little agency over global food and energy prices in any case. These yellow bars, the 3-month run rate on core CPI, that's been increasing since July into August. August was the first uptick here. And for the 6-month rate, we can see it sort of started to stabilize out around August, September, and October, but is already higher come November. These, of course, are very challenging trends for the Fed. We can see here the markets have moved accordingly. So since the Fed issued that very dovish outlook in September, the markets looked at it and said, well, there's no way you're going to do that with inflation doing what it's doing, and started to reduce the priced-in outlook for rates. Note, when the Fed came out in December, it said it was going to cut 50 basis points in 2025. That's half of what it said in September. So the Fed is not oblivious. They are moving in this direction. But now the market is expecting just 50 basis points for the 2-year period here, 2025 and 2026, in aggregate, not just this year. So the markets are quite disconnected here from what the Fed is envisioning. We can see what consequences this has wrought in markets. So from September, when they issued that dovish forecast, we have seen inflation expectations as measured in the bond market, break-even rates. We've seen them move higher. We've seen the dollar has gone up. We've seen yields have gone up at the front and the back end of the curve. These are the 2-year note and the 10-year. And of course, we've seen the yield curve in the yellow bars here steepen significantly. But now the real question is this chart here, just to go back. Because if the Fed is saying we've got 100 basis points in cuts over 2025 and 2026, and the market is saying, no, it's half that. You've got a cut this year and a cut next year, not 2 and 2. And one wonders what the next point of adjustment in a hawkish direction could look like. Because the next step, at least for 2025, let's say, next year is still a ways away. Lots of things could happen. We have a new administration coming in, taking the reins of power in the U.S. next week. And whatever you might think of the ups and downs of its various policies, they do all seem to be inflationary. Boosting economic growth through the lowering of taxes, as we saw the last time that this administration was there, the first Trump administration, and boosting growth further through deregulation, that's inflationary because faster growth brings more inflation. As more money changes hands, inflation rises. Now, the situation around tariffs and immigration, which ostensibly beckons a shock to labor markets if there were mass deportations, say, those details are murkier, and we don't quite know exactly what's going to happen, what can actually be put to work. But at face value, tariffs amount to a sales tax on imports, and reducing the supply of labor ought to increase the cost of labor, which ought to increase the cost of things produced by that labor downstream to the consumer. And all of those things, again, at surface level, without knowing the details, just the trajectory of those policies, that's inflationary. And so, ostensibly, it's still quite a bit out there for us to figure out to really get a handle on these dynamics. But if CPI comes hot in this release, the markets will have to ask themselves, Does it make sense now that the Fed has very clearly signaled an intent to gradually reduce interest rates, perhaps at a slower pace than they did last year? And in fact, the minutes from December's FOMC meeting very clearly suggested that the Fed intended to be more gradual and slow moving relative to last year. But given the Fed's very overt intent to cut interest rates this year, how reasonable would it be, knowing all of what we don't know about what comes next, as we've just discussed, for the markets to say there will be no cuts in 2025? Because indeed, with only one cut now on the menu, that's the path of the next hawkish adjustment were one to happen. And this is where things get interesting. If you get a reasonably manageable CPI number, that is a number that is perhaps even a bit warmer, maybe we get to 2.9 and 3.4%. Maybe we get to 3 and 3.3. Something relatively modest, but nevertheless biased higher. If that occurs and there isn't a massive further acceleration in yields, there isn't a massive further acceleration in the dollar, there isn't essentially the next leg in this dynamic, and the market is more circumspect because of how much of an adjustment has already occurred, well, then we might have reached that move's zenith. We might be looking at a peak of sorts. And so we might get to a place where the market has bought the rumor but will sell the fact. And as long as the CPI numbers aren't completely off the reservation high, the market might say, well, what are we going to do? Say the Fed is not going to cut at all? We're already down to only one cut. Are they really going to mark an about face that quickly? And are we going to show conviction in that idea without the Fed having said anything of the sort? That might be a limiting factor. And that could be a bottom in the bonds after a long, long sell-off. Obviously, this rising yields is the flip side of that is a sell-off in the bonds. And of course, the flip side of this rally in the dollar is a sell-off in it against its major counterparts. So if a reasonably warm CPI number that nevertheless is within the realm of the acceptable does not give us a yield surge and a dollar surge and things remain relatively anchored, that loss of sensitivity could be very telling indeed for what markets do over the weeks that follow. And that is Macro Money for today. As ever, we are here right after overtime, Monday through Thursday. That's a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go there from. I'll be on in just 30 minutes time from now, as I am now every Tuesday with Victor Jones for The Price of Truth, on with Chris for Futures Power Hour on Mondays and Fridays, on with Victor and Tom for First Call on Sundays, writing for the news and insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter, as well as on Blue Sky. If you're watching on YouTube, like and subscribe. Thanks very much for watching. Macro Money's back tomorrow.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
What is going on, everybody, and welcome back to the Bad Taste segment. It's about a week in from New Year's, 7 days in, Julia. How are we feeling so far? How are we feeling, everybody?
Man, what a wild 7 days that we've had. Is it only 5 days into 2025? It feels like it's been longer than that. It is.
No.
Oh, go ahead. Sorry.
No, I was just going to say you're completely right. It does. We're about a quarter in already.
Yeah, I know. It feels like a lot longer than that. It is so cold in Chicago, so I'm just in like nap mode. I just want to I just want to sleep.
I hear you.
It's kind of where I'm at. But it's probably a lot warmer where you're at.
Yeah, it's relative to Chicago, yes, but right now it's really cold. Like, again, I know everyone's like, haha, Florida cold, that's not cold. But like relative to where it's usually at, it's kind of chilly. But relative to, Chicago right now, not too bad. So I can't complain.
That's not so bad.
Yeah, I can't complain.
For everybody. Yeah, I've been hearing like apocalyptic, like we're supposed to get like really crazy weather, which is supposed to be fun.
I heard another
Arctic blast.
That's what it was. That's what I heard.
Which I'm not excited about.
Yeah. So what's the deal with that? Is it just like a completely just a very cold front just for like what a few days a week, or what was your experience with that?
It's just like the wind chill sucks right now because Chicago has really bad wind chill, which is super awesome. But otherwise, yeah, I've heard this Arctic blast, which I think is affecting other areas, especially like further south, which, obviously we had the whole thing with Texas like a couple of years ago. So people are kind of watching out for that. So yeah, I don't know. I'm just not, the thing is like, it has to get really bad for stuff to like shut down in Chicago. Like there was a polar vortex like a couple of years ago where we had like -40 wind chill, and I think the trains were still running. So don't quote me on, but we got called out of school, which was great. So yeah, but either way, we just kind of put up with it. Everyone's got to get a good parka. But otherwise, yeah, not looking forward to that. Yes, it's been a very long 7 days, Grumpy Mike. It's awesome to see you. Also, very windy wherever you are. So yeah. But otherwise, yeah. And then this market's just been really all over the place, honestly. Today was, I guess, not super surprising, but still, like, I think NVIDIA just dragged everything down with it. NVIDIA and Tesla just donked. So I don't know, how are your positions looking? Is there anything that you're focused on, I suppose?
No. I mean, a lot of the NASDAQ market. I mean, we're down on the day. Volatility, been keeping an eye on that. We're still sitting just under 18. It's really not that bad. I think we were just spoiled from that plus 20 VIX all the time. But I mean, it's really not that bad. Volatility is not that bad, but mostly just the indices, the Russell, NASDAQ, S&P 500, those kind of things. But I've kind of taken my attention off of NVIDIA heading into 2025, especially. I didn't even know NVIDIA was still the talk of the town, but apparently it's still having massive effects on the overall market.
Yeah. Well, because it's the that CES conference that just happened, so everybody's talking about it. Everyone's talking about like the super chip, AI super chip that's supposed to be like 1,000 times stronger than a laptop. Don't quote me on that. That's just the number that's in my mind right now.
The super chip.
The super chip, yeah. So this like conference has obviously drawn a lot of attention. It seemed to be a very big driver for kind of like yesterday's market action, unsurprisingly. Yeah. And today it just kind of sold right off down 6%, which is pretty big. A lot of the, if we want to pull up the heat map real quick, actually, we can kind of see how the market's looking as a whole. But yeah, the entire tech sector, and especially some of these semi stocks, except for Micron was just like the oddball out today. But like NVIDIA, Broadcom, Palantir was in here, which I wouldn't exactly call them competitors or anything like that, but that was another very big mover today. AMD dropped quite a bit. Qualcomm actually had a more moderate day. But yeah, some of these chip stocks are just not having a very good time. And then First Solar, SMCI of course donked, and then First Solar kind of being a bit of a contrarian play in this technology sector, which was very badly beat up. And then consumer cyclical, like a lot of the stocks in the sector were down, but especially like Tesla was having a beat up day. That's been just like all over the place. So it's really like the usual suspects of last year are continuing to be the usual suspects of this year. Tesla, NVIDIA. I would throw like Palantir in there sort of towards the end of the year because it surpassed NVIDIA in terms of like how much it sort of grew in 2024. Energy actually had an okay day today. Yeah, energy actually had a okay day today, but it didn't save the rest of the market. And then some of our former sleeper builds falling from grace, CEG and NRG. These two were some pretty good performers actually last year, strong performers.
They had their time. They had their time.
They had their time, and now is definitely not that time. So healthcare having a pretty good day today as well. Everyone's getting freaking sick. So I wish there was a better reason for healthcare to be
Everybody
up today.
is. Right. So that's just not over here. That's over there as well, right?
Everyone being sick?
Yeah, I feel like I've had kind of the sniffles, but I haven't really gotten sick. I rarely get sick, but some people around me have gotten sick, yeah.
Also, Big Deal Donuts, Bob, it's awesome to see you guys here. How's it going? Welcome back. And yes, Luis, I am still holding my Ion Q position, which I think is actually green on the trade. Is it green on the trade? No, it's basically flat on the trade. It's down $50. I'm still holding. But yeah, healthcare having a good day today. I feel like everyone I knew was sick, and now everyone's like kind of okay now and just annoyed with the weather. But yeah, vaccine sales were helping out J&J an awful lot today, as well as some of these other names. So that was one of the stronger movers in the sector. And then Moderna as well, which I don't think, no, it is in there. It's kind of small. Moderna was like one of the biggest movers in the S&P to the upside, actually, with people out here being sick. Theta Trader, awesome to see you. Thank you for joining us. So, which I think is like kind of needed that. Like Moderna especially has been just like on its butt for so long. And finally starting to have a little bit of a bounce today, after just being just like so depressed, having a very rough 2024.
Yeah. No, I mean, better start to the new year. I've kind of been checking out some more of the airlines a little bit recently, Julie. It feels like it's every day or every other day I'm seeing more planes doing something kind of crazy out here, but been looking at United Airlines a little bit more, American Airlines, and then Spirit as well. Spirit's been struggling, but they're hanging in there.
Yeah, Spirit by a thread is hanging in there.
By a thread.
I'm not feeling very good about Spirit Airlines, but United Airlines actually was one of the best performers. I don't want to say best, like obviously there's like that's a kind of a loaded word. Everyone has a different definition of what that means, but one of the strongest performers in 2024 actually was like United Airlines. Let me see if this is actually, I don't know if I'll be able to pull it up.
Don't sleep on United.
Yeah, so this is like the S&P last 12 months. This is ranked by returns. So Palantir and VST have just actually overtaken NVIDIA. They've been, especially VST and NVIDIA were kind of like at the top of this placement for a lot of 2024. But yeah, United Airlines is in there with 130% in a year. That's crazy.
United Airlines, who would have thought? The growth stock of the year.
Yeah, like one of them, evidently. Yeah, it's yeah. And then CEG, which is getting beaten up pretty bad today. But that was another one of our sleeper builds. Although looking at a Sharpe ratio, it's not the highest. We've seen significantly higher. So evidently, like the last couple of months of slowdown has been kind of affecting some of these names. Looking at Sharpe ratio, let's just ignore the Berkshire Hathaway because I got to fix that. But Walmart actually, Walmart and GoDaddy have like some of the highest Sharpe ratios in the S&P. Isn't that so funny?
Okay. Yeah, did not expect that one.
Well, yeah, I didn't either. Apparently web domains are back, baby.
They're back. Palantir, I will say that one kind of flew under my radar. I know Palantir was more of a popular one, I would say, 2020, 2021. But yeah, that one was a sleeper build in my eyes, especially this last year. I wasn't even paying too much attention to it.
I feel like going into 2025, more people are going to be watching Palantir, but not today. Dropped almost 8%. But again, just like after this like crazy rally that it's had, it's not that crazy to have a correction. And some other, the GoDaddy one I think surprised me, and then Walmart as well. Actually, it's up 75%, which for like kind of for a consumer defensive stock to be up 75% in a year. With one of the second highest actually Sharpe ratio in the S&P. That's kind of crazy. Walmart going up 75%.
75.
Inflation really helping that out, huh?
No doubt.
Yeah. So just really, really interesting the last couple of months. And Ranch Rhythm Mike, I'm glad that you like the graph. It is not available on desktop. It's one that we kind of made in-house with some of the research tools. But not available yet, maybe. Oops, not going to share that. There we go. But yeah, no, day all over the place. A whole lot of stuff going on. Wish my portfolio was a little bit greener, but after yesterday, I can't complain too much. I am still holding my IonQ trade, and that is not doing too hot. It dropped like 100, like a bunch today actually. Some of these quantum computing stocks. I wanted to get a little skin in the game there, and that was kind of my way of doing it. Which is annoying because like Rigetti, of course I get right out of Rigetti. That dropped 5.7% today. But that's been on just like a tear. And I'm actually surprised how much this hype has continued when it comes to some of these quantum computing names. Really interesting.
Yeah, no, I'm looking at IonQ right here. Still solid IV rank. That thing is really, just 2 months. 2 months. It's only seen upside.
It's been high. Yeah, that's for sure. Which like I made actually a good amount of money on it. It was like, I don't know, 30% in a day or something. And it was dumb. I bought shares in the company because I found out that one of my, the guys that I went to grad school with, someone in my research group actually worked there. So decided to, moved into IonQ because it had like, all these names have been just really popping off, but a little bit more stable risk to reward. From a price volatility perspective, over the past, like since October, basically. But what are you going to do? That's what you're going to do. But yeah, some of the big movers today, we kind of talked about them, some interesting news around, especially like NVIDIA. Moderna had some interesting news around it. And then I think those were the big ones. And then obviously like NVIDIA, everyone's like talking about it. But otherwise, I understand that we got some trivia to do today. Is that right?
It is, and the theme for today is airlines. It's fitting. I feel like it's fitting right now. Boeing Airlines, just in honor of what was it, United, or was it? Yeah, was it United that put in that massive year this year? UAL, yeah. So this is a little toast to United Airlines. But no, theme for the day is airlines, and multiple choice question today.
Hopefully, it's not like airlines and planes falling out of the sky, because I'm about to get on some planes later this month.
That's the bonus question. I'm not a big, I'm not fear of flying. I don't have a fear of flying, but I've never been a big like traveler. I've never been a big fan of being in the planes. I find planes fascinating, just the fact that they're in the air in the first place, but it's just a process, It's just a process.
It's just a process. We're excited.
It's a process.
Oh, and then one last piece of news I realized I forgot to mention, but actually apparently why Palantir dropped so much, because I guess Kathy Woods sold 200,000 shares of it. I didn't. Oh, wow. I was kind of surprised that could move the markets that much. But yeah, Palantir had a bit of a rough day, as well as some other names. But yeah, that was some. I think those are the only interesting pieces of news, at least that I was taking a peek at. But yeah, let's hop into airlines. Let's hop into trivia. You want to get it?
Yeah, let's do it.
Hell yeah. Okay, first things first is we do have an app. So you can find that over in the App Store and the Google Play Store. We've been making some cool updates over there, so go check it out. We got points and badges and stream, Tasty Live stream and chat. General tomfoolery as well. So we'd love to have you. And then as well, if you want to come throw your trivia answers in chats, you can do it over on Bad Trader, which I will award you points for, over on Tasty Live's YouTube channel as well. At Tasty Live Show is where you can find that. So, airlines. Ready to get into
airlines. Let's do it.
Let's do it. Hell yeah.
Trivia question number 1 for the day. Which airline was the first to publicly be traded on the U.S. stock market, paving the way for others in the industry? Was it Delta Airlines? Was it American, Southwest, and United Airlines? Which one was it? Paving the way.
That's hard. And I don't even know. I don't even have a good point of reference for like when that would have happened. 80s? Maybe? Shoot. All right, chat, what do we think? Which airline was the first to be publicly traded on a U.S. stock market, paving the way for others in the industry? Delta, American, Southwest, or United? I'm kind of feeling, I think United might be the biggest by market cap. So part of me wants, I think, don't quote me on that. Part of me wants to say United. Bob is saying B, American Airlines, which is also a good guess. Luis is saying
Bob.
United as well. A couple people are saying United. Love that, Blob. Awesome to see you. Thank you for joining us. A lot of people are saying United.
No Southwest, no Delta, no love for Delta.
I know. No one. Do you fly Delta?
No.
You in a Delta?
I do fly Delta.
Delta. Okay, we got our first Delta actually over here. Can't chat on the app. Some dingus broke the rules and now we can't have nice things. I am going to be checking that out. Bob, thank you so much for letting us know. First traded on the app. Okay, so a lot of people are saying either, oh man, a couple people are saying Delta. A lot of people are saying American. A lot of people are saying United, and my gut's just kind of telling me United. So I'm kind of thinking United Airlines. That's my guess.
Okay, well, let's jump to it. American Airlines is the savior for the day. Became the first publicly traded airline in 1939. So I mean, really not too far off from the 1800s. That's pretty early on.
That's pretty early on. 1939.
That's pretty early. Yeah, that's pretty early on.
How accessible were commercial airplanes in 1939?
No, that's early. That's early.
That's crazy. American Airlines. I actually never knew that. A couple people in chat got it right. It kind of seems maybe because of a good guess, perhaps. But a bunch of people got that. Definitely, that kind of goes against my intuition. I'm really surprised about that. All right, hell yeah. Good job, people who got it right. Good guesses from everybody. Let's go on to number 2.
All right, guys. Airline number 2, Southwest Airlines is famous for maintaining profitability during tough economic times. What unique business strategy is often credited for its financial resilience with Southwest Airlines? Hedging fuel costs, eliminating first-class seating. Sorry, Grumpy Mike. Only flying one type of aircraft, Boeing 737, or all the above. Which one is it?
Poop. That's a good question. I thought I might be wrong. I don't fly Southwest. I think I've flown them once. I feel like, are they the ones that give everybody numbers, right?
I've flown Southwest one time, and is this the same thing you're asking? That you don't get assigned seats for Southwest, right? Like you have to
That's what I was thinking.
Is that what it is?
I thought one airline which they load you into the plane. I thought by assigning you kind of individual numbers.
Yeah, that sounds like Southwest.
It might be a different airline. It might be the same airline.
Okay.
I don't know. I kind of almost exclusively fly United and occasionally Spirit, so I'm not a good person to be answering these questions. But yeah, that's kind of what I was thinking of. I thought that was Southwest. So kind of B. I think it's either B or all of them. Do they only fly 737s? Let's see what chat's saying. We have D from Bob. We have D's from Emmett. And then Ranch as well. And from Grumpy Mike. A couple people are saying B. We got Blob over B. We got Luis saying B. Big Dill Donut's going to be a contrarian is saying C. And then B as well. I think B is certainly true. It could be D just because it does encompass that. Mm-hmm. And another person is saying D, which I think just puts it over the edge for D. So I'm going to say, is it all of the above is the answer?
Let's check it out. It is all of the above. Southwest is known for fuel hedging, simplified fleet, only Boeing 737s, and cost-efficient operations, making it one of the most stable airlines. But I didn't know that they would eliminate first class on some of them. And I know we got a lot of B in there. So I feel like there's some truth to that. Is that true? I didn't know they took any of those precautions either.
I didn't know that either. Yeah,
I'm learning something new every day.
But it looks actually the majority of people got that right. So well done, guys. Good job.
Yep.
Hell yeah. We got about 9 minutes left, which means we might have time for a tradle as well. You want to give it a go?
You know what time? Yep. You know what time it is, Julia.
Let's take a look.
You know what time it is.
Okay, let's take a look.
All right.
Okay.
30 billion.
Hell yeah. So 30 billion. We've definitely looked at ones that are smaller, but also ones that are bigger. Okay, so for everybody who's joining us for the first time, we like to play a game called Tradle, where you are given the export distribution of a country, and you got to guess what that country is. So this country has $30 billion in exports. 6.3% of that is insulated wire. We got electric motors. We got liquid pumps. We got copper ore. And so basically, we have to guess a country, and then this is going to tell us what the target country, like what direction it's in, and how far away we are. So 30 billion, we've definitely seen bigger. And this is also like really diversified. We've seen countries where there's like 30% is like crude petroleum or something like that. But this is actually pretty well diversified. Not one of these categories is like exceptionally large, but we have wire, motors, so some like industrial products in here, copper ore, electricity, refined petroleum, so some energy products as well, and then some
30
raw
billion.
metals. What are you thinking?
30 billion in exports, 1.8% corn.
30
Okay.
billion, and then so we have some refined industrial products, so like aluminum plating, aluminum bars. We got rubber tires, tobacco, flavored water. I feel like the agricultural ones are like very telling because like there's like chocolate in here, right? I saw, yeah, there's tobacco, which doesn't grow in a lot of places. If it exports raw tobacco, right? Like there's not a lot of places where that can grow. We got like wheat, corn, pears, fruit, soybeans. And I think I saw it in here. We got like wines. We got some alcohol. Taste
Flower
them.
Power says Zimbabwe. Data Trader says Poland, Germany.
Oh man. I feel like Germany would be bigger. Does Zimbabwe do tobacco? I'm trying to like remember where I'm trying to remember like where like tobacco would grow or where some of it can kind of come from. Germany, let's just do Germany to like get something on the map. How about that?
Yeah, it'll be a good reference point.
Let's do Germany.
See where we're at.
Oh my God, we're really close.
90.
To okay. We're really close. Great guess. Okay, so
southeast.
Yes, southeast of Germany. We're 94% of the way there. Now it becomes more of a geography problem. Grumpy Mike said Georgia. I think that's actually, do you want to try Georgia? That's actually a very good guess.
Let's throw it in there.
I feel like I'm hoping it might be, if we get this in two, okay, so it's a little bit further.
91. I mean, that's still in the ballpark.
So there's
we're
Germany.
cornering it. We're surrounding it. Yeah.
Yep. It's like straight west of Georgia. Why do I feel, because I was going to say Austria, but I think Austria might be on the other side of Germany, maybe one of the former Yugoslavian countries from Bob. That's actually, Ukraine would have more sunflower oil. Estonia. Why do I feel like that's further? Why do I feel like that's further east? I'm down to try Estonia because we do have quite a few guesses left. We got 4 guesses left. You want to try Estonia?
Yeah, let's do it. Third one. We got 3 more after.
All right, Estonia, what you got? Okay,
92.
Just dancing right around, right?
We've got it cornered. Greece, got to be Greece. JSK says Spain, Greece.
I'll put in Greece. I don't think it's Greece. I feel like Greece would have like wine would maybe be a bigger export. Palantir's continuing to go down. If we got time, we'll take a look at that. We could just try Greece. I think that's too far, but I'm down to give it a go. And try Greece?
It's got to be in the vicinity.
Well, because isn't Greece like right? Isn't Greece straight? Because like
we got 2 more after. Yeah.
Because there's Italy, Switzerland, and then like one country, and then Germany, and then I'm just gonna try Greece. Fuck it. Nope, not Greenland. I want Greece. Okay, it's right.
My
okay, that was a very good guess.
is...
It's right north of Greece. Is Cyprus? Is Cyprus north of Greece?
Whatever is central to each of these locations.
This is going to drive me crazy. We've just been dancing around this country.
That was the closest one we've had, though, because that's 554 kilometers away. That's as close as we've gotten on all 4 guesses.
That's very true. This is going to drive me nuts. Romania? Is it? It could be not Hungary. What's right north of Greece? I think, isn't Turkey to the east? I don't know. It's more of a geography. Okay. You know what? I'm just going to do Romania because we got 2 guesses left and I don't foresee us remembering geography any better. So what's right next to Romania? Bulgaria.
Southwest from it.
I think Cyprus. Okay. I think maybe Romania, maybe Hungary. I'm sorry, not Romania, maybe Hungary, maybe Bulgaria. Those 2 seem better. Someone who knows geography is probably screaming at their monitor right now.
Turkey or Bulgaria?
Okay, we got 2 Bulgarias. Let's go Bulgaria if we get it. God damn it.
Oh.
Serbia. Okay, I think we did pretty good, though. I mean, I don't think we did too bad.
Shout out to Serbia.
We got kind of every country around there except for Serbia. Man, my understanding of geography is so screwed up. I did not realize that Romania and Greece were that close together. Man, I got to look at a map. I feel like such a goose, like a silly goose every time we do these. But now we all know the export distribution of Serbia. It's a very diversified export distribution.
Yeah, no, shout out to Serbia. Shout out to Nikola Jokic from Serbia on the Denver Nuggets.
Serbia. Yep.
Yeah.
Hell yeah. Well, really well done, guys. I think a bunch of people, you guys gave really good guesses over in chat. Good job with the geography. I was too late on the keys. Serbia is formerly part of Yugoslavia, which I need to also get my history down. But that actually makes sense because someone said, I think, former Yugoslavia. Well done. Didn't know Serbia had rubber. Yeah, rubber or tobacco, actually. I didn't know Serbia had like kind of that as enough of their export distribution. That's pretty crazy. If we hop back over to the platform, we can see that Palantir is continuing to completely donk. I'm really excited to see where this thing winds up on the open, if it'll load. Yeah, it's been continuing to drop. So, man, what an interesting open this is going to be with some of our sleeper builds. I think we can probably, I don't think we have enough time to do connections. So I don't know, maybe do you want to end a little bit early?
Yeah, I mean, we can go ahead and do that. We'll see what Palantir ends up by morning.
Yeah, I'm excited to see that. Certainly one to watch, actually. One that I'm a little bit surprised about, especially like, obviously like tying a piece of news to a market move. Obviously, like that gets very messy. But if that is actually like in some part because of Cathie Wood selling, I didn't know that much pull or that much potential market impact. But there you go. We had a lot of great chat participation. Thank you guys, everybody, for hanging out over in YouTube. It was a great time. Thank you, everybody, for having a good time in our trivia and with our Tradle. I think we did pretty well. Every guess that we had was more than 90% of the way there. Every guess.
Every single one. It just got closer. It wasn't too bad. Yeah. I wouldn't have guessed Serbia, though. So that didn't even cross my mind one time.
At that point, I'm like, I'm trying to remember these maps. And I'm like, I can't really place where each one of them is. So I don't know. This will be good prep for next round. Let's give it a go. I feel like I understand kind of like that geography a little better now. So there you go. But everybody,
Tesla got a downgrade. Oh,
Tesla did get a downgrade. I did see that. I think it got downgraded to neutral, actually, from, I think was it Bank of America? Something like that. Got to go look that up. But yes, Tesla did get a downgrade. I stopped trying to like make any kind of sense of Tesla's price movements a while ago. So at this point, I'm just sitting because like Elon Musk will give a presentation and everyone will be like, go do it for like a feature or some kind of class of a technology that's not going to be available for 10, 20 years and everyone will freak out. So I stopped trying to make sense of Tesla. Not really trading much of that these days. But I mean, for volatility, although I don't think we are very, we're not in very short supply of volatility right now in the market, which is always nice. But that being said, everybody, thank you so much for participating over in chat. Thank you so much for hanging out with us. It was awesome it was an awesome time to see all the bad traders come back here. And we'll catch you guys next, actually not next Thursday because we have a market day off, right?
Another 4-day week.
Another 4-day week. Yeah, just to kind of make January
no
really
full weeks
confusing.
yet. Yeah. Oh, yeah.
Hell yeah. But thank you guys again. We'll catch you guys later. And I hope everybody has a green 2025. Peace.
Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
Whatever.
This is English. You should watch him read.
From the smart mouths at Tasty Live.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Oh, yeah, it is Wednesday, January 15th, or so they say, a little bit after 5 p.m. Central Time, the best time. You know what that means, everybody. It's time for Tasty Live's evening show, The Price of Truth, a little podcast where we like to explore the incentives that govern our world. And, man, are there some competing incentives? And, man, is the world being governed? More on that later. I am your trusted co-host. I don't know. I'm assuming I have that attribute with you. I'm your trusted co-host, Victor Jones, and with me today, as he will always be for the year of 2025 on Tuesdays, doing a switcheroo with Chris Vecchio, is our good friend, global head of macro here at Tasty Live, none other than Ilya Spivak. Ilya, how are you, my friend?
Good. It's good to be back to doing this thing. This is our first show of the new year.
It is, right? I was going to say that, and I was like, there's no way. It's the 15th. There's no way this is our first show. But it is.
It is.
How are you, man? Happy? Is it new year, new you? I see you as sort of a steady goes it type of guy. I don't see you as a guy that goes into the end of the year and goes into the new year and makes these like huge proclamations about New Year's resolutions. I'm going to transform myself. I see you as a guy who's already operating mostly at peak performance, and you just got to do a little bit of, tweaking around the edges. Am I right?
100%, and there's absolutely nothing that happens from December 31st to January 1st that changes what I'm going to do whatsoever. I could not care less. The calendar flips a page, on we go.
I figured, man, I've got you pegged. I knew you were a I knew you were the calisthenics guy instead of a weights guy. I knew you didn't do New Year's resolutions, dude. I got you pegged to a T.
Perfect. Nailed.
With that, somehow, that is the cold open to a show that's going to be nothing like what we just talked about. We're going to talk markets, I promise. A shout out to everybody watching on tastylive.com, as well as all you savages who are watching or listening to this podcast and to many others on this network through the Tasty Live desktop and mobile application. But if you want to be part of the conversation or the stream, the chat, ding, that they just put up on the screen, probably not. I don't know why I do that. I make it difficult to time these things. But if you want to be part of that conversation, so one place to do it, that's on the Evil Be Reformed Google, YouTube. Speaking of YouTube, shout out to everybody watching on YouTube and already in the chat. I love you. But we've got our man Ilya Bivek with us, so I'm not going to spend a ton of time shouting everybody out. But you know I love you. And I am watching all your comments, so free, keep them streaming. Ilya Spivak, my good friend, what was today? Were they just here, my friend, in the E-mini and the NASDAQ? You run, you run the longs, and at the end of the day, you don't necessarily do a whole lot in the S&P and then the NASDAQ, a little bit of a runner here in the Russell. What was today, from your point of view, from a risk point of view? Whole bunch of nothing, still waiting for CPI. What was today?
Basically. I mean, there was a little bit of a wiggle when the PPI data came out, and that was a helpful wiggle because it told us that the dynamics from last week, they still hold.
Technical term, everybody out there. I think that's a technical formation.
A helpful wiggle. That's right. Patent pending.
We saw a helpful wiggle formation here today, everyone.
There it is, by the way. You see it on the screen. So there was the NASDAQ kind of in the early hours coming down. Don't let those PM readings on the bottom fool you. That's Vic being in the APAC region that's giving you those PM readings. That's AM in the U.S. market hours. And you see that big pop in NASDAQ that ultimately fades. So this thing was good for a good 5 minutes, but at least it told us the markets still care about the Fed rates story. Of course, last week we got a big sell-off in NASDAQ, big sell-off in the S&P, over 2% apiece, and it was basically a tale of two numbers. First, the service sector ISM number, and then the NFP number with a market closure in the middle. So once those numbers came out, the markets looked at them and said, okay, then, we don't like higher yields. We want more rate cuts. That's not what these numbers say. Sell. And when we got the PPI numbers today, we saw that mindset, at least, that lens is still there because the PPI numbers were a little bit cooler. They were, don't get me wrong, 22-month highs for the headline and the core, but they were expected even higher, especially at the core. The number was expected to be 3.8. They got 3.5. So still very high, relatively speaking, but not nearly as bad. And so that stocks popped on that and bonds popped on that, even very shortly told you the market's still operating on the dynamics that we know from last week. Because, of course, these things wax and wane over time. You can't always say, oh, well, if interest rates go up, stocks always do this. Yeah, over the course of a year or two. But when you look at active trading intraday, these things change. So, and they're a matter of perspective. And so here, what you see is that, yes, the market still wants yields lower. They want reasons to think, in other words, that the bond market has bottomed. That's what stocks want to see. But ultimately, you don't get any conviction because CPI is tomorrow, and that's the big kahuna for this entire conversation. That's what people need to get if they're going to get a more lasting signal. I'm starting to think that they're going to have to get a really, really high CPI number, though, for them to go beyond where they've gone already.
What do you mean by that?
So at this point, the market is baking in just one rate cut for this year and barely one next year. Taken together, Fed funds futures have 48 basis points in cuts between this year and next. That's less than half of the Fed's December outlook. Now, these disconnects happen. Markets are much more reactive. The Fed is much more slow going. The markets speculate much more actively. So, for example, at the beginning of last year, the Fed was saying 3 cuts and the markets were saying 6. And then they had to get walked down to 3 and then walked down some more and then walked up some more. And ultimately, the Fed delivered only 25 basis points more than they anticipated back in December of 2023. Meanwhile, the markets went from 6 cuts to 1 cut to 4 to 5 to 3 to 2, back and forth. So the markets are jumpier around what the Fed might do than the Fed itself. It's not the disconnect itself that's notable. It's that if you were to go more hawkish from here, you'd have to say, well, okay, you only have the 1 cut. So what? You're going to come down to nothing?
Yeah. Or
the hawkish adjustment is no cuts? The Fed has not said anything remotely that would suggest that this is where their headspace is.
Right. Let me ask you.
That caps it, I think.
Because the what you were just saying, it sparked a question in my mind. I have sort of this psychological anchor. It's cuts or no cuts, basically. The max hawkishness in my mind is no cuts at all. We leave rates here. They're at some neutral point, and they're going to leave rates here, and that they're hoping will put pressure on the marketplace. At least that's the story they've told. How would you think about the probabilities? And I know I'm going crazy, but I've never had this conversation yet, nor this thought. What would you think about the probabilities that the markets at some point start to price hikes in the marketplace, and that the Fed has to deal with a market that is now saying not only you're not going to cut, but we think you're not at neutral. What do you think how do you think about that as a potential? Because in my mind, given the lens that the Fed has spoken through, I've had this psychological anchor that's not even in the cards. And I realize as you're speaking, the fact that we're getting to the market just at 1 cut. Well, once you get to nothing, if you still haven't solved the problem, and I'm not sure, today's PPI data has completely changed the inflation narrative to go the opposite direction with disinflation.
Not even remotely close.
I'm curious, how do you think about that as a possibility within the distribution curve?
So I think you've hit the nail right on the head here, right? The Fed is much easier to pivot within a directional trajectory. So to say, we need 2 cuts, not 4. 1, not 3. It's a much bigger thing to say, we've been telling you for 6-9 months that we're cutting, but actually we're going to tighten or we're going to not cut at all, right? That is a much bigger leap, because the Fed then has to explain why they were not just wrong on the magnitude of shift and the timing of shift. That's an easy thing. It's easy to say, you know what, this summary of economic projections is just a group of us writing stuff down on the back of a napkin. At the end of the day, it's going to be a function of incoming economic data. So before we thought we're going to get to 3.4% at the end of 2025, we're still going to get there. We're just going to get there by the end of 2026, because the pathway is going to be longer, shallower, because the economy is behaving differently at the sort of quarter in, quarter out time horizon. You want the Fed to do that. You don't want them to be so married to their forecasts that they ignore reality. But for the Fed to say, actually, we got the whole direction wrong. This is a whole other world we live in now, where we don't cut at all. Or we actually have to go the other way. We have to hike. The bar to that level of adjustment is not just, we go from 50 basis points to 25 basis points to 0 basis points. The jump from 50 to 25 in Fed thinking is much easier. In fact, the jump from 100 to 50 is much easier than the jump from 25 to 0. And so because it's a much bigger admission of what they don't know and of where they see things. And again, the Fed is not so reactive. They don't change their mind that quickly. They ultimately were off by only 25 basis points last year, and the markets were all over the map. So when you look at how likely it is that, let's say, the markets force the Fed to no cuts or even to hikes, I think it's a very reasonable possibility when you look at, let's say, the next 12 months. Because if you look at what
after sort of a Jackson Hole type situation where they have the ability to reframe,
or even just
the
some
next
data.
12 months, right?
Let's get to mid-year, right? We have a new administration taking the reins of fiscal policy next week. We saw in the December FOMC minutes that the Fed is concerned about what tariffs and any sort of immigration policy adjustments that mean deportations and disruption of labor markets is going to mean for inflation. We also saw that they brought around commentary from their various business contacts in the Fed districts saying there's optimism around the possibility for corporate tax cuts again and deregulation that lets business do more. So take the negative with the positive, but don't lose sight of the fact that all four strands of policy here are inflationary. Boosting growth is inflationary. So yes, deregulation and tax cuts, la-di-da, more growth. But inflation goes hand in hand. Tariffs are inflationary at face value. We'll see how they work within the scheme of everything else that occurs. But tariffs in isolation, ceteris paribus, that policy, it's inflationary because all it is just a tax on imports that makes imports more expensive. Disrupting labor markets is inflationary. If you reduce the supply of labor, make that labor more expensive. Again, we don't know how all of this is going to interact together. It won't be wrong in the context of this conversation to say, well, inflation actually went down, but we had tariffs. No, it was wrong. Tariffs are not inflationary. No. Tariffs are still inflationary. They just don't live in a vacuum. Other things are also occurring. We'll see what the net is ultimately. But, I mean, if there's a recession in the next 6 to 12 months, inflation's going to come down. Tariffs or no tariffs. It doesn't matter. But in isolation, the new administration's overall sort of policy ideas tend to be inflationary. So it's not a shocker if the Fed in 6 months is like, you know what? We just got a bunch of tariffs. We got some deportations. We got some tax cuts. We got some dereg in the pipeline. We're not cutting. We can't. But that's later. The probability that the markets arrive at that idea on the basis of this CPI report, to sort of circle all the way back, like how big of a risk is this? I think less than 10%.
Yeah. It was obviously a pretty cool number, especially on core PPI today. I think expectations up
still the highest in 22 months, but much cooler
on a year-over-year basis.
Yeah, on a year-over-year basis.
Yeah, a year-over-year basis. On a month-over-month basis, the numbers are pretty cool and cooler than expectations. I want to really quickly, since we're talking about CPI, which the obvious catalyst then is rates. What do you do with rates? On Wednesday, you mentioned before, we've got this this setup for CPI. The expectation is 0.3% month-over-month on headline, 0.2% on core. If you get a 0.2%, that would be sort of a deceleration of month-over-month price increases from the 0.3% that we had a month ago. And speaking of cuts and just how all this plays together, we've been tracking sort of like what this cutting cycle has done to the shape of the curve. Red line being where the yield curve was at the time of the first cut, and the green line being the second cut where we were on the curve, blue line obviously then the third cut, and the yellow line is where we are effectively today. And you can see at each point in time, this cut in the short end has led to higher and higher rates in the long end. So we're getting to a more normal curve, but the way that we're getting there is sort of fascinating and unlike many other cutting cycles that we've seen in the past. And you have a 10-year that's nearly at 10%. Or excuse me, 5%, 10%. Good God. We have a 10-year that's nearly at 5%, and you got bonds that are effectively flirting with it right at 5%. So I'm curious, Ilya, how your first statement, if I tease it out, it seemed like what you were saying is we are likely approaching what could be peak hawkishness from either the market's pricing or interpretation of short-term rates. It doesn't mean that bonds are necessarily a good buy. You could get to peak hawkishness. We could flatline here. We could say no cuts. We could sit there all year long. But it seems like what you're saying from their first statement is we may be approaching a point of peak hawkishness from the marketplace. So my next question is, what do you think about the CPI as a catalyst for interest rates and what that could mean for the curve, how you might play it, both the short end and the long end? What say you, Ilya?
So for me, it's an episodic kind of peak hawkishness, where it's maybe the most hawkish that we're going to get here and now. And let's say we look out to sort of your typical tasty 45-day DTE type of cycle. So for the next cycle or two, let's so call it a few months, maybe we've hit something, because the inauguration is next week. We're going to have to see what we and the Fed, frankly, are going to have to see what happens for a bit. And then we're going to have to do some real realignment of speculation. That is to say, what the administration might do, what they're talking about, what they're definitely not going to do, because let's face it, there's nobody that's going to invade Greenland. We should just stop that nonsense now, because frankly, nobody is going to go into Denmark, an EU member state's sphere of influence, and take a thing from them, much like nobody is going to come and take Puerto Rico from us. It's ridiculous. It's a ridiculous thing. Maybe we'll build a base there. La-di-da. But the reality of what policy is going to be actually starts to happen and stops being speculative and starts being actions taken next week. So both us as market participants and the Fed are going to have to do some weighing up of what that means. But episodically right here, I think the markets are going to have a very hard time to go from 25 basis points to zero, because that would mean that they are envisioning a wholly different Fed than anything we've heard for close to a year. And so with that in mind, I think you're going to have to get some sort of a bonkers CPI number, like so high it's just completely off the charts, for markets to go, okay, yields need to go meaningfully higher still. And that needs to happen now. So I think the way you trade that then is, I think you're looking for a tradable low in the long end of the curve. And I'm expressing it as a call vertical in TLT that I just put on today. I'm looking to stay small, looking to stay risk defined. The way that the vol was set up there earlier today, the risk reward to basically just get back to where yields were in the beginning of December was giving like 3.4 to 1 reward risk, which is great. I'll take that shot. If I'm wrong by a little. Yep. And my risk is defined. And if I'm right and the markets are not going to take a giant the Fed is not anything that we thought leap on the strength of this one number, even if it is a little hot, then that's probably what you get. The dollar looks like it's a little bit overcooked here, and we started to see the euro begin to claw back over the past 24 hours. That might be something that's a bottom that's taking shape. It's interesting to see whether stocks can make hay of it, because the relationship that stocks have with rates is an ever-evolving one. So, for example, in the fourth quarter, right, the Fed did this big dovish thing in September, and the markets basically whispered BS under their breath as soon as the Fed said it, and immediately started to drive up yields and drive up the dollar. But stocks were not prevented from reaching record highs in the fourth quarter. It's more recently that they've started to go, okay, you're getting too high here. Why don't you settle down? This is like more aggressive than we're comfortable with now. And you can argue why. They weren't sensitive before. They're sensitive now, clearly. To my mind, it's because all of the COVID 5-year corporate money that was borrowed at zero rates basically comes due this year. And whereas there wasn't a refinancing cliff last year, there is one now. Mm-hmm. So they care now. They didn't before. So my mind, that's sort of my best guess. In my mind, you look at this now and you say, okay, stocks have started to be reactive, so are they going to care that bonds bounce? Is that going to be a reason for stocks to bounce as well? I'm not so sure. We're going to have to see. We're going to have to see if what stocks are responding to is the episodic day in, day out move in yields, or if they're responding to generally yields are high, they're not going to get unhigh in any kind of a meaningful way, such that people's refi of 0% money isn't going to be something that's 2, 3, 4, 5 times more expensive. So will stocks really take that much heart in this? We're going to have to see. In the heat of the release, maybe. But if stocks can't close with meaningful gains, even if bonds bounce, this stock market is cooked.
You know, there's this, I've sort of seen what they're trying to do, rightly or wrongly. And sometimes the downfall of me is looking for pattern recognition where pattern recognition does not exist. But what I've seen this is basically them trying to line up like these sine waves. The sine wave, because the economic data, inflation data, when that number comes out, that's so delayed on what it's representing. One, it's last month's data, but even that data is probably 3 to 6 months delayed in terms of what it's representing in the real economy, in particular with housing. So I sort of see, them trying to line up disinflationary data with inflationary bursts in the real economy. And then inflationary data with an inflationary economy. So that these two things sort of even out a little bit. You're seeing prices go up in the real economy, but the data is saying disinflation. You're like, what the hell? And then you're seeing slow growth data in front of your screen and prices, but then you're seeing inflationary data. And it's sort of this interesting back and forth kind of cycle we've been in. So there's this part of me that says, when I look out in the real world, it sort of seems like there's a slowing of growth. It doesn't necessarily seem like the pace of increase in prices that I'm seeing in the real world, real economy, and this is totally anecdotal, are doing the same things that they have been doing maybe in the a year ago, 2 years ago. But it does seem like we're in this pocket where we've seen this sort of re-acceleration of inflationary data over the last 6 to 9 months. I'm not going to ask you to comment on the anecdote because you're probably like, that was, you're batshit insane. But I think, I guess what I really do want to ask is, if you look into your crystal ball and I said, Ilya, over under 2 cuts in 2025, do you take the over, do you take the under, or do you take the push?
I think you look at where we are now, and I think it's at this point probably a push, but we're going to have to really see because this is volatile. So I'm going to change my mind on this probably because it's very easy to make the argument here to say, on the one hand, we were just saying you're facing a lot of redemption of COVID borrowing at very, very elevated rates relative to where that debt was incurred. And somebody's not going to be able to pay. Somebody's business model works at 0 or 1% money and doesn't work at 5% money, 4% money. And we're going to have to see to what extent that's an issue. Because unique among tightening cycles since the birth of the modern financial system in the early 1970s, with the untethering of the dollar from gold, and sort of the birth of the current kind of fiat-based system, unique amongst the tightening cycles since that time, this one did not see non-financial corporates' outlays on debt servicing rise through the tightening cycle because they hoarded so much money during COVID. First of all, they spent less because there was less to do, but they also borrowed at obscenely cheap rates because the Fed flooded everything, in my opinion, rightly, with liquidity. And said, we are not going to have a credit crisis, and we are not going to have the kind of nightmare that we had with the first version of QE, where we did it in rounds and put caps on things, which just gave the market a point of speculation to say, when the current batch runs out, that's when everything hits the fan. And then you give another batch, and then, okay, when this runs out, then everybody's is shot again. Well, this time, during COVID, the Fed just made it open-ended up front. And that actually allowed them ultimately to have a much shorter quantitative easing than what happened last time. They ultimately were, between March and August, the whole thing was done. And so what the Fed seemingly engineered here then is a situation, the Fed, the fact that there was lockdowns and there was nothing to do, what all of this did was make for a unique thing where everybody got all this cheap money that insulated them from the tightening cycle as it was occurring in 2022, 23. Now it's time to pay. It's very easy to imagine that this is a serious headwind for growth. At the same time,
it's like that Family Guy clip where Stewie's like, "Where's my money, man? Where's my money?" with the bat. That's kind of what the markets are going to be like this year. Come up, where's my money, man? Where's my money? It's time to refinance.
I picture that scene from The Big Lebowski with the three Germans and the marmot. Where's the money?
Yeah. Exactly. All right, let me ask you then. So you're infuriating, by the way. You're not I don't need you to be the Ilya the pragmatic trader. I wanted you to be the Ilya the degenerate gambler who can't run away from
against my nature.
Yeah, over under. All of us are degenerates. We can't help but answer that question. But you had to be the wise sensei.
I will change my mind in a hurry, though, because
I know you will. And here's my point. Here's where I'm going.
There's this, and it might mean the Fed has to cut more. But then there's a very pro-growth agenda from the Trump administration, which, if they curtail some of their protectionism a bit, and they curtail some of their immigration policies in their most disruptive version, and it's mostly pro-growth, that's inflation and that's rate hikes. So we're right on a knife's edge here.
When I think about, I've talked a lot about, I'm going to go back to the curve here for a second. I've talked a lot about this long-term average between the 2-year and the 10-year yield, which is now right around 50 basis points is the difference between the 2 and the 10-year. The long-term average is 100 basis points. So let's say your 2-year yield is 4.3%, let's call it. I know I'm giving a little grace here, but let's just call it 4.3%, which means your long-term average would put the 10-year yield somewhere at 5.3%. And I think about like where short-term rates are relative to the Fed funds rate, and to your point, they're not really pricing in much more than one cut, which means you get to one cut and you've done a lot of that work. You've uninverted out of a lot of this nastiness in the Treasury curve.
Yeah.
And not only have you uninverted out of that, if let's say the 10-year gets to 5% and the 2-year doesn't move that much, you're probably looking at somewhere between 50 and 70 basis points uninverted. I mean, that's a pretty normal curve once you get there. The 30-year probably has to go find 5 to 5.25. So my point, to your point of about potentially reaching peak hawkishness from the Fed's point of view, that doesn't mean from the from rates.
Of course,
I have to like, I'm not saying that rates can't go higher. I'm just saying to get to a normalized curve, it would stand to reason that we're probably getting close, and at 5%, you're in that ballpark of what's gonna look like a very normal Treasury curve,
which is what the Fed is saying. Right. This is what they've been saying. They're saying, look, we've been very fortunate. We did not have to have a big dislocation in the labor market. It looks like our risks are now about in balance. It looks like we're about on course. It looks like we're about getting to something that looks normal. Not only normal for the post-08 period where we're digesting QE and we're trying to figure out what that even means and all of this. Normal. Because in the background of all of this, the Fed is also reducing its balance sheet quietly. So we've gotten to a place where the Fed is on course, and if they land this thing without too much of a bump, then Jay Powell is.
I'll be eating my words.
Jay Powell's going to go down in history with Volcker. I mean, this will be some of the most masterful monetary policy making in the history of monetary policy making, if this works the way that it's been working. And of course, the Fed can only do so many things. There are shocks that they're going to have to pivot around. There's been shocks that they've had to pivot around, besides sort of COVID and the curveball that was. So we're in a situation here where, I mean, that's exactly what the Fed is saying is, look, we're getting close to something that looks about right, actually. And as long as the incoming administration doesn't create too much chaos to where the economy has to take a hard shift either up or down, and the funding conditions are such that companies improbably prepared themselves ahead of time and improbably thought ahead, which is not their nature. But if they've actually prepared for this refi and aren't going to get left standing there going, what, the Fed is not going to bail us out? Oh, no. Then we're actually looking at something that could be a kind of perfect landing of the ship. But lots has to go right still.
So let me ask you this question, because a lot of people will be listening, and I think you've been, you and I have probably been on the same boat to varying degrees.
Yeah.
I've just thought stocks are expensive. there haven't been many pockets that I was like super excited about. I thought a lot of the market was stretched, and the higher we go, to me, the more dangerous the situation it becomes. So somebody might be listening. I think you've sort of been in that ballpark, maybe for different reasons, but the idea is you've been somewhat bearish. The market just peeled off 200 points in the S&P, more than that. The market just peeled off 150 points in the S&P, and they're hearing you speak to the idea that Powell may just pulled off masterful monetary policy and may land this without too big of a bump. Those can be two opposing thoughts, but I know you're a man of nuance. So tell me, how can we be talking in the middle of a correction? How can we be rallying and Ilya's talking through the bearish side of his point of view? And now we've peeled off several hundred points in the S&P 500, and you're talking about the potential bright spot on the horizon for 2025. Which one of those two things are true? You think there's more short-term price pain ahead? Are you positioning on the bearish side? And then how do you hold those two thoughts in your head at the same time?
Because I don't think that the Fed landing the ship means necessarily anything positive for stocks. The Fed landing the ship doesn't mean we are going to go back to rallying up risky assets. It means the Fed has managed to lower inflation, perhaps without a catastrophic outcome for growth. And that's really the thing, is the Fed has slowed the economy. Yes, there have been layoffs. Sure, inflation has not turned inward on itself. Right? Prices are still going up. They're just going up at a more normal rate. They're not going up at a rate of 8-9%. They're going up at a rate
2.5 to 3%.
Yeah, it's more normal. That doesn't mean that prices have started falling. It just means, and I know you and I have talked about this, wages are going faster at this point by about double, but that only matters if you change jobs. If you don't change jobs, have your wages gone up? I mean, maybe if you're the kind of person that works hourly, and maybe there's been some adjusting there,
or if you're a great negotiator.
I mean, the world's best in every instance, right? Because companies look at you as you're trying to negotiate, and they say, right, but that's all well and good, but we know the refinancing cliff that we're facing. We know how much we were paying up for labor at the start of the comeback from COVID, when we had to entice people to come back out. We know how scarce labor was and how expensive. The remaining inflation still locked up in CPI in the US, in the UK, in Europe. It's all basically sticky wage costs at this point. So when we look at what's really left of inflation in these places, obviously I'm not talking about China, whose economy never really restarted, and therefore there's been no inflation to speak of. That's a whole other thing. They're special in the worst possible way. But what's going on here isn't necessarily a good thing for stocks if the Fed lands it, because all of these things aren't easily solved, and stocks have been, I would argue, surging on basically two ideas.
Drunken optimism.
Yeah, well, yeah, and that optimism, in my mind, is a cocktail of two ingredients. Number one, the Fed is going to cut rates a bunch because it just raised them a bunch in 2022 and a little bit the following year. And then in 2023, November, they're like, okay, we're done. And the market goes, here we go. We are going to reverse post-COVID tightening. We're going back to 0 or 1 or 2. We're going back to normal, but they don't seem to recognize still. The new normal isn't that. Look at what the Fed's been doing with its long-run estimate of rates. It's been creeping higher. The floor is higher. The universe is a different universe here now. We are in a structurally higher inflationary and therefore borrowing cost environment than we've been for 40 years. So that's one thing. And the other pillar of optimism was hopium around AI, which isn't necessarily misplaced. It's just that every single time you get one of these things, there is a build-out phase, a shakeout where people figure out just how much build-out you really need relative to ROI. Markets always overshoot. It's happened almost every single time in history that one of these transformational technological shifts have occurred, and already you're starting to see some fracturing there. So the hopium on AI probably has had its telecoms before 2000, railroads at the turn of the century, phase one. Now it needs a shakeout, and then there's the longer tail phase two, and maybe rates don't go down nearly as much as people thought. So that's not necessarily it's not necessarily incompatible to say that the Fed will have engineered something that wasn't a dire mess from its perspective, but that stock markets are still well overdone at these levels. In fact, I'm short. I've been short since early December.
Let me pivot away from sort of yields, which I think I appreciate how much you were willing to sort of unpack the narrative behind there, not only from the Fed's point of view, but from price point of view along the yield curve. I want to pivot into a topic. I think it's always fun for me because we have a slightly different point of view on China. Not even different point of view. I don't even think we have differing points of view. I just think we have differing levels of risk tolerance when it comes to how we want to play this scenario. So to me, these are like the final words, you know what I mean? The last words. To me, China feels like it's getting back to a reasonable value. To establish new long deltas in some of the positions held or previously held, and sort of have smaller positions now. But it seems like it's getting back to a reasonable value, and I don't think you agree with me. So I wonder if we could set the table with what's happening in China. We'll do a condensed version of this discussion because I really care more about why Victor wants to put chips down on the table and why Ilya does not. But help us set the table so everybody knows what's going on in China right now.
Sure. So what's going on in China is a virtual absence of demand. And the way that you can tell that in very simple terms is you can see that the price component of overall economy-wide economic growth is negative. It's very easy to see. When you look at the way that people count the way an economy grows and sort of the sum total of its value, the usual measure is GDP. That's the value of all the goods and services that the economy has produced, or the best estimate at it. What you don't want, though, is for inflation to cloud that view, because if you add up all the value of goods and services, some of that is going to be those goods and services actually increasing in value just in monetary terms, in terms of the cost of stuff. And that can obfuscate how much is really growth and how much is just the price going up because people want things, and when they want things, they bid up the cost of them. So because people compete to get scarce resources at any given time. So the way that people usually look at this is real GDP. That is to say, they factor inflation out. In China, real GDP is now running hotter than nominal GDP, which leaves the inflation in. And it's been running that way for 6 consecutive quarters. So in simple terms, Chinese growth, including inflation, is lower than just Chinese growth. What does that tell you about inflation? It's negative. And it's negative to the tune of, on average, over the past 6 quarters, 1 percentage point of GDP growth of the world's second largest economy. So it's a massive number, that 1%. So when you look at this, you say, okay, how is it that this is occurring? And you go, well, when people want to buy stuff, and there is but so much stuff to buy until more stuff is made, people have to compete. If you go to the sneakers store and they don't have size 9, but for one pair, you and the other 5 people that want size 9, you're going to have to compete for that size 9 until a new shipment of size 9s comes in. Otherwise, you just might have to wait. And so in that environment, the price goes up. Those 9s are going to be extra expensive because lots of people want them and only somebody's going to get them. You're going to have to go.
I would need to fold my feet in half
and pay out.
I'd have to fold my feet in half to get my foot.
Whatever it is,
size 9.
Whatever it is. I wouldn't have to quite fold them in half, but I'd have to shave off a third. So,
why did you use this
random number just popped into my head? Random number just popped into my head. But
okay,
if you look at probably because the last thing I'm doing is buying shoes for myself and buying them for my wife instead.
Oh my God, I bought a good pair of sandals. And I haven't looked back. I used to be a sneakerhead, Ilya. If I would go back and talk to my old sneakerhead buddies, and I showed them, I've got this just total exposed foot with just Velcro strap on the front and on the heel, they would blow their mind.
Laughed out the room.
Best thing I've ever done. Best thing I've ever done.
Yeah. So that's how things are supposed to work, right?
I call them Air Jesus. I call them Air Jesuses.
Well, when you gotta be in hot climates, what you don't want is a big chunky pair of Dunks that's gonna make you die in there. So
Dunks are super popular, by the way. Anyways, all right, I'm sorry. Anyways, go ahead.
And terrible shoe, but more on that later. Just a terrible shoe to wear. They're just awful. They fit awful. But anyway, that's how things are supposed to.
I think that's because you're buying size 9s.
Well played. Well played.
Okay,
get those 11s and make it efficient.
You're buying the wrong size by 2 sizes, man.
But that's how things are supposed to work. In China, it's the other thing. The price of stuff is falling, which basically means the entire economy is in the discount bin. There's lots of stuff to sell, but nobody's trying to buy it. So you have to cut and cut and cut how much stuff costs to clear inventory. In simple terms, China does not have demand. And
demand at the current price levels. Agreed. Yeah.
For the entire economy, though. And this is a huge issue. You see survey after survey, including from the PBOC itself, that says people want to be saving, not investing and spending. The balances in household bank accounts are at record highs. People are hoarding money. They're not spending because they don't have confidence, because so much of their confidence was tied into the collapsing housing market, and now people feel poor because their investment has gone up in flames. And so what you need in China, and what the markets have been pining for in China, is for the government to do what governments in the West did during COVID, which is to say, there's no private demand. Everybody be cool. We're going to make demand. We're going to borrow money and spend it. We're going to spend it on giving people money, on extending benefits, on putting moratoriums on certain loans, this and that. We are going to create demand. And what that's going to do is it's going to get the wheels turning. And by the way, it worked. It created inflation, which then the Fed has to combat because there's no such a thing as a free lunch, but it did work. The whole global economy was shut down, and we did not have a horrible Great Depression type of thing, and could have easily. So ultimately, what fiscal authorities did, we can debate sort of Monday morning quarterback style, whether it was too much, too little. In the heat of a pandemic, the likes of which nobody expected or thought they'd see, who's to say what the decision-making process was? But and whether anyone would have done better, worse, different. But it did work. So when you look at what they want from China, it's that. And China is creating opportunity after opportunity to disappoint the markets on this score, where they come out and they go, it's coming, it's coming, it's coming. And then it doesn't happen. And then they go, it's coming, it's coming. And then it doesn't happen again. And the way we know it's not happening is every time they're supposed to announce it, they come out and roll out some sort of nonsense, which isn't going to do that thing. And so they're generating for themselves a kind of 6-week cycle of disappointment, where the markets are constantly looking at event risk forward, going, maybe this time. And then China goes, no. And the markets go, damn it. And markets fall again.
How much of that do you think is linked to, first, wanting to see the outcome of the election, second, wanting to see the new administration's policies before they put together their own domestic budget and domestic strategy for the short term? How much do you think that is linked? Or do you think it's just sort of normal, sort of bureaucratic malfeasance type situation where they don't really know what the way out is? How much do you think it's one or the other, them strategically just sort of stringing along so they can get to the other side, get a look at the other person's cards, versus just bureaucratic malpractice? We don't know what to do. We keep putting these announcements out because it's the only thing we have.
I think there is basically two things at work here. Xi Jinping, whether you believe that he's the one that's doing it or whether he has a ghostwriter or not, has been an incredibly prolific author. He's released reams upon reams of musings on what is being called Xi Jinping thought, like a true dictator. He has made sure that everybody is at all times occupied with reading his many thoughts and pronouncements on everything under the sun. And so what we have then is a very clear idea, at least philosophically, where his mind is at on this issue, or at least where he wants people to know his mind is at. This is sort of the public message. And it's China doesn't want to encourage reliance on government stimulus. It doesn't want to generate laziness. It wants to keep the economy and participants in the economy as self-directed and as self-sufficient as possible, which is incredibly cute in a command economy where the government still, as a communist government, would own the majority of the means of production. So hilarious that this is the direction, but you sort of get why they've done what they've done. Is Xi Jinping is strongly resistant to having Beijing bail everybody out. He does not want to do that. Under the surface, once you kind of get all of the incredibly hilarious conversation where the leader of communist China is trying to paint himself as some sort of pull yourself up by the bootstraps Thatcherite, which is hysterical. If you want to take that veneer off, what you find is that one positive aspect of inflation in the developed economies was that their debt to GDP ratios fell in the aftermath of COVID because that debt was inflated away. But not in China because they never reaccelerated growth and there was no inflation. So how much fiscal room they have and where they're going to get the money, that's a really big question. Now, they could pretend like they have the money, which is what they have tended to do before, which is to say, we're a closed economy. We say we have it, so we have it. But now that's a much tougher sell because foreign direct investment is fleeing China at a clip of close to 30% year on year a month, every month, for like a year now. So where's the money? Who actually believes this? Well, if people are hoarding, then they don't believe it either. And so you look at this and you say, okay, well, do they have fiscal room to do this? Is all this talk about self-sufficiency and not wanting to encourage bad habits, is all of this just veneer for you would do it, but you don't have it like that? And then that's an issue.
So I don't dispute anything you're saying, and I don't see the world differently in any way. The only thing that I feel slightly different is I'm probably not going to pick the bottom, and I'm probably not going to know when we're at a max pain point. And I've learned that about myself. And so the only thing I do both on shorts and longs is I look for decent risk to reward bets. And I think given a horrible backdrop, I will give you that. Lots of risk for delisting, lots of risk for geopolitical shenanigans, lots of risk there. But that risk, in my personal opinion, is priced into the cheaper multiple. It's priced in, just in price. The fact that we've come off these highs that we had sort of in September, October-ish timeframe when this anticipation of this bazooka of stimulus money working its way through the Chinese economy sort of started to percolate out there. Mm-hmm. I don't disagree with any of the narrative that you're saying. I only feel like, given my investment options for an incremental dollar, I get that the narrative in the U.S. economy is going to be more positive 3 months from now than what it is today. It's clearly more positive. I don't know what the rate of change on that positivity will be, but I know it's more positive. But that's not the game that I'm playing. I'm not the momentum guy. I'm just to try to find the cheapest, the most attractive risk to reward, whether it's a short or a long. And I think, could Chinese stocks get cheaper from here? I totally think it's in the cards. Do I think I'm getting a decent risk to reward given the known risks in the marketplace and given the multiples and the price at which these things trade at? I think the answer to that is yes. I do not want to participate in these names on a 45-day cycle. So for that reason, I'm buying equity. I do not buy options because I don't know what's going to happen if we're going to get a catalyst within 30 to 45 days. If I was playing that game, I'd probably time it out until around March, which I think is the next time we get a little bit right. Exactly. So if I was playing that game,
Congress, where they're supposed to actually do something, maybe finally.
And we exactly. So if I was playing the 45-day game, I would time it out that way. But right, if people start anticipating that, who knows what could happen prior to that event happening. And so I'm just buying equities because I think at this point, if you're looking at FXI, if you imagine where maybe we don't correct below this sort of line in the sand of 29, you're getting decent risk reward. And you look at all the underlying stocks within that, whether it's Alibaba, whether it's Baidu, whether it's Pinduoduo, whether it's JD.com, whether it's some of the telecom companies, pick your poison. But I do think it's worth taking a glance at. And for me, they're getting to a point in a world of overpriced, expensive assets. They're getting to a point that I think is a decent risk reward bet. And I think that's just the difference between us. And I don't think we're that far apart either. I think you're going to see a catalyst. You're going to see, you like to see it first. Give me the story, give me the plan. And once I can see the plan and I think this is going to work, then
let me
Ilya
hold
puts
something.
his chips down.
Let me hold something. Give me some kind of evidence that you're serious.
Right.
And so for me, and I wrote this for the Tasty Live website just last week. So everybody was off on Thursday, but I'm a degenerate and I can't help myself. We had some data out of China. CPI numbers came out and they were awful again. And so I felt compelled to write about it. And what I landed on is exactly what you're talking about. Bargain hunting investors do not need for things to get good to go and buy. Correct. What they need is for things to stop getting worse. As long as, or at least to feel like they've gotten about as bad as they're going to get.
Maybe some. I think if you're narrative oriented, yes. I think just the equity
just on the
risk
price
premium,
action, not necessarily the condition.
Equity risk premium has to be attractive. That's it. In my personal opinion,
no,
you
not
have to
necessarily.
see something.
Not necessarily on the economy. No, they just have to look at and say, I think it's fallen about as much as it's gonna fall, and then and now it's attractive, and now the risk reward has lined up such that I'll take a nibble, I'll go bargain hunting. I'm never going to get the absolute low, but it's starting to make sense. And that this will happen. The key to me in terms of separating when it's too early for that or not too early is this ridiculous bait and switch approach that China has taken to announcing and then failing to deliver what it knows the markets want and creating for themselves a disappointment cycle where they need to stop doing that. If they're not going to do it, they should just not do it and say nothing and let the long arc of the adjustment run its course. But stop getting the markets hype and then disappointing them, because then the prices just fall again.
Maybe. Let me ask you this question. If, let's say the Fed, let's say we cut rates by 1% for whatever reason, okay? Let's say we cut rates by 75 basis points to a 1%.
This year.
This year, 2025. Okay? So imagine
not the next
what
Fed
world.
Meeting, because then, like, the markets have landed.
Imagine the world that we're in, okay? Which global economy will be most levered, will have the most beta to cuts in the Fed funds rate to that extent?
I mean, China will be a big. It'll be a big. Boom. China will be a big beneficiary. No, anything cyclical, anything growth related for which China is the front line because it is the middle step, the value add step. Less of one now, but still a major one for the global economy. China will be a big beneficiary, no question.
And in that world, in order to get to the world that which would manifest itself in the data where the Fed would need to cut 3 or 4 times, which market would experience the most pain coming to the realization before the Fed starts cutting that we need to cut 3 or 4 times? Which market then would experience the most pain? In other words, if you see a growth slowdown to the extent that the Fed realizes and the markets realize we need to cut 3 or 4 times, which market would experience the most pain? Which is most overpriced? It's U.S. market, right?
Sure.
So my bet here.
So you're looking at like essentially a pair rotation, where maybe your longer term view is long U.S., short everything else, but your tactical view for, let's say, the next year is short U.S., long China, just on valuation grounds.
No, I mean, you're right, but not even. It's just what do we know today? What is the consensus price today? The consensus price today is one cut maybe, right? That's the consensus price. And so what we just said, our upper bound is likely we're not going to get more hawkish. But what's possible, what's in our possible, our standard deviation of possible occurrences is that perhaps things slow down or we hit
and
some
that
event.
risk is asymmetric.
So to me, the asymmetric risk and reward of this bet, it's the same reason I like the long bond in the very short term, because I think that if you get an event that creates some demand for bonds, it's asymmetric upside versus the continuing to short the whole when we're already at 4.8% in the 10-year.
I'm with you.
Maybe you're going down to 5%. You're probably that to the point where you get some two-way action. All I'm saying is adding this to the portfolio is like almost adding Bitcoin for me. It's a diversifier play. It's a magnified bet on the idea that when we started the podcast, I asked you over under on the number of cuts in 2025 too. You say push. And my bet is just like, I don't really know, but if it's over, this is the most asymmetrical bet that I could put on in the case that we hit the over. I don't know that it's going to happen.
I agree with you.
That's all.
Except on the execution asset-wise. And we talked a little bit with Tom about this.
I like the dance.
On first call.
The dance step. The dance step there was brilliant.
We said this, right? We said this with Tom, who was making a similar argument, basically saying China has gotten to a point where it's cheap enough that it's attractive to nibble. And he's not talking about the kind of dynamics that we're talking about here. But I think the argument you make not only makes sense, but it's what has me now long the bonds, short the dollar. And I own euro early, and thankfully it started to move a little. But and I'll buy more. It's not because I have any confidence in the Eurozone. I have none whatsoever. But I think a lot of this stuff from the Fed's perspective is overcooked. And that there is an incremental and an asymmetric risk now the other way. And so for me, the way you express this, though, isn't something like an FXI or an ASHR, the more wide ETF. It's what you have on the screen here. It's the Aussie dollar. And the reason it's the Aussie dollar is because what I want to be trading is an improved environment for these kind of high beta, cyclical, maybe rates aren't going to be as terrible as we all feared, including for China, which, by the way, would love some lower global borrowing costs because they need it if they're going to figure out how to pay for fiscal stimulus at some point, maybe. That is a better vehicle, in my mind, to express the same view than going and saying, we're about to have an administration that is the living, breathing avatar of the now bipartisan anti-China line in Western politics. And they're going to go and express that as a trade war, as sanctions, as whatever it is. And by the way, everybody is expecting it. So it's asymmetrically the risk that actually it's not as bad. There's probably more to do on the idea that it's not as bad. And eventually that'll be a reason to buy China, if only because the Trump administration ends up being less combative, or the Xi administration ends up being more forthcoming, or both, or some combination thereof. It'll be attractive to buy China then. But on the rates and just the weird skew that we've established now, I think the Aussie is the better buy. And I haven't gotten myself there yet. After CPI tomorrow, I may well already be long.
And just to tease out what he's saying and make it even more direct and succinct here for just some of the newer viewers, what he's saying is, if you can bring yourself back to the point where the RSX, which was a ETF with Russian listed equities, we get into a spat in Ukraine, and all of a sudden RSX is delisted, and it creates an investor risk. I think a part of what Ilya is saying, not the whole part, but a part of what Ilya is saying is that he would much rather express a bullish opinion in not just China, but just sort of cyclical countries like China, and China included, by playing a long Aussie dollar position. And that would eliminate like the delisting risk or at some of the Xi Jinping risk by decree. This company is doing this now, or I own this company, we're nationalizing this. It eliminates some of that risk, and he still gets the same type of exposure, still gets levered to the same idea, but he would express his opinion in a different way, which would minimize some of the risk that I'm
and I'm already long the Canadian dollar around.
Right.
Basically, I want a commodity currency vehicle.
Yeah.
That's levered to all these dynamics.
Yep.
The moment, incidentally, that Justin Trudeau finally gave up and stepped down, I said, well, this was the biggest risk, that these incompetents remain there and do all kinds of other madness before they leave. And he's left. So that part of it for the market was over. And you'll notice euro kept going lower against the dollar, pound, Aussie. The Canadian dollar has stopped falling. And so I've bought it. Same exact idea. So I'm totally on board with what you're saying. It's just my expression of it is in other markets.
Beautiful, beautiful conversation, my friend. One more question for you, and this is an earnest question. If you don't know the answer, just say I'm not really sure, and we'll continue that conversation next week. What matters more to the Chinese economy? Is it the Fed funds rate or the 10-year yield? And that will let me know whether I'm thinking about this right or wrong. Do you know the answer to that? What do you think matters more, the Fed funds rate or the 10-year yield in the U.S.?
I think what matters to the 10-year yield is the Fed funds rate. And so it becomes a kind of recursive thing. I do think that what matters most for China's economy here, if you want to basically ask the question, what matters, short-term rates or long-term rates, I think it's long-term rates, ultimately. Because I don't think that China's economy is making significant shifts in their thinking and in how they're going to move. Remember, this is a command economy, not in full, not purely, but if we think about who owns the means and the majority of the means and actually steers things, who has the agency to do things like make Jack Ma vanish for a period of time only to then have him reappear. Things like that. It's really down to one person now, because Xi Jinping has basically gone on a purge and gotten rid of anybody that might be there in a capacity other than to say yes. Everything you say is the most brilliant thing. He's purged everything. So really, the decision function in China is one person at this point. And I don't think he cares that much about what the Fed does episodically. I do think he cares what the trajectory of borrowing costs in the U.S. is, more broadly.
All right, let's do this, because I know we both got to get out of here early, if not on time, if not early. So let's do this. I'm going to hit you. We're going to do rapid fire here, just a few instruments, and you give me your really quick, succinct opinion on these instruments. We're starting with the energy complex, which has had a nice little rally here. Crude oil at 76.80, up from the upper 60s. This is what I'm talking about. PPI starting to cool at the same time your actual materials in the real economy are rising. And this is like those offsetting sideways I'm talking about. But nonetheless, how are you thinking about not only crude oil, if you want to throw natty gas in there, or just the energy complex as a whole? Are you structurally bullish here? Are you structurally bearish here, given the price extreme? Or are you sort of neutral, hands out, I'm looking at other stuff?
I'm not looking at other stuff. I'm definitely looking at crude oil. I don't like to trade nat gas because it is the Leroy Jenkins of assets. It does its own thing and does not care. So I stay away. I can't make any good sense of it. I listen to what our good friend Thomas Westwater says because he understands how that market works in its many specifics, and I just let him tell me what he thinks and take that as gospel. But because I'm not going to have him sitting on my shoulder at all times, I can't go take that risk because I don't trust myself to make those decisions. When I buy, sell, this, that. When I look at crude oil, I have to give credit to the great Jared Dillian. I was just reading his newsletter from the other day, and he said, I told you all, you have to respect the sneaky move. When there is a sneaky move, you gotta respect it. And crude oil was dead, stuck in a narrow range all of November, all of December, going into January, and then just poked out through that range a little bit. And I didn't buy it. And to Jared's point, you have to respect the sneaky move. When markets suddenly get out of a congestion, even if it's only cautiously, you have to remember that they were just in the congestion for a while. And suddenly there is conviction, and you have to respect that conviction. And of course, since then, we've had a massive rally. I think the fundamentals are tuned to weaker oil. I think this is a selling opportunity because supply is abundant and geopolitical risk is receding, at least in the Middle East. And we know that the Trump administration wants to get the risk in the Russia-Ukraine theater off the table soon. So to me, this is a short, but it's not a short that's actionable. It's not ready. It's not matured enough yet to actually pick off the vine. So I'm watching it here. It's at resistance. Let's see where the confirmation is. We've had one meaningful downtick over the past 24 hours after another big run. Let's see.
Interesting. I like you am not in natty gas because I got kids.
Yeah,
I got kids. I can't. Like Bitcoin is my one thing. Like the vol that I expose myself to, like the open-ended vol. I don't need a heart attack. So, anyways, I'm not natty gas.
No, I'm good. I'm good on natty gas.
But crude oil, I have no opinion there necessarily. But I'll say this just in case there's somebody watching this episode and they haven't been watching short of the string of episodes before. The areas that I like the most, in addition to China, would be energy stocks. They've had like a 2.5 week rip to the upside. So I said this sort of at the tail end of last year. I said these are the areas that I really like going into next year. It was energy, it was healthcare, it was China. There's one more, but I'm blanking on it right. I think it was probably bonds in a very short-term traders rally, though I still think we're going to 5% 10-year. My point is, my expression is I'm long energy stocks. So this oil rally is helping that position. The other thing I'm long here is the gold miners, which have gotten cheap. But I'm not long gold necessarily. There seems to be this line in the sand at 2,600.
I'm long a little bit.
Explain. That's new. Why?
I'm looking for China to, so they looked like they were starting again to buy for their reserve account in November. They paused in April of last year. In November, they started buying again. The previous run was 18 months of just hand over fist. Give me everything that's not nailed down. They were buying tons and tons of gold. If they're back on that time, gold's not going to need anything. That's enough. That's enough of a catalyst. And so I'm long a little bit, basically looking for this congestion to resolve itself higher as soon as this hawkish Fed to the moon story runs out of juice. And I think you and I agree, we're very close to it running out of juice. In fact, it could be as soon as the next 24 hours in the wake of CPI, that bonds start to correct higher, the dollar starts to correct lower. As soon as all of that gets out of gold's way, it might have coiled up for a massive rally. So I'm a little bit long here.
I like that. I like that just as a risk reward CPI trade.
Yeah.
Sort of interesting. Yeah. I would wonder actually. That you just gave me a lot to think about tonight. So then the last one I'll do is copper, which is the more useful metal. Given your opinion on China, which we've covered here, given your opinion on AI, we didn't talk about housing, which would be another catalyst for copper. But give me your thoughts about copper here, if you have any. If not, we can move on.
I struggle to find an instrument to express my view in copper in a way that works with my risk reward